Hi guys, this is CA Final Advanced Auditing Revision Marathon for May 2023 examinations. And not only this is a revision, we are also covering most important amendments for May 23 examinations. So in this introduction, please do not skip this introduction. Do not directly jump to the other timestamp. Please watch this introduction without failure, which is very important so that you get the maximum benefit out of this revision. Now, so there are some instructions that you need to follow so that you get the best output in this marathon. Now, point number one. So this marathon is nothing but earlier in the month of September 2022 for November exams students, we had taken a class, face-to-face class at Chennai. Okay, so the same entire that was recorded. So almost it will come close to 20 plus hours. So now we are uploading this entire recording as a marathon. This will be uploaded in two parts. Part 1 will have 12 hours. Right now you are watching part 1, and part 2 will have another 11 to 12 hours. Now in this marathon, whatever amendments that are applicable for May 23, very recently ICA has released that amendments material for May 23 in the month of January. Okay, so in the month of January, the ICA has released amendments material which is applicable for May exams. And you know what? What is a major amendment? Peer review. Peer review guidelines were given 2022, where I am expecting damn sure 5 marks question. So in peer review, 5 marks topic is being definitely going to be asked, because peer review has been changed so structurally, like anything. The eligibility of peer reviewer has been changed, peer review process has been changed, applicability of peer review for practicing units has been changed, drastically it has been changed. But don't worry, in this revision, I am covering that entire peer review amendment also. Getting it? So this entire marathon is nothing but face-to-face classes were there, right? That entire revision, we are merging it and then giving you. And the peer review guidelines, okay, we have taken very recently face-to-face regular class. In that peer review guidelines, we discussed in depth. So from that, whatever amended topic is there, I am going to bring those videos and merge in this entire video. You may find peer review in part 1 or maybe in part 2. Getting the point? Now, what are the important instructions that you need to follow? Point number 1. First one, throughout this marathon, I am going to use the colored smart notes. Many students, they love the smart notes. This is A5 book, which is a very small handy. Okay, so hard copy you can place order in. You can see above me there are two logos. One first logo is the rest of a CA and CMA, white color logo. Yes, so download that Android application. Inside that, this material hard copy you can place order. Suppose if at all you don't want hard copy, if soft copy is enough, in the same application, soft copy is uploaded, unlocked version. You can download and take a print on yourself. It may be colored version or black and white, that is your choice, absolutely. So which material I'm using, I have explained you the source. Second one, amendments material also for peer review we have uploaded in the same application. So you open rest of a CA and CMA application. Main menu will be there. Inside that study material option will be there. Inside that CA final will be there. Inside that you will find all these resources. So please download them before you watch further. So this is first point that you need to note. Second point, you need to watch this marathon at standard speed. What I'm noticing in many CA final students is they are hurrying up watching the classes, but with 1.5 speed, 1.7 speed, 1.3 speed, and somehow they want to finish the classes first. You purchased the classes or you're watching the classes online not to finish them watching, but to get something out of it, get understanding out of it. You listen when you watch at higher speed, you listen to the words, you listen to something, but remember what is important is digesting is important. If you listen to a song at a higher speed, what happens is you listen to words, you listen to the music, tune, everything. But the thing is, you don't get that connection with the subject. If you want to establish the connection, you have to watch the classes at standard speed. Very simple logic. If at all we can finish the class in 1.5 hours, why would we take 2 hours, 2.5 hours time? If at all we are taking 3 hours duration, it means you also have to spend 3 hours time. Why people feel face-to-face classes is effective, because in face-to-face you don't have speed option. You have to listen to the faculty at the same standard speed at which he's teaching. But in online, you're watching at higher speed, because of which productivity is affected. You're finishing fast, efficient, but effectiveness is not there. Output is zero. That is why you might have definitely faced the situation. You have watched all the classes. Later when you're revising, you're unable to recollect anything. Hey, did I read this provision? Did I read that? Did I practice this? You're getting all these doubts because you listened to the classes at a higher speed where you didn't establish connection with the subject. Anyhow, that is most important. Hardly this 20-24 hours, if you watch at standard speed, I bet and I challenge, you will see a remarkable difference in your understanding. Further, there is an order in which I uploaded this marathon. Suppose you see this is part 1, right? It has some 11 to 12 hours. Below we have given timestamps. Don't directly go to a particular timestamp and watch from there. No, please watch from the beginning. And believe me, if you think you know subject very well, after watching this marathon, you will change your opinion. Now you will understand after watching this marathon the real subject of auditing. Who said auditing is a boring subject? People who don't know how to learn that subject, how to present the subject, made the subject boring. But you see this audit marathon, you will understand audit is one of the most practical paper ever. And also, you understand the techniques of learning. Many ask me, sir, how to remember audit? I'm reading, unable to remember. The reason is, you are not able to remember. It's not the reason. You are unable to understand what exactly. Understanding sentence is different. Understanding concept is different. The main problem is student is unable to understand the concept. It's the main problem. I hope you are getting what I'm trying to tell. Getting it? So kindly watch the classes at standard speed and it will pay you the best understanding. So I spoke about the material which I'm using in this marathon. I spoke about amendments applicable for May 2023. Now you may have a doubt. Sir, you only spoke about peer review. What about corporate governance amendments? What about ethics amendments? In ethics, we don't have amendment. It's only a clarification regarding fees to be charged by auditors, and it's a clarification regarding no-clear concept. For November 22 exams, no-clear concept do not apply. So in the marathon ethics, you might hear this word like no-clear concept do not apply. Ignore that. For May, no-clear concept is applicable. And what is no-clear? I will upload a separate amendments video again. In that you can watch. Main important amendment in the entire amendments for May is peer review amendments. Remaining amendments are not so important. Even corporate governance related amendments were already covered for you in company law. You have paper for corporate law and other laws, right? So there it is covered as part of LODR regulation. So we don't cover in audit. Corporate governance related, risk management committee, nomination and remuneration committee, finance committee, corporate social responsibility committee, corporate governance committee, all these committees related discussion you have in law. So we don't cover specifically in audit again. So that's it. So main amendment for May is peer review guidelines 2022. That we are covering thoroughly. Getting it? It may be covered in part 1 or it may be covered in part 2. Depending upon the length, we may give part 3 marathon also. So first you watch this part 1, then watch part 2, then go to part 3. And please follow the order in which I uploaded. This video order is there, right? Please watch in the same order. Believe me, you are going to experience the audit in a very good dimension. You ask my students who are my regular students, who are my CA interest students, or who recommended you about my classes. You ask them. There is an order in which I beautifully explain the subject. That's it. Okay, and listen carefully. That's it. Have a nice time. All the best. Continue watching this. Okay, bye. So fine. So let's start with the chapter audit report, which is the first topic. Now, so in this audit report, first we must understand how to prepare audit report. Getting it? After doing, even preparing this chapter, many of us are not having good command on how to draft an audit report. Correct? So what is the procedure? So what is the process to prepare the audit report? What is the format of the audit report? What is the contents of the audit report? So the chapter audit report itself, the learning objective is you need to understand how to prepare the audit report. Getting it? So now any report or any letter, it has some format. It has a particular structure. Getting it? Same way, audit report also has a particular format. So what is the format of audit report? the format of audit report is, first we will have something called title. The audit report is having something called title. Next, it has addressee. Now what is the title of audit report? First of all, Independent Auditors Report. The title must be with a clear heading called Independent Auditors Report. Third one, second one, addressee. In case of private sector entities, the title is generally to the owners. In case of company, the owners are members, so it is to members. In case of government companies, to the President of India. That word also we can use, because for government company, predominant ownership is held by the President. Or in order to avoid conflict, we can also use simply the word to the members. And first of all, understand, we are discussing this entire audit subject in the context of general purpose financial statements audit. In which context? General purpose financial statements audit. That to financial audit. Because audit is a subject which is a general term. Audit is an aspect which is there in every field. Not only in the finance field, but in every field audit aspect is there. So we are discussing financial audit. That too, in which context? Audit of general purpose financial statements which are prepared either under fair presentation framework or compliance framework. Getting it? So what are all the terms that we will gradually learn? Getting it? So addressee means to the members of the company. Now next, the first and foremost paragraph is opinion. The first and foremost thing is opinion. The first aspect in the audit report straight away after title, after addressee is opinion. We have various types of opinions. So what are the definitions, what are the concepts, and how the wordings will be, all that we will be looking into. Then whenever you are giving an opinion, for your opinion, there will be some basis. There will be some logic behind it. There will be some reason behind it, more importantly. So what is that reason? What is that basis? You need to clearly talk about that in the next paragraph. That is basis for opinion paragraph. Getting it? So once you give the opinion, whatever the opinion you give, what is the basis for that? So that you need to give in basis for opinion. Then next, material uncertainty related to going concern. Material uncertainty related to going concern. This paragraph will come only if SA 570 situation applies. Only if the condition, only if the situation given under SA 570, if it applies, only then this paragraph will come into picture. Otherwise, SA 570 matter, that paragraph will not come in the audit report. Getting it? Next, sixth one. We have the next one is key audit matter. We have the next paragraph, key audit matter. Then we have emphasis of matter paragraph or other matter paragraph. Actually, other matter paragraph is a different section in the audit report. So let's give a different number to it. So other matter paragraph. So emphasis of matter paragraph, other matter paragraph. So these are the main contents. In audit report, the main discussion is on these paragraph, on these sections. Remaining are very simple. So what is the next section of the audit report? Ninth one. We have something called other information para. Immediately after other matter paragraph, you can have other information para. Other matter paragraph is SA 706. Emphasis of matter paragraph is SA 706. And even key audit matter is 701. Whereas opinion and basis for opinion, these two are discussed under 700 and 705 put together. Next, other information para is something SA 720, SA 720. So that standard talks about other information. Then eighth one, management responsibilities. Ninth one, auditors responsibilities. Actually, actual heading is eighth one, responsibilities of the management. Ninth one, responsibilities for audit of financial statements. Actual side heading is responsibilities for audit of financial statements. So responsibility of audit is with whom? For whom? The auditor. So indirectly, what is that paragraph talking about? It talks about auditor's responsibility. Able to understand? Next. Then 10th one, we have another matter called report on other legal and regulatory requirements. Report on other legal and regulatory requirements. Here we have 143 subsection 1, duty to inquire and report. 143 subsection 3, approximately 15 matter checklist items. And 143 subsection 11, CARO, which consists of 21 clauses broadly. All these matters we have to report. All these matters we have to report. So 21, here 15, here 6. So 21 plus 21, 42 clauses. So in this side heading, under this section, under this para of the audit report, the auditor has to give comment, his opinion, his report on 42 different clauses, 42 variety of information. Getting it? You see, auditor is not just giving opinion. Audit report is no more a boring document. Getting it? He is giving a lot of information from his report, from his particular end. Getting it? Next, after this audit report, with this contents will be over, then finally, signature of the auditor, then date of the audit report, then place of the audit report. With this, the audit report contents will be finished. So these are the broad contents of the audit report. Now for each of them, there is a question, there is a concept. Getting it? In exam, they may ask you write about sign of the audit report, write about the signature, or write about the place of signature. Getting it? Signature of the auditor's report. The auditor's report date must not be later than the date on which he obtained sufficient appropriate evidence and the date on which those who are having responsibility for the financial statement have asserted that they have accepted and acknowledged their responsibility. This is a definition. A signature, this is the point. What that point simply says, it simply says auditor must sign the audit report. Auditor must sign the audit report only after. Actually, signing the audit report, we need to discuss 145 subsection 2 provision as well. 141, section 141 subsection 2 and 145 section. These two sections talk indirectly about who should sign. Date of the audit report. What should be the date of the audit report? It should be only on or after approval of the financial statements by those who are having authority to give approval. And it should be signed. The audit report must be dated. The audit report must be signed only after obtaining sufficient appropriate evidence. That is what the actual sentence meaning. Anyhow, we will discuss all that. Getting it? So this is the broad contents of the audit report. Now, what is meant by title we understood. The title must be clearly mentioned as independent auditor's report. The auditor must mention title as clearly independent auditor's report. Then addressing to the members of the company. Clear? Now, opinion. So first what we will do is we will discuss each and every concept. Then at a glance we'll look at the material. Getting it? First of all, understand this is a revision class. So come out of regular class assumption. Getting it? Only audit report we will discuss in regular for 20-25 hours. In a regular class, we'll discuss for 25 hours only audit report. But now here we hardly have a time of 6 hours for this. So what is the first paragraph in the audit report? No need to worry. This is the material. Okay. Now where you can download this material? You can download this material which is open. OMG. Just a minute. Just a minute. Yes. So the first and foremost thing is the opinion para. Getting it? So like what are the various types of opinions we are having in the audit report, in the auditor's report? What are the various types of opinions that we will have to give? First of all, if you look at the objective of the auditor. So where the objective of the auditor is discussed in SA 200. And even in your CA Inter, it is discussed in nature, objective and scope of audit, the first chapter. So where you start with definition of audit, then objective of audit. So what is the objective of auditor as per that SA 200? The objective of the auditor is to obtain reasonable assurance. Reasonable assurance. Whether the financial statements are free from material misstatements, whether due to fraud or error, and to give opinion. Now this phrase, financial statements are free from material misstatements. Financial statements are free from material misstatements. This phrase can be expressed in a different way as well. Whether the financial statements are prepared as per applicable financial reporting framework. Financial statements are prepared as per applicable financial reporting framework. That particular phrase, financial statements are free from material misstatements. This phrase, both can be used interchangeably. Both conveys the same meaning. Like if you look at the word misstatement, there is a definition for misstatement. For misstatement, there is a definition. Misstatements are two types. One is fraud, another one is error. Now, what exactly the definition of misstatement as per the standard? Misstatement is a difference between amount, classification, presentation, disclosure of a reported financial statement item, and amount, classification, presentation, disclosure which is required as per applicable financial reporting framework. This is actually the definition of misstatement. Don't worry. So we will look at the definition of misstatement. Very important definition. This you need to understand with the word exception. Okay, I'll show you. Don't worry. So what is the difference between misstatement? What is meant by a misstatement? Misstatement is difference between amount, presentation, amount, classification, presentation, disclosure of reported financial statement item, and between that and classification, presentation, disclosure required as per applicable financial reporting framework. See how the financial statements have to be prepared. First of all, who should prepare the financial statements? The management. Whoever auditee is there, whoever the client is there, it is his primary responsibility to prepare the financial statements, and we auditors will only verify. We will not prepare the financial statements. We will not involve in any step of the preparation process. Getting it? Because of self-review threat. If we prepare the financial statements, or if we involve in judgments or in decision-making process while compiling books of accounts or financial statements, naturally we can't audit them. Because whatever we prepared, how can we verify them? Independence is missing. No, independence of mind is not there. Maker and checker should be different persons. So it is their responsibility who should prepare the financial statements. Now, how they should prepare? They should prepare as per applicable financial reporting framework. Now, what do you mean by applicable financial reporting framework? If you look at, there are two words, applicable financial reporting framework. There are three terms exactly. Applicable financial reporting and framework. Framework refers to rules and regulations for preparation and presentation. Rules and regulations. Framework refers to simply rules and regulations. For what? For financial reporting. What do you mean by financial reporting? Financial reporting means preparation and presentation of financial statements. Preparation of financial statements means accounts, final accounts. Reporting means presentation. Today we are not preparing financial statements for owner's purpose. Today we are preparing financial statements for stock exchanges, for prospective investors, for global markets. Correct? So the objective behind preparation of financial statements has changed a lot. So you are presenting the information. Getting it? You are not just preparing. You need to prepare in order to present the information to various users. Able to understand? Who are the users? We don't know anybody. So by using which framework we prepare? General purpose framework. Which framework we use here? General purpose framework. That's why the financial statements we prepare, we call them as general purpose financial statements. We have another set of financials called special purpose financials. It is nothing but if the financial statements are prepared for a special purpose, as per special purpose framework, then it is called as special purpose financial statements. How to audit them? how to give opinion on them, we have SCA 800 series. It is not there in our syllabus. Earlier it is there in our syllabus CA final, but later it was removed. So the discussion on special purpose financials, discussion on audit report on special purpose financials is removed. So you need not think about that. Okay. So framework refers to preparation and presentation of financial reporting refers to preparation and presentation of financial statements. Framework refers to rules and regulations for preparation and presentation of financials. Now, what do you mean by the word applicable? For a bank, the applicable framework is different. For an insurance company, the applicable framework is different. For an NBFC, the applicable framework is different. For a company operating somewhere in Netherlands, the applicable framework is different. For a company which is operating in India, the applicable framework is different. For a listed entity, the applicable framework is different. For unlisted entity, the applicable framework is different. Correct? Schedule 3 itself is having 3 divisions. So, which division is applicable for a company? For a company itself, we have multiple frameworks. Schedule 3 itself talks about 3 different frameworks. If at all a company is preparing financial statements as per Ind AS, for them division 1 is applicable. Division 1 Division 1 or division 2? Division 1, division 2, division 3. We have totally 3 divisions. Getting it? Third division is for NBFCs. Correct? Division 1 is for normal companies which are preparing financial statements as per 2006 accounting standards. Division 2 is for Ind AS. Able to understand? Which means the moment I talk about a company, how the financial statements have to be prepared by that company, first we need to understand, is it a listed company or unlisted company? Accordingly, I can apply division 1 format or division 2 format. So, which means, depending upon the nature of the entity, what is it? Depending upon the nature of the entity and the objective of the financial statements. Depending upon the nature of the entity, objective of the financials. Objective means, is it general purpose or special purpose? Getting it? That one. So, depending upon the nature of the entity, objective of the financial statements, whatever framework adopted by the management for preparation and presentation of the financial statements is called as applicable financial reporting framework. In December attempt, I think so, December attempt or that before attempt at CA Inter, they have asked a 5 marks question. Write about applicable financial reporting framework. Getting it? If at CA Inter itself that question asked means, at final also you are not exceptional. So they may ask you a 4 marks question. Write about applicable financial reporting framework. Getting it? So applicable financial reporting framework means in view of nature of entity and objective of the financial statements, the framework adopted by the management is called as applicable financial reporting framework. This framework can be a general purpose. This framework is also known as general purpose framework because we only discuss in the context of general purpose. Again, this is divided into 2 types. Fair presentation framework, compliance framework. What is it? Fair presentation framework, compliance framework. In India, across the world, more or less, for all general purpose financial statements, most of the general purpose financial statements, they follow fair presentation framework. They follow fair presentation framework. What do you mean by fair presentation framework? Simple. The financial statements must be true and fair. The financial statements must be true and fair. Or another way we can express. The management should prepare the financial statements so as to exhibit true and fairness of the transactions and events. True and fairness of the transactions and events. Even in the audit report, the word true and fair view will appear. In the audit report, the word true and fair view will appear only in case of which framework? Fair presentation framework. If it is a compliance framework, in audit report, true and fair view word we will not use. What exactly the compliance framework and fair presentation framework? Suppose, see, in Companies Act, suppose if you take a company as an example, a company will prepare financial statements as per which law? As per Companies Act. Companies Act, which section talks about financial statements? 129. What 129 says? Every company shall prepare financial statements as per Schedule 3, as per accounting standards, and shall convey, and shall disclose, and shall present true and fair view. If you look at the Companies Act, it emphasizes on the word true and fair view. So, Companies Act recommends which framework? Not recommends. Companies Act makes it mandatory which framework? Fair presentation framework. Suppose, if Companies Act 129 section, if at all the word true and fair view was not included, if at all the word true and fair view word is not included, then it is called as compliance framework. Very simple. How it will look like? Every company must prepare financial statements as per Schedule 3 and as per accounting standard. Which means I cannot deviate. Suppose if a particular requirement given in an accounting standard or a particular disclosure requirement in Schedule 3 is not suitable for my operations, is not suitable for my company business, in such a case, I can't deviate. I have to follow that whether it is suitable to me or not. Very simple layman example I'll give you. Suppose accounting standard says only two methods. Accounting standard says only two methods. Depreciation method, SLM or WDV. Only two methods accounting standard says. Let us assume accounting standard is not talking about any other method. My organization, whenever they are charging depreciation, they should either follow SLM or they should follow WDV for the purpose of computation of depreciation, for the purpose of arriving profit, for the purpose of preparing financial statements. Suppose, what if on a particular mission, for me, hours method is important, units method is important. That is more suitable method, not SLM. My asset is not used in an exact same percentage every year. My asset will not depreciate every year. Getting it? In 1 year I will use at a higher excessive rate. Maybe second year I will not use at all. Third year I may use. Fourth year I will not use. So asset has a capacity. Asset useful life is not exhibited in years. The asset useful life is exhibited in units. The asset useful life is measured in hours of performance. If my asset useful life is measured not in number of years, but in usage capacity, in such a case, SLM method is not suitable for me. WDV method is not suitable for me. Now, can I follow a different method which is suitable for me? In case of compliance framework, you cannot follow. In case of compliance framework, you cannot follow a different method. If I do not follow a different method, if I cannot follow different method, I am depreciating asset in some manner, but I am charging depreciation equally every year. It is not exhibiting true and fairness. What is there in the reality is not exhibited to shareholders through amounts. Able to understand? So the defect in compliance framework is fair presentation cannot be there. Able to understand? Companies Act gives importance for true and fairness. What the word true and fairness indirectly signifies, you know? If you look at fair presentation framework definition, what the definition? It is a framework in which the financial statements shall be prepared in accordance with the requirement of the framework. In accordance with the requirement of the framework. However, you can deviate. You can deviate from the requirement of the framework, or you can give additional information beyond the requirement of the framework so as to achieve fair presentation. Able to understand? In order to achieve fair presentation, in order to give fair picture about the affairs of the company, if you want, you can deviate from an accounting standard. If you want, you can deviate from Schedule 3, any of the requirement, in order to achieve fair presentation. Able to understand? All of you. So fair presentation means we can deviate from accounting standard. Understand? For what purpose you can deviate? If at all accounting standard requirement is not meeting a fair presentation objective, then I can deviate so as to meet a fair presentation objective. Able to understand? Until now. So now if you look at the word misstatement, misstatement can be 4 varieties. How a misstatement happens in financial statements. In 4 ways a misstatement. It may happen in amount, it may be in a classification, it may be in presentation, or it may be in disclosure. Disclosure, how a mistake can happen. Non-disclosure is a misstatement. Wrong disclosure is also a misstatement. Getting it? You are not disclosing. Again, non-disclosure means full non-disclosure, partial non-disclosure. Non-disclosure can be 2 types. Is it fully not disclosed or partially not disclosed? And wrong disclosure means obviously wrong disclosure. You are disclosing something else other than what is reality. Able to understand. Now, presentation. We all know debtors, gross debtors minus provision for bad and doubtful debts. This is the way to present the debtors as per Schedule 3 or even as per generally accepted accounting principles. This is accepted way of presentation. What if the company is not following the netting of approach? The provision, they are showing it under liabilities side. That's not a right presentation. So in that way, a company can manipulate shareholders. A company can manipulate shareholders. Understand? Many a times we say, many a times we speak about for better understanding of the users, better understanding of the users. Across financial reporting, you come across this word. Across auditing, you come across this word. But understand, most of the users of the financial statements are illiterate in terms of financial statements. They can't understand financials. If you open any company's financial statements, first 2 pages itself, 99% of the CA final students themselves can't understand. How about a general public? Getting it? Financial statements are something, because the first page of any notes to accounts, if you look at, the first page it talks about the company prepared the financial statements using GAAP principles and using going concern assumption, and financial instruments are measured at so and so, financial instruments, so and so, all the content will come in the first page itself. We ourselves understood financial instrument word only after attending FR classes, correct? And do you think a normal stock market trader will understand what is financial instrument, all that? Definitely not. Do you think he will understand going concern? Do you think he'll understand GAAP, who is not a commerce background? So, financial statements, the words financial statements, the terminology is something which a normal person cannot understand. Only commerce background people can understand to some extent. If at all you studied financial reporting subject thoroughly, not from flowcharts, but from the original text, then only you can understand the financial statements. If at all you studied that also from flowchart, that also you can't understand the financial statements. Getting it? Fine. So this is misstatement definition. So whatever framework says, other than that, if at all the company is reporting something else, other than what is required as per framework, then it is called as a misstatement. Able to understand? Suppose inventory has to be measured at cost or NRV, whichever is lower. Cost is some 20 crore, NRV is some 17 crore. Company presented at 10 crore. What company reported? Sorry, 20 crore. What company reported? 20. But what is that principle? 20 or 17, whichever is lower. 17 you have to follow as per framework. What is the right value? 17. But how much company actually reported? 20. There is a difference. Difference between what is required and what they did. There is a difference, and that's called misstatement. Able to understand? Now, it can be in classification. It can be in classification. Suppose a company purchased a land for value appreciation. For value appreciation, company has surplus funds. So they want to park it somewhere. They want to invest it somewhere. So they found a land, a suitable land. Getting it? They invested very little in the land, but for investment objective. So what is that land constitutes? It constitutes investment property, and it has to be classified under investments. But the company classified it under fixed assets. The company classified under actually fixed assets. The company reported the land under fixed assets value. They classified it wrongly. How they have to classify as per the framework, as per the accounting standard? It's an investment property. It has to be classified as investment. But how the company classified it as fixed assets? So here it's a misstatement in the form of classification. So a misstatement can be in amount, can be in classification, presentation, or disclosure. And understand, our objective of audit is to obtain sufficient appropriate evidence whether the financial statements are free from material misstatements as a whole. Misstatement means this. Able to understand, all of you? Next. Now, so again, I'll come back to this. So the objective of auditor is to give opinion ultimately. Ultimately is what? To give opinion. And these opinions are broadly two types. One is unmodified opinion. Another one is modified opinion. So one is unmodified opinion. Another one is modified opinion. Yes. So there are two types of opinions. One is unmodified opinion and another one is modified opinion. So what do you mean by unmodified opinion? The auditor will express an unmodified opinion. The auditor will express an unmodified opinion if the financial statements are prepared and presented as per applicable financial reporting framework and they are free from material misstatement. Generally, these are students, right? Getting it? But the actual definition is, if auditor concluded based on sufficient and appropriate evidence that the financial statements are free from material misstatements and are prepared in accordance with applicable financial reporting framework, then the auditor will express unmodified opinion. Concluded based on sufficient and appropriate audit evidence. This phrase, 90% of the cases they'll eliminate. That's why we will not get full marks. Getting it? So you can always write answer in your own words, but don't write your own provision. Where we do mistake is we don't write full provision. That's a problem. If you write complete answer, complete points, whatever the definition says, suppose definition has 10 points. If you write all the 10 points in your own way of presentation, but if all the 10 points you covered, 99.99% you will get full marks. Getting it? And one more thing, people who are valuing your papers, first of all understand they are not teaching background. People who are valuing your papers, they are not from teaching background. They may be CA, but not from teaching background. Getting it? Do you remember foundation questions? Do you remember CA foundation questions? By looking at the answer, can you figure out is it right or wrong? CA foundation? No. If at all I gave you CA foundation question paper and answer sheets, how do you value? Based on suggested answer. So you will see suggested answer and see here. If it is not matching, you will strike off. Correct? Exactly what happens in CA final as well. Those who are valuing your paper have qualified at least 5 years before. Getting the point? 5 years before. Before India's came into picture. Before this audit report format changed. Before many topics in audit subject came into picture. So they qualified long ago. So literally speaking, they don't have this knowledge. Whoever is valuing, they will definitely not have a basic idea also. First of all. And that person is valuing your paper. So which means a normal layman is valuing your paper. Who can read and understand something? He is evaluating your paper. So in such a case, understand what should be the level of presentation. Correct? So remember, your paper is being valued not by the person who knows the subject, by the person who don't have any idea on the subject. He just looks at the scheme of valuation, suggested answer, and looks at your answer, compares both. If at all both are conveying a similar meaning, he'll award the marks. If at all they are conveying different meanings, he'll straight away strike off. The chances are more than 50% that he'll strike off the answer if at all your answer is not matching. So you need to really work more so that 99% you will reproduce the terminology. Not just audit, any other subject also the same. So that's unmodified opinion. Now another one is what? Modified opinion. You see, there is a clear logic behind the word modified, unmodified. Suppose management prepared financials. Company prepared financials. I verified them. I felt they don't require any modification. I felt the financial statements don't require any modification. They are excellent. They are showing true and fair view. They don't require any modification. What do you mean by They don't require any modification. So what do you mean by that? They are free from material misstatements. So since they don't require any modification, I will exactly agree with them. I will exactly agree with them. I will absolutely agree with them to issue to the public. So I will also not modify my opinion. Able to understand? Suppose I verified the financial statements. I discovered many mistakes. I discovered many mistakes. Will I straight away give opinion? No. First, I should tell the management, these are the mistakes that we identified. Please rectify. So we should ask management, please modify the financial statements because they are containing many misstatements. If they modified, everything did again properly. Okay, sir, before issue to the public, we will rectify everything. They went and rectified and everything they showed again with proper clarity. Now again, I will give unmodified opinion. Suppose management disagreed with me. No, sir, it is not possible. Once it is finalized, it is finalized. So board of directors have already gone out abroad and all. So it is impossible to rectify now. It is impossible to approve once again. This is final copy which we will send to public. Okay. According to me, the financial statements are containing many mistakes which require modification. But company is not modifying. I will modify my opinion. Since they are not modifying the financial statements which require modification, I am modifying my opinion. Able to understand the word behind modified opinion and unmodified opinion? That's it. Now again, this modified opinion, SAS 705 classifies into three types. One is, okay, qualified opinion, adverse opinion, disclaimer of opinion. So modified, qualified opinion, adverse opinion, and disclaimer of opinion. So different types of modified opinion. So which modified opinion we have to give? Which modified opinion we have to give? So here they may ask you a question in exam directly. Okay. So which type of modified opinion the auditor shall give? What are the factors the auditor will consider? Or they may ask you a question. Write about the factors in choosing different types of modified opinion. This question directly they'll ask. Now, whether should I give qualified opinion or adverse opinion or disclaimer opinion? It depends on the following. So what are they saying? The decision regarding which type of modified opinion is appropriate, it depends on nature of the matter giving rise to the modification. Nature of the matter and judgment about pervasiveness of the effect or possible effect. Judgment about the pervasiveness of the effect or possible effect. Now, you see, nature of the matter. The nature of matter is again two types. Whether the financial statements are misstated, whatever the misstatements you identified, are they material? Or you are unable to obtain audit evidence for material items. So, one is, you discovered evidence, you saw the evidence, you found the evidence, you verified everything, you discovered a mistake. So that is material mistake you discovered. That might be one reason why you want to modify. Second nature of modification. Second reason why I am modifying is I didn't get the evidence. I didn't get the evidence. When I did not get the evidence, when I did not verify something, getting it, inability to obtain evidence. So that is another reason. So this point, I mentioned it in a tabular format here. Getting it? So this case you strike off not required. This case you strike off not required. Now you see, like, so first one, suppose I conducted the audit. Let us assume I am talking about inventory. Let us assume I am talking about inventory valuation. So closing stock of the inventory is somewhere around some 10 crore. So regarding that I am talking about. So first question they are asking, have you obtained sufficient appropriate evidence? Have you obtained sufficient appropriate evidence? Yes, 10 crore worth of closing stock is there. NRV computation I have seen. Physical I have went and verified. I saw the inspection. I saw the records of the inventory. Physical verification I surprisingly did. They were matching completely. Management is also physically verifying. Internal controls, everything is fine. I got all the possible evidences related to inventory. Sufficient appropriate evidence, fine. So, are there any material misstatements? Is material misstatement exist? No. Is the material misstatement exist means? No. In this example, I don't have any material misstatement. So is there any pervasive? The question itself do not arise. When I did not discover a mistake, is it a big mistake or small mistake? That question itself do not arise. Okay, you can straight away give unqualified opinion on inventory. You can straight away give unqualified opinion on inventory. If at all your opinion is unqualified on every other aspect of the financial statements, as a whole if it is unqualified, then as a whole it is unqualified. Able to understand? All of you? Clear? See, first we should frame our conclusion on each and individual item of the financials. First we should have a conclusion on each and individual item of the financials, each and every assertion. Then after getting conclusion on every assertion, then we will form overall conclusion. Then what we will do? We will form overall conclusion. Getting it? Next, case 2. Yes, I verified inventory. I have verified. I verified controls. Everything was absolutely fine. Now NRV workings are also there. Cost is 10 crore. NRV is 12 crore. Company valued at 10 crore. But somewhere I have got a doubt regarding the person who did valuation of the inventory. So what I did is, I called my own valuationer. So using my own expert, using the work of auditors expert, SA 620. Getting it? So I called my own expert and I asked him to evaluate the once again inventory and give me a valuation report. He gave me a valuation report of 8 crore. And I also asked him, see, management also has an expert. He's also qualified like you. He's also a competent person like you, but he gave 11 crore. What is your answer on this? I asked my expert itself. He with a clear-cut discussion, with a clear-cut presentation, he showed me the assumption used by the management expert, the formula used by the management expert is not correct. My expert proved me clearly, logically, that the formula used by him is absolutely correct. So finally, I decided my expert amount, valuation amount is correct, NRV. And I asked management, please rectify the inventory value. Management denied. They don't want to rectify. They want to show 10 crores value only in the balance sheet. But according to me, what is the value? 8 crore. Do I have evidence that it is 8 crore? Yes, valuation report is there. Now management is not rectifying. Now tell me, is the financial statements materially misstated regarding the inventory? Yes, it is material misstatement. Do the financial statements contain material misstatements? Yes. Now what is the total balance sheet value? 100 crore. The total assets value is how much? 100 crore. Now how much mistake is there? Inventory 2 crore mistake. Remaining items are true and fair. Fixed assets, other current assets, other assets and all, everything is true and fair. Now 2 crore worth of mistake you found, right, which is material, no doubt. But because of this, can you say entire balance sheet is misleading? Can you say entire balance sheet is misleading? So is it pervasive? No. Okay, so give your opinion, give positive opinion only, but whatever the material mistake is there, that alone you point out, that alone you put it as a condition. Give a conditional opinion. Give a conditional opinion, and that's called qualified opinion. Qualified opinion is nothing but conditional positive opinion. Qualified opinion is nothing but conditional positive opinion. Able to understand. So give a qualification only on that, not on the entire financial statements. Don't qualify entire financials. Qualify only that item which contains material misstatement. Able to understand. All of you. Next. Now, same. Inventory and value. Balance sheet total 100 crore. Inventory value itself is 25 crore. Inventory portion is how much? 25%. The inventory portion is 25%. Now, as on 31st March, let us assume the inventory lying in the godown is 25 crore. Now, on 31st March itself, there is some incident happened relating to some short circuit. On 31st March itself. And that became so big, by 2nd April, entire inventory was smashed. Entire inventory was completely destroyed by 2nd April. As on 31st March, it started. But on 2nd April, it was completely destroyed. As on 31st March, more or less 25 crore worth of inventory is lying. But the situation present as on 31st March itself, that inventory will destroy. Management is trying to take all the precautions. Or nobody is aware of this. Only after the inventory was completely destroyed, everyone became aware of that. Getting it? Now I asked management, anyhow substance over form, inventory is not there as on 31st March itself because condition also exists. You can't claim the benefit of subsequent event, non-adjusting event. No, you can't do all that. So substance over form, 31st March itself, entire inventory was completely about to damage. So I requested management to write off the entire inventory. But management said, as on 31st March, since it is physically present, 2nd April only did not present, I will consider it as a non-adjusting event and I will only disclose in the financial statements, and they made a disclosure. So what they said, 31st March inventory, balance sheet 25 crore they showed. Somewhere in the notes to accounts, important non-adjusting events. Important non-adjusting events in that particular paragraph, in the notes to accounts, they clearly mentioned entire inventory was destroyed later on. And the company do not have any fire insurance. No stock insurance. Able to understand. So the company do not have any stock insurance. So they clearly mentioned that. But I know very well, the incidence is present even as on 31st March itself. So company financial statements are showing misleading picture. Now 25 crore is a material amount. And it is not just material. It's 25 crore. 25% of the asset item in the balance sheet. It may be one item, but it is representing substantial portion. Now, is it pervasive? Because of this 25 crore present in the balance sheet, company position is shown as solvent. Company position is shown as solvent. Actually, if I remove this 25 crore, company became insolvent. So, company insolvency, going concern is affected completely, but they are showing it as solvent. So, is it misleading? Is the balance sheet misleading entire public completely? Yes. Able to understand. Now, the effect is pervasive. Now the effect is pervasive. Since the financial statements are giving a misleading picture, since the financial statements are giving a misleading picture, I will straight away tell to the shareholders in my audit report, do not believe the financial statements. What will I tell? Do not believe the financial statements. The financial statements are not showing true and fair view. The financial statements are not showing true and fair view, and that's called adverse opinion. Able to understand, all of you? Getting it? I just took a hypothetical example for better understand. Getting it? In reality, this example may not be there. Able to understand? Like in reality, what kind of mistakes you will find is, suppose there is a company, it may not be consolidating one of its subsidiary. It may not be consolidating one of the subsidiary. And that subsidiary is going to be a material subsidiary. If a company, while preparing consolidated financial statements, if it is not consolidating important subsidiary company, then the consolidated balance sheet is showing a misleading picture. Able to understand? So non-consolidation means what? You are not accounting all the subsidiary company related assets. It's a pervasive, because every item will impact. Generally, the moment we think of pervasive, people think many items in the balance sheet affects. No. It may be single item, but that may be a very big. Or it may be multiple items. All the effect of all multiple items can be very big. You see the pervasive definition here? What is pervasive effect? Pervasive effect on the financial statements are those, in auditor's judgment, they are not confined to specific item. It is not something similar. It is not one or two items. It is not something one or two. Or if so confined, it may be one item. It may be one item. It represents substantial portion. Or we will also call this situation as pervasive if at all management made a misrepresentation related to disclosure which are fundamental to the user's understanding. Example, company has to follow accrual system. They didn't follow, but they are showing it as accrual system. Fundamental disclosures they made wrong. Some disclosure which is fundamental for the user. In order to understand the financial statements, it is fundamental to the user. Company prepared financials using old accounting standards, but the notes to account says Ind AS. Notes to accounts, the point says what? We prepared financials using Ind AS, but actually they prepared using normal accounting standards. Something which is fundamental for understanding. If at all the company uses the word Ind AS, I will open Ind AS requirement and I'll compare here. Both will not be matching. So user will not understand the financial statements. Able to understand. If a company in the financial statements made a disclosure which is fundamentally confusing the users of the financial statements, that's also called as a pervasive effect. Able to understand. So that's pervasive. So here we will give adverse opinion. Now, until now, we have seen only situation about evidence is available. Evidence is available. What if evidence is not available? So if evidence is not available, only two situations are enough. First situation not required. Generally, we don't focus on immaterial items. We generally don't focus on immaterial item. If an item is immaterial, not at all a material item in the financial statements, we may not verify that. Generally in audit, we don't verify immaterial items. We only concerned with material items, or more importantly, trivial items. They're also called as what? Trivial items. Trivial means, more than trivial. They are above trivial. Trivial means something that we can ignore. Triviality level. Generally in audits, especially in above medium sized concerns or in big fours, so they use materiality levels, triviality level, performance level, overall materiality. If they find a mistake which is trivial in nature, they ignore. Sometimes multiple trivial mistakes getting it together may become a material mistake. Trivial means immaterial, nothing but. Triviality means what? Immaterial. Able to understand? Now, suppose the company has a inventory value, let's assume out of 100 crore, again 10 crore worth of inventory is there. Again 10 crore worth of inventory is there. The company want to, the auditor want to verify this inventory. The breakup of the inventory as below. 10 crore, 3 parts. Inventory in hand, sum 5 crore. Inventory with third party, sum 3 crore. Inventory in transit, sum 2 crore. In transit means here, we already took the control of the inventory. So it is our own transport operator. So inventory is in our control. So it is in transit, but still in our control only. Getting it? So, but not in the Bodo. It is not in hand. So it is shown as in transit. With respect to in hand inventory, we have all the records. We have done physical verification. With respect to in hand, in transit inventory, the transporter gave evidence, everything is fine. Now with respect to inventory lying with third party, we wanted to go for external confirmation. Here, the inventory lying with the third party is sold to third party on sale or return basis. Since third party has not given acceptance, ownership is not transferred. Still until third party gives his acceptance, it is our inventory, right? But our inventory lying with the third party. But since ownership is with us, I will show in my balance sheet as asset, correct? So inventory with the third party, 3 crore value is there. I want evidence for this. I asked management, they showed me records, everything. I want to get a confirmation from third party because I'm not believing them. I don't have trust on these records. I want third party evidence. Somehow I didn't get third party evidence. I was not at all given his phone number, his address, nothing. Management is completely hiding details about the third party. In this case, 3 crore worth of inventory, I don't know what happened. Can I say management is cheating me? Or can I say financial statements are misrepresenting? Can I say that? No, I can't. How can I say this 3 crore is not there? So management showed some amount, inventory with third party 3 crore. And when I asked them, it is with third party. Show me the proof. They are not showing. Just because they didn't show me the proof, can I say they are not existing? No. Able to understand? If you want to prove that they are not existing, you must give a proof for that. You must give a proof that they are not existing. Able to understand? If you want to say that they are right, you must have proof. If you want to say that they are wrong, you must have proof. Here the answer is, I don't know. For a material item, 3 crore worth of inventory, we did not get evidence. We are unable to get evidence. Now tell me, whereas rest of the items I did audit, I verified everything, I got evidence. Until this moment, until this inventory verification, except this, everywhere else I got evidence, except this. Now, since 3 crore worth of item, out of total 100 crore balance sheet, I did not get evidence. No doubt, 3 crore is a material item, no doubt about it. But I did not get evidence for this. Can I withdraw from the audit because of this? Can I withdraw from the audit? I am unable to give opinion. Can I? No. Majority of the items in the balance sheet, you have evidence. Do one thing, give opinion on the overall balance sheet, put an exception to this. This alone you didn't get evidence, just mention that. Can I do so? There also we can give qualified opinion. There also we can give which opinion? Qualified opinion. Look, qualified opinion can be given in two situations. One, evidence is available, misstatement is proved, it is material but not pervasive. Second scenario, evidence is not available and the item is material. What if tomorrow if it is wrong? What if tomorrow if it is misstatement but not identified by me? Since I don't have evidence, I did not discover mistake. First of all, is it a misstatement? I don't know. Getting it? What if tomorrow it is actually a fraud? It's a misstatement. Possible effect is there or not? That's why the word possible effect is used. Here the word possible effect is used for evidence non-availability. Able to understand? If you look at the qualified opinion definition, no. Second part of the definition. If auditor is unable to obtain sufficient appropriate evidence and concluded that the possible effect of undetected misstatement. Undetected misstatement means what? First of all, is there a misstatement? No. Why? I didn't detect. I did not detect. Undetected means unidentified. Possible effect of unidentified mistake. Possibility is there? No. Mistake is there, not identified by me, but possibility is there for this. Because why am I talking about possibility? Evidence is not available. If you show me, if at all you give me a confirmation from third party, I will not be thinking about all this. If third party showed me if third party gave me confirmation, I went there, I saw the inventory, I'm happy. You are saying inventory is with the third party and you are not giving me information. What if tomorrow if it is wrong? People will question me, yes or no. So, if possible effect of undetected misstatement, if it is material, then also give qualified opinion. If you discover right now material misstatement, give qualified opinion. If you did not discover any mistake, but possibility is there, because you did not discover any evidence. Able to understand. But the possibility of the mistake is going to be material. If at all discovered tomorrow, then also treat the same way. Give qualified opinion. Able to understand. Suppose if the possible effect is not just material, but also pervasive, then don't give opinion. Then don't give opinion. Disclaimer. Getting it? Entire financial statements, you did not get evidence. Major portion of the financial statements, you did not get evidence at all. What if tomorrow, entire portion which I have not verified, what if they are completely wrong? They are completely misleading. If they are completely misleading, how can you accept that everything else is fine? There is no such thing called everything. Getting it? Major items of the financials, you did not get evidence. When you did not get evidence on the major item of the balance sheet, major item of the P&L, how can you give opinion first of all? If I have to give opinion, majority of the cases I must need evidence. Major item of the balance sheet, major item of the P&L, if I have confidence, I'll give opinion. If I don't have confidence on the major item of the financial statements, how can I give opinion? I will not give opinion. Disclaimer of opinion. It's not disclaimer opinion. It's disclaimer of opinion. Able to understand. So, what are the different cases, different opinions we covered? Easy. Now you see the definitions here. You see the definitions here. So, what is a qualified opinion? Now, once again, okay. Before I go ahead, different types of modified opinion. Once again, you see here. Now, the decision regarding which type of opinion is appropriate, it depends upon nature of the matter giving rise to the modification. So, because of which reason you want to modify the opinion? Is it because of the material misstatement? Or is it because you are unable to obtain audit evidence for material item? First identify, is it misstatement or unable to obtain evidence? Which one? Once you decided, yeah, it's because of the misstatement, or yeah, it's because of inability to obtain evidence, then think about the effect of the misstatement. Or think about possible effect of the undetected misstatement. Able to understand how the words are used. Effect is for the actual mistake. Possible effect is for the expected misstatement. Expected means nothing but undetected misstatement. Don't write the word expected misstatements. Expected misstatement is a word used in sampling chapter. So don't use it in normal audit reporting chapter. Undetected misstatement is right word. Able to understand. Undetected misstatement means what? There might be some mistake, but which I have not identified. Expected misstatement means estimation. Able to understand. So possible effect of undetected. So these are the factors which will affect the auditor to select the modified opinion appropriately. Able to understand, all of you. Now you see the qualified opinion. The auditor shall express a qualified opinion when auditor, having obtained sufficient appropriate evidence, concludes that misstatements are material but not pervasive. Suppose if I remove the word but not and put end, it will become adverse opinion. You see the first part of the qualified opinion definition and the adverse opinion, they both will match. Once again, you see the qualified opinion wordings, but I'll highlight you. The auditor, same, yes or no? Having obtained sufficient appropriate audit evidence, correct? Concludes that misstatements are both material and pervasive. Here, material but not pervasive. Exactly the same. If the word but not is removed and substituted with the word end, it becomes adverse. You see, we will give qualified opinion in another situation also. Qualified opinion we will give in two situations. That's why we have two parts of the definition. Adverse opinion only one situation. If that situation exists, adverse opinion. Disclaimer opinion. If that situation exists, straight away, disclaimer opinion. Correct? So, second part of the qualified opinion, you see. The auditor is unable to obtain sufficient appropriate audit evidence on which he will base the opinion, but the auditor concludes the possible effect on the financials of undetected misstatements, if any, could be material but not pervasive. Here, if I remove the word but not and put the word end, it will become disclaimer of opinion. Simple. Able to understand? All of you? Now if you look at almost opinions, 4 types we have already covered. We have covered mostly opinions. Getting it? So opinions we have covered. So it may be an unmodified opinion or it may be modified opinion. Now, what is the basis for opinion? Now, while understanding this little bit discussion, it will come again. Now, see, whenever you are giving an unqualified opinion in a real audit report, the opinion para, in a real audit report, the opinion, every section in the audit report will have a side heading. Actually, these are all called as sections in the audit report. Opinion is one section of the audit report. Basis for opinion is another section. Material uncertainty related to going concern is another section. These are called as sections, or these are also called as paras. More frequently used word is section. If you look at any standard, it uses the word section. Auditor's responsibilities for the audit of financial statements is section. Responsibilities of management is section. Auditor's opinion section. Basis for opinion section. Able to understand? Now, what are the sections that we have completed right now? Title we understood. Addressee we understood. Opinion we understood. Now we need to understand basis for opinion. So we have section called opinion and basis for opinion. But these should be the side headings also. In a real audit report, when you are preparing, these are side headings, nothing but. Like I'll show you better. So this is audit reports format. You will find them in pronouncement books. You will find all these in pronouncement books. These are important formats for MCQs. You may get an MCQs on this. Getting it. Case-based MCQs and normal MCQs are framed on this many a times. Okay, you see, there is a title here in the audit report called Independent Audit Report. And there is an addressee to the members. And the first section in the audit report is what? Opinion. Like this, we have to use side headings. Able to understand? Now, you see here, the first two side headings are what? Opinion and basis for opinion. Now, in case when auditor gave qualified opinion, side headings must change. Qualified opinion, basis for qualified opinion. Same way, adverse opinion, basis for adverse opinion. Disclaimer of opinion, basis for disclaimer of opinion. Able to understand? Now, so opinion, you see, opinion section we will read once. So we have audited the financial statements of ABC Company Limited, comprising balance sheet, P&L, cash flow, statement of changes in equity, all that. In our opinion, to the best of our information, according to the explanation given to us, this is actual opinion era. Okay, the aforesaid means we spoke about here no financials. The aforesaid standalone financial statements give the information required by the Act in the same manner so required and give true and fair view in conformity with GAAP in India. Suppose if it is compliance framework, no, this word will not come. This word, whatever I have highlighted, that will not come in case if I give an audit report on financial statements prepared as per compliance framework. This word, whatever I highlighted, will not come. That sentence will not come. Able to understand? Now, what is the basis for opinion? The basis is what? See, generally, when I give positive opinion on the financial statements, what is the reason if you ask me? I have so many reasons. Inventory is right, trade receivables is right, I got sufficient appropriate evidence. So see, when will I have a concrete reason? When will I have a specific reason? Whenever I give a negative opinion. Suppose if everyone asked me, like financial statements, many shareholders ask me, sir, financial statements are true and fair. Yes, I said true and fair. They don't ask me anything else. If they ask me, financial statements true and fair. No, I said no, they are not true and fair. Where is the mistake? They'll ask me. Yes or no? That's why whenever we give qualified opinion, adverse opinion, or when you are unable to give the opinion, in the basis opinion, in the basis for opinion section, you need to clearly mention the reason. You need to clearly mention the specific reason why you gave a modified opinion. But if you look at basis for unqualified opinion, what is the basis? What is the basis for unqualified opinion? No basis. Literally speaking, no logic. The basis is only my work. See what I did, we did our audit. How we did our audit as per standards on auditing given under Companies Act. Our responsibilities under those standards. No, we have so many responsibilities as per those standards. Now all these responsibilities, no, we described in auditor responsibilities for audit of financial statements section. In the same report below we have another side heading. Auditor responsibilities for audit of financial statements. This is a section in the audit report, yes or no? So our responsibilities under those standards are further described in auditor responsibilities for audit of financial statement section of our report. In our report, we have another section called auditor responsibilities for audit of financial statements section. In that section, we spoke extensively about our responsibilities. There we will say audit is containing so many limitations. We only give reasonable assurance. We will not give absolute assurance. Audit is not a guarantee. We have time constraints. So many things we will discuss. Are you able to understand? Now, further, what are we mentioning? We are independent of the company as per Code of Ethics. We have fulfilled all the ethical responsibilities. And remember, we believe that we have obtained evidence which is sufficient and appropriate. Only after this, I gave the opinion. See, in the above para, we are saying what? In our opinion, to the best of our information, according to based on the information I got, based on the explanation I got, this is my opinion. Now, people question is, have you got enough information? Have you got enough explanation? You may say, see, you may have got 10 points only out of 100. And based on 10 points, you are giving this information. I am asking you, whatever 10 points you got, is it enough for you to give opinion? Able to understand? Suppose I'm asking you, can you please just tell me how a particular mission is? You went and saw, and then based on your examination, you said everything is fine. My question is, first of all, do you know about the mission in order to give an opinion? First of all, do you have enough knowledge and competence on that mission? Able to understand. So that is what indirectly they are testing here. Do you believe you got enough information you want, enough explanation you want, sufficient and appropriate evidence have you obtained before your opinion? So auditors are stating here, they are explicitly stating, we believe that the opinion, the evidence we have obtained is sufficient and appropriate to base our opinion. Able to understand? So auditor is giving an explicit affirmation that we have got enough evidence, and only then we are giving this opinion. This is actually opinion, real audit report actually. This is a real audit report format. If you take any real audit report also, this exactly looks like the same. Suppose you take Air India or Reliance or any company. So we will discuss in classroom so many other frameworks, UK, Europe, even in PCWG, America framework, all that we will discuss in regular class. Here it is not required. Getting it? Now you see here they have given qualified opinion, Air India. The auditors of Air India have given a qualified opinion. Here you see basis for opinion para. It is not something like we discussed in the standard. Because Air India auditors have given qualified opinion. Why you gave qualified opinion? They need to give reasons. You see, what are the reasons they gave? They gave some fair value adjustments for their, some trade receivables and payables, no confirmation, some assets or lease liabilities and all not calculated properly. So some reasons they gave. And after that, they again spoke about the same thing. We conducted our audit in accordance with standards on auditing. And our responsibilities under those standards are further described in audit responsibilities for audit of financial statement section of our report. We are independent of the company as per code of ethics issued by the company, and we comply with all the code of ethics. We believe that the evidence obtained by us is sufficient and appropriate. Exact para, copy pasted. Suppose Air India gave unqualified opinion, only this para will appear. But because they gave qualified opinion, in addition to this para, they need to talk about why they gave qualified opinion. If it is unqualified opinion, only this para will come. If it is qualified opinion, specific reason they need to give and general answer they need to give. Adverse opinion, specific reason they should give, general answer also they should give. In the basis for opinion, this is standard para. This is standard para. This will always stay. In disclaimer of opinion, this para again will not come. Okay. Under basis for disclaimer of opinion, under basis for disclaimer of opinion section, the paragraph contents will again change. You know, this question is asked not in final, at inter. Write about basis for opinion paragraph in case auditor has expressed a disclaimer of opinion. So what points auditor will mention under the basis for opinion para? At CA inter they give. Final is not an exception. So they may ask even in final also. It has asked many a times. Not this, but in a different ways. Are you clear? In final, this question has been asked. What are the contents of auditor responsibilities for audit of financial statements section when auditor expressed a disclaimer of opinion? When auditor expressed a disclaimer of opinion, what are the contents of auditor responsibilities for audit of financial statements? Fine, all that I will show you. How examination, questions and all might come, we will discuss. So I'll go to qualified opinion now. Just we will close this 700, 705 fast now in some time. This formats first we will check and then we'll take a break and then we will close this 700, 705. Then we'll go to the next sections, okay? Is this fine speed? Everyone comfortable? So qualified opinion. Just now we have seen Air India format, yes or no? So when auditor gave qualified opinion, see the side headings, qualified opinion and basis for qualified opinion. You see here also title, addressee and opinion. You see here somewhere in middle, this we didn't discuss. This is this report deals with which financial statements? Suppose if the company is also preparing consolidated financials, then 129 subsection 3 says the statutory auditor have all the responsibilities whatever responsibilities he has on standalone, same responsibilities he has with respect to consolidated financial statements. So whenever the company is preparing two sets of the financial statements, one is consolidated, another one standalone, auditor has to give audit report on both the sets. Correct? The auditor has to give audit report on both the sets. So in such a case, which report your audit report dealing with? So in the same annual report, we are having two audit reports. We are having two sets of financial statements. Your audit report deals with which financial statements? So you need to clearly mention audit report on audit of standalone financial statements. You see Air India audit report. This is audit report on standalone financial statements. Below we might have audit report on consolidated financial statements as well. We might have consolidated financial statements as well here. These are all key audit matters. In Air India, I think it crossed up. Okay, management replies to auditor's report on standalone finance. Okay, these are all management replies. Audit report on standalone financial statements. And below itself, I think immediately they have given, I think so, other legal and reporting requirements. And after that, okay, this is a IFCO report. Okay, only standalone, this one. Only standalone. I think in the annual report you will find, in annual report you will find generally. I'll show you anyhow. I'll come to that audit reports also. I'll show you. Getting it? So that side heading will be required in case this side heading is required in case when the company is having two sets of financials. In that case only it will come. Suppose the company where I am doing audit, they have only one set, that is standalone. I need not use this side heading because there is only one set of financials which is standalone financial statements. I can simply say two members start with opinion section. Able to understand? But for better cause, you can, for a better presentation, you can use this side heading always. Getting it? Now, you see here, opinion and basis for opinion, because here the opinion given is unqualified opinion, whereas here the opinion given is qualified opinion. Here also you see we have audited, standalone financials, everything is same. In our opinion, to the best of our information, according to the explanation given to us, the aforesaid financial statements give information in conformity with GAAP. But here in between they have added a sentence, except for the effect of the matter. Except for the effect of the matter. There are some matters, except their impact. Except their impact, the aforesaid financial statements are true and fair. So what are the matters? Don't worry, the matters are described in basis for qualified opinion section of our report. Except those matters, the aforesaid financials are true and fair. So what are the matters? You see here. We conducted our audit in accordance, again it's a common para, correct? Now you see here. The company inventories are carried in balance sheet at cost. Management has not stated them at lower of cost or NRV, but purely mentioned them at cost, which is a departure from accounting standard. Now, they are not only mentioning that there is a mistake. Auditor should also, see, qualifying alone is not enough. You should also quantify. You should also quantify. Quantification is also important. See, the company records indicate that had management stated the inventories at lower of cost or NRV. Suppose if the company valued them at lower of cost or NRV, 20 or 17, whichever is lower, 17, an amount of 3 crore would be required to write down the inventories to their NRV. Accordingly, cost of sales would have increased by 3 crore. Income tax would have been, since inventory, income tax would have been decreased by this much. Shareholder funds would have been decreased by this much. Like that, we should clearly mention. We should quantify the impact. Auditor is mentioning inventories are materially misstated. Because of that also, user is not understanding how much is the quantum of the mistake. Able to understand all of you. Now again, you may get a doubt. See, why we are mentioning reason, you are giving qualified opinion and you are mentioning reason also. One advantage of this reason is shareholder will understand where the mistake exactly is. Another advantage, remember, you are thinking it is material and you are qualifying. But another aggressive investor in stock market is very aggressive. For him, this amount may not be material. Able to understand? So if you are giving specific reason why you gave modified opinion, it is people's choice whether to consider your modification or not. Able to understand, all of you? That's it. Now, so we'll look at adverse opinion. These are all like qualified opinion, adverse opinion, all these illustrations you will find under SA 705 in the pronouncement book. Getting it? Now, adverse opinion, you see. Again, side heading adverse opinion. Here also everything is same. In our opinion, to the best of our information, according to the explanation given to us, the aforesaid financial statements do not give true and fair view. What they are saying? Do not give true and fair view. Why? Because of significance of matters discussed in basis for adverse opinion section of our report. Below, in the same report, basis for adverse opinion section is there. In that, there is a matter. Because of its significance, I am saying the aforesaid financials do not give true and fair. I am straight away saying do not give true and fair. Negative sentence. Able to understand? Now, what are they saying here? As explaining so and so, the group has not consolidated subsidiary. Probably this is an audit report on consolidated financials. So what mistake they did? The company prepared consolidated financials. In that consolidation process, one important subsidiary company information they completely ignored. They did not consider one subsidiary company at all, which is important subsidiary, material subsidiary. They did not consolidate. Now tell me, I qualified. I should also quantify, no? I should also quantify. Where, which amount, which item affected, I should quantify. But tell me, this mistake, can I quantify? If a particular subsidiary is not consolidated, can I quantify this mistake? Impossible. How many I will quantify? See, in the previous example, qualified opinion, only inventory is misstated. I can clearly tell inventory is misstated this much because of this sales affected, because of this profit affected by this much, shareholder funds affected by this much, I can clearly mention. But in consolidation, if one subsidiary company is not consolidated, which items in the balance sheet are affected? Which items in the P&L are affected? How can I measure? I can't measure, correct? So standard says, wherever quantification is not possible, auditor must state that it is not possible. So here you see, auditor clearly mentioned the effect on the consolidated financial statements of the failure have not been determined. You should specifically mention that. Able to understand? So we have that notes also in the material. Don't worry, we have that notes also in our material. So if you go to SA 705, we have clearly mentioned, I think we have mentioned it as part of question bank. Probably, yeah, we have mentioned it as part of question bank. We have our own question bank. So in that question bank, we clearly mentioned some advanced topics. What should be the content of basis for opinion para? What should be the content of basis for opinion para? Just a minute, I'll show you here itself. See, question bank, like I have seen many students looking at past 10 years papers. Like outside question banks, what is available is they just compile past 10 years questions, past 10 years RTPs, MTPs. Solving them is literally useless. See, come out of that old methods of learning. Now you have seen how the papers are. Getting it? If you study one proper material which covers everything, that's enough. For me, in my particular thing, question bank is not about past questions and all. I only cover past 3 exams. But what I cover in question bank is little advanced topics. Like I'll show you here. I don't know whether have you seen this or not anywhere. 700. You see here, when auditor disclaims the opinion, the auditor responsibility section shall contain what? So there is a question I have clearly given here. Yeah, this one. So how basis for opinion paragraph, description of basis for opinion in case of modified opinion. First of all, whenever you found a material misstatement, you need to quantify. Actually spelling mistake, you need to quantify unless it is impracticable. If you are unable to quantify, shall include a statement that you are unable to quantify. Suppose if it's a non-disclosure, if the material misstatement is like by way of non-disclosure, they didn't disclose, that's also a misstatement, right? So how basis for opinion paragraph should contain? So that point. What if you are unable to obtain evidence? How basis for opinion paragraph should be drafted? Suppose when auditor is giving disclaimer of opinion, auditor shall not include the following elements in the basis for opinion section. When you are expressing adverse opinion or disclaimer of opinion, reasons also you should mention. All these points were there. I don't know whether your whatever the material you are following contains all this discussion or not. Able to understand? All of you. See, don't think like I strictly oppose flowchart materials and all. Last attempt and that before last attempt also, the paper was completely, it's not hard. It's not difficult, I say. It's completely asked based on all these concepts. These kinds of concepts only tested at many places, which students generally ignore. They don't even, like they don't study at all. So I'm using this particular pattern from edition 1 itself. For my edition 3, I'm going to include this as part of main material because in CA intros, I'm discussing all this. In CA intros, I'm discussing all this. Getting it? When syllabus is full, you should study that full syllabus. I told you, if you want to skip something, don't skip part of the chapter. Skip the chapter itself if you want to. So like I told, second priority chapter, skip them completely and focus on this fully. So what we are doing actually, in every chapter we find something unimportant and we skip them. And what happens in examination, from those unimportant points it will come, if at all the paper comes. Obviously, our preparation completely go away. Correct? So what you have to do is, select some chapters which you feel difficult, ignore it completely. Rest of the chapters you become master. That's the safest approach. Here you are studying, here you are putting same efforts, there also you are putting same efforts. In both the cases, see what you do generally in every chapter, some 20-30% syllabus you will skip. I am asking you skip 20-30% chapters itself. Remaining 70% chapters be strong. So in this case, from any corner of the chapter, let them ask. You can definitely answer. Clear? So in this way, this way also they can ask. So in examination, write about audit reporting requirement for basis for opinion section. If a material misstatement in the financial statements occurs by way of non-disclosure. So they may ask you a question on this. Straight away. You're observing no paper pattern. And why I am telling you not to look at past 10-year papers, past 15 years, because auditing paper has become somewhat technical only from the past 3-4 attempts. Before attempts, auditing paper, I don't consider it's a question paper at all. They're very easy. Even without coaching, you might have heard auditing doesn't require coaching. In articles also. Because earlier, we don't need to take any coaching. Hardly some 30-40 pages material. If you study, you will go and write. With little smartness, you will qualify. But now it is not like that. You need to know every concept. Getting it? Suppose if it is audit report chapter in ICI material is approximately 100 pages plus. You need to understand entire that 100 pages thoroughly. Clear? So that's it. And next, so this is regarding adverse opinion. Now I will show you disclaimer opinion as well. Then we will compare all the three. So this is disclaimer of opinion due to inability to obtain audit evidence about single element of the consolidated. Single item only, but that may be substantial portion. Able to understand? That may be substantial. The auditor was unable to obtain evidence about single element, that is investment, which represents 90% of the asset value. It may be single item in the balance sheet, but that item itself is 90% of the total assets. 90% value of the asset, you did not get the evidence. So what will you do? You will not give opinion. And you see here, generally, disclaimer of opinion we give. You see, generally the first word, first letter, every time, whenever you see unqualified opinion, qualified opinion, adverse opinion, the wordings will come in. So we have audited, we have audited, we have audited. Whereas disclaimer, we didn't audit. We didn't verify because we didn't get evidence. So how can I use the phrase we have audited? We were engaged to audit. We were engaged to audit. And you see, We do not express an opinion. We don't say, in our opinion, to the best of our information, according to the explanation given to us, we don't have opinion. Can I say like this? So straight away, we do not express opinion. Why? Because of significance of matter described in basis for disclaimer of opinion section of our report. And you see here, if you observe here, we conduct our audit as per standards on auditing. That para is not there. In disclaimer of opinion, we conducted our audit as per standards on auditing. We comply with see, you are not giving opinion at all. How will you do audit? Why it is necessary for me? Correct? Huh? When you are not at all giving opinion, how you see? When I gave an opinion, unqualified opinion, qualified opinion, adverse opinion, or these three are proper opinions. These three are actually opinions. Whereas a disclaimer of opinion is not an opinion. It is not an opinion. Whenever you are not giving opinion, how will you frame your opinion? Why that is relevant to me? If you gave an opinion for my understanding, I can ask you what is the basis for the opinion. You are not giving opinion. So why do I need your logic? Behind logic, yes or no? So we conducted our audit, entire that discussion will not be coming. And even auditor responsibility section also, very simple. Generally, auditor responsibility section will be very lengthy. Whether you give unqualified, qualified or adverse, auditor responsibility section will be very lengthy. Whereas in disclaimer opinion, auditor responsibility section will be very small. Getting it? Here what auditor will say, our responsibility is to conduct audit. However, because of the matter described in our report, we were not able to obtain sufficient appropriate evidence to provide a basis. By the way, we are independent of the group. We complied with ethical responsibilities. That's it. In auditor responsibility section, if auditor gave disclaimer opinion, this should be the content. So this question has been asked as a theory question in exam. What are the contents of auditor responsibility section for audit of financial statements? Getting it? When auditor expresses a disclaimer of opinion. Able to understand? All of you? That's it. Now, auditor responsibilities. Where auditor responsibilities must be described. It should be described only within the body of the audit report. Wrong. 3 places. Auditor responsibility point is there, no? This point can be explained in 3 places as per the standard. But in India, we explain everything in audit report itself. Getting it? But the general standard permits, the actual standard says, you can entire audit responsibility, so many points will be there. You can describe within the body of the audit report. 2, you can put a website link. 3, you can refer to that act which talks about this. Getting it? But in India, we don't follow the remaining 2 methods. We only follow the first method. Entire responsibilities, we will write it in the audit report itself. This question is asked in exam, in CA final. In CA final only it is asked. Able to understand? So they don't come and ask you, tell me what is qualified opinion. Getting it? Like that you will not find questions. MCQs, coming to MCQs, how the questions will be framed. So this one I'll finish. With this we'll take break, okay? So how an MCQ will be framed? I'll tell you a sentence. You have to tell me. You have to fill the blank. In our opinion, according to the information and explanation given to us, because of significance of the matter described in basis for dash. Basis for dash. Once again, I'll repeat. In our opinion, to the best of our information and according to the explanation given to us, because of significance of the matter described in basis for dash paragraph. A. Qualified opinion, adverse opinion, disclaimer of opinion, key audit matter. Which one? See, you're doubtful. Adverse opinion. Because of significance, if the word because you find, in our opinion it started because you find, obviously basis for adverse opinion. In our opinion, to the best of our information and according to the explanation given to us, except, then basis for qualified opinion section. These kinds of MCQs. Able to understand? Unless you have tremendous command on the terminology, you need not remember everything. You should be able to recognize where, how these wordings will be used. If you are able to recognize that, then only you can answer MCQs. Clear? That's it. So with this we understood what are various types of opinions. We saw definitions briefly. We understood briefly the reporting procedure as well. Getting it? And the resources I showed you, what are all you have to refer. That's it for the revision. Relating to opinion. So now what we covered only opinion and basis for opinion. Are you clear? All of you? So we'll take break. Yes. So few students are asking, so which material we have to follow? Which is good? Generally, what is most important with respect to any material is the connection that we have. With every material, whatever material you are following, if at all you are having a very good connection on that material, please follow that. Like, don't blindly follow a material just because somebody else is recommending or many are recommending. So always try to figure out with what material you are having a strong connection. But can I tell you one best option is ICA material. No doubt about it, ICA material is the best material available in the market. Now, other than ICA material, if at all you want to follow, which material you can follow? Follow that material which is drafted or prepared in line with ICA material. Where, see, like suppose what I do with how I prepare the material, I'll tell you. Whatever ICA material is there, we just take the same ideology, same principle, same content. We download it from original standards. And as much as possible, 95% same content will be retained. Only thing what we do is, you see, here we did the sorting, like side heading, underlining, yes or no. This kind of formatting we do additionally. Able to understand? But what some people may do is, they skip entire points or they may redraft the points on their own, which is not correct enough. Getting it? See, like very simple. Some sentences, whatever is given in the book, I will explain as per my own comfort. The words, the sentence, the phrases will be as per my comfort, which may not be in your comfort. Able to understand? That's why better follow the ICI terminology. Most of the sentences I'll not modify. Whatever I've taken from ICI material, same I'll keep. But my reading style, the way you read, the way you stress on each and every word, that will make you understand better. Able to understand? Like you will learn that how to read the subject. Like many of us, once again I'm telling you, things that we know better reading. But actually, we don't read every word particularly. Every word has a meaning. Every word will change the meaning. So every word has significance. So putting emphasis on each and every word that you're reading in a particular sentence makes you understand the subject much more better. Like at the end of this chapter, if you look at this chapter, we have given so many practice questions. If you check here, so almost 148th page it starts, audit report, and it completes on 133rd page. So if I go to 120 page somewhere, I think from there itself the questions will start. You see here, we have given some additional questions and concepts. So guidance note on internal financial controls over financial reporting. This is a question given in the ICS study material. So from this, any part of this question might be asked in exam. Getting it? They may ask you write about applicability of internal financial controls. So both you need to write applicability and non-applicability. See, for me, company audit chapter and audit report chapter both are one and same. For me, I consider them as a single chapter. Getting it? So that's why few company audit questions also will come here. But I have not discussed in the company audit right now. So I started the revision class with audit report. Now, periodicity of IFC reporting. On this, a true or false question has been asked. What is the periodicity? But anyhow, IFC topic I have not yet started. So after audit report, I'll discuss preferably company audit important topics. Not every topic, but important topics I'll cover. Next up. So this is also regarding, CARO requirement, CARO reporting requirement. So what is the procedure for reporting requirement of CARO relation to fraud? So in this way, a question can be asked. Write about the audit procedure and reporting related to fraud. Only this segment can be asked in the exam. Then, this again a repetition. Now, what is the difference between notes to accounts and qualifications? These are all given in study material. All these questions were given in the end of study material, at the end of audit report chapter, at the end of company audit chapter. So all these questions we have kept here. Difference between audit report and audit certificate. Comparison between reporting to shareholder and reporting to top management, those charged with governance. What is the difference between a qualification and emphasis of matter? So, and a case study questions like this. Case study based questions like this. So they'll give entire case situation. So this concept I know wherever I dealt it under question bank, so it is dealt there. So here also you see. So this kind of questions are asked in recent exams. Like this is on going concern. We have not yet started that discussion, so that I will start and correlate with all this. So you see here another case study. They'll give and ask you to write the answer. And they'll give this situation. They'll ask you to write the answer. So these are the theory questions how you get in exams. This is how you get in theory questions in exams. And apart from this, I even gave some illustrations. Which are all taken from CA final study material. So some illustrations. So they'll give a case study and which opinion you'll give in that scenario. Like this, from past 4 exams, 1 5 marks question is coming. Which opinion you'll give or how audit reporting will affect. So like this, they're asking for 5 to 8 marks. Sometimes even 2 questions also they're asking 10 marks, 5 marks each. Getting it? In addition to this, question bank audit report chapter contains a few more questions. If you take only company audit and audit report, in my main material, illustrations and additional questions, practice questions, and question bank practice questions, altogether approximately 60 questions I'll be covering. 50 plus for sure. 50 plus practice questions I'll be covering. Now some students again ask this, can I only read this question bank and go for exam without reading the main material? No, don't do that. Because question bank covers concepts of approximately 30% only. Any question bank you take for the matter in the market, they hardly cover, worst scenario, 50% of the syllabus concepts. Suppose in a chapter, they may give you 100 questions, but all 100 questions may be talking directly or indirectly about only 50% of the topics. Rest 50% of the topics are not covered in any question bank. They might be asking us an MCQ. They might be tested as true or false statement. Able to understand? So always reading main material is at most important. Only after that you need to practice the questions and then question bank. Clear? Now for your information, in audit report, what points I will cover? Basically in audit report, what points, what standards I'll cover? Just a minute. So in audit report, basically what are the things that we cover? So we cover the following. If you look at, these are the standards generally we discuss: 700, 701, 705, 706, 710, 720, 299, 600, 610, 620, 570, 260. These standards directly or indirectly have an impact on preparation of audit report or the reporting process. Suppose you take 260, it doesn't deal about audit report. It may deal about reporting process. The process of communication between auditor and management relating to audit report. So that is what discussed under 260. Whereas 610 talks about using the work of internal auditor. 620 again somewhere talks about audit report. 600 again talks about audit report. Able to understand? Fine, I'll come to that. So once we finish all the concepts, whatever I spoke, then I will show you as a whole material in the revision. I will not explain each and every point, but I'll show you what are all the points that were there in the material, how the questions were drafted. Clear? So I think this exercise will do in the revision. Remember, revision is not a way to learn. It's to learn how to learn. Getting it? So through revision, you will understand how to really approach to the subject later on. Definitely, before this revision and after this revision, the way you see the audit subject will definitely change. That I can guarantee. Getting it? Now, so let's go to the next topic. So we briefly covered opinion and basis for opinion para. Now what is the next thing we need to discuss is, now we'll discuss emphasis of matter paragraph, other matter paragraph. After this I will come to key audit matter. After that I'll discuss going concern. Then I will discuss other information para. Clear? Now. So what is the next one is Emphasis of matter paragraph. Emphasis of matter paragraph. So what is an emphasis of matter paragraph? So the definition, if you look at emphasis of matter paragraph, definition if you look at, emphasis of matter paragraph is a paragraph in the auditor's report that refers to an information appropriately presented or disclosed in financial statements. That refers to an information appropriately presented or disclosed in financial statements. So I will just show you the definition here itself. So emphasis of matter paragraph means a paragraph included in the auditor's report that refers to a matter appropriately presented or disclosed in the financial statements. So that's an emphasis of matter paragraph. Now this matter is selected by auditor using auditor's judgment. So in accordance with auditor's judgment, it is of such importance which is fundamental to users' understanding of the financials. Okay, let's come to that sentence later. Now, so what is emphasis of matter pair? Now, if you look at any audit report, actually, you might have understood the concept of meetings, general meetings in law, where you understood that notice has to be sent to shareholders. And notice must be sent to shareholders at least 21 clear days before. You know why 21 days time is given to shareholders? Because when a company is sending notice, they will not just send the notice. Along with notice, they will send financial statements, auditor's report, board report, and other additional reports as required under SEBI guidelines. If it is a listed company. If it is not a listed company, basically what do they send to the shareholders? They will send to the shareholders the notice of general meeting, financial statements, auditor's report on the financial statements, board of directors report, and any other additional reports prepared by the company board of directors. So these will only be sent to the shareholder. How all this will be sent to the shareholder? As a bunch of booklet. As a booklet they'll send, and that booklet is called as annual report. That booklet is called as annual report. So annual report is nothing but what you know. The main purpose of annual report is to give notice. You look at any annual report. It actually contains notice mainly. It mainly focuses on notice for the AGM. Now, people have to come to the AGM and they need to approve the financial statements. Yes or no? Adoption of the financial statements. Without reading, how can they adopt? That's why along with notice we are sending financial statements and we are giving the minimum 21 days time. Minimum 21 working days time so that they will read and come and give an appropriate decision. So the 21 days time is given for reading. Now the financial statement, if you observe any big company financials, especially listed companies, their financial statements, approximately will run through 50 to 100 pages. Some are even 150, some are 200 pages. The financial statements go around 100 plus pages. 100 pages. Balance sheet 1 page, P&L 1 page, cash flow 1 page, statement of changes in equity 1 page. Remaining notes to accounts will be 100 pages. Now tell me, do you think a reader of the financial statements or a shareholder of a company read entire 100 pages? Definitely not. He cannot read. It's impossible. And moreover, I told you at the beginning itself, most of the shareholders are not financially literate. They will not have the financial knowledge. They cannot understand the financial terms. Whereas these financial statements are prepared using Ind AS, which contains completely financial terms. Correct? In Ind AS, you might have know how many terms were there, how many terminology were there in each and every standard. How the term has a different meaning compared to a normal meaning. Correct? So it is impossible for any reader to go through the entire financial statements first of all. Okay, forget about reading and understanding. First of all, he will not read at all. But as an auditor, when I am signing the audit report, when I am signing the balance sheet, P&L and notes to accounts, should I go through the financial statements? Is it compulsory for me to read the entire notes to accounts? Is it compulsory? Obviously no. You are giving opinion on that. Okay, you may apply sampling in audit. You can't apply sampling in financial statements verification. What are the area where auditor cannot apply sampling? SA 530 clearly says, when auditor is verifying presentation and disclosure requirements in financial statements, auditor should not apply sampling procedure. It clearly said in a 530. Means when I am verifying presentation disclosure, nothing but balance sheet, P&L, cash flow, notes to accounts, I should not verify them on a sample basis. I should go through each and every page. Now when I am reading, suppose I'm an auditor for a company. I'm reading financial statements. Suppose I'm reading Air India audit report. I'm reading Air India balance sheet, P&L, cash flow. 100 pages. It is actually, when I'm reading every point, at some points, some 45th note point, some 48th note point, some 54th note point, I felt they are talking about a very important information. I felt they are talking about a very important information. I felt profit and loss account, remuneration point, some point is the depreciation point, something is there in the P&L. I want everybody to definitely read that. Whether they read financial statements fully or not, I don't bother. But according to me, this note number 45, note number 48, note number 54 in the notes to accounts, which talks about P&L depreciation item, which talks about contingent liability being faced by the company. So these three note points in the entire financial statements are very important according to me for every user of the financial statements. Able to understand? I want everybody to read. So what should I do? If I have to, you see, suppose you need to focus on that point. You have to focus in this material on a particular point. What should I do? Highlight it. Emphasis means what? Highlight. So emphasis of matter para is a paragraph in the auditor's report that is used by auditor to highlight an important point for the users of the financial statements. Who felt it is important point? Auditor. From whose point of view it is important? Shareholder point of view it is important, but the point is decided by auditor. So in auditor's judgment is of such importance that it is fundamental to users' understanding. So in the audit report, I can draw users' attention. I can highlight a particular point. So emphasis matter paragraph is a paragraph in the audit report that refers to a matter, note number 45, note number 54, which is appropriately presented or disclosed. You see the word appropriately, I highlighted differently. I'll tell you about the significance later. Getting it? Appropriately presented or disclosed in the financial statements. In the financial statements, something is disclosed, some matter is disclosed. Getting it? So I am including a paragraph in the audit report that refers to that matter. That refers to that matter. You look at Air India audit report. So how many points auditor is talking about? So this is Air India auditors report. So you see here, Air India auditors also have used emphasis of matter. What are they saying here? We draw attention to. Means auditor is indirectly drawing your attention. Yes or no? So see, the purpose of highlighting is what? To draw attention. The purpose of emphasizing means what? Emphasis. Emphasis means what? Highlight something. So we draw attention to note number 29. Note number 26A, note number 49, note number 46, note number 28. So these are the note points which auditor highlighted. So he wants every shareholder to go through this. Why he wants every shareholder to go through this? Are they materially misstated? No, they are not materially misstated. I felt they are important. I felt they are important. If at all they are materially misstated, I would have not highlighting here. I would have been highlighting in opinion itself. I would have objected them first of all. First of all, see, understand, qualifying is also a way of highlighting, you know. When I'm qualifying something, it is a way of highlighting that information, correct? There also I'm highlighting what mistake, correct? But emphasis of matter paragraph is about what you are highlighting here. You are highlighting here something which is appropriately presented, appropriately disclosed. What do you mean by the word appropriate? It is rightly done. It is rightly done. It is not materially misstated. It is not materially misstated, which means if an item in the financial statements is materially misstated, can auditor highlight it under emphasis of matter para? No. Emphasis of matter paragraph is not a substitute for modified opinion. Wherever something is materially misstated, auditor must express a modified opinion on that. He cannot cleverly highlight it under emphasis of matter para. So emphasis of matter paragraph is not a substitute for modified opinion. Emphasis of matter paragraph is not a substitute for presentation or disclosure in the financials. Suppose company have to disclose some material information, but they forgot. And they're asking you, the auditor, sir, you have a paragraph, no, empty, no. Emphasis of matter para. Can I use there and highlight, disclose my information there? Whatever information company should disclose, they should disclose in financials. And if they don't disclose, it's a misstatement. If it is a misstatement, auditor should give modified opinion. How can you use emphasis of matter paragraph as a substitute for your financial statements? Able to understand? All of you. So, emphasis of matter paragraph is for what purpose? In the financials, some information is there. I want to highlight. Why you want to highlight? Because of the mistake. No, it's not mistake. It's completely right. It is true and fair view. But I just want to highlight because it is important. Able to understand. And you see here how emphasis of matter paragraph is used. Below you see here, there is a sentence. Our opinion is not modified in respect of the above matter. Are shareholder may understand differently. Why auditor highlighted only these points? Why note number 20 only highlighted? Because shareholder may not have that much of knowledge. Emphasis of matter paragraph means SA 706. It is something which is used by auditor only if it is appropriately presented or disclosed. He didn't attend auditing class. So no. So he don't know anything. The moment he sees some note number 25, note number 40, he thinks that something is wrong with that. So at the end of the para, auditor must expressly say that his opinion is not modified. Our opinion is not modified on the above matters. So indirectly what am I saying? I'm highlighting, below I'm saying, by the way, I don't have any objection on the above. I'm highlighting, and the purpose I'm highlighting is what? No objections. I'm just highlighting. So auditor at the end of each matter, in the Air India audit report also, they clearly mentioned that our opinion is not modified in respect of the above matter. So in examination, they'll ask you a question. When to use an emphasis of matter paragraph? When to use an emphasis of matter paragraph? So this is a condition when to use and the circumstances. Now, what is the manner of presentation? This is important. Manner of presentation of emphasis of matter paragraph is important. How? Include the paragraph. Include the paragraph within a separate section. You see how Air India gave audit emphasis of matter paragraph? Did they give it separately as a separate heading or not? Yes or no? Include the section in a separate section of the auditor's report with an appropriate heading that includes the term emphasis of matter. So the heading should contain the what? Heading should contain what words? Emphasis of matter. Contain no emphasis of matter. Next, shall express the matter being emphasized and give reference to that matter in the financial statements. We draw attention to note number 29. We are giving reference or not? Yes or no? Accordingly, this para shall refer only to the information presented or disclosed in financial statements. Suppose I gone through the board of directors report also. In board report, some fifth point in the board of directors report is important for shareholder. Can I highlight it under emphasis of matter para? I cannot. I can only highlight. First of all, understand my opinion deals only with the financials. Why should I refer board of directors report? Why should I refer board of directors report? I will not. Getting it? So my audit report only talks about financial statements. Always remember. Getting it? Now, and also state that the opinion is not modified in respect of the matter. In Air India, at the last we mentioned no. Our opinion is not modified in respect of the above matters. Understood? So what is the manner of presentation? Theory we have seen. How it is really done we have seen. Able to understand? So they will ask you a question in exam. What is the manner of presentation of emphasis of matter paragraph? Or they'll ask you what is an emphasis of matter paragraph and what is a manner of presentation? Or what is an emphasis of matter paragraph? When emphasis of matter paragraph is used by auditor. When it is used by auditor. So when it is used by auditor means this question, above question. Getting it? What is this question? If it considers necessary, if the auditor considers necessary to draw attention to a some matter presented or disclosed in financials, in auditor point of view, it is very important for the users. And remember, the auditor would not be required to modify the opinion. On that, you should not be modifying. Only then you can use emphasis. Suppose if at all there is a material mistake, don't highlight. Directly straight away qualify. Able to understand. And when SA 701 applies, it is not a key audit matter. If it is not a key audit matter, then only you can highlight it under emphasis. First of all, what is key audit matter? We'll discuss later. Have you all understood emphasis of matter para? That's it. So with this, emphasis of matter paragraph discussion is done. Clear? So we have completed emphasis of matter paragraph. So next one is other matter paragraph. Can I proceed? Yes. So the next one is other matter paragraph. So what is an other matter paragraph? You see the definition of other matter paragraph? More or less similar to emphasis of matter paragraph except one word. Except one word, the definition is exactly same. The word is other than. Getting it? That's the only addition. That's the only addition. The actual definition is only up to this. Only up to this. Actual definition. Here also only up to this. The definition. Getting it? You see what is other matter paragraph? It's a paragraph included in auditor's report that refers to a matter other than presented or disclosed in financial statements. Other than presented or disclosed. If you want to talk about anything else which is not there in financial statements, which is not presented, not disclosed in financials, you want to talk about something else. Regarding what exactly? Regarding how to understand about the audit. How to understand about the auditor responsibilities. How to understand about the auditor's report. If auditor want to talk anything additionally about his report, if auditor want to talk anything additionally about his responsibilities, if auditor want to talk anything about his audit, you can talk about that under other matter paragraph. Under which paragraph? Other matter paragraph. So what are they? Like what auditor may talk about here? You see here, you know, SA 299, responsibilities of joint auditor, nothing but joint audit of financial statements. SA 600, using the work of other auditors, using the work of other auditors. Now you see, let us assume State Bank of India, my favorite concept, this other matter paragraph, SBI. You know, you see SBI, State Bank of India, it's a company first of all. It's a company registered under Companies Act, obtained banking license under RBI, with RBI, as per Banking Regulation Act. So SBI Limited is a, first of all, a listed company engaged in banking business. Correct? Now this SBI Limited is having many subsidiary companies. This SBI Limited is having many subsidiary companies. Like one of the subsidiary company is SBI Health Insurance or Life Insurance. SBI Health Insurance Limited. SBI General Insurance. I think that's better. SBI General Insurance Limited. So this is one of the subsidiary company for State Bank of India. Now, since this is subsidiary company, what this company relationship will become? Holding company. Understand, holding and subsidiary are a relationship study. First of all, they two are two different companies. Like a father and child, they are two different persons. They two will have different PAN number. They two will have different Aadhaar number. They are basically two different persons. They are basically two citizens. But the relationship is father and son. Holding company, subsidiary company is a relationship study. Correct? Everyone, all of you? Now, not only subsidiaries, SBI is having many subsidiary companies. In addition to subsidiary companies, this SBI is having 23,000 branches across India. You know that? This SBI is having approximately how many branches? 23,000 branches. I'm not talking about ATM machines. I'm talking about branch operations. Branch. SBI Mylapore branch, SBI Mandaveli branch, SBI Amirpet Hyderabad branch, SBI Jubilee Hills Hyderabad branch, like that. Getting it? So, branches. ATMs are more than 45,000 across India. More than 45,000. So, I'm talking about SBI network. Getting it? So, 23,000 branches. Now, this SBI, this State Bank of India, has an auditor. Getting it? How they have an auditor, you know? The State Bank is having, for all the branches, there are branch auditors. For entire bank, they are having statutory central auditors. We call them as principal auditor. We call them as what? Principal auditors. Actually, branch auditors are referred as SA. Branch auditors are referred as what? SA, statutory auditor. Overall bank will have an auditor, right? We call him as SCA, statutory central auditors. Getting it? So as per audit concept, they are called as principal auditor. These people are called as other auditors. These people are called as other auditors. Able to understand? Now. So just understand the example clearly so that this will be relevant for SA 600, SA 299 and even SA 706. And even when we are discussing bank audit chapter, this example will be useful. I will even show you SBI audit report. Getting it? Now, this SBI will prepare two sets of financial statements. What? Two sets of financial statements. State Bank of India. I'm telling you about the company, entire company as a whole. First of all, tell me, SBI Limited and its branches, are they treated as one person or different persons? They are one person. Branch is an extension. It's only one person. All this entire SBI Limited corporate office and all the branches will have same PAN number. Same corporate identification number. GST numbers may be different. GST, deemed distinct person concept may apply. State-based registration they may take. Correct? Huh? That's only for SGST collection. If at all the concept of SGST is not there, there is no question of separate registration. Correct? Huh? Able to understand. So only for GST purpose, each state, the branches are treated as different. Otherwise, normally, logically, head office and branch, both are one and same. Correct? Huh? Now, SBI will prepare standalone financial statements. And SBI will also prepare consolidated financial statements. What is consolidated financial statements? Here, the bank will consolidate SBI Limited total balance sheet and General Insurance Limited total balance sheet. They both will be added line by line consolidation method. Correct? All of you. Now, what is standalone financials? Here it is head office plus 23,000 branches. Correct? This is a standalone financial statements. Correct or not? Each branch balance sheet, we total it up so that we will get company balance sheet. We don't call it as consolidation because consolidation is a legal term which is used for company's consolidation. Correct? Not for whole head office and branches. Able to understand. Now, this State Bank of India has overall auditors. Correct? This State Bank of India is having 12 auditors. How many the State Bank of India is having? 12 auditors. We know if two or more than two auditors were appointed, we call them as joint auditors. SBI is having 12 joint auditors. SBI is having how many auditors? 12 joint auditors. The State Bank of India audit report is signed by 12 auditors. Getting it? 12 firms. That's called joint audit. And a bank maximum can appoint 12 joint auditors. There is a maximum limit for banks. The maximum number of joint auditors can be 12 after 2021 April notification. Before that, 14. So that's why you see State Bank of India 2021 financial year audit report, 14 auditors are signing. Whereas 21-22 audit report, only 12 auditors will be signing the audit report of State Bank of India. Now, all these 12 auditors are what? State Bank of India overall auditors. All these 12 are what? Nothing but principal auditors, statutory central auditors. Whereas these 23,000 branches were there, right? Out of them, 16,000 branches were not liable for audit, Remaining some 8,000 branches approximately, they are liable for branch audit. They are liable for audit, and these were audited by whom? Branch auditors. These 8,000 branches were audited by whom? Branch auditors. But remember, the State Bank of India branch auditors report will be there. No, 8,000 branch auditors report. Is it public information, public document? No. Branch audit report is only internal document. Does it mean they are not statutory auditors? They are statutory auditors. Branch auditors are statutory auditors. They are giving statutory audit report, but the audit report given by branch auditor. By the way, the format is same audit report. Even for the bank, what is the format of audit report? Same format which we discussed in this class. Getting it? So the audit report format is exactly same. So these branch auditors will do audit of the respective branch for which they were appointed. They will do the audit, finally prepare the audit report, send it to the main auditors. All the main auditors, they would have done some audit procedures. After that, they will take branch audit reports. They also did some work, right? Totally they will combine it and give a single audit report. And that audit report is signed by whom? Only 12 people. Do you think audit report of SBI is signed by all these 8,000 auditors? No. It's only signed by main auditors 12. Now tell me, only main auditors are signing the audit report. But is these 12 auditors verified entire bank transactions? No. Majority of the 95% of the assets, 95% of the liabilities were audited by branch auditors. But I am the one who is signing. My audit report is what sent to the public. The public thinks, if at all something goes wrong, public thinks that I didn't verify properly. Correct? So I need to tell public, look public, like you are believing my audit report. No, like you, I am also believing their audit report. I am giving everything is true and fair by using their audit report. Getting it? I need to clearly tell the public, if something goes wrong in the branch tomorrow, I am not the primary accountable party. The primary accountable party is who? The branch auditor. I need to tell them or not. So, when I am giving audit report on the financial statement which contains financial data, not audited by me, but audited by branch auditors. Correct? But I am signing. But that entire financial statement I didn't audit. See, State Bank of India auditors, 12 people signed audit report, which says the aforesaid financial statements are true and fair. Is it my opinion? It's not my opinion. It's branch auditor's opinion. By using their opinion, by using their report, I am also giving same opinion. Able to understand? Tomorrow if something goes wrong, you should not question me. You should go and question them. You should go and question management, not me, with related to branches. Where I can talk about the division of responsibility, other matter paragraph. Where I can talk about the division of responsibility, other matter paragraph. You see the definition of audit report, other matter paragraph, which is relevant for users. Which is relevant for users' understanding of the audit, auditor's responsibility. Able to understand? Specific responsibility of the auditor, division of responsibility of the auditor. Everything, where do we talk about? Where in the audit? Where in the audit report we will talk about? Other matter paragraph. Able to understand? Now you see here, we need to understand. Now, SA 600, you remember? Using the work of other auditor. Now, if you look at that standard, there are three definitions given in the standard: principal auditor, other auditor, component. You know what is the definition of component? Component means a branch, a division, a subsidiary, associate, joint venture whose financial information is included in the financial information audited by principal auditor. This is the definition. Who is other auditor? Other auditor is an auditor appointed with a responsibility to report on the financial information of the component whose financial information is included in the financial information of the entity audited by principal auditor. Who is principal auditor? He is an auditor appointed with a responsibility to report on the financial information of the entity which includes financial information of one or more components audited by other auditors. You see, component definition, it starts with the branch, division, subsidiary, associate, joint venture. Able to understand? Like, have you understood the wordings? Branch and division or component. Branch and division or component for standalone financial statements. Subsidiary, associate and joint venture are treated as components. For which financials? Consolidated financials. Able to understand? When I say consolidated financial statements, who is other auditor? Subsidiary company auditor is other auditor. When I am talking about standalone financial statements, who is other auditor? Branch auditors or other auditors. Able to understand? Using the work of other auditor means first you need to talk about, is it consolidated financials or standalone financials? If it is standalone financials, other auditors means branch auditors. If it is consolidated financials, other auditors means subsidiary company, associate company, joint venture auditors. Able to understand? If you look at Companies Act, you will not find joint venture anywhere. In Companies Act itself, joint venture word is not used, because associate company definition includes joint venture. Able to understand? Only in the auditing standard and in the accounting standard, joint venture is treated as separate from the associate, because joint venture also line by line consolidation method based on the percentage, proportionate consolidation method. Correct? Able to understand, all of you? So that's the definition of component. So now you see how subsidiaries, how SBI auditors have given auditors report. Some 1920 I have. Anyhow, it's okay. It's okay. We can use this one also. No problem. So this is SBI auditors report. Annual report. This is for 1920 financial year. Any year you can take, not an issue, because the format of audit report with effect from 1819 financial year onwards, it is same. Whatever we are looking at the format of audit report, no, title, addressee, opinion, basis for opinion. This format is applicable from which financial year onwards? 1819 financial year audits onwards. Before 1819, we have a old format of audit report. Getting it? So that is different format. Now, so here we have some standalone financials. You see, this is actually the standalone financial statements audit report. You see here, earlier they have 14 joint auditors. They have how many? 14 joint auditors. All these are 14 firms. 1, 2, 3, 4, 5. So here 5, here 5, here it is only 4. Totally 14 joint auditors. SBI is having 14 principal auditors. Now, these 14 auditors signed this audit report of the entire State Bank of India, standalone financials. But remember, these 14 people did not audit the branches. So that's why what they did, they disclosed it in the other matter paragraph. What are they disclosing it? Is it visible clearly? We did not audit. We did not audit the financial statements or information of 9,169 branches. Actually, as per the latest audit report, 16,000 branches were not audited. Sorry, 16,000 are unaudited, 8,000 are branch audited. Here it is about branch audit they are talking. You see here, we did not audit financial statements included in the standalone, approximately 9,200 branches whose total assets are 30 lakh crore, whose total revenue is 1 lakh 20 crore for the year ended. Okay, they didn't audit, they are mentioning. Who audited them? The financial statements of these branches have been audited by branch auditors whose reports have been furnished to us, and in our opinion, insofar as it related to amounts and disclosures in respect of these branches is purely based on branch auditors report. Our opinion on the amounts and disclosures related to branches which are included in the overall financial statements, our opinion on those amounts is purely based on branch auditors report. By the way, am I objecting anything here? No, I am not objecting anything on the above matter. I am just mentioning you for your reference. 9,000 branches were audited by branch auditors. The same information is given in the balance sheet P&L. On the entire balance sheet P&L, I am giving opinion. How am I giving opinion? By using branch auditors report. So this is how other matter paragraph is used. Able to understand. And not only this, the other matter paragraph also contains unaudited branches information that I will discuss when I am discussing branch audit bank audit chapter. I will discuss about unaudited branches concept. In bank audit reporting requirement, there is a disclosure requirement in audit report. Auditors should disclose in the audit report how many branches were not audited. Which auditor should disclose, by the way, branch auditor or central auditor? Central auditor in his audit report should disclose information about unaudited branches. Unaudited means was not audited at all. And not only unaudited branches, what is their financial effect? That also auditors shall discuss. Anyhow, that point in bank audit I'll explain. I will also show you the reference. Able to understand how other matter paragraph is used now? All of you? Clear? Now. Now you see, so that is other matter paragraph. With this other matter paragraph is also completed. So when to issue other matter paragraph in the auditor report. If it is necessary to communicate a matter other than presented or disclosed in financials, then the auditor will use other matter paragraph, because it is important for users' understanding of audit responsibilities, audit report. Unless not prohibited by law, or if 701, if it is a key audit matter, don't discuss it under other matter, straight away discuss it under key audit matter. If you decide a particular matter as a key audit matter, discuss it under key audit matter straight away. Don't discuss it, don't discuss it under EOMP, OMP. Clear? All of you? That's other matter paragraph. Now, since we have came across up to, branch auditor, that entire example, let's finish 299, 600 here itself. Okay. So now, SA 299, actual heading is not this one. Actual heading is this one. Joint audit of financial statements. This is a revised heading. Joint audit of financial statements. So SA 299, joint audit of financial statements. Tell me, so what SA 299 talks about actually? See, State Bank of India is audited by 12 auditors or 14 auditors, whatever. Okay. When these 12 auditors are conducting audit, when State Bank of India appointed 12 auditors, what do you mean by that? First of all, why joint auditors are appointed? In order to reduce the work burden. In order to reduce the work burden. You imagine State Bank of India, 9,000 branch auditors were there. All of them are giving their reports to the main auditors. One single person, how many reports he will read? Yes or no? If at all multiple firms were appointed as auditors, multiple people will involve, multiple expertise will involve. Correct? So, the State Bank of India appointed joint auditors because it is not correct to put entire burden on the single auditor. The joint auditors must work by dividing the work. Now, when joint auditors, are they permitted to divide the work? How joint auditors should work? Entire that guidelines are given in SA 299. So what SA 299 says is joint auditors are permitted. Joint auditors are permitted to divide the work and then do. Which means each joint auditor is not liable to verify entire financial statement. Entire financial statements information split into parts. Each part allocated to one joint auditor. Able to understand? Likewise, joint auditors divide the work and then do. And there are some works which is not dividable, which is not divisible. Joint auditors cannot divide some works. Example, like I need to sign audit report, correct? I need to sign balance sheet P&L, notes to accounts. Can I say, hey, notes to accounts, first 5 points you read, next 5 points I will read, next 5 points he will read. Can I divide like this? No. In respect of some areas, division of work is not possible. How to plan the audit? Joint auditors have to plan the audit combinedly. Getting the point? How to take overall decision? Joint auditors have to take overall decision combinedly. How to give audit report? Joint auditors should give audit report combinedly. And some matters were there which is known for every joint auditor. Some significant loophole is there in a company and that information everybody knows. In that case also, they are completely responsible. So, what is the division of responsibility? When the work is divided among the joint auditors on a suitable basis, then each joint auditor is responsible only for the work performed by them. Generally, work is divided on the following basis. Item of assets and liabilities. I will do assets, you do verify liabilities. I verify income, you verify expenditure. I verify North India, you verify South India related branches. Able to understand? Or I verify branch A, branch B, branch C, you verify branch D, branch E, branch F. See, sometimes no, normal companies no, they will have branches, but they may not appoint branch auditors. They may have not appointed branch auditors. Only main auditors are appointed, they are joint auditors. You are the auditor for entire company, he is auditor for entire company. And the company is having 4 or 5 branches. Accounts are maintained at each branch separately. Now how will you do the audit? In such a case, we will decide based on branches. Just because we are dividing branches among us, do we become branch auditor? See, branch auditor, principal auditor is a designation. Yes or no? It's not based on what you do. It's based on where you are appointed. If at all your appointment letter says you are appointed as an auditor for the company, you are a company auditor. If your appointment letter says you are appointed as an auditor for a branch of a company, you are a branch auditor. That's it. Your appointment letter talks about are you a branch auditor or company auditor. Then period of financials. I will verify first 6 months, you verify next 6 months. Able to understand. Next, in the following areas, all joint auditors will have combined responsibility. This is important question. So what are the areas where joint auditors will have cumulative, joint, combined responsibility? So a question can come like this. So like the joint auditors know where the work is not divided. If on a particular area, who should verify? The work is not divided. So in that case, all the joint auditors are responsible. Where decision is taken by all of them on a particular matter, all of them are responsible. Matters brought to the knowledge of all joint auditors. If all the joint auditors are aware about a particular loophole, there is an evidence for that, then all of them are responsible. For verifying disclosure requirements in the financials, all of them are responsible. For giving audit report so that it is complied with the statute. Getting it? For giving audit report, all of them are combinedly responsible. Able to understand. Next. In case of, how joint auditors give audit report? Generally, all of them arrive common conclusion, express common opinion through a single audit report. Here you remove the word NOMA. However, joint auditor is not bound by majority's opinion. Joint auditor is not bound by majority's opinion. So what do you mean by that? Suppose State Bank of India is having 14 joint auditors. So one auditor have got some work allocation. He felt everything is completely negative in that. He want to give as a whole adverse opinion. Whereas remaining 13 people wanted to give unqualified opinion. They all wanted to give unqualified opinion because every one of them, based on their own information, based on their own explanation, they would have formed some opinion. Correct? Likewise, this 14th joint auditor also have got some information, some explanation where he want to give adverse opinion. Now, what is the scenario? Should joint auditors majority rule prevail? No. If there is a joint auditor who disagree with majority, who want to give a different opinion from other joint auditors, he can definitely give through a separate audit report. In that case, multiple audit reports will be there. Suppose State Bank of India, 12 or 13 auditors together gave one audit report where unqualified opinion is there. Whereas 1 or 2 auditors together gave an adverse opinion, another audit report is there. Company shall send both the audit report to the public. Now you may get a question, which audit report public should believe? It is their choice. Because the auditor who gave adverse opinion or qualified opinion mentioned in the basis for qualified adverse opinion reason clearly. Why they gave this opinion. So public will read the reason. If they want to consider that, they will consider that. Otherwise, they will ignore that. Are you clear? Generally, till date, this never happened. Able to understand? In India, it never happened. I don't know about outside India. Are you all clear? Now, whenever multiple audit reports were coming from joint auditors, every audit report should cross-refer other audit report, other matter paragraph again. Understanding of the audit responsibility, audit report. Audit report means what? If at all any of the joint auditors giving a separate audit report, this audit report 1 should contain, please refer audit report 2. Audit report 2 should contain, please refer audit report 1. Cross reference should be there. By reading one audit report, shareholder should understand that there is another audit report. Able to understand. So, whenever there is a difference of opinion, he can express his own opinion by a separate report. In such a case, each joint auditor shall refer other joint auditors report in their report, where it will be discussed other matter paragraph. Till date, it never happened. Able to understand all of you? Next. Now, SA 299, what are special considerations as per SA 299? This is important concept in SA 299. At final, at inter, both the cases it is important. So, what are the special considerations? You know, whenever joint auditors were appointed, first of all, they need to divide the work. No? How they will divide the work? Every auditor will he pick on his own? No. All of them should sit and discuss. Like when you're going for audit, before you go for audit, you'll have a meeting, small meeting kind of stuff. Yes or no? So that's called preliminary meeting. What is it called as? Preliminary meeting. So what will happen in that? The engagement partner, engagement team members from each of the audit firm shall be involved in the planning. So all the 14 auditors firms will be there, whoever is engagement partner from each firm, they should come, and team members also should come. All of them should put a big conference room. They should take a conference room and discuss about the company. Yes or no? Then they should divide the work. Now all joint auditors should establish an overall audit strategy, and they shall discuss and develop a joint audit plan. What are the points you will consider while developing joint audit plan? This itself can be asked as a 4 marks question. So what are the points the auditor shall consider while developing a joint audit plan? So they will ask you a 4 marks question. Able to understand? Then each of the joint auditors should do risk assessment separately. Each of the joint auditors should discuss and document nature, timing, and extent of procedure for common areas and specific areas. And all of them should, actually here the word is not obtain, all of them should give common engagement letter and obtain common representation letter regarding responsibilities of management, and work allocation between joint auditors shall be documented and signed. Audit plan will be prepared. No, that should be taken as a printout. Multiple printouts. How many? N plus 1. N means what? Number of joint auditors. Plus 1 means what? For management. Able to understand? So one copy will give for management, one plan copy every one of us will give. On all the copies, all the joint auditors should sign. Tomorrow, if one error or fraud is noticed, when they come to me, I will immediately see that area. Hey, that is not performed by me. See the audit work, audit plan, signed by joint auditor. See, this fellow is responsible. Go and ask him. Able to understand. So, in order to see, this entire standard is drafted to split accountability. This entire 299 standard purpose is what? To split accountability. When joint auditors are working, how are they responsible? For that purpose only this standard has been drafted. You clear? So with this 299 is over. Understood? So if you observe in every standard how a different question can come in exam, everywhere I'm explaining you. I think now same way SAS 600 you look at. Using the work of another auditor. Using the work of another auditor. So first of all, division of responsibility. Most important in SA 600, what is it? Division of responsibility. This is important for true or false question or MCQ. So what are they saying here? The principal auditor would not be responsible in respect of work allocated to other auditor. In respect of work allocated to other auditor, full stop, true or false? False. Unless you write this entire, except in circumstances that should have aroused suspicion about reliability of the other auditor. In exceptional cases, if principal auditor got to know something wrong happening at so and so branch by branch auditor, if at all in this scenario, except in this scenario, generally I can trust other auditor and I am not responsible for his work unless I know that some lapse is there. If I know that there is some lapse, there is a proof that I know that. Tomorrow, even if some authority came and questioned me, hey, I am not responsible, look at the standard. But authority will question me, you know the lapse, yeah, I know. Then why didn't you react? Able to understand? See, the standard says you are not responsible for branch. But that doesn't mean if you know something wrong, you should be silent. No, that is not correct. Able to understand? Fraud risk factor, SA 240, what it says, if auditor suspects anything to be fraud, he must investigate. And he must complain to central government if the fraud is more than 1 crore. Or he must communicate to top management, those charged with governance. Able to understand? If one standard gives you relaxation, another standard locks you. Getting it? Now you see, when principal auditor has to base his opinion on the financial statements of the entity as a whole, relying upon reports of other auditor, his report should clearly state the division of responsibility for the financial information of the entity by indicating the extent to which financials of the components are audited by other auditor. You see SBI other matter paragraph, 9,169 branches were audited by other auditors. Mentioning 9,000 branches is not correct. How much asset? 30 lakh crore worth of deposits, 30 lakh crore worth of borrowings, 1,30,000 crore worth of revenue was audited by other auditor. You should clearly mention extent of financial information audited by other auditor. Yes or no? Is SBI auditors followed standard requirement or not? Correct. Now definitions: principal auditor, other auditor, and component. What is component? It may be division or branch in respect of standalone financials, subsidiary, joint venture, associated enterprise, or other entity. This is in respect of consolidated financials. These information is included in which information? Overall information audited by principal auditor. Clear? That's how the definitions were drafted. You see, every definition has a very concept. It's not just, you just read the definition and leave it. Any number of times you read, you will not remember. But if you understand the definition, you remember. You see, other auditor. Who is other auditor? He is the auditor other than principal auditor, with responsibility to report on what? Financial information of component. This information is included in which information? Overall entity information. So included in financial information audited by principal auditor. Who is principal auditor? He is the auditor with responsibility for reporting on entity. Here they use the word component. Here they use the word entity. Entity means what? Everything. Yes or no? When that information includes, here you see included in, here they say includes. Able to understand the financial information of one or more components audited by other auditor. Who is principal? I am doing audit of entire entity, which includes branches. Who is branch auditor? I am doing audit of branch, which is included in entity. What is component? It's a division or a branch, subsidiary something, which is included in entity. Able to understand? That's it. Now, this question has been asked in December attempt for 4 marks. Acceptance of principal auditor. Acceptance of principal auditor. First of all, can you accept as a principal auditor? First of all, will you accept as a principal? Suppose a company approached you. SBI itself is approaching you. Sir, we were looking for your firm to be appointed as an auditor. So are you ready for that? You need to give your consent. Only if you give your consent, board of directors will finally approve. Then shareholders meeting will be conducted. Then finally it will be approved by the shareholders about your appointment. Before you give consent, can you first of all accept as a principal auditor? Will you accept yourself as a principal auditor? When will you accept? What points you will consider? First of all, what is the materiality of the financial statements? Which principal auditor? So how much component, how much percentage of the financial statements I am going to audit? First I will consider that. My degree of knowledge regarding business of the components. How far I know about the components, the structure, business, everything. Risk of MMS in the overall information in the components audited by other auditors. Company is asking me for principal auditors, right? Now other auditors are auditing branches, right? What is the risk of MMS? What is the risk involved in that? And performance of additional procedure as given in this standard, like all these procedures, principal audit procedures, all that. If at all these works you can do, if at all you think you can do, then you give acceptance as a principal auditor. Otherwise, don't give your acceptance. If you think you are not given major portion or major importance, if you think you cannot do all these services, all these activities, if you think all these works is beyond your scope of imagination, then don't accept. Able to understand? Next. So what are principal auditors procedure? This itself can be given as a separate question for 4 marks. Write about principal auditors procedures. The moment you accepted as a principal auditor for an entity, what procedure you should do? At planning stage, you must first advise, you need to advise the other auditor how his work is going to be used. What is the scope of his work? What is the importance of his work? You need to tell them. Getting it? And you need to tell other auditors what are the special considerations. See, as a principal auditor, first I study entire company. I understand where and all problems were there. I understand where and all risks were there. So I should tell all the branch auditors, look, in this company, deposits given to farmers is a risky area. All of you please give major focus on that. Able to understand? Then reporting. I should also tell all my branch auditors, look, for this company, CARO applicable. All of you should also give me CARO report. Able to understand? So principal auditor at planning stage should inform other auditors about their role in the overall audit. Getting it? The principal auditor might discuss with other auditor what procedures applied or may review a written summary of other auditors' procedure. If at all I want, I can ask other auditor, what are all the procedures you did? I can send a questionnaire to him. He will fill the questionnaire and then send me. Able to understand? These are all the procedures you do. Whenever other auditors and me, whenever we both are working, what procedures I generally do? These works I do. Principal auditor may also visit to the branch. The nature, timing and extent of these procedures depend upon the circumstances of the engagement, knowledge and professional competence of the other auditor. So how far I will involve, how far I will interact with branch auditor, questionnaire, what is the level of questions I should ask them, what is the level of information I should ask from branch auditors, all that depends upon my knowledge of the business and the competence of the other auditor. If other auditors are very competent, they are also chartered accountants, they are also governed by same professional ethics. Getting it? They are also governed by all the CA rules and regulations. I will not worry much because if they do mistake, they are punishable. They know that. Able to understand. Now, principal auditor and other auditors should have sufficient coordination. So, okay, branch auditor should bring to the principal auditor's attention any important findings which are required at overall organization level. Same way, principal auditor should advise other auditor any matters which come to his attention which he thinks it is important for branch auditor's work. They should coordinate with each other, and principal auditor, branch auditor should adhere to the timetable of the component. Like branch audit should be completed first, only then overall audit can be completed. So they both should discuss, coordinate mutually. Able to understand. Next, suppose if there are many significant findings by other auditor, if there are many significant important findings were there in branches, what principal auditor can do? First discuss with branch auditor. Discuss with branch auditor, what is that? Suppose branch auditor said in one of the branch going concern is problem. That branch is fully in losses completely. You don't know whether that branch will be continued or not. So discuss with them. If possible, you go and do a supplementary test. Supplement means what? He did already work. You also go and do additional work. That's called supplement test. And document all these points. Getting it? So what principal auditor should document? This itself can be asked as a 4 marks question. This itself can be asked as a 4 marks question. Next. Modified opinion reporting. This is important in this standard. Sir, branch auditor give adverse opinion. Should principal auditor also give adverse opinion? Not necessarily. Like what? Suppose State Bank of India is there. 9,000 branches we have. Okay. One of the branch in State Bank of India, one branch auditor give adverse opinion. Out of total 23,000 branches, 9,000 branches only liable for audit, 15,000 branches not liable for audit. Out of 9,000 branches, one branch auditor gave adverse opinion in respect of his branch. Now what principal auditor shall do? See, branch auditor gave opinion, adverse qualified, depending upon materiality, pervasiveness, levels of that branch. Understand? See, my materiality level is decided based on the scope of audit. What is the scope of audit? If my scope is only branch, then materiality I will fix based on branch. If I'm doing the audit of overall company, then materiality is based on overall company. Materiality is a relative term. Understand? Depending upon case to case, scope of area, materiality will change. For a branch, 1 lakh rupees material, but for a head office, overall company, 1 crore is immaterial. Who knows? You getting the point? So, now you see, if other auditor issues a modified report, the principal auditor should consider whether subject matter of modification is of that nature and significance at the entity. Getting it? That requires modification in the principal audit report. Check what is the reason he gave modified opinion. See that reason. Is it material as a whole from the organization point of view? Is it pervasive as a whole from organization point of view? Check it out and accordingly give modified report or unmodified as appropriate. Able to understand? Suppose at branch level it is pervasive, he gave adverse opinion, but as a whole, as a company point of view, it is just material but not pervasive. Able to understand? So when the other audit report is other than modified opinion, nothing but other than unmodified means modified opinion, the principal auditor should also document how he dealt with the qualification, how he dealt with the remark contained in the other auditor report. And this is a requirement under 141 subsection 3 clause C. You see 143 subsection 3 checklist items, 15 items were there in the third point. In the third point, whether the report of the other auditor is given to you and how you considered while dealing with your overall report, you need to tell. So we generally tell whenever branch audit report is there, we have received other auditor's report and we dealt it as per standards in auditing. Simple. Able to understand? Next. Suppose if the work of other auditor cannot be used, suppose you are not getting other auditor's report, so you don't know anything about the branch, whether it is true and fair or not true and fair. Able to understand? So what will you do? You give again qualified opinion or disclaimer of opinion. You give which opinion? Qualified or disclaimer. If branch auditor's report is not available for you and you also don't know anything about the branch, you didn't do audit anything about the branch. See, if branch audit report is not available, you have two options. You go and do branch audit and come back and give overall report positive. If you cannot do that, the only way to get the reliability of branch accounts, branch financials is through branch audit report, and that report you did not get. So what will you do? You will do either qualified opinion or disclaimer. So the auditor should express a qualified or disclaimer of opinion because there is a limitation on the scope. Suppose if the component is immaterial, you can ignore. If the component is if it is immaterial, then you need not give a modified opinion. Able to understand? All of you. Are you able to understand now, like how we need to read everything? Getting it? Are you learning? Is there an improvement on your knowledge? So this is SA 600. So SA 600, 299 we covered along with SA 706. So 706 is fully done, and 700, 705 is mostly done. Okay, only thing is reading part we didn't do because of the time constraint we have. And 299 we covered, 600 also we covered. So 706 is also completed. So now let's go back again to the contents of the audit report. So we covered whatever we have highlighted in green letters. Correct? Addressee, title, opinion, basis for opinion, emphasis of matter, and other matter paragraph. Then we will discuss key audit matter. Before that, I just need some 2 minutes gap. So let's discuss the key audit matter standard. So let's discuss key audit matters. SA 701, communicating key audit matters in the independent auditor's report. So what are key audit matters? If you look at the definition of the key audit matter, what it says, key audit matters are those matters in the professional judgment of the auditor were of most significant in audit of financial statements of current period. And these are selected from matters communicated with those charged with governance. If you understand how key audit matter is used in a real audit report, then only you understand its actual standard intention. Getting it? So like, let me open the State Bank of India itself. So they have used key audit matter. They have used one key audit matter. One of the key audit matter is what? Classification of advances, income recognition, provisioning. Like nothing but IRAC norms, income recognition, asset classification norms, they selected as key audit matter. Now, advances constitute 58% of the bank total assets. They are governed by income recognition, asset classification norms, NPA norms, all that. So here, identification of non-performing asset involves a proper mechanism. The bank accounts all transactions related to information technology, advances through IT in core banking solution, which identifies whether a loan and advance is a NPA or not. NPA classification and calculation of provision is done through systems, completely IT systems. The carrying value of these loans may be materially misstated if the IRAC norms are not properly followed. Accordingly, our audit was focused on these IRAC norms due to materiality of these items. See why in audit, like State Bank of India auditors felt verifying income recognition, asset classification, provisioning norms were key audit matter. They decided it as key audit matter. Why they decided it as key audit matter? They explained reasons. Now, how the matter was addressed in our audit. What are they saying? How the matter was addressed in our audit. So what do they verify in provisioning norms? What they verify? They told here what they verified. With respect to NPA assets, how they verified in their audit procedure, in their audit process. So they mentioned They first verified the accuracy of the data into the system for income recognition classification. First they checked accuracy. How they checked? They checked existence and effectiveness of mechanisms, internal audit, systems audit, credit audit, concurrent audit. They verified advances, stressed advances on sample basis as per RBI circulars. They relied upon external IT system reports, audit experts, core banking solution trackings, all that. And they tested mapping of advances in some software. And they have verified efficacy of internal controls over advances, some credit worthiness, how they will test of the borrower, internal controls, they tested all that. And they evaluated process of identification of NPA and reversal of income process, creation of provisions they verified. And they placed reliance on branch auditors report with whom they made some specific communications as well. Like what are they doing here? Tell me what left side, what they mentioned. They mentioned income recognition, asset classification norms were there. They need to verify as per RBI. Because of these norms, provisioning will affect. If provisioning is not correctly made, it will be materially misstated. Because of all this, it is a key audit matter. Correct? So left side, this is what they said. What right side they mentioned? What right side they mentioned? You see, our audit approach towards advances with reference to IRAC norms includes the testing of the following. So what we tested in advances, broadly they discussed here. So nothing but, I went to State Bank of India audit. I am giving you a report. In that report, what I mentioned, left side, advances will have IRAC norms. IRAC norms, we need to create some provisions. We need to classify assets so and so. If I do not do properly classify like this is a misstatement. Because of this, I focused on this area. This is a very important issue, I told. Right side, what I did on this area, I am telling you. Nothing but, in key audit matter, what are we doing? We are just expressing to the shareholders a particular area and how we audited that area. Correct? Correct? Now tell me, can I address any audit area, whatever I want, or important audit area? Which area I can address? Any area can I simply address here, or can I select some important issues? Important issues. Important from whose perspective? Auditor's perspective. That's why key audit matter. So what is a key audit matter? Key audit matters are those in auditor's judgment were of so important in audit of financial statements of current period. See definition framed. Yes or no? These matters were addressed in the context of the audit. Are we giving any separate opinion on these matters? We are not providing any separate opinion on these matters. Is it a substitute for modified opinion? Is it a substitute for presentation or disclosure in financials? Or are we giving a separate opinion on these matters? Neither standard over. Now, how key audit matter is different from emphasis of matter, different from other matter para. Getting it? Emphasis is what? In the notes to accounts or balance sheet P&L, some important point is there. I want everybody to read that point. I just highlight it here. Please refer note number 45. Please refer note number 38. Please refer note number 26. Correct? So, I am just asking you to refer this note point. So, I am not talking anything about audit here. Able to understand. Other matter para, what am I discussing there? I am discussing about auditor responsibilities mainly. So and so branches were not audited by me. So and so branches were not at all audited. These branches are audited by branch auditors. This is the branch audit related information. I am not responsible for that. This is what other matter paragraph I am talking about. But I want to explain, I want to take one of my work. In audit of bank, I did verified so many things. I verified deposits, I verified advances, I verified staff advances, I verified, deposits like term deposits, saving deposits, I verified bills purchased and discounted, I verified contingencies, I verified guarantees given, I verified letter of credits, I verified expenses, incomes, remuneration to directors, so many things I verified in this bank. But I want to take few examples and explain everybody how I verified them. Where I can do this? Key audit matter. Where I can do this? Key audit matter. Technically speaking, key audit matter is not useful to anybody. Why? See, after reading this, what benefit you got? After reading this, what benefit you got? Auditor said that is important, and how he verified he told. Because of this, what you understand? You see the purpose of key audit matter, what it says. What is the purpose of key audit matter? The purpose of communicating key audit matter is to enhance communicative value of the auditor report by providing greater transparency about audit which was performed. It provides additional information to the users to help them in understanding the entity and areas of important matters in the professional judgment of the auditor. Getting it? In auditor point of view, what is important, what is not important in this organization, how important matters were resolved by auditors, we are just explaining that. First of all, shareholders do not have first knowledge to understand the opinion para itself. Correct? Why come again key audit matter all this? Just build up. Getting it? So our guidelines, no, this internationally, auditors and all will think little bit with superiority complex. Hey, let us give more information. But the problem is, whatever the basic information you are giving, people do not have that capability to understand. Even if at all they are not commerce background or they are not at least a CA background students, they have never gone through this standard. Even a stock market analyst cannot understand what is a key audit matter. Probably Rakesh Junjunwala, if at all there, he expert anyhow, he also might not understand key audit matter because it is not there in his syllabus when he passed CA final. Yes or no? After qualifying CA final, do anybody study this standard again? Tell me, after you qualify exam, will you come back and study? I missed the key audit matter, I need to go and study. No, right? So 99% of this standard came into picture only from 1819 onwards. Before 1819, yeah. So I forgot, the connection was missing. Yeah, fine, exactly. So after we qualify, we never go back and read the, again, key audit matter, whatever. Yes or no? To best of my knowledge, 99% I can confidently tell, wherever you read articles, your principals do not have complete command on key audit matter standard. They might have attended seminars on key audit matter, but they will not understand what exactly key audit matter. How to test them? Don't ask them what is key audit matter. Ask them how it is different from material uncertainty related to going concern para. That's it. They will tell you, sorry, I don't know. Getting it? Or else they'll tell you, I'm in work, you please come back. Correct? You will never come back. Right. So, key audit matter, you see how even in the audit report, they clearly mention how key audit matter is, what key audit matter exactly is. You see the audit report, they clearly mention. Key audit matters are those matters. Just a minute. So now it is visible, right? You see the SBI audit report, key audit matter, what they mentioned. So key audit matters are those matters that in our professional judgment were of most significant in our audit of financial statements for the year ended 31st March. These matters were addressed in the context of our audit. Means these matters and all already they verified in audit. Getting it? While as a whole, while forming opinion thereon. And we do not provide any separate opinion on these matters. So what are they saying indirectly? These are significant in our point of view. And for your information, we already verified them in our audit. We are not giving any separate opinion on this. We are just giving you the information. So tell me, is this information much useful to the shareholders? Now, let's look at so key audit matter is not a substitute for disclosure in financials. Is not a substitute for modified opinion, is not a separate opinion, is not a substitute for 570 related to going concern. It is not a substitute for reporting in accordance with 570 when there is a material uncertainty. That is actual sentence. Getting it? So what is material uncertainty? We have not yet we have not yet discussed. So next we will discuss that. That time I will once again connect this and emphasis. Okay. Now, applicability of key audit matter. Applicability for all listed entities, it is compulsory. That's why all the listed company auditors are giving this key audit matter, even though they don't understand. Next. And when auditor decided to communicate the key audit matter, then he can give, even though it is not a listed entity. Or if the key audit matter communication is required by law or regulation, then also auditor will communicate key audit matter. And SA 705 prohibits communicating key audit matter when auditor disclaims an opinion. Now they will ask you, communicating key audit matter is prohibited when auditor disclaims the opinion as per which standard? 700, 701, 705, 710. Like that they'll ask you. It is 705. Clearly. Getting it? 705 says communicating key audit matter is prohibited. Communicating key audit matter is prohibited. Why? When you are giving disclaimer of opinion, it indirectly says you have never done the audit. When you did not do the audit, where is the question of important audit matter? Clear? Now, how do auditors select key audit matter? How do auditors select the key audit matter? First of all, selection of key audit matter is a matter of professional judgment. And generally, if it is an important matter, you would have generally discussed with top management, no? Most of the important matters in audit, we might have discussed with top management. So, the auditor shall determine from the matters communicated with those charged with governance, those matters which require significant auditor's attention. Able to understand? Now, the auditor shall take into account the following factors while determining key audit matters. Areas of high risk or significant risk. Areas of higher assessed risk or significant risk. Simply, from the area where significant risk is involved, SBI auditor selected IRAC norms because of significant risk involved in that. Yes or no? Significant auditor's judgment. IRAC norm not only risk, it is also significant judgmental factor. Whether an asset is an NPA or not, sometimes it is judgmental. Able to understand? So, areas where auditor's judgment, significant judgment involved, like accounting estimates, high estimation uncertainty, or if it is a significant event, if it is a significant transaction, then also it can be selected as a key audit matter. Reliance Industries selected change in useful life of plant and machinery as a key audit matter. Like Reliance Industries has changed useful life of plant and machinery from 30 years to 50 years. They increased the useful life from 30 to 50. And accordingly, see, useful life is an estimation, right? Accounting estimate, which involves significant judgment. And for your information, the plant and machinery value is 4 lakh crore. Getting it? 4 lakh crore worth of plant and machinery, useful life has been revised in the Reliance Industries Limited in 1819 year. That time, auditors of Reliance have chosen that as key audit matter because it involves high estimation uncertainty, because it is a significant judgment. So, second criteria. Now, the same year, Reliance has invested in Geo Communications, major amount. It's a significant transaction. So, that is also selected as key audit matter. In the same year, valuation of some investment, something they did, because that involves high risk of material misstatement. So they selected it as key audit matter. Generally, when do we feel something is important in audit? When there is a high risk. The risk may be in terms of material misstatement, or risk in terms of judgment, or it may be the size of transaction. All of you? That's it. So examples. They may ask you this question itself. What are the factors that assist the auditor in determining key audit matters? Give some examples. So this itself they can ask you. And this is not required. In the material also, I say material also, they have not given main material. This is there only in the pronouncements. Okay, not required for you. That's it. Now, in ICI book, study material, practice questions. This is the question they asked. The auditor shall describe key audit matter using an appropriate subheading in a separate section of the audit report under the heading key audit matters. What would be the introductory language in the auditor's report? Like in SBI, what they gave introduction to the key audit matter, this matter they gave no introduction. This introductory language they're asking. They're asking you to draft the introduction. Please draft the introduction they're asking you. Understood? So, you see here, key audit matters are those in our professional judgment were of most significant in our audit of financial statements of current period. These were addressed in the context of our audit of financial statements as a whole in forming opinion. We do not provide separate opinion on these matters. This is introductory language in the audit report to be drafted. Able to understand? This is not a concept. This is drafting required in the audit report. So in this way also they can ask. But I don't think this much depth will be tested. Okay. Next, in Europe also, key audit matters are called as key audit matters only. Like in Europe also, we have a one company audit report, TDC. There is a group company. Shell company is also having key audit matters. There they follow calendar year. And we follow same definition you will find here. Key audit matters are those matters that in our professional judgment were of most significant in our audit of financial statements of current period. These matters were addressed in the context of our audit of financial statements as a whole and forming opinion thereon, and we do not provide separate opinion on these matters. Same. Key audit matter, how our audit addressed. Same. SBA presentation. Yes or no? Same way, US, United States framework, PCAOB framework they follow. And for this, we have Alphabet, Google Holding Company audit report. This is Google Holding Company audit report. In US, they call it as critical audit matter. In US, they call it as critical audit matter, whereas we call them as key audit matters. Here, they call them as critical audit matter. Same opinion, basis for opinion, key audit matter, critical audit matter. You see here, the critical audit matter communicated below is a matter arising in the current period that was communicated or required to be communicated to audit committee. We use the word those charged with governance. They use the word audit committee. That's the only difference. Here, what is the matter? How our audit addressed? Same. Yes or no? So the presentation and disclosure, everything is universally same with respect to audit. That's it. So with this, key audit matter standard is also completely done. All of you clear? All of you? Now, next one is SA 570 going concern. I'll just give a small introduction, 5 minutes, then we'll wind up the session. See, what auditor has to test related to going concern? What auditor has to test related to going concern? First of all, what is the objective of auditor again? To give opinion whether the financial statements are prepared as per applicable framework, or you can say whether the financial statements are free from material misstatements. Now you see the financial statements, notes to account, first point says, these financial statements are prepared using going concern assumption. Correct? This is the first point or second or third point. First, what is the basis for preparation of financial statements? What is the basis for preparation of financial statements? I think even State Bank of India auditors report, even Air India or State Bank of India auditors report also might be covering the same. So this is Reliance auditors report and this is notes to account. So this is the notes to accounts below, and you see here what is the basis for preparation of financial statements. In this they clearly mentioned, okay, these financial statements are prepared on going concern, historical cost basis. Historical cost itself means indirectly they are communicating you at going concern. Getting it? Now, so the financial statements are prepared on going concern means you need to verify each and every point they wrote in the financials, correct? Whether it is free from material misstatement or not. Suppose the company said financial statements are prepared using going concern basis. Now what you need to check there? Whether use of going concern assumption by the management, is it appropriate? This is what you need to check. Okay, company said going concern. When company can use going concern assumption? When they are really a going concern. When they are having the ability to continue as a going concern. Suppose if the company do not have the ability to continue as a going concern, can they use going concern assumption? They can't. Understand? Going concern is not just an assumption, it's an ability. What is it? It's an ability. If at all the organization do not have the ability to continue as a going concern, they should not use the going concern assumption. Suppose you take Air India. Air India is the latest buzz regarding going concern. Getting it? You take Air India auditors, Air India financial statement, if you see, they have accumulated losses of more than 70,000 crore. More than 70,000 crore accumulated losses. Their net worth is negative. The ratios are negative. Their cash flows are negative. Everything is negative. Then how come Air India is surviving? Because government of India is supporting. Because central government is supporting them. Because central government is extending them some support. So Air India is surviving. Now, as an auditor of Air India, the moment I saw Air India position, I feel Air India is no more going concern. Now, when a company is not having going concern, they cannot prepare financial statements at all. Even if they prepare financial statements without going concern assumption, every asset item, every liability item shall be reinstated at NRV. If assets and liabilities are reinstated at NRV, balance sheet will not tally. You know that? Balance sheet will not tally if assets and liabilities are reinstated at NRV. Whenever company decided that there is no going concern, they don't prepare financials, they directly go for liquidation process. They directly go for liquidation, shutdown process they will start. So suppose if a company is really affected, completely bad the position, still they want to manipulate the users. They don't want to exhibit that picture. Still they prepare financial statements using going concern assumption, even though if it is not there, even though the company is about to shut down. But by looking at the financial statements on going concern assumption, balance sheet tallied, all the liabilities, all the assets, everything is tallied, company position is good. That's how people interpret. But reality, only the auditors knows, only the internal management and top board of directors knows that. So auditor has to check this going concern assumption, whether the use of going concern assumption by the company, is it permitted, is it okay or not? That's what we are learning in SA 570. Getting it? So we'll continue that in the next lecture. That's it. So in the previous session, we have started with the concept of going concern, right? Like if you look at once again the contents of audit report. So where we have completed first opinion, basis for opinion, then actually material uncertainty para should come as per the order. Then we have key audit matter, emphasis of matter and other matter para. Now in the pronouncement, in SA 706 and SA 705, SA 701, there is a clarification given. Especially, what should be the order? What should be the order? Opinion, basis for opinion, material uncertainty related to going concern. If at all you want to use that uncertainty paragraph, the order is fixed. First opinion should come, that is fixed one. You can't change that position. Immediately thereafter, basis for opinion. Then if at all, that material uncertainty paragraph is applicable in this company, then that should come at first. Then key audit matter, emphasis of matter, other matter para, other information para. These four items, what order we need to follow, it depends upon the judgment of the auditor. Whatever he feel which is material, whatever he feel that he thinks material, that may come at the first. Some may give emphasis of matter at first, then other matter, then key audit matter. But most of the cases you see key audit matter will come at first, then emphasis of matter, then other matter para. Some even give other matter paragraph after auditor's responsibilities. After auditor's responsibilities, other matter para might come. Now with respect to these three, there is no specific instruction that it should come at this place only, no specific instruction. But looking at the contents of the audit report, responsibilities of management is a general discussion, general thing which is same for every company, correct? Responsibilities of auditor is also same for every company. So they are standard, they don't contain any specific information. So we can give them at last. In the format, we can give more priority for which paragraphs, emphasis, other matter, key audit matter, we can give more importance. So we will keep it first and then responsibilities of management, responsibilities of auditor and report on any other reporting requirements. Actually, it is called as other reporting requirements. As per SA 700, it is actually called as what? Other reporting requirements. Fine. So now, what is that material uncertainty related to going concern paragraph is talking about? So in order to understand that, we need to understand SA 570 as a whole. Only if we understand SA 570, then that paragraph is simple. So, like I told in the previous, in the previous session also, I clearly mentioned, going concern is not just an assumption, it is an ability. Only if the organization has the ability to continue, only if the organization has the ability to continue, they can choose the going concern assumption. Otherwise, they should not. See, we should always reflect as a management of the company, we should prepare financial statements that reflect true and fair position, that reflect true and fair performance, that reflect true and fair affairs of the entity. If my company is not in a proper position, not in a position to continue in the near future, it's impossible. With the financials I have, it is impossible for me to continue in the future. If that is the scenario, how can I use going concern assumption when it is missing? Getting the point? So, you see, Air India itself, I will open the situation. So what that Air India have clearly mentioned, the auditors, Air India auditors, what they have mentioned, material uncertainty para they have used. So material uncertainty related to going concern. So what are they saying? The company has incurred a net loss of 77,000 millions. Getting it? Nothing but 7,700 crores. 7,700 crores. And the company's liabilities exceeded its current assets by 5,42,000 million. Nothing but 54,000 crore net liability position. It is net liability position. Means total current assets minus current liabilities is equal to, it's a negative figure of 54,000 crore. And it had accumulated losses of 70,000 crore. The total accumulated losses for the company is approximately 70,000 crore and has resulted in complete erosion of net worth of the company. So complete net worth has been eroded. In spite of these events or conditions which may cast a significant doubt on the ability of the company to continue as a going concern. So in spite of all this, obviously when this is a financial position, when accumulated losses are this much, when net liability position is there, where is the question of continuity? Obviously, if I have assets, I can sell assets and survive. Here assets also were not there. It's actually a net liability. They need to pay to outsiders so much. Getting it? In spite of this, the management is of the opinion that going concern basis of accounting is appropriate. Even after all this, management is thinking what? Going concern is appropriate. Why? In view of continued support from Government of India. Getting it? Because Government of India is supporting. How Government of India will support? By infusing capital. You might have heard in banks, RBI infused capital. Getting it? What is infusion of capital? Nothing but giving more capital to the banks. Getting it? So, the same way for all government sectors which are loss making, RBI is, central government is infusing some sort of loan. Like here in Air India, government is giving loans. Government is giving loans. So though they are having net liability position, though they are having adverse operating conditions, government is continuously giving loans and advances to Air India so that it is paying salaries, it is paying for fuel charges, and it is still operating the airlines. But literally speaking, government, if at all they withdraw the support, what is the position of Air India? Obviously, the next day they need to stop operating. The next day the company will shut down. It will start the process of liquidation immediately. Now here, what is uncertainty? Until when Government of India will support? This is what the uncertainty here. Here what is the uncertainty is fine. Suppose I am the auditor. The company told me, sir, we have chosen going concern because government is supporting. Now my question is, until how long government will support? Is there any guarantee that government will support forever? No. Every year government is in talks with privatization. Like private sector entities. Like recently Tata hand over this. Getting it? Tata Group has hand over Air India partially. Getting it? So government is continuously in talks with private entities to hand over these airlines. That the moment government decided to hand over the airlines to private entities, and if at all they did not find a proper buyer, obviously what is the option for the government? They will stop supporting Air India. So this is uncertainty. So which means for Air India, can they use going concern assumption? Means actually speaking, no, they should not use, because there is no going concern. The company is in negative completely. They can't continue business successfully. So going concern assumption is already missing. But still management used going concern assumption because of the support from Government of India. See, if at all government is not at all supporting in this scenario, going concern is inappropriate. Going concern assumption is inappropriate for this company. The company cannot use, because after 31st March of showing this result to shareholders, immediately they will boycott this company. Immediately they'll stop, participating in this company. Immediately they'll try to sell all the shares, whatever they have. Getting it? Entire creditors, everybody will stop support. So obviously what will happen? Company will immediately default with huge amount. Insolvent. It will become actually insolvent. Because government is supporting, it is surviving. Now how long this government support will be there? And that's the uncertainty factor. Able to understand? That's the uncertainty factor. Now auditor has to identify under SAF 570, whatever company you're doing audit, any company that you're doing audit, you should always do a going concern analysis. You should always do as part of your audit area,
one most important thing is going concern, and we don't do that. Most of the audit cases in articles, I think you might have never done this. Getting, or even your senior also would have not done this. Getting it? So what you need to do, see, that's why in CARO they have added some 19th clause recently regarding this point only. Is there any uncertainty regarding repayment of liabilities? Auditor has to comment today itself. As on the 31st March reporting date, as on when you are giving audit report, you should talk until the date of your audit report. Whatever, based on the information you have, based on the explanation you have, based on the financial data, access to budget data, information, all that you have. Is there any possibility that the company will default within next 1 year? They're asking you in CARO. Correct? Earlier it was not there. So they're specifically asking you. So which means, if at all there is a requirement from the CARO itself, the auditor will specifically check that and he will comment whether company is in a position to satisfy all the payments, whether company is in a position to default. Auditor will preliminarily itself will figure it out. Able to understand? So that's the requirement why it was added in CARO as a reporting requirement, uncertainty point. Okay, now once I go there, I'll connect it to you. Getting it? Now, so what SA 570 auditor has to check? Auditor has to check whether the use of going concern basis for accounting, for preparation of the financial statements by the management, is it appropriate? So this is what auditor has to check. For this, look at the business, nature of the business, condition of the business, external circumstances, getting it? So look at the cash flow analysis of the company, budgets, getting it? And the present operating conditions, financial conditions, legal conditions, everything you need to check. After checking everything, you will finally get 3 types of conclusions. One is you may feel going concern is appropriate. Going concern is absolutely fine. No problem at all. Indigo Airlines, they don't have any issue like this. They're running successfully. Their flights are operating well. They're having huge number of staff. Operating cash flows are very good. Financial obligations, everything are meeting on time. So everything is proper. So for Indigo Airlines, I will not get a doubt itself. Going concern is absolutely appropriate. So management used going concern assumption for preparation of financials, and when I check everything, that usage is fine. So they are eligible to use going concern assumption. Or another scenario, going concern is inappropriate. Going concern is inappropriate. Jet Airways. What happened with Jet Airways? They have no cash flows. They started defaulting. And unlike Air India, nobody is there to support for Jet Airways. So straight away Jet Airways, going concern is completely affected. That's why they didn't prepare financial statements after 18-19 onward. Getting it? Going concern is affected completely. The company cannot run. They are in the process of liquidation. Getting it? Now, going concern is inappropriate. One conclusion you may think is going concern is appropriate. Air India situation is neither of these two. Going concern is appropriate, but a material uncertainty exists. This is the situation of Air India. What happened for Air India? Now, actually going concern is not well. The company cannot continue. See, going concern means what? This organization, concern means organization. This kept on going. This keeps on moving forward without any trouble. So that is what going concern means. My organization will not be closed down. The reason why, you see example, asset side of the balance sheet, we always show fixed assets at historical cost minus accumulated depreciation. Whereas current assets, we show them as cost or NRV, whichever is lower. You see fixed assets. Ford itself, I recently, took this Ford Motors, it is there in Chennai only, nearby somewhere Sriperumbudur or maybe Chengalpet, somewhere the plant. Getting it? So the manufacturing factory, the factory is somewhere nearby. And this Ford manufacturing factory was recently sold for 700 crore. Was recently sold for how much? 700 crore. I think Tata is handovering. Getting it? Some Tata Motors is handovering this plant. They modify and then they start manufacturing Tata cars for 700 crore. And to best of my knowledge, the investment made in this plant and machinery, the investment made in this entire company was more than 10,000 crores. It is more than 10,000 crore. That entire value, as per the books, it might come to 6,000, 7,000 crores. As per books of accounts, what is the written down value of this entire factory, plant and machinery? Roughly say 5 to 6,000 crores might have been there. But when the actual factory was sold ultimately, at what price it was sold for? 700 crore. You take any company for your imagination, you take Reliance Industries, they have a plant and machinery value more than 3.5 lakh crore. Their plant and machinery value is how much? More than 3.5 lakh crore. What is that plant and machinery major portion consisting of? Refinery. Entire oil refinery related, entire equipment. So that consists of 3.5 lakh crore. But if the company sells it, there is no buyer. So naturally, how the company has to sell it? They need to dismantle it and then sell it. When a product has been dismantled and sold it will be purchased in weight rate. I mean, at the rate of weights, like iron and steel, whatever the rate they are getting, at the same price they'll get. They will forget the fact that it is a machine. Able to understand? So whatever fixed assets, written down value we show in the books of accounts, in reality, that fixed asset will not have a sale value. Very simple example, your phone itself is an example. You purchase it today, tomorrow you go and try to sell, you will hardly fetch 70% value. You hardly fetch 70% value. Even this laptops, everything. So most of the plant and machineries, most of the buildings, most of the constructions works, these will not have same resale value at which you purchased. Getting it? But still, in the balance sheet of the Ford, they still showed 5,000 crores. Why? I don't have intention to sell. If I have intention to sell, I need to worry about any NRV. Because I don't have intention to sell, I will use this asset, generate future cash flows. I will discount it. And even the discounted cash flow is more than my book value. That's why there is no impairment. You see the concept of impairment? The concept of impairment is exactly talking about this. You are showing fixed asset at historical cost in the balance sheet, fine. What is the selling price in reality? Identify. NRV is how much? Identify how much you can recover from this asset by using this asset, cash generating unit concept, CGU concept, all that. And we generate discounted cash flows, okay, whichever is higher, NRV or discounted cash flows, whichever is higher, recoverable value, carrying value minus recovering value is equal to impairment loss or gain, yes or no? This is how you do impairment calculation, correct? So, based on going concern only. Able to understand? Because we don't have intention to sell, because we can continue the company in future, there is no problem. I can show at historical cost as long as I can continue successfully my company. The moment I default, the moment I think of liquidating the company, whatever fixed assets WDV value I'm showing, that is not valid. I will have to reaccount it at NRV. When I reaccount it at NRV, obviously my balance sheet assets total value will be lesser than liabilities. Able to understand? Fine. So going concern for Air India is appropriate, but material uncertainty exists. Now what is the audit reporting requirement for this? Suppose you verified going concern. You felt everything is appropriate. Everything is appropriate. Management also used going concern. Is there any problem for the auditor? No. So which opinion auditor will give? Unmodified opinion. Able to understand? Now, suppose going concern is completely inappropriate. Still, the management ignored this fact. Completely ignored this fact. And they don't want to exhibit this. They prepared financial statements using going concern basis. They prepared financials using going concern basis, when in fact going concern is not at all viable for this organization, which means entire financial statements pervasively, disclosures related which are fundamental to the user's understanding, the management made a misstatement, obviously. So what is it? Pervasive effect. So adverse opinion. When management used going concern, when it is actually not appropriate. So auditor will give which opinion? Adverse opinion. And reasons you will mention in basis for adverse opinion. You getting it? Now, the problem is with this. What if going concern is appropriate? What if going concern is appropriate, but uncertainty is there? Right now, Air India is supporting. What if after 6 months, after the balance sheet date, I gave audit report, everything is fine. Immediately after 2 months of the audit report, what if Government of India announced that they want to liquidate the company? Able to understand? What if Government of India don't want to support anything else, any further? Getting it? So if this is the situation, then it will come under this particular middle situation. Going concern is appropriate, but a material uncertainty exists. Now here auditor has to check. Now whether this information, okay, material uncertainty exists. Is this information honestly disclosed in the financials by the management? Is it disclosed in the financial statements? Is it? disclosed in the financials. Did Air India honestly disclosed that they're actually not having ability to continue, but they are continuing the business only because of the government of India support? Are they showing this gratitude in the notes to accounts of the financial statements? You need to check. Are they disclosing this entire situation about the company in the notes to accounts? They need to clearly tell every shareholder, if government stops support, we will not be able to continue. Since government is supporting, we are continuing. Is this position disclosed properly in the financial statements or not? Auditor has to check out. If the financial statements are disclosing every picture, this picture of the company, financial statements honestly disclosing, which opinion you'll give? Unmodified opinion I'll give. Why should I worry here? So company is having problem, government is supporting. If at all government stops this, the government withdraws the support, they will not be continuing the business. That entire information honestly disclosed with the management. So they are not misleading the people. Able to understand. Suppose, what if the company is not disclosing? What if the company is not disclosing in financial statement? Auditor has to give which opinion? Qualified opinion or adverse opinion, whatever is appropriate. And you need to mention that reason in basis for qualified opinion, basis for adverse opinion. Accordingly, able to understand. If management is not disclosing the material uncertainty, but material uncertainty exists, and management is not disclosing it in the financial statements. So, what opinion auditor will give? Either qualified or adverse. Generally, we will go with adverse straight away because it's a going concern issue. It's a pervasive issue. We straight away go with the adverse. Though the standard uses the word, depending upon the materiality and pervasiveness, you can choose either qualified or you can choose either adverse, depending upon the situation. But generally, in this situation, let us be more conservative. Go with adverse opinion because audit risk will be zero here. Able to understand? All of you. Now you just once again check back the audit report. There is a section in audit report, material uncertainty related to going concern. In Air India, this paragraph will come in which scenario? This paragraph will come in which scenario? Now you see, when Air India has not disclosed it, I would have straight away given qualified opinion, adverse opinion, and I would have mentioned the reasons directly. But Air India, what they did is they disclosed everything. They disclosed everything, honestly. And I also give unqualified opinion. Because they disclosed everything. But tell me, is this disclosure very important for readers? Whatever note point where they disclosed this information, is it an important information or not? What should I do? We need to draw attention. Generally, where do we draw the attention? Emphasis of matter para. But this is not an ordinary issue to highlight along with other normal issues. It is something related to company's existence. So, I need to highlight separately. So, going concern. So, when you are giving unmodified opinion in respect of going concern material uncertainty, with respect to material uncertainty, you gave unmodified opinion. Now, but your unmodified opinion should not confuse people. You should draw the attention to going concern. Can I draw attention in emphasis of matter para? No, it is not an ordinary issue. Of course, whatever you are highlighting, they are important issues. But this is not just like that important. This is about company's existence. So, I will have a dedicated para. I need a dedicated para to highlight the situation. So, when auditor gave unmodified opinion on going concern issue, where there is a material uncertainty, auditor will highlight this situation in material uncertainty related to going concern. Keep a separate heading in the audit report. Draw attention to that note number so and so which discusses about the material uncertainty. Able to understand? And you see, the presentation requirement is exactly same like emphasis. You see, the company has incurred. So, as mentioned in note number 53. So, the auditor is indirectly asking, please refer note number 53. And our opinion is not modified. What auditor is mentioning? By the way, in respect of the above matter, we don't have any objection. Company disclosed everything honestly. This is also an emphasis of matter. But this is a specific highlighted para. This is a specific highlighter paragraph where we only highlight material uncertainty related to going concern. Able to understand? Suppose if financial statements are not disclosing this uncertainty, will this paragraph come into picture? This paragraph will not come into picture. Getting it? If financials are not disclosing material uncertainty, but company is facing material uncertainty, but financials are not disclosing, they're misleading, I'll straight away give adverse opinion and I'll give reasons and basis for adverse opinion. The possibility, I can't highlight because company is not disclosing. How can I highlight? So material uncertainty paragraph will come into the audit report only when auditor has expressed unqualified opinion on which matter? Going concern matter. You see here AD&D auditor has given a qualified opinion. But here qualified opinion is given not on the going concern matter but on the some other issues. They have given qualified opinion on some fair value adjustments. They have given qualified opinion on some trade receivables. They have given qualified opinion on some lease liabilities. They didn't give qualified opinion on going concern issue. You getting it? On going concern matter, auditor don't have any objection. So with respect to going concern, what might be the auditor's opinion? Unqualified. So he gave this point. Clear? Everyone. Now, so in this particular standard, what questions you might get? Preliminary assessment regarding use of going concern assumptions by management. So first, management of the company should have a policy. Every company should have a policy of assessment of going concern assumption. They should have a formal policy. Getting it? So the auditor shall determine whether management has performed a preliminary assessment. What management will do in preliminary assessment are nothing but risk assessment. Risk assessment process by the company, nothing but. So nature and condition, effect of external event, operating forecast, significant event transactions happen during the year. Suppose if the assessment is not done, if assessment without doing going concern basis of assessment, management straight away used going concern. Ask management what is the basis. Without checking the assessment, without verifying your going concern ability, how did you use going concern assumption? Ask what is the basis. And also inquire whether any events or condition that exist that cast a significant doubt on the ability of the organization to continue as a going concern. So this is preliminary assessment. Management has to do the preliminary assessment. Auditor has to check whether management did this preliminary assessment or not. Now, for how many months this going concern assessment shall be made? After reporting date, balance sheet date, minimum 12 months. In exceptional cases, more than 12 months may be justified, but minimum 12 months. If at all, management is not willing to make assessment for at least 12 months, auditor will give a modified opinion. Able to understand? Now, actually, there is another question here on SA 570. The company financial statements approval process is getting delayed. The financial statements are not being approved by the management. They are continuously delayed. Auditor has to apply going concern analysis again. When the financial statements are significantly delayed by the management from getting it approved, auditor has to identify what are the reasons for the significant delay. If the reason is because of the going concern assumption, getting it, auditor has to do all the further audit procedure. Auditor has to perform further audit procedure. Like what is further audit procedure? If you identify any event, if you identify any condition, that gives you an idea that going concern of the entity is something problem. So what is that event or condition? That event or condition may be financial event or financial indicator, operating indicator or other indicator. If you find these indicators, getting it, you need to do further audit procedure. The company has a net liability position like Air India. So I need to verify. So what is the management's future plan of action? So what is the policy of assessment? What is the management future plan of action? Look at the cash flow, reliability of underlying data. What are the supportings for assumptions used by management? Is there any additional data? Get a representation that whatever management future plan is there, it is feasible according to them. Get a representation. Able to understand? Getting it? So auditor has to check. See, this audit procedure auditor has to do only when auditor identify event or condition that significantly cast doubt on entities going concern. See, the answer is different. If the management of the company has to do a preliminary assessment regarding use of going concern assumption, what auditor has to verify in this regard? If that is the question, B point. Preliminary assessment. If auditor identified any circumstance that caused significant doubt on entities going concern, what audit procedure shall include? Then the answer is this. Able to understand? So from this chapter, from this SA 570, either of these only they will be asking. Getting it? Significant delay. If there is a significant delay in approval of the financials by management, the auditor shall inquire reasons for the delay. If auditor believes that delay is because of the condition related to going concern, please perform above additional procedures. Getting it? To consider the effect on auditor's conclusion on existence of material uncertainty. And this is reporting related to going concern. Reporting related to going concern. Whatever I have told just now, everything was covered here. Now, financial indicators. Write any 5 financial indicators that may cast significant doubt on entity's ability to continue as a going concern. They may ask you 5 points on the financial indicator, or they may give an MCQ. Which of the following is not a financial indicator? They'll give you 3 financial indicators, 1 operating indicator they'll give you. And the question is, which of the following is not a financial indicator? So you need to select that operating indicator, which is not a financial indicator. So what is operating indicator? Management itself want to liquidate the company. So the intention. So that is not financial aspect. That is operational aspect. Loss of key management. Important people, they lost from the company. Coffee day situation. Yes or no? Loss of major market. BSNL is not having 4G allocation properly. Getting it? Labor difficulties. Shortage of important supplies. Emergence of highly successful competitor. All these are operating indicators. Because of these reasons only many companies went down. Able to understand? All of you. So with this going concern is completed. And now what auditor has to communicate with those charged with governance as per SA 570. So a question can come on the last point itself. Write about communication by the auditor with those charged with governance in the context of SA 570. What auditor has to communicate? Whether the events or conditions, whatever auditor identified, will it constitute a material uncertainty? Management may not know, is it a material uncertainty or not? So you need to tell management, are there any events and conditions that create this uncertainty? And whether management use of going concern basis is appropriate. You need to tell management, is it appropriate for them or not? You need to tell whether disclosures in the financial statements made by the management related to going concern are adequate. Suppose you felt material uncertainty exists, management has not disclosed them properly. You need to tell the management, please make a proper disclosure. What is meant by proper disclosure? You need to make it. Able to understand? Then, and implications in audit report. Whatever the disclosures actually made, because of that, what would be the impact on the auditor's report, auditor's opinion? That also you should tell the management. Which means, what are they saying indirectly? Before you finalize your audit report, first discuss with the management. If management did some mistake, don't directly express opinion. First give an opportunity of being heard to the management. Let them rectify. If they don't rectify, go with your final reporting. Able to understand? Next. So that's about SA 570. All of you clear? That's it. So with this, material uncertainty related to going concern is also completed. Yes. Obviously, that's what he has to obtain. Further audit procedure, last point. Auditor shall obtain written representation regarding feasibility of the management plans. Is there? No. So it is compulsory. See, SA 580, it actually talks about written representation. As per that, there is a question. When the auditor should obtain written representation? Option 1, when it is required as per the standard. When it is required by that standard or any other standard. SA 570 says, obtain written representation with respect to going concern management feasibility of the plans. So, SA 570 is asking you to get written representation. You don't have option, you have to get. Or, wherever auditor feels it is necessary. Wherever auditor feels it is necessary, then also he should get written representation. And remember, written representation means what? It's a declaration, nothing but. It's a declaration. See, like very simple, whenever you're purchasing some goods or services, or when you're paying for classes, some document you might have ticked agreed. Some conditions, I agree, terms and conditions. That's a declaration that you are accepting all the terms and conditions. Whether you read them or not, that doesn't matter. People think that you read it. Declaration means what? From the company, from the management. See, why written representation, first of all? Why written? It's a proof that I communicated with management. It's a proof that I discussed with management at each and every important area. I discussed with management. See, this is the declaration given by them. I obtained declaration as well. Tomorrow, if something went wrong, company directors may say auditors have done their own duty, like they never interacted with us. So my audit company may blame the auditors that they never interacted with us. They never met audit committee. So what is the proof that to defend yourself? One is you might have like the entire conversation happened on WhatsApp or maybe email, whatever. So that you can show. In addition to that, most powerful thing is formal representation. It's a formal declaration. Able to understand. Suppose company said, sir, these are the financial statements, these are the books of accounts. Okay, everything is done. They told you orally. Get a written declaration. Getting it? Wherever possible, get a written declaration. First, you need to do audit. First, you need to do whatever procedures you have to do. You should try to get evidence as much as possible. After all that, the last step is what? Written representation. Written representation is not a substitute for audit procedure. Written representation is not a substitute for sufficient appropriate. You see, further audit procedure in going concern also, getting written representation is the last point. First, you need to do all the analysis. You need to study cash flow. You need to look at the business conditions. You need to look at all the circumstances. You need to talk to the people. You need to get budgets, forecast data, analyze everything. After all that, get a written representation also. Able to understand whatever data given to you, is it true and fair? Get a written representation also. Clear? All of you? Next. Anyhow, we'll discuss on SA 580 standard. When I'm discussing 580, there I'll discuss. Next. So with this, material uncertainty related to going concern is also completed. Now, other information. Other information. This is also called as information other than financial statements and audit report thereon. This other information para is also called as what? Information other than financial statements and audit report thereon. This is also called as information other than financial statements and audit report thereon. You know nothing but what you know? This is definition of other information. Right now what I told is nothing but definition of other information. What is other information? It is any other information other than financial statements and audit report thereon. So we'll go to that standard one. You see other information. Definition you see. Other information means what? It may be financial or non-financial information. Nothing but other than financial statements and audit report thereon. But this information is included in annual report. I told you, when company is sending notice of AGM, they will not send just notice. Along with notice, they will send bunch of documents, which includes financial statements and audit report. But remember, financial statements, audit report hardly occupy 50% of the annual report. Rest 50% of the content is something else. Board of Directors report, corporate governance report, CSR report, company's management discussion and analysis, company forecast, message from Board of Directors. Yes or no? So much is there. You see, you will see this annual report once. You see this Reliance Industries annual report. This annual report is completely approximately 418, maybe 420, 430 pages. This annual report is how many? 430 pages. The last 418th page is talking about notice of general meeting. So this is the actual primary reason why we are sharing annual report is to call for general meeting. This is the reason why we are sharing the annual report. And you see here, financial statements started only at 235 page, which means up to 235 page, other than financial statements only was there. So we are giving shareholders so much of other information in addition to financial statements and audit report. Now you see, here we are talking about financial highlights, consolidated turnover, consolidated net worth, consolidated EBITDA, and here something called key performance indicators. Let's see what is that key performance indicators. So indicators, retail business is how much, digital service is how much, media entertainment is how much. So many numbers were there here. Yes or no? Shareholders may not read financials, but they will read all this information. Now tell me, the problem is, you do audit of what? Financial statements. We only concerned with that, right? Do we need to audit other information also? Not required. Yes or no? But the problem is, my financial statements, whenever sent to anybody, they were sent along with the other information. Suppose, you see here, they mentioned turnover 6,59,000 crore. Consolidated turnover. I'll cross verify in the balance sheet how much it is. I'll cross verify in the balance sheet how much it is exactly. I'll cross verify. So where the consolidated P&L 327 by 2. Because no, here it is within single page, 2 pages were inserted. So this is consolidated financial statements. This is audit report on consolidated financials. Yeah. This is consolidated profit and loss account. And you see what is the revenue from operations? You see what is the value of sales and goods and services revenue? 6,59,205 crores. And how much they showed? 659,205. So something like the numbers, one sample we did, remaining we need to calculate. Okay, we may have to apply some calculation because net worth will not be there in the balance sheet, no. In balance sheet, net worth figure will not be there. They'll give you liabilities and assets. So we need to calculate that. If you calculate, what auditor has to check is, along with other information, along with other 200 pages, which contains so many places financial numbers, financial figures of current year, last year, previous, that year, no, who knows. So management is giving so much of other information. Now my problem is, my financial statements where I have signed, just a minute. So I have signed the audit report, I have signed on the balance sheet P&L, I have signed on the numbers that they are true and fair. What if the other information contains a different numbers? And shareholder, whoever read that other information and the balance sheet P&L which I signed, discovered that there is a difference between other information and the financials signed by the auditor, which is right. They may, some of them may doubt that auditor might be wrong. Some of them may interpret that since auditor is signing balance sheet, P&L, everything, I think he verified entire annual report also. We can confidently believe entire annual report. People may misinterpret, correct? If at all company sends only my financial statement set separately, audit report set separately, I will not have this problem. But they are sending my entire information along with the other information. Now here it is creating all the questions in the people's mind. So in my audit report, I should clearly put a side heading called other information. What is other information? Other than financials and audit report, rest all other information that you are getting is called as other information. And look, I didn't audit them and I don't know any authenticity of them. And what is my responsibility here? What is my responsibility? I need to cross verify other information and financial statements. I need to cross verify and should verify whether, should identify, is there any inconsistency? What auditor has to identify? Is there any inconsistency? What other information says? Here 659 says, there 659, both are same. What if other information contains 649 or 669? Able to understand? And the financial statements are so showing different number. If I identify any such kind of inconsistency, what should I do? That is what 720 standard says. What is the responsibility of the auditor in relation to other information? The responsibility is very simple. You need not give assurance. You need not give opinion on other information. Your duty is to identify inconsistency. Is there any inconsistency between other information and financial statements? If there is an inconsistency, perform additional work. Where is this inconsistency? Is it because of a mistake in the financials? Or is it because of the mistake in the other information? First decide that. Suppose if it is a misstatement in the financial statements only, which means I have done audit already, something went wrong in my audit. I need to do additional work. and try to identify why that misstatement arises in the financial statement. And I will ask management to rectify it. If they don't rectify, I will take back my audit report. I will give a modified audit report with a modified opinion, because financial statements contains a material misstatement which I discovered when I am cross-verifying other information and financial statements. Able to understand? Or I may discover a misstatement not in the financials, but the misstatement is only in the other information. Other information given by the management is misleading. Financials are correct. Financials are talking everything honestly, and I gave opinion, everything is fine. But other information, management is doing window dressing. Able to understand? Now what should I do? I should ask management to rectify the other information. I should ask management to rectify the other information. Suppose if they don't rectify, should I give modified opinion? Not. I should give modified opinion when there is a material misstatement in financial statement, or when I am unable to obtain evidence for material items in the financials. Here, the mistake is not in the financials, but the mistake in other information, which my report will not deal with. In such a case, why will I give modified opinion? So in other information para, what will I do? I will highlight that information. Please, so-and-so board of directors report or so-and-so corporate governance report contains a number which is not believable. Getting it? Which is not correct. Like this, we will make a disclosure. Able to understand. Now here again, you have two questions. Now, suppose I did audit. Now I want to prepare audit report. But before I prepare audit report, first of all, I have to know what other information company is ready to distribute. Correct? What other information company want to distribute to shareholders. First I should know. Now, as on the date on which you are giving the audit report, the entire other information which company want to distribute to shareholders might be ready, might not be ready. Correct? Maybe company said, sir, first you give audit report, sir. Then we will prepare other information. After 15 days, we will prepare annual report, formatting work and all. Then we will send mails, sir. Which means, by the time on which I am preparing audit report, other information is not readily available. In such a case, what auditor shall do? Standard says. Standard speaks about that. Able to understand? All of you. So let's look at the contents of this. So, what is the objective of the auditor? Here, the objective point is very important. The objective of the auditor regarding the objectives of the auditor is having read the other information. After reading the other information, what is your objective? Consider whether is there any material inconsistency between other information and the financial statements. So they'll give you a true or false statement, correct or incorrect. When auditor identified a material inconsistency between other information and financial statements, the auditor shall modify the opinion. Incorrect. When you identify inconsistency, auditor has to perform additional procedure. You see here, we clearly mentioned here. Audit procedure for other information, responding when there is an inconsistency. If material misstatement exists in other information, what auditor has to do? If material misstatement exists in financials, what auditor has to do? Clearly explained. Able to understand? See, whenever you're learning, you must always have a holistic view on the entire that standard. What that standard says, what that standard do not cover. You must have a holistic understanding. Only then, when you're reading inside the content, you understand in depth. Getting it? So first, consider, is there any inconsistency? Now then what you have to consider? To consider whether there is any material inconsistency between other information and auditor's knowledge obtained in audit. See, this is another point. I only spoke about one element. This point is not that significant, so I didn't speak. What is this point? See, when you are doing audit, you may not be aware of so many things. But only when you are reading the annual report, you got to know so many things about the company future plans and all. Which means, after reading the other information, whatever the knowledge about the audit you have, that knowledge might be different from other information. Able to understand? So other information may give you new information or may give you a contrary information. Able to understand? And now respond. How to respond if auditor identified material inconsistency or when auditor otherwise becomes aware that other information is materially misstated. So how to respond if other information materially misstated, and report accordingly as per this standard. So the objective of the standard is first identify is there any inconsistency between the financials and other information. Identify is there any inconsistency between your knowledge and other information. And third one, respond if there is an inconsistency or misstatement in the other information or the financial statements. Then finally, reporting as per this standard. Able to understand? So what auditor has to report? That reporting is very important here. So what auditor has to report? Write about auditor's reporting requirement under SA 720. They'll ask you this. The auditor shall state, the audit report shall state. Before I read this, let's look at Reliance audit, Reliance consolidated financials or whatever. Anything is fine. Any audit report you can read. This is IFCR report. Yes. So the side heading you see information other than financial statements and auditor's report thereon. This is a side heading they used. This side heading is a substitute for other information. Both are same. This is actually definition of other information. The definition itself they used as a side heading. Understood. Now you see what are they saying? The holding company board of directors is responsible for other information. Who is responsible for other information preparation? Management. Nothing but management. The other information comprises what? Annual report. Just I'll show. The other information comprises annual report but does not include financials and audit report. Whereas our opinion on consolidated financials, nothing but our opinion on financial statements does not cover other information. We do not express any form of assurance or conclusion on other information. We are indirectly saying other information is not related to us. Don't read along with audit report. Next. In connection with our audit, what is our responsibility for other information? Our responsibility is to read the other information and in doing so, consider whether such other information is materially inconsistent with the financial statements or our knowledge obtained in the audit or otherwise appears to be misstated materially. If based on the work we performed, we conclude that there is a material misstatement of this other information. If at all there is a material misstatement, we are required to report that fact. And finally, we have nothing to report in this regard. So what are they saying? Our responsibility is to read the other information and identify inconsistency between that information and financials, inconsistency between that information and my knowledge, and respond when there is a misstatement. And our duty is, if at all there is a misstatement, we have to report that fact here, not modified opinion, nothing. By the way, we have nothing to report in this regard. Means positive only, they said completely. Correct? All of you. Now you see here. In examination, how they will ask you, you should not write that para. That is draft. That is drafting. What they will ask you, what is the auditor reporting requirement in relation to auditors, in relation to information other than financial statements and audit report thereon. If that phrase is used, nothing but they're talking about other information. The auditor report shall include a separate section with a heading, other information or other appropriate heading. Reliance have used appropriate heading, other appropriate heading. What heading they used? Information other than financial statements and report thereon. And this section shall include a statement that management is responsible. We mentioned, no, the board of directors, consolidated financial statements, board of directors, they are responsible. An identification of other information obtained by auditor prior to the date of audit report. This we generally don't give. It's okay. For an audit of financial statements of listed entity, if other information is obtained after the date of audit report, suppose if at all you did not get other information prior to the date of audit report, you are getting later after the audit report, you need to mention that fact that so that CSR report we have not received as on the date of preparing the audit report. However, after issuing the audit report, we have the responsibility to read the CSR report again. Getting it? See, after date of audit report, if you are getting other information means, you are not excluded from the responsibility. You have to read that. But that point you should mention to the shareholder. As on the date of giving this audit report, in this annual report, there is one report called CSR report. That report was not handed over to me as on the date of audit report. However, I will read this CSR report after it was handed over, after it was prepared. Able to understand? A statement that audit opinion does not cover other information and auditor does not express any form of assurance conclusion on the other information. A statement that, a description of what is the responsibility relating to other information. When other information has been obtained prior to the date of audit report. A statement that auditor has nothing to report. Nothing to report when, if other information and financial statements do not contradict with each other. Clear, all of you? Suppose if the auditor identified a material misstatement in other information, if there is an uncorrected material misstatement in other information, describe what is that uncorrected material misstatement in other information. Able to understand? Now suppose you may say, sir, what if there is a misstatement in the financial statements? We don't discuss that misstatement in the financials in other information. We will discuss that in opinion and basis for opinion para. Clear? All of you? So summary, if material misstatement is in other information, you can give unmodified opinion, but report that information in other info para about that MMS in other information. If material misstatement in financials, give a modified opinion and reasons in basis for modified opinion para. So other information para will not affect if there is a material misstatement in financial statements. Clear? So now what auditor has to do? Here everything has been clearly explained like in this. So you need to read this standard thoroughly now. So now now with this understanding, go and read this standard, you will understand in a much more clearer way. Getting it? So with this now we have even completed other information. Yes or no? We have completed other information as well. We have completed other information as well. Now what are the responsibilities of management? Nothing but it's a CA inter question, preconditions to audit. In nature, objective and scope of audit, preconditions to audit, there is a question in CA inter. Like the management is primarily responsible for preparation and presentation of financial statements in accordance with applicable financial reporting framework. Yes or no? Management is responsible for designing and implementation of internal control systems so as to prevent and detect fraud and error on timely basis. Management is responsible to provide us the information and explanation needed for conducting the audit, to provide us access to books, accounts, records, documents, whether kept at head office or anywhere at any time, and to give us unrestricted access to people within the organization so that I can inquire and do the audit well. That's it. Responsibilities of management. What are auditors' responsibilities? So that is also given clearly here. You see G4 point. G4 means nothing but here it is G point and below it is fourth point. What are auditor responsibility? Where will you keep this location? What is the location of auditor's responsibility? You can explain everything in the body of the audit report or as an appendix. Nothing but annexure. Or you can give it on a website. You can give it on the website. Or you can refer to some standard wherever this responsibilities information will be contained. But in India, we follow only this method. Getting it? You read any company audit report in India, entire responsibilities will be given there itself. They will not ask you to refer any other website, nothing such. Clear? This is also an important question. It's also an important question. Now, what are the contents of opinion paragraph? What are the contents of the opinion paragraph? This question they can ask. What are the contents of basis for opinion paragraph? This question also they might ask. Getting it? Now, what do you mean by other reporting responsibilities? So now actually we are going to discuss about that only. So report on other legal and regulatory requirements. So CARO 2020 example. So what is this reporting requirement? If we discuss this chapter will be finished. Getting it? So report on other legal and regulatory requirements. Report on other legal and regulatory requirements. So here we have 143 subsection 1, 143 subsection 3, 143 subsection 11. Here we have 21 clauses to be reported. Here we have 15 checklist items. Actually it is only 10. In the 10th item, such other matters it will say. Inside that 6 items will be there. So 9 plus 6 totally 15. Getting it? And here it is 6 enquirers. 6 enquirers. Now 143 subsection 1, we have duty to inquire on 6 matters. And as per the guidance note, when auditor has to report, only if auditor has obtained a negative response. Only if auditor has obtained a negative response, he should report that. Otherwise, he need not report. 143 subsection 3, whether it is positive or negative, both you must report. And all the 21 clauses in CARO, whether you have got positive answer or negative answer, both you must report. With respect to CARO related CARO requirement, whether you have got a positive answer or negative answer, both you have to report. So this is a reporting requirement. 143 subsection 1, duty to inquire, you have to give reporting only if it is negative. Whereas in CARO, positive or negative, both you must report. Now, next. First I will talk about CARO 2020, applicability, very simple, no much complexity. CARO is applicable for all companies, even foreign company. CARO is applicable for all companies, including a foreign company. So, however, CARO do not apply for which companies? Banking company, insurance company, Section 8 company, one-person company, small company, and private limited company, subject to 4 conditions. Subject to all the 4 conditions. All the 4 conditions. So, there are 4 conditions given. Subject to all these 4, you need to satisfy all the 4 conditions. For a private limited company only, we will check these conditions. Otherwise, you need not worry. CARO is applicable for all the companies except these companies. Now, not a subsidiary company, not a holding company of a public company. If a private company do not have any relationship with a public company, then CARO do not apply. Straight away you can conclude it's only one of the condition. For exemption, it's only one of the condition. For getting exemption from CARO for a private limited company, 4 conditions must be satisfied. All the 4, not any one. All the 4 must be satisfied. Total paid up capital, reserves and surplus shall not exceed 1 crore as on the respective balance sheet date. Suppose I am talking about audit report on financial year 21-22, means balance sheet date means 31st March 2022. Able to understand? The respective balance sheet date, not preceding balance sheet date. Are you clear? Next. The total borrowings from banks and financial institutions shall not exceed 1 crore at any point of time during the financial year. At any point of time during the financial year, the total borrowings and loans from banks and FIs only, not from related parties, not from any other person, only from banks, only from FIs. If you have taken any loans and borrowings, if that exceeds 1 crore, condition failed. If it not exceeding 1 crore, on which date? Any time during the year, in the entire 365 days, every day, what is the outstanding total loans and borrowings to all the banks or financial institutions? Every day you need to check what is the outstanding amount. Even on one day, if it is exceeding more than 1 crore, CARO is applicable. The condition is not satisfied. And the total turnover calculated as per Schedule 3, including revenue from discontinuing operations, shall not exceed 10 crore. Many students will forget to write this point, including revenue from discontinuing operations point. Many students will forget this point. And here, at any point of time, they will forget. Here, they will forget as on balance sheet date. Getting it? In CA Inter, this question will be asked frequently. What is the applicability? Student will write the answer. What he will write? The CARO, for a private limited company, CARO do not apply if it satisfies the following conditions. Not a subsidiary company or holding company of a public company, fine. Paid up capital and reserves and surplus shall not exceed 1 crore. Total loans and borrowings from banks shall not exceed 1 crore. Turnover shall not exceed 10 crore. This is how he write. Actual first point is what? Paid up capital and reserves and surplus shall not exceed 1 crore as on balance sheet date. Loans and borrowings from banks and financial institutions shall not exceed 1 crore at any point of time during the year. Are you getting it? See, in India, there are hardly 5 or 6 only financial institutions were there. Rest all are only banks. Rest all are banks only. Financial institutions are very less. These institutions, they just got a financial institution identification from RBI, but not as a bank. They don't establish as a bank. Getting it? What financial institution will do compared to bank? More or less same only. When I'm discussing bank audit, I'll show you a list of banks that are there in India. Getting it? Now, points to be kept in mind while calculating above parameters. All these are very simple points you can read and understand. These additional points are very important. Now, does CARO applicable for branches also? Obviously, yes. If it is applicable, see, CARO applicability limit will come only for private company, first of all. The concept of limits in CARO will only apply for which company? Private. If it is public company, limits and all, I don't worry. I'll straight away apply to the public company, all the branches. If it is private company, all branches put together, we need to check the turnover. All the branches put together, we need to check loans and borrowings. And of course, paid up capital reserves will be for the overall company. Able to understand? So if CARO is applicable for company as a whole, all the branch auditors must also give CARO report. Now here one more question. Now there is a small company revised definition last year. Now small company means what, paid up capital up to 2 crore, turnover up to 20 crore. Getting it? If capital is up to 2 crore and turnover is up to 20 crore, it is still treated as a small company as per, Companies Act. Suppose mine is a private limited company. I have 1.5 crore capital and I have 15 crore turnover. If you look at private company condition in CARO, it's satisfied. Condition is failed. Logically speaking, CARO is applicable. But if my company availed the status of small company under Companies Act, if my company availed status of small company under Companies Act, I will not apply private company criteria. I will apply small company and accordingly exempt it from CARO. Able to understand? Whenever they are making amendments, they don't make amendments at all other required places. They'll forget. This is a mistake in law making process. Getting it? There is no intention behind law. There are only mistakes behind law. Actually, do you think there's an intention for everything? If at all there's an intention for everything, like you see, in company audit, rotation of auditors is applicable for a private company if it has a turnover more than 50 crore. Sorry, borrowings more than, paid up capital more than 50 crore. Rotation of auditor is applicable if capital is more than 50 crore. But if the private company whose capital is less than 100 crore, ceiling limit not applicable. Have you seen that? Ceiling limit do not apply. CARO, if it is more than 1 crore, CARO is applicable. Like why are you applying CARO if it is more than 1 crore? Why are you exempting it from ceiling limit if it is less than 100 crore? Why are you making it compulsory if more than capital more than 50 crore? Why are you making it compulsory for rotation? These numbers are given by different people at different points of time. Understand? Not entire law is drafted by a single person. The lawmaking process involves every year, every month, multiple people will come and go. People will transfer in the government departments. Yes or no? So if one person went, so now that suddenly that work came to me. Okay, they're asking me, sir, private company, sir, rotation of auditor, sir. I'm working in Ministry of Corporate Affairs somewhere. Getting it? So they're asking me to recommend some number. Put 50 crore, enough. That's how decisions will be taken. Are you getting the point? So there is no logic behind the numbers. Whatever the numbers they're keeping, generally most of the cases logic will not be followed. They only look at the materiality at that moment. So for rotation auditors applicability, materiality level might be different. Ceiling limit exclusion, materiality level might be different. CARO applicability, materiality level might be different. Able to understand? So clear cut, there are no logics behind law. That's it. So now we will have to discuss the 21 clauses. Okay. So we'll take a small break, 15 minutes around. Then we'll discuss at a stretch and we'll close this. So all these clauses we will discuss, and even 143 subsection 3 checklist also I'll discuss. Now all these clauses, I will not discuss each and every clause. I will discuss important clauses. Which questions will be prompted to be asked in exam? So that clauses I will discuss. Clear everyone? Yes. So just take 15 minutes gap. Yes. So just one more point I left in CARO, that is CARO applicable on consolidated financial statements? The answer is no. But there is a 21st clause in the CARO which talks about, like, suppose we are taking one company. In that company, in the 21st clause, what auditor has to comment is, what are the qualifications or remarks in CARO reports of other companies along with this company which are going to be included in consolidated financial statements. So by looking, very simple, suppose Tata Motors is one subsidiary company among many subsidiary companies to Tata Sons Private Limited. So no, there is a company called Tata Sons Private Limited. Tata Motors is one company among many companies where where consolidation, the Tata Motors will also be included. Now, as an auditor of Tata Motors, when I am giving CARO report in Tata Motors, on Tata Motors, in 21st clause of the audit report, CARO report, inside the Tata Motors, I should talk about what are all the other group companies where the auditors have given a remark or qualification in the CARO points. I should give entire list here. Getting it? You see here, but anyhow, I'll show you this example. So you see, this is actually annexure to the audit report. This is actually an annexure to the audit report. And this audit report is on consolidated financial statements. Actually, CARO do not apply on consolidated financial statements. CARO report will not apply on consolidated financials. But only one point in CARO has to be given in consolidated financials as per guidance note on CARO. So you see here, in our opinion, what are they saying? In our opinion, and according to the information given to us, following companies incorporated in India, which are included in consolidated financials, have unfavorable remarks, qualifications, adverse remarks given by respective auditors in their reports under CARO. So this actually Tata Motors consolidated, financial statements. In Tata Motors consolidated financials, there are many companies which are included. Example, like Tata Marco Polo, Tata Passenger, Tata Motor Passenger Vehicle, Bravo Robotics something, Automobile Corporation. These are the companies. Maybe, may not be this. There may be many other also. But approximately in the Tata Motors consolidated financials, there are some 15-20 companies might have been there. But out of that, 10 companies, respective auditors have given qualification under respective clauses in their CARO. Suppose if you open Tata Motors Limited standalone financial statements. The auditors in the CARO report on the standalone financial statements have qualified clause number 2B, have qualified clause number 3C, has qualified clause number 3D, 9D and 11A. These are the clauses which are qualified by the auditor in Tata Motors financial statements related CARO report. Able to understand? Like this, they need to give. Except this, on consolidated financials, CARO will not apply. Able to understand? But anyhow, when I'm discussing 21st clause, again, I will be showing this. Clear? Now, so, what are the 21 clauses to be reported in CARO? First of all, I generally don't take crash batches. See, whenever I want to give revision, I'll give free revision on YouTube. Because when we give it free of cost, people will not complain. Even if at all it is not effective. And even if I don't cover 100%, even if I don't cover at least 70-80%. So, the reason why till date, I never sold a crash course or even fast track course also. I only sell regular course. I have only regular and have 1,000 students admissions till date. Getting it? I never sell crash course. The only reason is expectation will be same. Whether I sell fast track course or crash course or full course, the student will expect same 100% in depth. Getting it? If I start selling fast track course, what will happen? Simply the student will go and say he is not covering full syllabus. The primary fact that he got a fast track course itself, that fact he'll forget. Getting it? So even now I'm very hesitant. I'm recording, but I'm not sure whether I will open it for sales or not. I'll just keep it. So I'll take a decision after 3-4 days. Getting it? But the reason why I'm hesitant to sell is because I don't want to disturb my feedback which I have. Whoever buys my full course, they watch in depth. Like whatever, see until now audit report, this point is, this particular 21 clauses we will be discussing somewhere in 18th or 19th hour in audit report chapter. So imagine the length of discussion that takes place in a regular session. So when that kind of knowledge is given to the student, obviously no point of negative feedback. No point of negative. So obviously 100% syllabus coverage means obviously 100% syllabus coverage will be done for sure. But in fast track and crash courses, it is impossible because of the timelines, whatever. So that is one reason why I don't generally take. Anyhow, I just want to share. Next, so fixed assets. Now in CARO, how to remember all the 21 clauses, mnemonic codes, cheat codes. Especially when I see for CARO, I feel very furious. Who will ask in exam? Hey, give me list of 21 points in CARO. Is there any question? Have you seen that? No. But outside, because they don't have anything to tell, they tell all the stupid stuff. Getting it? What is asked in exam is, last time in CA final, which question was asked? In CA final, they asked on this point. They asked on this point. And that too, they asked a practical question. They asked a practical question on this point. What is the reporting requirement related to working capital loans? They gave an illustration. What is your reporting requirement in CARO? That is a question they asked. They don't ask you, tell me clause number 7 what? Getting it? Maybe some people, like whoever examiner, whoever is paper setter is there, unless he is of unsound mind, he will test clause numbers. Why should we test clause numbers? Tell me. Yes or no? Is there any point of testing clause number? Hey, tell me clause number 6 is what? Cost records. Intelligent. Yeah, I know. That's why I'm telling you. Those people are unsound minds. Getting it? Lunatic or unsound mind, contract law. I don't know why they test. That kind of stupid question, why they test, I don't know. Getting it? In reality, when auditor is preparing CARO report, what he needs is understanding of the reporting requirement. And accordingly, he need to report the fact. It's not the clause number which is important. But some people test that also. I'll show you when I'm discussing, as I'm proceeding further, what kind of stupid questions they're making in MCQs or even in main examination also, what kind of stupid questions. But the percentage of these stupid questions will be very less. You don't expect too many also. And further, one more instruction I forgot to give. Don't buy outside true or false questions or MCQ booklets. Don't follow anything except ICA book. Only ICA MCQ booklet, please follow. If at all you are solving ICA booklet properly on your own, without looking at the answer and then interpreting. First interpret and then look at the answer. If at all you are able to solve ICA MCQ booklet properly, which means you are having enormous grip on audit. If at all you are unable to solve ICA booklet properly, means you don't have grip on audit. Are you getting my point? Especially the initial 115 or 120 MCQs were given, standard MCQs, normal MCQs. So that itself you will feel a lot of difficulty. Then coming to case-based MCQs, you feel even more difficulty level. Getting it? Outside MCQs and all, they will ask you, they will be giving you this kind of line. They'll be giving you, they'll give you this sentence and put blanks here. And ask those kind of stupid questions. But that is not how ICI is testing in reality. You just look at MTP. The MCQ quality, see how the quality of MCQ. And outside MCQ booklets, people are selling, no, you see that quality. Auditor will obtain which evidence? Persuasive or conclusive? Obviously persuasive. Getting it? This kind of stupid MCQs were there. They are of no standard. Like that, you solve 2000, 3000 MCQs also, no use. Standard MCQs if you have to solve, that is when your skill set will enhance. That is when your thinking ability will enhance. Getting it? Now, so what is the reporting requirement in relation to fixed assets? There are 5 aspects the auditor has to talk in fixed assets. There are totally 5 aspects. 1, he need to talk about fixed asset register. He need to talk about physical verification. He need to report about immovable property. He need to report about revaluation. He need to report about Binami transactions. These are the 5 issues which auditor has to report related to fixed assets. See, side headings and all given for convenience. Original CARO notification do not have any side heading. Getting it? Now, what auditor has to talk in fixed assets? Whether the company is maintaining proper records showing full particulars including quantity and situation. So very simple here, what they are asking is the company maintaining fixed asset register properly? Fixed asset register will be there. Every company should have fixed asset register. Every asset will have some identification number. Getting it? Every asset will be given some numbering. In big organizations and all, the assets are enormous. So many assets will be there. Thousands of assets will be there. So there must be some control on that. So they have a record of number of assets. So how many ACs were there, where they were installed, on which date it was installed, what is the purchase price, what is the GST paid in that, what is the depreciable amount, how much is the accumulated depreciation, entire that information will be available in fixed asset register. And they're asking you, did the company maintain the fixed asset register? You need to tell to the shareholder whether the company maintained records of fixed asset register or not, which will contain quantity and location details. Next. Then they're asking you whether these fixed assets were physically verified by management. Is the management of the company verifying these fixed assets at reasonable interval? They're asking you. Getting it? You need to check. See, in Tata Motors, once in 3 years they'll verify fixed assets. It is not once in 3 years. Actually speaking, in big companies, fixed assets verification process is a continuous process. In a big companies, every day you go, every working day, somewhere in the location, physical verification activity is going on. Somewhere. You take Infosys, TCS, Tata Motors, Reliance Industries. For them to verify entire fixed assets once, it will take 3 years. It will take how many years? 3 years. And there will be a team of approximately 30-40 people whose job is only verifying fixed assets. And this team is nothing but internal auditors. These are actually what? Internal auditors. See, in a company, internal audit department will be very big. They may be having 150-200 staff members. In a big companies, 150 to 200 staff members might be there. Out of them, some 20 people might be for fixed assets verification. Some 10 people will be continuously checking stock. Some 10 people will be checking continuously purchases. Some 10 will be employed in sales. Some 10 will be employed in some GST workings. Some 10 will be employed on TDS. So likewise, entire internal auditors department staff, they will delegate the work and then do it. Able to understand? Again, the internal auditors in a company, they were not completely employees. Some of them are employees. Some works company will give outsourcing to audit firms, practicing CA firms. Able to understand? So, internal auditors are there who are part of the management, who continuously do fixed assets verification throughout a year. Likewise, Tata Motors auditors or Tata Motors management, getting it? They have taken 3 years to verify fixed assets. And according to the size of the company, having regard to the nature of the business, looking at the internal controls, the 3 years once verification is absolutely reasonable. Are you getting it? If it's a very small company, once in a year is reasonable, at least. If it's a very big company, once in 3 years, once in 5 years is also reasonable. Getting it? So whether fixed assets have been physically verified by the management, whether any material discrepancy noticed, and how they were dealt in the books of accounts. Suppose you ask management, see physical verification records. Ask them whether are there any material differences identified. Material difference means what? Excess assets identified which are not accounted, or assets, whatever is there in the books of accounts but not there in the reality, shortage. So if at all any excess assets are identified or shortage is identified, how the management is dealing them in the books of accounts, you need to verify. And you just have to comment here. There were no, if you see how Tata Motors have commented. How Tata Motors have commented. So under report on legal and regulatory requirements, CARO report is coming. Yes or no? But if at all entire 21 clauses, if they put here, it will become bulky. So what they did, instead of giving here, they gave it as a annexure. Remember, in exam, additional sheet also equal to main sheet. Yes or no? Same way here also. Annexure is not a separate report. Annexure is part of the report. So you see what Tata Motors have commented. The company has maintained proper records. The company has maintained proper records showing full particulars of intangible and full particulars of PPE. And according to the information explanation given to us, the company has a regular program of physical verification over a period of 3 years. In accordance with the program, PPE were verified during the year, certain PPE. So every year, some portion of assets they will verify physically. In our opinion, this periodicity, having regard to the size of the company and nature of the assets, is reasonable. They are saying reasonable and no material discrepancies. So which is a positive comment. I think it. Next. So that is regarding physical verification. Next. Immovable property. What are they asking? Whether title of the immovable property is held in the name of the company. The company is having immovable properties. In the fixed assets, they are showing land, factory, building, so and so, all that. Are these immovable properties, are they in the name of the company or in somebody else's name? If at all they are not in the name of the company, what is the property, factory, gross carrying value, so much, held in the name of director? Why it is not held in the name of the company? You need to clearly mention. Getting it? Because you are showing it as a fixed asset, but it is not in the name of the company. Generally here, which assets will come, leased assets information might come. Leased assets information might come here. Next. That too, suppose if the lease agreement, which is financial lease, and the lease agreement is in the name of the company, again no need to report. Able to understand. Next. Now they are asking revaluation point. Whether the company has revalued property, plant and equipment or intangible assets during the year. During the year, is there any revaluation happened? They are asking. If so, who has done the revaluation? Is it by a registered valuer? You need to check. Is it by a registered valuer? You need to check. So, like I think there is a course, NISM registered valuer course is there. CS and all are doing. Getting it? So you get a valuation or registered value or license. So then onwards you are eligible to do valuations for various reasons. Getting it? So if a company did valuation, any revaluation of property, plant and equipment or intangible assets, the CARO is asking the auditor, dear Mr. Auditor, please check who did this revaluation. Is it done by a registered valuer? Check it out. And specify amount of change. How much is the percentage of change? If the change is 10% or more in aggregate of net carrying value of each class of property, plant and equipment. 10% or more in the aggregate of net carrying value of each class of PPE. So what do you mean by that? Suppose I have this balance sheet. This is last year figure and current year figure. Now I have fixed assets, inside the tangible assets, inside the plant and machinery. Getting it? Now inside this plant and machinery, gross plant and machinery 500, last year 400. Gross plant and machinery, last year depreciation 50, last year 40. So here it is until now 450 and here it is 360. Now company has done some plus or minus revaluation. Some company has done plus or minus revaluation. Last year no revaluation, 360. And now current year there is a revaluation done by the company, some 50. Getting it? So again total it is coming to 400. Getting it? Total it is coming to 400. Now what is net carrying value? This is the net carrying value. What is this? Net carrying value means what? This. For plant and machinery this is net carrying value. Able to understand? Now in the net carrying value, if the change is 10% or more after revaluation, look at the net carrying value before revaluation, after revaluation. Actually, I told you here last year, current year. Actually, it is before revaluation, after revaluation. Let us take before revaluation, after revaluation. Take before revaluation figures, take after revaluation figures. And identify net carrying value before revaluation, identify net carrying value after revaluation. If the difference is, it may be 10% increase or 10% decrease, whatever it might be. If the difference is more than 10%, auditor has to mention what is the amount of the change. What is the amount of the change? During the year, so and so plant and machinery, 45 crore is the amount of the change. Within bracket, more than 10% change in net carrying value of the plant and machinery. Check for electrical fitting, check for buildings, check for other assets also. Net carrying value of each class of property. Each class means what? Plant and machinery is one class. Immovable property is another class. Electrical fittings is another class. Able to understand? Next. Now, next another reporting requirement relating to fixed assets. Auditor has to report whether any proceedings are initiated or pending against the company for any Benami property held under Benami Transactions Act. So there is an act called Benami Transactions Act. You might have covered this in other laws like economic laws. Getting it? So as per that law, if any proceeding is initiated on the company you're doing audit, or any proceeding is initiated but still pending on the company, you just have to give details of the same. If so, whether the company disclosed the details in the financial statements, whenever Benami proceedings are initiated against the company, as per Benami transactions law, in the financial statements of the company, they need to disclose some information. Able to understand? All of you. So whenever a company was taken up a case, whenever the company was selected under Benami Transactions Act for particular case, the company has to voluntarily shall disclose entire these details in the financial statement notes to account. And you auditor have to report in CARO what? Did the company disclosed or not? Did the company disclosed or not? Able to understand? So this is the reporting requirement for CARO for fixed assets. They may ask you this entire question. Write about reporting requirement for fixed assets under CARO 2020, they may ask you a 6 marks question. Getting it? Or they may ask you, write about reporting requirement in respect of physical verification and immovable property related to fixed assets under CARO. They may ask you only these two and ask you for 4 marks. Able to understand? Anyway, the question can be framed. Are you clear? So if you remember main headings and ignore this main content, there is no point. So what is important is the inside content, not the outside content. Clear? Next, inventory. So what auditor has to talk about in inventory? Same again, physical verification. Whether physical verification of inventory has been conducted at reasonable interval by the management. For inventory, what is reasonable interval is maximum 1 year. So for fixed assets, it may be more than 1 year, because in fixed assets, there will not be any movement. But for inventory, it is continuously movement will be there. So for inventory, at least once in a year, physical verification is compulsory. Auditor has to check whether management has done physical verification at reasonable interval. What is reasonable interval? Guidance note also says at least once in a year. If it's a very big company, at least once in a year it must be done. Clear? Next. And if any discrepancy of 10% or more for each class of inventory were noticed, whether they were properly dealt in the books of accounts. So for each class of inventory, raw material is one class of inventory. Work in progress is another class of inventory. Finished good is another class of inventory. Able to understand? These are the three clauses. So for these three classes of inventories, if there is a change of more than 10%, if material discrepancy is identified for more than 10%, see, in fixed asset, they use the word material discrepancy. Whereas in inventory, they didn't use the word material discrepancy. They straight away said 10% or more discrepancy. They quantified here clearly. Whereas in fixed assets, they just mentioned material discrepancy. Whereas here, they quantified. Able to understand? They may ask you as an MCQ this also. Which of the following statement is correct? The auditor has to qualify if auditor has identified any material discrepancy in aggregate for each class of inventory noticed or reported during the year. If so, how they were dealt in the books of accounts? Option A. Option B. The auditor has to qualify if auditor identified discrepancies of 5% or more. Option C. If auditor identified discrepancies of 15% or more in overall aggregate inventory, they'll put. Option D. Then correct option they'll give. 10% or more in each class of inventory. In one option, each class they may use. In another option, aggregate inventory they'll use. In another option, they will not use 10%. They will use material discrepancy. In another option, they'll give you entire this as it is provision. Only if you observe what exactly the provision is, you can pick out the correct answer. Clear? Next. Now working capital loan. This is what tested as 5 marks question in the last attempt, May 22 attempt. Whether during any point of time, the company has been sanctioned working capital limits in excess of 5 crore rupees. In excess of 5 crore rupees in aggregate from all the banks, all the financial institutions on the basis of security of current assets. So the company showed current assets hypothecation, got working capital loan, maybe overdraft facility or cash credit facility, anything might be, but some working capital limit was sanctioned to the company. Now, whether the quarterly returns, quarterly statements filed by the company with those banks and institutions are in agreement with books of accounts of the company, if not, give details. Like what many companies do, they have actual stock. See, generally, there is something called sanction limit and drawing power. There is something called sanction limit and drawing power. Suppose you are sanctioned with 5 crore limit. Here you see, if the sanction limit only they are asking. If the sanctioned limit itself is more than 5 crore, this reporting requirement applies. Drawing power need not be 5 crore. Drawing power may be less than 5 crore. What is sanction limit? What is drawing power? Sanctioned limit means based on your repayment capacity, I will sanction this much loan. But how much you will withdraw? It depends upon how much value of security you are giving me. Able to understand? Suppose I sanctioned a particular company 10 crore limit. I sanctioned a particular company, how much limit? 10 crore limit. But they sent me 6 crore worth of stock value statement. They sent me a stock statement, stock audit report, where the stock audit report certified how much stock value? 6 crore only. But I cannot give entire 6 crore disbursement. I cannot disburse entire 6 crores. I will give margin, 20-30% margin I'll keep. I will reduce some 20%. I will give only 5 crore DP, drawing power. Means what? Though you are sanctioned with a 10 crore limit, you can withdraw maximum how much? 5 crore. Now you sent me a stock statement, right? In that, how much is there in the stock statement? 6 crore is there in your godown. That is what people also certify. But on so and so date, the statement you sent, right? As per your books of accounts, your books of accounts shows only 4 crore stock. For the purpose of getting higher drawing power, your company sent a wrong stock statement mentioning 6 crores. Stock value is overstated in the statement filed with the bank. Whereas in the books of accounts reality, the stock value is only 4 crore. The company, in order to get higher drawing power, overstated. And many auditors are supporting this. Getting it? When you are giving stock audit certificate, stock certificate, what you need to do? You need to check books of accounts. You need to check books of accounts. You need to look at the value correctly. You need to look at the stock records. You need to casually inspect, surprisingly, that particular stock. Finally give stock value certificate. Very recently, for one of the company for which one of my friends signed 6 years back, stock certificate. Very recently, he was called for CBI inquiry. Very recently. Nothing happened. They just called 4 questions they asked, because the person, whoever is sitting other side, no, whoever is asking, the CBI inspector, whoever is there, no, he doesn't know accounts much. That's the advantage of this fellow. So this fellow could easily escape. Getting it? So he certified a fake stock statement. Now you are not, now you are caught in CARO. If you certify fake stock statements and all, auditors have to report. Stat auditors have to check. See, stat auditor may not be the person who certified this. Some CA certified, you certified. Suppose I am the auditor of Tata Motors. See what I discovered. In Tata Motors, what we discovered, you see. You see how many differences we discovered. According to the information expression given to us on the basis of examination of the records, the company has been sanctioned with more than 5 crore in aggregate from all banks. Working capital limit sanctioned is more than 5 crore. See, means this clause is applicable. Now, what are they saying? In our opinion, the quarterly returns statements filed by the company with the banks are in agreement with the books of accounts positive, except statement for the quarter ended June 30, 30th September, 31st December with the State Bank of India, Bank of America, Citi Bank, HDFC Bank, ICICI Bank, Standard Chartered Bank, Union Bank, Kotak Mahindra Bank, Bank of Baroda, where differences were noted. How much differences? 689 crore, 490 crore, 758 crore, 30, so some different amounts. Okay, the overdraft, they have given different amount. Different in case of debtors, these are the differences. In case of stock, these are the differences. 44 crore, 38 crore. See, actually, they said everything is true. And the exceptions, all the banks they listed in India. Clever, actually what they should tell, the stock statements were not in agreement with the books of accounts. That is actual statement should be. But company would have, back end what happened, I can imagine now. Getting it? So company and auditor would have sat together. Okay, what you want, tell me. Okay, this fellow would have requested only one thing. Next year also I should be the auditor. Next term also, I will tell my friend, okay, we appoint him. Okay, that might have been the quid pro quo here. Getting it? See, auditors really don't take any bribe. Logically speaking, they want the worker, they want the client to be retained for long term. So that itself is enough. In the fees, they'll get most, as much as possible. Getting it? So, see, almost they listed all the banks and they listed all the quarters. And you see at the end of the statement, and all these were subsequently rectified by 31st March statement. After 31st March, they rectified all the statements and sent revised statements to banks. So that's why they covered only 3 quarters here. 30th June, 30th September, 31st December. So clever. See, now onwards you are caught. Everywhere auditors are locked up. Getting it? If at all on this, if tomorrow Tata Motors something went wrong, if at all default was there, if at all CBI inquiry officer was appointed, if at all that fellow is also chartered accountant previously, if at all he understands this CARO point in depth, this fellow will screw the chartered accountant like anything. Obviously, correct? Because how can you give these many banks under exceptions? Almost they listed all the banks in India. Correct? So this question only was asked in exam. In the recent exam, they gave stock statements, debtors statements, as per books, as per a stock statement submitted with bank. So what is the reporting requirement here? So they asked this question for 5 marks. Clear, everyone? All of you. Next. So working capital limits, that point also understood. Everyone, are you clear? So what you need to write in exam now in the last paper? First you need to write this provision. You need to write this provision. Then in the given case, stock statement filed for quarter 1, quarter 2, quarter 3. These were the differences identified. The differences, the above differences shall be reported by auditor in the CARO report. That's all you have to write. Get all of you. Next. Investment guarantee security loans or advances. Here it is very simple. If the company has given any loans or advances, remember this point is only talking about loans and advances, investment security given. Getting it? Not taken by the company. How much is the aggregate amount given to related party? How much is balance outstanding at the balance sheet date? How much is the aggregate amount given to unrelated party? Actually, they don't use the word related party. I use the side heading for comfortable purpose. Like subsidiaries, joint ventures and associates. How much loans were given to subsidiary, associate, joint venture during the year? what is the outstanding amount as at 31st March? During the year, how much is given and what is the total outstanding as on 31st March? To which company is subsidiary, associate, joint venture? And to others, how much? You see, auditors have given clearly information here, Tata Motors auditors. So, like loans, how much were given? Advances in the nature of loan, how much is given? Advance in the nature of loan. Like what is advance in the nature of loan might be, what might be advance in the nature of loan is, suppose you see here in Tata Motors, like they have some like advance in the nature of loan means, suppose I gave some advance to a supplier, or I gave some advance to my subsidiary company, but I'm not able to recover it for long period. Naturally, that advance turns into loan. Able to understand? So, long-term advances generally were called as advance in the nature of loan. So, that reporting is clearly mentioned. Here they clearly mentioned. So, how much is given to subsidiaries, how much is given loans, and to employees. Others means what? Employees, suppliers, all other comes under others. And what is the balance outstanding? What is the aggregate amount during the year? What is the balance outstanding as a balance sheet date? For subsidiaries, associate, joint venture, for others. So they are giving breakup, yes or no? Clearly. So the same point only they were asking in books. Then auditor has to check what are the terms and conditions for grant of loans and advances. Are they prejudicial? What are the terms and conditions based on which these loans and advances are given? If the terms and conditions are as per the company articles of association, company powers, board of directors powers, within their powers only they give, then it is not prejudicial, not unfavorable. If at all, the company has given board of directors some power, like the company told, as per the company policy, whenever they are giving a loan, they need to charge 12% per annum rate of interest. But we gave to one subsidiary company a loan where we are charging 5% rate of interest. This is not prejudicial for the company. This is prejudicial for the company. This is harmful for the company, unfavorable for the company, because they are giving loan against a company policy. Able to understand? Now, auditor has to check whether these loans and advances given by the company, are they repaid regularly? It may be interest, it may be principal, or it may be both. As per the terms and conditions of the loan agreement, are they repaid regularly? Regularly means what? Within due date. Regularly means what? Within due date. Now, if at all, if any outstanding loan is more than 90 days overdue, what recovery steps company has taken? What recovery steps company has taken, auditor has to talk. Now you see, regarding that, I will come to that later. Rescheduling demand loans. Okay. First I will show you reporting requirement here. According to the information explanation given, the terms and conditions prima facie not prejudicial to the company. Further, the company has not provided guarantees or advances in the nature of loan. That's okay. According to information explanation, in our opinion, repayment of principal and payment of interest has been mentioned in the agreement and the receipts have been regular, except in case of two wholly owned subsidiaries outside India. There are two foreign subsidiaries, except, for them, where cumulative amount is 613 crore, interest amount is 144 crore, which was due for repayment in earlier years, has not been collected even as on 31st March, since management believes that these amounts are not recoverable as these subsidiaries are in losses and the amount have been provided for in the financial statement. So they already created provisions. So some company has given some loan to foreign subsidiary, 613 crore principal amount, 140 crore interest amount. These were not recovered even as on 31st March, and the company believes that these are not at all recoverable, and company has already created a provision. The company has converted loans given to other subsidiaries into investments for an amount of 107 crore. How much of the amount given to subsidiaries is converted as investment? Investment means what? I gave a loan to subsidiary and the subsidiary is unable to repay. They issued equity shares to me. Able to understand? So that's called conversion into investment. That's it. So they are giving complete. So through CARO point today, auditors are talking indirectly. The auditors are talking about all these points, regularly repaid or not. If not repaid, you need to give details thereof. Next, whether any loan or advance in the nature of loans granted which has fallen due, has been renewed, has been extended, or fresh loans were granted to settle overdues of existing loan. Suppose company has given some loans, right? Is these loan agreements renewed again? Or do we give any extension for the due date? Or Do we give any fresh loan to repay the existing loan? This is also called as takeout finance. This is also called as what? Takeout finance. I mean, actually takeout finance is between two different banks, it will happen. But here also, suppose a customer has to pay me so much of loan. He is unable to pay. I'll give him another loan. I'll tell him to pay existing loan so that his account will not become NPA. Able to understand? Like this, company can do replacement financing. So any such incident happened or not, they're asking you. First of all, understand these points and all, we are applying for a non-banking company. Understand? For a banking company, CARO do not apply. A non-banking company generally cannot give loans and advances. If at all they are giving loans and advances for more than 50% of the total assets, it becomes NBFC. For NBFC, giving loans and advances is a regular activity, operating activity. For a normal company, manufacturing, Tata Motors is a manufacturing sector, industry, which is manufacturing cars. For them, giving loans is not an operating activity. It might be a financing activity or investment activity. Correct? For Tata Motors, giving loan is what? Is it an operating activity? It's not in the business. It's not their business. So it might be an investment activity or it might be a financing activity. So when they are giving loans, they should recover. There also, if at all they are having defaults, it will be danger for the company. Something company is not supposed to do, they are doing because of a special permission given under Companies Act. Correct? Able to recollect with law and all. In law also, you have this concept of intercorporate loans and advances. Which companies are permitted? How much they are permitted for? Board of directors, how much they can give? All that powers and all you might have seen. Yes or no? 180. 185, 186 conditions. Yeah, that's what in the next section also it is there. In the next one also, 185, 186 also you need to verify. The next point is saying indirectly, whenever the company has given loans, advances, investments, guarantees, check 185, 186 criteria. Actually, in this point itself, they can merge this condition, they can merge this clause, but they gave it as a fourth clause. Able to understand? So, suppose if the company has given any loans and advances during the year, are they renewed? Are they extended? Are any fresh loans one given? If so, how much is the aggregate amount of such dues? How much of the total loans out of the total outstanding as on the balance sheet date, how much of them were renewed, were extended, were settled by fresh loan? What is the percentage of the aggregate to the total loans and advances? So renewed plus extended plus settled loans, like fresh loans, to settle old loans. So total it up, divided by total loans outstanding. You will get some percentage. That percentage you have to specify. So out of the total outstanding item, example, Tata Motors is having, let's assume 1000 crores loans and advances given. Out of 1000 crore, 25% were renewed loans, extended loans, replacement finance. Able to understand? So this indirectly rescheduled extension overdue, it is something like a doubtful. To whom we renew a loan, to whom we extend credit period, to whom we will give replacement finance, those who already defaulted. Getting it? So this clause is indirectly giving information about prospective defaulters. Correct? Next. Same way, if the company has given demand loan without repayment period, that information also the auditor has to. Generally, companies don't give any demand loans. Whether company has granted any loans and advances in the nature of loans, either repayable on demand or not mentioning any terms of repayment. If at all the company has granted loan where there is no repayment clause, or if the company has given a loan with a condition that whenever the company wants, the other party has to repay, that's called demand loan. Are you getting it? In banking terminology, it is called as money at call at short notice. Money at call and short notice. That is permitted only for banks generally. For normal companies, it is not permitted. Actually, there is no explicit condition that it is not permitted. But some companies are engaging in demand loans concept. If the company has given any demand loans, what are they asking? What is the total amount given under demand loans? What is the percentage to the total loans? During the year, 5% of the total loan is given as demand loan. And what is the aggregate amount of loan granted to promoters related parties? So in this, how much of the demand loan is given to promoter related parties, all that amount also you have to give separately. So totally 5% of the total loans were demand loans. Out of them, some 1% belongs to promoters and related parties. You need to specifically mention. Of course, Tata Motors have not given any demand loans. Clear everyone? Next. Deposits point is very simple. Cost records point is very simple. I'm not discussing. Statutory dues. Clear? Only important clauses I will discuss. Next, statutory dues. So what auditor has to comment here? First of all, statutory dues have been divided broadly into two parts. The statutory dues have been broadly divided into two parts. Undisputed statutory dues, disputed statutory dues. So what auditor has to give? Disputed dues means what? Very simple. If at all the company has received a notice of demand. What? Notice of demand. Not intimation. I'm not talking about intimation. I'm talking about notice of demand. If the company received a notice of demand of tax or duty from any statutory authority, that this company has to pay some tax or duty, and the company did not agree for it, the company went for next appeal. The company went for appeal against this notice. Now there is a due under dispute. Now there is a due demanded by the statutory authority, but the company disputed that particular due that they don't need to pay, and that dues are called as what? Disputed statutory dues. Now what auditor has to give? Auditor has to give information about forum where the dispute pending, amount, how much under the dispute it is pending. So where the dispute is pending, how much amount is involved in the dispute. But voluntarily, in all the cases, auditors give what is the nature of the due, what is the act under which it is due, what is the period to which it belongs to. Suppose nature of the due, income tax act, period, assessment year 1920, forum, income tax appellate tribunal, amount 10 crore. So auditors voluntarily give so much of information. But as per the CARO statement, only 2 points you have to give. Where the dispute is pending, how much amount is involved, that's it. But we will give for better interpretation, period, to which period it belongs to, under which act it belongs to, which due exactly. See, under income tax act, it may be your tax, income tax due, or it may be TDS due. TDS due is different. Income tax due is different, understand. Income tax is your personal obligation. TDS is others responsibility, but you are only acting as a mediator. Correct? Next. So, in case the due have not been deposited on account of any dispute, the auditor shall indicate what is the amount involved in the dispute, forum where the dispute is pending. So here, what CARO, what auditors of Tata Motors are discussing here, you see here. So what is the due? Income tax 2 crore, assessment years belonging to these, 92 crores belonging to these, 59 crore belonging to these. So this 2 crore is pending at High Court, something is pending at ITAT, something is pending at CIT. Same way, excise duty is pending at 3 forums. Service tax is pending at few forums. Sales tax is pending at approximately 4 levels. Customs is pending. GST is pending. Able to understand? These are all pending disputed dues. These are all pending disputed dues. And now here they gave a statement. A mere representation to the department will not be constituting as a dispute. Just because you are going to a department and representing for an intimation or for some assessment proceeding, that is not a dispute. There must be a demand order. There must be a demand order, and you disagreed with that order and filed an appeal to that in the higher level of authority. Able to understand? Then only it is called as disputed due. Clear, everyone? Then undisputed, which is not a disputed due, is called as undisputed. Remember, across the world, tax laws are voluntary compliance. Most of the tax laws we do voluntarily comply with them. Example, GST, we will pay every month by 20 voluntarily. Yes or no? Most of the companies, whatever you have done audit, they would have paid voluntarily by next month 20. Current month, whatever GST collected, they do workings next month, file GSTR 1 by 10th or 11th, and file GSTR 3B by 20. Before that, they'll pay tax voluntarily. Yes or no? Voluntary payments, whatever company is making, all of them are what? Is it because of dispute you are paying or voluntarily? Voluntarily. Undisputed dues are nothing but voluntary taxes and duties that you are liable to pay under all the laws and regulations. Able to understand? All of you. Now, what auditor has to comment about undisputed due? And for your information, statutory due means what? It is only talking about taxes, duties, or any statutory liabilities. Any statutory liabilities. Statutory liability means what? That is something you have to pay to some legal authority because of a compulsion under law. Because there is a compulsion under law. Example, see, income tax, service tax, all that you can easily understand, it's a statutory due. But provident fund is also statutory due. ESI is also statutory due. Profession tax is also statutory due. property taxes, municipal taxes, all of them will fall under statutory dues. And in addition to that, income tax, GST, earlier we have sales tax, VAT, CST, and customs, all that, excise, everything. Able to understand? Now here what auditor? Is the company regular in depositing undisputed statutory dues? The question is the company regular in depositing undisputed statutory dues? If the company is regular, they're regularly depositing all the statutory dues, you say that they're regular. Regular means what? Within due date. Within due date. When you are preparing CARO report, you might have filtered the data where and all the company has paid after due date. Only after due date list you are giving in CARO. Have you did this working? Next. If not, suppose if the company is not regular, what is the arrears of outstanding statutory due which is still outstanding as on last day, and it is outstanding already for more than 6 months. As on 31st March it is outstanding. It is not March liability. It is already liable 6 months ago. Still it is liable as on 31st March. What is that arrear? You need to specify the amount. Please indicate that amount by the auditor. Here also you are giving one information, not opinion. Here also you are giving information, not opinion. Able to understand? All of you. Next, here there is a question in central sales tax. There is a question which was asked in central sales tax. Is electricity a statutory due? No, electricity is a consumer good. It's called as goods. Energy, Central Sales Tax Act defines energy is a good. You can touch and feel, yes or no? Getting it? So electricity is something which will movable from one place to another place. You can store it. All the features of goods were there for electricity. Electricity is not a statutory due. It's a commodity. You are using it and then paying it. By the way, you will pay electricity to government. You will pay to Power Distribution Corporation Limited. You will pay to a company. The company will give you connection, they will distribute. See, electricity generation company will be there, electricity distribution company will be there. Distribution company will buy electricity from generation company. Coal India Limited is an electricity generation company. Tamil Nadu Power Distribution Corporation Limited, TNPDCL, something you might have seen on the electricity bill. That's a distribution company. They will buy the electricity and then distribute the electricity, sell at a particular price fixed by the government. The price fixation is only by government, but government is not the one who is dealing with the electricity. Understand? Everyone. Next. This is regarding discovery of undisclosed income. Discovery of undisclosed income. This is newly added in CARO. Getting it? 2020 CARO, it is newly added. Whether any transaction not recorded in books have been surrendered, disclosed as income during the year. If so, whether previously unrecorded income has been properly recorded. So nothing but during the year, some income tax search or seizure, some operation was carried out, some undisclosed income is discovered. Now, when undisclosed income means what? In the previous years, some income was earned by the company, but not disclosed in the financial statements, not disclosed in the IT returns. Now it is discovered. Now tell me, it's a prior period item, no? Any error or omission, because of omission or error, if any item is not accounted in the earlier year, but discovered now, what we will record it as? How we will record it as? We should record it as prior period. They're indirectly asking whether the previously unrecorded income, is it recorded in the books of accounts during the current year? So I am giving a note that it may be treated as prior period item. So they are simply asking, okay, during the year income tax raid happened, some amount discovered. See, it's an undisclosed income, right? Now it is disclosed, right? Last time it was not accounted, right? Did the company accounted it in current year at least? So they are asking. Are you clear? Next. Just 1 minute. Okay. Just I'll take voice test 1 minute, okay? 2 minutes I'll take, okay? Next. So default in repayment of dues. So what auditor has to comment here? First, auditor has to give a list of default. Details related to default lender wise. Lender wise information auditor has to give. By the way, default in due means what? For the company it is due. Means it's a loan. It's a loan taken by the company. Whether the company has defaulted in repayment of borrowings to a financial institution, bank, debenture holders, or even government. So if the company has taken any loan from government, example, Air India has taken so much of loan from government. Getting it? Or if the company has taken any amount from debenture holders, if the company has taken any loan or advance from bank or financial institution, did the company defaulted in repayment of that borrowing? That is the first question. If so, yes, the company defaulted. For how long it is defaulted, how much is defaulted, lender wise you need to give the following details. Nature of the borrowing, working capital limit, name of the lender, ICICI Bank, amount not paid 10 crore, whether interest or principal or both, it's an EMI. Delay number of days, 35 days as on balance sheet date. Getting it? Remarks, company agreed to pay on so and so date and even acknowledgement has been obtained from the bank regarding extension period. Able to understand? So that details auditor has to give. In Tata Motors, no defaults were there. Now, whether the company is declared as a willful defaulter by any bank or financial institution, when a company is declared as willful defaulter, if they have reserves, cash reserves, still they didn't pay. So that is one of the primary criteria for declaring a defaulter as a willful defaulter. In spite you are having money, you did not pay EMI properly. In spite you are having funds, you are not paying you are not honoring the commitments. So intentionally you are defaulting. Able to understand? Suppose you do not have funds because of some misfortune, incidents, some default happened and you became insolvent. Bank may not classify you as a willful defaulter. Able to understand? Because in COVID, so many employees have lost their jobs and they couldn't repay the loans. They were not declared as willful defaulter by banks. Willful defaulters are who? They parked the funds at somewhere else. They diverted money. They took loan for some purpose, invested in some other purpose. When bank is asking for the proofs, they are unable to submit the proofs. Means they misutilized the funds and now they defaulted. These people are treated as what? Willful defaulters. So whether the company which you are auditing is declared as a willful defaulter by any bank, check it out. And for what purpose term loans were applied and for what purpose they were obtained, cross-verify. If there is a diversion of funds, for which purpose it is actually used, please report it. Working capital loan can be used for any purpose. Building loan can be used only for construction of building or purchase of building. Next, whether company obtained any short-term loan and used for long-term purpose. This is again threat for company liquidity. Getting it? So whether funds raised on short-term basis were utilized for long-term purpose, indicate what is the nature of the short-term loan you got and amount to be indicated. How much amount was diverted. Now, did the company take any loans to meet subsidiary company needs? Nothing but whether the company has taken any funds from any organization or any person on account of or to meet obligations of its subsidiary, associate, joint venture. If so, details thereof, nature of transaction, amount shall be reported. So if you have taken any loan from any person, not necessarily banks, the company has taken some loans from so and so people. Now this loan has been given as a loan to subsidiary company again. Nothing but to meet subsidiary company, joint venture, associate company obligations, I raised some finance. In such a case, please indicate. Nothing but wherever your subsidiary is using funds and you are acting as a mediator for those finance. So you need to give a report. Next, loan. Have you taken any loan? By keeping the securities you held in subsidiaries. How the company became my subsidiary? Because I invested major percentage of shares. And those shares, I kept it as a security and again got a loan. Getting it? Means the shares which I held in subsidiary company, my ownership, that ownership is kept as encumbrance and obtained loan. Auditor shall report whether the company has raised any loan on pledge of securities held in subsidiary, associate, joint venture. If so, details and report if the same is defaulted. You know what will happen on this default? Suppose my subsidiary company is there. I have shares in that company. This investment, the control, which means I'm having control. This control has a value of 100 crore. The control which I have on a subsidiary company, that control value is how much? 100 crore. That 100 crore I kept it as security and got 75 crore loan and I defaulted. Naturally, control will transfer from me to them. Able to understand? So, control will be diverted. Means, if I take any loan against a pledge of securities held in subsidiary company, if I keep them as pledge and got a loan and defaulted, I will lose the holding company status because the lender will gain the status of holding company. Able to understand? All of you. Next. So that these are the reporting requirements. In this also they may ask you either 1 or 2 points or they may ask you entire point. This is also important. And the end use of funds, this is actually similar to CARO 2016 only, which you are reading from CA Inter. Actually earlier preferential allotment, IPO, FPO were there as 2 separate points. Now they merged it into as a single point. Not so difficult. Next. Reporting of frauds. Reporting of frauds. Here accidentally it came. Please strike off this. If at all in your book also officer or employee word is there, please strike off. That word is not there. That word is not there. Getting it? You're using which material? Oh, mine only. I told you to strike off. You did, yeah. So whether any frauds noticed or reported during the year. Just a minute. Like in class, have you seen, right? Like how in depth we discuss. Getting it? I hope you're able to feel the difference. Now is it helping like revision? It's overall, I mean, is the purpose fulfilled? It's fine. Next. So, yeah, what auditor has to report? Reporting of frauds. Whether any fraud by the company or any frauds on the company. Whether any frauds by the company or any frauds on the company has been noticed or reported during the year. Remember, these are the frauds identified by company internal control system or company management, company those charged with governance. These are the frauds identified by the company actually. And these are the frauds committed by the company or it may be committed on the company. These are the frauds were committed by the company or on the company. Who this company has committed fraud on whom? Maybe on third parties. Somebody did a fraud on this company. By whom? The officers or employees or third parties. Anybody can do a fraud on company. Whether any fraud by the company noticed or reported or whether any fraud on the company noticed or reported during the year. If so, if yes, what is the nature of the fraud? Stock theft. What is the amount involved? 5 crore. Tata Motors have reported the same. You see what Tata Motors have reported in this. During the course of examination of books of the company and according to the information, no material fraud by the company or on the company has been noticed, except that we have been informed about 3 incidents estimated to aggregate of 15 crore involving 3 employees who in collusion with certain vendors, means it's a purchases fraud. Okay. Certain vendors processed payments with inadequate documents and benefited from them. The services of these employees were terminated. But actually what CARO is asking, what is the amount involved? What is the nature of fraud? Nature of fraud is what? Vendor management fraud. Getting it? In most of the companies, frauds will happen in vendors only. Tenders, procurement, vendor selection, vendor payment, kickbacks. Getting it? Most of the frauds happens in vendors only. Sales and all, not much frauds because everything is computerized. Vendors also computerized, but I can have a discussion in the back end with the vendor. Yes or no? With the customers also I can give a special discount on a condition that you have to pay me some money in return. So these kind of frauds will be higher. See, today organizations are highly decentralized. Yes or no? Highly decentralized. Suppose somewhere here Reliance Trends one store is there. Some Reliance Trends store is there. So that store is selling some, clothes. Now the store manager is aware of some special coupons. So the store manager can enter into a side agreement with customer. Actually, I have a special coupon for you. As per company normal policy, that is not given. If I scan your purchase, it will come at MRP. But if I give you this special coupon, you'll get 50% discount. You pay me 20% back end. These kinds of frauds will happen. But these are not something traceable, even by the company also, even by the auditors. I think it. Fine, anyhow. So, whether any frauds were noticed or reported during the year. Here, Tata Motors have reported totally 15 crore worth of fraud performed by 3 employees in collusion with vendors. They did this fraud. So, auditors have reported. Now, 143 subsection 12. 143 subsection 12 is regarding fraud identified by the auditor. Who identified as per this section? Fraud is identified by auditor when he is doing the actual audit. Now, whether any fraud reported under 143 subsection 12 in respect of which ADT4 form has been filed. See, 143 subsection 12 classifies frauds into 2 types. Less than 1 crore, more than or equal to 1 crore. Any frauds identified by the auditor. If auditor has reason to believe that a fraud has been committed in the company for an amount involving less than 1 crore or for an amount involving more than or equal to 1 crore. If it is more than or equal to 1 crore, the auditor shall report to central government within 60 days. The reporting process is first within 45 days, inform to board of directors, get their comments and all. Within next 15 days, file ADT4 form with ROC. Naturally, it is intimation to central government. Now, CARO is asking what? Is there any such form filed? So here Tata Motors auditor said there is no such form filed. You see here, no report has been filed. Getting it? If it is filed, say that it is filed with the, central government. Now, see, every company shall establish whistleblower mechanism, especially listed companies. They need to establish whistleblower mechanism as part of corporate governance practices. Whistleblower mechanism means what? Company has to create an environment where an employee, top management or low level management, if they come across any incidents of suppression or misutilization of funds, or they're doing some unauthorized activities, if they discover that, anybody can report with anonymous name. Getting it? With anonymous, or they should give it clear cut their data, and company should retain their data confidentially. Their name and all should not be revealed. If they reveal, if the company top management reveal this name and somehow disturb this employee can go for redressal mechanism under SEBI. So every company should create a whistleblower mechanism. Now the company, because they created whistleblower mechanism, suspected frauds, possibility of frauds, that information company will be receiving. These complaints are called as whistleblower complaints. So whether the auditor has considered whistleblower complaints, if any, received during the year by the company. So company have received so many whistleblower complaints. Have you considered them as part of your risk assessment? As part of your risk assessment, if you consider these complaints, you understand where and all frauds might happen. You can do audit more productively. Able to understand. All of you, this point is not required. The Nidhi company, this you can easily understand if at all you studied Nidhi rules already under company law. You have Nidhi company provisions right in company law. If you study them, this you can easily understand. Are you clear? Everyone? Next. Related party transaction, very simple. Internal audit. This is also a newly added point. Whether the company has internal audit system commensurate with the size and nature of the business. See, internal audit is compulsory as per section 138 for certain class of companies. Listed companies, it is compulsory. Public companies have given criteria. Private companies have given criteria. So, subject to that criteria, these companies must employ internal auditors. Internal auditors can be a CA, can be with a non-CA. They can be in practice, they may not be in practice. They may be employee, they may be an outsider. So, internal auditor can be anybody, no restriction. Now, many companies, especially private limited companies, what they are doing is, they are for namesake keeping internal auditors. Namesake. One person they are recruiting and keeping as internal auditor and saying that we satisfied section 138 of the Companies Act. Now you, Mr. Statutory Auditor, check. The company has internal audit department, right? Is the department have enough staff? Suppose for this company, 100 crore turnover, 10 branches were there, operations were so many, transactions were so many, they have only one person as internal auditor. How this internal auditor can do all the internal audit activities? So here you need to qualify. The company do not have internal audit function incommensurate with the nature and size of the operations. You need to apply professional judgment here. Able to understand. So whether the company has internal audit system, commensurate, proportionate, nothing but proportionate to the size of the company. Now, please, internal audit reports will be there, right? Have you considered? When you are doing your overall statutory audit, have you considered internal audit reports or not? Regarding this, we will discuss in SA 610. Are you getting it? Using the work of internal audit, there we will discuss slightly. Next, non-cash transactions. Whether company entered into any non-cash transactions with directors, and if so, 192 provisions have been complied or not. NBFC. Regarding this, I will discuss in NBFC audit. Regarding this point, I will discuss in NBFC audit revision. Okay. So NBFC audit revision we have there, I will discuss. Cash losses. Whether the company has incurred any cash losses in the financial year, and even in the immediate preceding financial year. So what is the current year cash loss? What is the preceding year cash loss? You need to report. If so, state the amount of cash loss. What do you mean by cash loss? See, your profit and loss account, if you look at profit after tax, this profit is arrived after reducing tax. Before that, after reducing Non-cash expenditures. Correct? Non-cash expenditure is nothing but depreciation provisions. These are the expenditures which the company, where the cash flow might have been already made last time, or provision is for expected cash outflow. Provision is for expected cash outflow. Provision for warranties, expected cash outflow. Provision for debtors, expected expected seizure of cash inflow from debtors. So in future, debtors inflow might not come. And in financial management, reduction in cash inflow is an outflow. Correct? Reduction in cash inflow is treated as an outflow. Getting it? So exactly. So current year profit after tax, for that please add back provisions, please add back depreciation, please add back all other non-cash expenditure debited in P&L. You will still get some amount. If that amount is still loss, then it's a cash loss. Then it's a loss incurred in cash. Means this loss is something exact realized loss. Able to understand? That is called cash loss. So how to calculate cash loss? Guidance note gave clear-cut guidelines. That is not required from exam point of view. Are you clear? Now, they're asking one more thing. Resignation of auditors. During the year, is there any resignation of statutory happened? Like you are the auditor, right? You are giving CARO report, right? And how come you resign? Suppose if there is already an auditor who was originally appointed, he resigned and you are appointed to fill casual vacancy. So you are finishing the audit, you are giving CARO report. So if at all you are appointed to fill casual vacancy caused by resignation, able to understand, in such a case you need to fill this point. So whether there has been any resignation, if so, whether the auditor has taken into consideration the issues, objections, concerns raised by outgoing auditor. Remember, obviously I have to consider. I will consider, only after that I will accept, because outgoing auditor communicated with me under clause 8 of the ethics. I need to, when I'm accepting the audit, I need to communicate with the outgoing auditor, and he raised so many objections. I considered all of them. Only after that I accepted the appointment. So that information you give here. Clear? All of you. Next. This material uncertainty is very important. This question is asked in CA final also, I think so. In CA final it is asked. I think December attempt, I think so. December or that before attempt. No, probably in December only, because in December only first time CARO is applicable, this 2020. Before that, CARO is not applicable. May 2021 attempt, CARO do not apply. December 21 attempt, CARO is applicable. Somewhere, either in final or inter, somewhere it is asked. Okay. So what is it? On the basis of ratios, on the basis of aging analysis means trade receivable analysis, on the basis of realization of assets and liabilities, payment of liabilities, and on the basis of other information along with financial statements, and on the basis of knowledge of board of directors and management plans, whether the auditor is of the opinion that no material uncertainty exists as on the date of auditor's report. Understand, the word used is auditor's report. MCQ, they may put balance sheet date. They may put balance sheet date and ask you as a true or false statement. Getting it? It's incorrect. Date of auditor's report. Nothing but by using the word date of auditor report, they are asking you to consider all the subsequent events up to audit report. They're asking you, they're indirectly hinting you that you have to consider all subsequent events up to audit report date, that the company is capable of meeting its liabilities existing at the date of balance sheet. Here it is a balance sheet date. Getting it? As and when they fall due within a period of 1 year from the balance sheet date. See, once upon a time, Jet Airways auditors, ILFS auditors, DHFL auditors, none of them has pointed out going concern issues. Only when the company actually defaulted, only that news broke in the stock market, everybody came to know. First time from the auditor, nobody has received this information. So now with this point, see what is the defend, the auditors, what they defended, in most of these cases, they said, we didn't find any such symptoms. We didn't find any such conditions. We didn't find financial indicator. We didn't find any operating indicator. We discussed with management. Everything seems fine. That's why, though SA 570 says this point is already covered in SA 570. You have to verify all this in SA 570. But most of the auditors have not performed this duty and defending themselves that they didn't find any of this incident. Now you need to calculate all this. Now you need to calculate specifically, and you need to specifically comment whether you find a condition, whether you find a symptom on going concern or not. Doesn't matter. I am asking you, you are the auditor, right? You are the auditor. You are appointed as an auditor for 21-22. The balance sheet date is 31st March 2022. As on this balance sheet date, the company has so many liabilities. The company has so many assets. You are giving audit report somewhere on 10th June 2022. As on 10th June 2022, you are preparing CARO report on this date. 19th clause you read just now. As on this date, do you still believe the company will repay all these liabilities? The company will repay all these liabilities with the assets they have. Whenever these liabilities fall due, will the company repay? Check it out and please report. So which means you have to do a proper cash flow analysis now. Yes or no? You have to do a proper cash flow analysis. As on 10th June, I will do cash flow analysis. Out of these liabilities, so many were already became due and the company would have already paid. Still some dues might have not yet due. Suppose no, as on 10th June, in between some due dates were there. Though on those due dates, company defaulted. You have to give that list here. Able to understand? As on 31st March, there is a liability. And the liability was due before your audit report date. And company has already defaulted. You need to give that information here. Getting it? In our observation, on so and so due dates, the company has not paid on time. You need to give that list here. Now, by giving this list, you are alerting everybody. Getting it? So, which means before the company become insolvent, you are checking here whether the company can first of all satisfy all the liabilities or not. What is meant by default? What is meant by insolvent? Insolvent means what? You are unable to pay on time. So, default is the primary cause of insolvency. Correct? So if auditor is giving list of defaults here, straight away all the liabilities, whether it is term loan, see they are asking you loan details about defaults. Here they are asking you everything. Here they are asking you every default. Getting it? All of you. So on the date of auditor's report, check whether the company can meet all its liabilities on respective due dates, which are having liabilities as on balance sheet date. So can the company repay them on respective due dates? Please check as on the date of audit report. Once again check the financial position, aging, discuss with management, everything. And finally give your final word whether the liabilities mentioned in the balance sheet as on 31st March, all those liabilities will the company repay on the respective due dates. Please check and then tell you. If you think company cannot repay, if you think company do not have enough cash management, please qualify here. Able to understand all of you? That's it. Then corporate social responsibility fund, CSR fund. See in CSR, no? In CSR, every company has to spend some 2% of average profits. 2%. Like suppose Reliance Industries, you take average profit is 30,000 crore approximately. 30,000 crores. 30,000 crore multiplied by 2% means how much? 600 crore. 600 crore they need to spend in the 1 year. Sometimes, see, as part of CSR project, one of the approved project is rural development. I can adopt one village and lay roads, lay all the infrastructure, pipelines, everything. That is also forming part of CSR. But developing a village may take more than 1 year. But as per CSR guidelines, what it says, you have to spend in the same year, 2%. So in the CSR rules, what they gave one point is, if at all, you want to spend this on a particular project which has a span of more than 1 year, if it has a span of more than 1 year, whatever the funds which you kept aside but not yet expended, means not yet utilized, that unspent CSR amount in respect of ongoing project, you should keep it in a separate bank account and spend from that bank account within 3 years. Remaining amount you are spending naturally. This amount is not reserved for separate project. This is normally you are spending. Still, after spending for whatever purposes, getting it, still some amount is left. This is not in respect of any project more than 1 year. Some 10 crore was left. Okay, which is not spent. This money you have to transfer to fund, Schedule 7 fund within 6 months from the end of the financial year. Able to understand? So, whether amount remaining unspent is transferred to special account with respect to any ongoing project. If it is other than ongoing project, is it transferred to Schedule 7 fund as per the guidelines? They are simply asking you, the unspent amount is 2 types. If it is ongoing project, transfer to special account, from there spend within 3 years. If it is other than ongoing project, directly transfer to Schedule 7 within a period of 6 months. Able to understand all of you? That's it. For this, you need to have clarity on CSR provision. If you want, you can watch my CA Inter Law Marathon. In that CSR provision, 1.5 hours is there. For your information, you have CSR provisions, accounts of companies as well. Getting it? You do one thing. You have company audit chapter, right? In that, dividend topic is covered. CSR topic is covered. NFRA is covered. Remember? And there is a new section called 129A. Periodical filing of results. Getting it? So do one thing. Company audit chapter, you have company audit chapter in CA final material. After 139 section, sorry, after 147 section, again 128, 129, 130, 131, 132, 133, 134, 135, 136, 137. These sections are there in your syllabus. But institute CA final material, they have not given proper information. Proper material they have not given. They just namesake covered. But they are asking questions in depth. Suppose you see dividend topic in CA ICA material, they just gave dividend related material, but not in full. They didn't give full material. But they are asking you MCQs, calculate what is the average rate of dividend, calculate what is the dividend that can be maximum declared by the company. In-depth questions they are asking. That's why what I told is, we have CA Inter Law Marathon. You can just open caramharsha YouTube channel. CA Inter Law Marathon is there, very recently uploaded. In that, timestamps were given. In the timestamps, there is a chapter called Accounts of Companies. That entire chapter you need to watch. It will be 1.5 hours. It will be 1.5 hours. Getting it? Entire chapter you need to watch. So I'll just show you here itself. Suppose you, if you observe, this is the marathon material for law.
Next month.
And here we have given timestamps. You can open in phone as well. This dividend topic, accounts topic, both you need to watch because this is there for you in CA final. On dividend also MCQs and all might be coming. So what is final dividend? What is interim dividend? If company has insufficient profits, how much maximum rate of dividend they can declare? What are the conditions? How much balance reserve shall be maintained after declaration of dividend? There are so many conditions you can watch. Approximately this dividend topic is handled by me. Accounts of companies is handled by me. Getting it? Both together approximately it will start at 3:40. So approximately both together 3:40 minutes will be there. Both together. It's a revision class only. Able to understand? Please watch this. But keep it as a last priority because actually basically CA Inter syllabus kept it CA final. It is there in your study material. I say study material company audit chapter. This is there. But watch them at last. If you watch them, that's enough. No need to read. I'm telling you, you need not require reading later. These two topics, you need not read at all. Clear all of you? Next, I told no modified opinion in other group companies. Whether there have been any qualifications, adverse remarks by respect to auditors in CARO reports of companies which are included in consolidated financial statements of this company. If so, indicate details of the companies and paragraph numbers of the CARO report containing qualifications or adverse remarks. So Tata Motors is having so many subsidiary companies. Tata Motors is preparing consolidated financials. In this consolidation, so many subsidiaries, associate, joint venture companies were also included. And these companies were not audited by me but by another auditor. Now they have given some qualifications in CARO reports of the respective companies. What are all the qualifications they gave? Please give in Tata Motors CARO report. So that by looking at Tata Motors CARO report, I can understand what are all non-compliances they made with respect to CARO requirement by other companies. Able to understand? At one place we will get. Yes. Applicable only to the holding company. But actually what cross-referencing must be there. In every company it must be given. So suppose Tata Motors consolidation, 15 companies are being consolidated. In Tata Motors CFS, let us assume 15 companies are being consolidated. Now, in all the 15 companies' CARO reports, all the 15 auditors should cross-refer about other companies. Able to understand? But actually, here, one company audit report might be ready by then, one company audit report might not be ready by then. So what people are doing is, straight away they are not considering it in. They are not considering it in CARO report of standalone financials. Straight away, whichever the company prepare consolidated financials. In that company, actually CARO did not apply on consolidation. But, consolidation will be done when logically, only after all companies' financials are finalized. Only after all companies' audit report is finalized. Then only consolidation process will start. So On consolidated financials, whoever is giving audit report, he will give entire the data. That's what I showed in Tata Motors. Able to understand? That's what I showed in Tata Motor consolidated financials. They gave annexure A and they discussed entire this point. Actually, CARO do not apply on consolidation, but they gave this because of the convenience purpose. Are you clear? We'll see Tata Motor standalone, what they gave. I think that will be clarified. No. You see, they only gave about Fiat. Only one qualification they gave. But you see Tata Motors consolidated financial statements, inside that audit report, inside that CARO is not there, but this 21st clause alone they spoke. There 10 companies qualifications they gave. Yes or no? Just at the beginning also we have seen. Able to recollect? That's it. Okay. So with this, CARO has been completed. I hope you are able to understand. You're all. So wherever you're having positive comment, give positive statement. Negative comment, negative statement along with reason. Whenever you're giving something is not followed, give reason clearly. And if at all you're unable to verify something, mention that you're unable to verify. So with this, CARO report is also completed. So we still have 143 subsection 3 checklist where we need to discuss 15 clauses. In that, the 10th clause only amendment was. All these fund transfers, transactions of fund transfers between companies, mediator, ultimate beneficiary, the topic. ABG Shipping Yard, recently that fraud happened some 6 months ago. Getting ABG Shipping Yard, there is a fraud. Most of the frauds are happening because most of the frauds are happening in that way, and that observatory point has been kept in audit report. Getting an auditor had to observe that kind of fraud. Anyhow, so I'll discuss when I'm discussing that 143 subsection 3. So with that, audit report chapter will be mostly done except 4 standards. I told you 620, 610, 710, 260. So if at all those 4 standards are also done, audit report related all the standards we will be covering it. Clear? So in the next session we will be discussing that. Yes. So we have completed the CARO points. So we still have to discuss 143 subsection 3. In that, only key points we will discuss. So 143 subsection 3, in that key points are, see, this is like a checklist items, or these are also called as affirmations. So the auditor has to affirm certain matters. Affirm means like auditor has to reconfirm. Getting it? So if you look at the basis for opinion para, at the last we are acknowledging one point. We believe that the evidence obtained by us is sufficient and appropriate to provide a basis for our opinion. So that point we explicitly mentioned in the basis for opinion para because of a standard requirement. Now company law is also asking once again, have you got enough information and explanation, whatever is necessary for the purpose of audit? So the first one, whether you have sought and obtained all information and explanation which to the best of your knowledge and belief were necessary for the purpose of audit. Just a minute. Can it be switched off? Fan. Yeah. So whether he has sought and obtained all the information and explanation which is necessary for the purpose of audit. So the act is asking once again the same question. Have you got enough information and explanation which is important for the purpose of obtaining, for the purpose of giving opinion? And here in the second point there are 2 sub-points. Actually after end the point is different, before end the point is different. So before end it is asking whether in your opinion the company maintain proper books of accounts. They are simply asking whether the company maintain proper books of accounts. See, your opinion paragraph only deals with financial statements, are they true and fair? You are not talking anything about books of accounts. You are not talking anything about fixed assets. You are not talking anything about physical examination of inventory, working capital loan requirements. Your opinion do not deal with any of this. Yes or no? Through CARO, through these reporting requirements, expressly from the auditor, the shareholders are getting much more valuable information. They are getting to know about, how the company is paying statutory use, how the company is repaying the loans and borrowings, how the company is, giving loans and advances, are they collecting properly or not, how the inventory records are being maintained, is physical verification happening or not, and whether the uncertainty is there or not. See, so many aspects auditor is explicitly mentioning. Through CARO report, through this 143.3, indirectly auditor is talking on so many issues. Is the company maintaining records properly or not? Ultimate objective of audit is to give opinion, but opinion, what it says, financial statements, they're showing something, they're too unfair. Getting it? So there's nothing much valuable information from the auditor the people are getting. So through these reporting requirements, we are giving much more valuable information which might help in taking a better decision to the users of the financial statements. Able to understand? Now, next, and after end, they're asking, you have not visited some branches. Have you received summary returns from those branches? So whether proper returns adequate for the purpose of audit have been received from the branches not visited by you. So you have not visited certain branches. Have you received summary? Return means what? Summary. Whether report of any branch office of the company audited by person other than company auditor, nothing but branch auditor. Suppose if it is consolidated financials, then it is subsidiary company auditor. See, these 143 subsection 3 reporting requirement, this is applicable even if you are giving audit report on consolidated financial statements. This is applicable for all companies, even banking companies, insurance companies, section 8 companies, 1% company, small company. For all of them, this is applicable. Only regarding CARO, we have exemption. Clear? Now, so here they're asking, have you got branch audit report? And have you dealt with the report? Have you dealt with the branch audit report? We will simply mention that, yeah, if at all branch auditor was there, yeah, we have received branch auditor's report, and while preparing our overall report, while forming our overall opinion, we have considered branch auditor's report as well. So you just have to mention that. Next, remaining or not that important. Now, F point. Do you have any observations or do you have any comments on any financial transaction or financial matter of the company which has an adverse effect on the functioning of the company? Suppose during the year, the company allotted some shares to some creditor because of some so-and-so, payment issues, whatever, they have allotted shares. If you think that is adverse for the functioning of the company, that is not correct for the functioning of the company, you have to report those kinds of matters. But generally you see any audit report of any listed company, you will not find any comment under this point. So they are simply asking, do you find any transaction that company has taken during the year which has a negative impact on the company, which is not good for the company? So indirectly they are asking you to report the transactions that you came across which are not good for the company. And H point is again talking about the same point which B point actually talks about. This B point first subpart and H point both are talking about the same thing. B point says whether proper books of accounts have been maintained by the company. Whereas H point says, do you have any objection? Do you have any adverse remark relating to maintenance of accounts? Both are indirectly talking about the same thing. It's a repetition, it's a mistake in the law. Next. Whether the company has adequate internal financial controls with respect to financial statements in place and how they are operating. Are they operating effectively? You need to give a separate report on this actually. You need to give a separate report. Actually, if you look at 143 subsection 3 of any audit report, this will be shown as annexure 2. This is generally given as annexure 2. Suppose you take Tata Motors or you take Reliance company, any company you take, they will show it as a annexure. Let's discuss IFC concept also here itself. So Tata Motors. So this is standalone financial statements. And this is audit report on standalone financial statements. And here you see, with respect to adequacy of internal financial control with reference to financial statements and regarding operating effectiveness, please refer to our separate report, which is annexure B. So which means after CARO, they have given another annexure, that is IFCR report. You see here, this is report on IFC. This is report on IFC. So annexure B, independent auditors report on standalone financials. In that report on internal financial controls with reference to aforesaid financials. So we are giving as if as a separate audit report. We are giving a separate audit report. Like how we give audit report on financials, on IFC also we give a separate audit report. Getting it? So what is our opinion? First of all, management is responsible for financial controls. Our responsibility is to express opinion on financial controls with reference to financials and how are they operating? Are they operating effectively or not? We do test check some controls and accordingly we'll give opinion. What is internal financial controls with reference to financial statements? So what is meant by internal financial controls with reference to financial statements? Definition also they gave in the IFC report. Getting it? And finally, we also mentioned that inherent limitations. Remember, you might have seen this word, internal controls, no matter how effective, they can only give reasonable assurance about operating effectiveness. Getting it? They can't detect absolutely, they can't prevent absolutely fraud and error. The limitations are collusion, the limitations are management may override the control. Yes or no? There are many limitations for controls. Internal control is not an absolute deterrent for the fraud. It cannot absolutely prevent the fraud. So that point only we are mentioning here. Able to understand? So like this, we'll give a separate report. Now, this IFC report is not required. This IFC reporting is not required for certain class of companies. What are they? One person company, small company, and a private company satisfying the following both the conditions. Two conditions it has to be satisfied. For a private limited company, when IFCs do not applicable, if turnover does not exceed 50 crore and loans and borrowings from banks and FI shall not exceed 25 crore. Turnover shall not exceed 50, loans and borrowings shall not exceed 25. If these two conditions are satisfied by a private limited company, then for that private limited company as well, IFC point do not apply. You need not talk about IFC operating effectiveness. But remember, you as part of audit will verify controls effectiveness. As part of audit, we have to verify whether controls are working effectively or not. Based upon that, you need to design your further audit procedure. Like total audit procedure broadly classified into two types: risk assessment procedure and further audit procedure. What are they? Risk assessment procedure and further audit procedure. So this is entirely given under SA 315 and 330. So risk assessment is risk assessment is discussed under 315. Further audit procedure is discussed under 330. Now further audit procedure means what? Compliance procedure, substantive procedure. Compliance procedure means test of control. Substantive procedure means again test of details, substantive analytical procedure. Getting it? Now, see, like first, once I was appointed as an auditor, first I will do and understand the organization. First I will have to study the business, what business they are doing, what products they are dealing, how many factories they have, who are the staff, what are their powers, what is memorandum, what is articles, what are the manuals of the company, authorizations or what, approvals or what, risk control matrices and all I will prepare. So first I need to understand how the business is functioning. Then I take purchases. Now once I want to verify purchases, first let me look at the purchase process. What is the process of purchases? So that is called test of control. Process study. That is nothing but what? Process study. So and I will test how the process is working, and that is called test of control. Remember, test of controls we perform when substantive procedure alone cannot give sufficient appropriate evidence. When substantive procedure alone cannot give evidence, then test of controls we will do. Suppose if test of controls are having high risk, like the controls are not at all effective, then we will ignore test of controls and we will directly proceed with the substantive procedure. Now inside substantive procedure, should I perform test of details or should I perform analytical procedure? That is again a question. Test of details means nothing but vouching and verification. Vouching of transactions, verification of balances. That's called test of details. Now, should I perform test of details or can I perform substantive analytical or should I perform both? It depends upon effectiveness of the internal controls. Suppose in test of controls, you got positive result. Controls of the company are excellent. Definitely every transaction will be processed in an excellent manner. Then apply logical analysis. On the real data, apply logical analysis. If logicality is met, then you need not verify actual transaction, actual balances and directly go to another audit area. If controls are effective, only substantial analytical procedure can be enough. Able to understand? Suppose if test of controls are not effective, analytical, logical understanding of the figures is not correct, you need to actually test the transactions, whether are they processed correctly or not. Then test of details you have to do. Or auditor may decide to perform both when controls are weak. Able to understand? When the controls are effective, excellent, auditor may just perform analytical procedure and can ignore test of details completely if the controls are effective. Standard permits that. Able to understand? So that's it. This is what that entire SA 315, 330 controls aspect. Very good. Now, so for these companies, IFC reporting does not apply. The auditor need not report IFC for these companies. For rest all other companies, public company, government company, listed company, for all other companies, this IFC will be applicable. Auditor has to give a IFC report separately like that. Getting it? Next. Then the auditor has to report such other matters as may be prescribed. Accordingly, rule number 11 of company audit and auditor rule prescribes the following matters. What are they? The auditor shall disclose, the auditor shall comment on whether the company had disclosed impact of pending litigations on the financial position in the financial statements, whether company has disclosed all the pending litigations or not, contingent liabilities or not. Generally, what auditors will comment here, please refer so and so note number, contingent liabilities. So nothing but whether the company disclosed all contingent liabilities, all pending litigations in the financial statement. They're asking you, you check financial statement notes to account, everything is disclosed. Then say that, yes, the company has disclosed all the pending litigations and its impact on the financial position has been disclosed in so and so note number. Next. Whether the company has made provision as required under any law or accounting standard for material foreseeable losses, including long-term contract, including derivative contract. Very simple. The company in the course of its business will enter into so many contracts. In some contracts, the possibility of loss may be high. There is a possibility of loss. Whenever there is a possibility of loss, prudence concept we know, it should be recognized at the as and when it is expected. When the loss is expected, as and when you expect that there is a loss, you should immediately recognize, and that is what many accounting standards also says. Now you have to check where and all the company is expecting losses. Did they created provision for all those expected losses or not? Auditor has to check. Able to understand. Next. Now they are asking one more point. The company has to transfer to Investor Education Protection Fund certain money, like dividend money, share application money, like that. There are some funds. These funds have to be transferred to IEPF within certain time frame. Now, this point is asking, is the company delayed? Is the company delayed in transferring funds to IEPF which are required to be transferred on so and so due date? So, as on 31st March, is there any delayed payments or is there any payment which were not yet transferred but already due date crossed for transferring to IEPF? For this, in Reliance company, there is a reporting. The company has transferred all the funds required to be transferred to IEPF on time, except some 1.5 crore was kept under abeyance because of some court stay order, except that rest all other money was transferred on time. This is what they reply. Able to understand. Next. Now this fourth point. This is what newly added. This is newly added in 2020. Now, before that fifth point also let me cover. Whether the dividend declared or paid by the company, is it in compliance with section 123 of the Companies Act? Section 123 refers to 124, 125, 126, 127. Simply speaking, if you have to check compliance of 123, you have to check all the 5 sections of the dividends. You need to check all dividend sections. Getting it? So indirectly they're asking, when a company declared a dividend or when the company paid the dividend, did the company complied with all the dividend provisions? Only by complying with provisions of the dividend did the company declare. Especially, this point is more significant if the company has insufficient profits or if the company is in losses. What is meant by insufficient profit? I want to declare totally 20 crore dividend and I have only 10 crore profit in the current year. That is called insufficient profit. Or I'm having a loss. Still I want to declare dividend. In these cases, there are some conditions given under 123 to comply. Without complying those conditions, you should not declare dividend. Able to understand? So they are asking indirectly, whatever dividend declared by the company, whatever dividend paid by the company, is it in compliance with the dividend provisions? Able to understand? Next. Now, sixth point is regarding audit trial feature. Like you might have seen this point in a CA Inter. Audit trial is missing. Like audit trial is not visible. Somewhere, especially in the old scheme, audit in automated environment, black box approach, white box approach, that and all were there. In that, the problem with automated environment is lack of visible audit trial. They say that. Now, audit trial is compulsory. What is exactly audit trial? Now you see, when you're every day, when you're recording some transactions in Excel, example, it will have previous versions on the backup. Suppose you take server, suppose you might have worked in some office where they are maintaining client server architecture for data retention. For data, like whatever data you're working, no, like in your office, you might be working on some computer, but the data might not be stored on that computer, but it is stored in the server. Getting it? And that server, every day it will take backup. Every day it will take backup, and it will always keep some 1 month backup or 2 months backup or 1 week backup, depends upon data retention policy of the firm. It depends upon the data retention policies of the firm. Now, suppose yesterday some backup was taken, today some backup was taken. On the same Excel file, you worked yesterday, day before, and today. Now, if you right click the Excel sheet on the Excel sheet and look at previous versions, you can restore previous version also. Suppose you did some workings today. Generally, if I have to eliminate the workings, what I should do? Generally, when the Excel sheet is open, Control Z, Control Z, Control Z, I'll do. So that whatever changes I did will be removed. But instead of that, but suppose what if I saved the Excel sheet and close and I open, you do Control Z, it will not work. Correct? So what should I mean, suppose if I want previous Excel sheet before working, what should I do? Yesterday backup might have been there. If yesterday backup is there, open, right click, previous version. So yesterday backup will be there. So in that sheet, you might have some additional information or you might be having lesser information. But yesterday what is the data? Today what is the data? Both are visible now. Able to understand? Suppose yesterday you did some working, today you changed that working. What you did yesterday, what you did today, what changes you made, everything is visible. Able to understand? And that kind of visibility is called audit trail. That kind of visibility is called audit trail. In softwares, in computer softwares, in SAP, in Tally, whatever software, suppose every one of you worked in Tally. In Tally, like if the client entered a transaction, again sometime after some few days or few months, he opened the same transaction, changed money, and then pressed enter, over. Do you find later that this transaction is edited? Can you find that this transaction is edited? This is not the original transaction. This is an edited version. Can you find it out? No. If that information is also there, if that edited information is also available, then that's called audit trail. Then that is called audit trail. Like in SAP and all, you can find transaction versions you can find. In SAP, what is the original entry? Later, what they have modified? What narration they modified? Even if full stop is removed, that will be shown as next version. Why to that extent? In Facebook or YouTube, you just post one, just a post, any post, you typed something, or you change it later again, once again. View edit history you will find. Yes or no? That is nothing but what? What is your original post? What is your latest post? Unless you delete entire the transaction, unless you delete entire that post, you will, so long as the post is continued, so many times you edit that post, entire edit history is visible. Yes or no? Same way, in accounting also, the auditor, the companies shall maintain the feature of audit trail, and that is mandatory with effect from 1st April 2022. So with effect from the financial year commencing on or after 1st April 2022, every company shall maintain audit trail feature. Getting it? In their accounting software. So what is audit trail? It's a step-by-step sequential record which provides evidence of documented history of transaction to its source. What is the original source transaction? What is the revised transaction now? What are the changes happened between these many days? Everything will be shown. Even if you delete the transaction, the delete will be, that so and so transaction is deleted. That will also be shown. Getting it? Next. An auditor can trace every step of the financial data of a particular transaction, right from general ledger to its source with the help of audit trail. Like just imagine, in Tally, if you pass journal entry, everything will be automatically updated. No, ledger, balance sheet, trial balance, everything is automatically updated. Which one updates first, which one update next? We don't know. Correct? But through audit trail software, you can look at how the software is functioning, how the software is working. So that feature must be there. This is very important thing for the auditors. Getting it? Next. Further, under 197, there is a reporting requirement. If the company has paid remuneration to its directors in excess of limit laid down, then auditor shall give details as well. This is a reporting requirement under 197. Not under 143. As per 197, getting it, the auditor shall report about if any remuneration is paid to directors in excess of the statutory limit, the same shall be reported. Now, where it shall be reported? 143 subsection 3, it shall be reported as a separate point. Able to understand? You see, Tata Motors have reported this point as a separate point. They reported it as a separate point, you see, C point under 143 with respect to matter included under legal and reporting requirements. Legal and report on legal and other reporting requirements there itself. In our opinion, according to the information given to us, the remuneration paid by the company to its directors is in accordance with 197. So they reported. Where they have reported? Below 143 subsection 3 itself, they have reported. Along with 143.3 itself, you can report. Able to understand? This should also be reported under which part? Report on legal and other regulatory requirement. That section of the audit report, it should also be reported. Clear? Now they may ask you this question. Remuneration paid to directors in excess shall not be reported under 143 subsection 3. The answer is true, correct. It shall not be reported under 143 subsection 3, but however, it should be reported under report on legal and other regulatory requirements along with the reporting on 143 subsection 3 items. Understand? On this, some MCQ I saw. Next. Now, this fourth point. Have you seen this fourth point, all of you? All of you? So what is it like? Whether the management has represented that to the best of its knowledge and belief, other than as disclosed in notes to accounts, no funds have been transferred, advanced, loaned, invested by the company to any person, including foreign entity, with an understanding in writing or otherwise that the foreign company or the other company, nothing but intermediary, shall directly or indirectly lend or invest in any person or entities identified in whatsoever the manner on or on behalf of the on or behalf of the original company. That ultimate beneficiary, we call whoever is ultimately receiving the funds, we call them as ultimate beneficiary. So what is it here exactly? So we'll take a small diagram. 1 and 2 points are both are related. Within the fourth point, you have 3 clauses. Within the fourth point, you have 3 clauses. So what are they asking exactly? See, generally, shipping of funds, they call it as like now you see, suppose we are doing audit of Tata Motors. This company, did they transfer? Nothing but did they give any loan or did they give any advance or did they make any investment? Did Tata Motors give any loan or any advance or any investment to a company whether in India or outside India? So nothing but we call them as intermediary. So they gave funds to this intermediary. Now between them there is an understanding, memorandum of understanding. This understanding may be in writing or otherwise. Otherwise means what? Oral, whatever. Getting it? So it may be in writing or otherwise. Now the company, whether have you came across any transaction where Tata Motors has loaned, advanced, invested in a company including a foreign company? They call it as what? Including a foreign entity. Getting it? It may, so we simply call them as what? Intermediary. With an understanding, that this intermediary shall again send the same amount to ultimate beneficiary. Getting it? This beneficiary may be in India or outside India. Who knows? Getting it? So what we did is we transferred funds to them originally. Now this company has to transfer the same funds to ultimate beneficiary. Now this intermediary will either loan or advance or invest or even provide guarantee. Even may provide guarantee on behalf of this beneficiary to some other party. Who is giving guarantee? Intermediary is giving guarantee. On behalf of whom? Ultimate beneficiary. To whom they are giving guarantee? To some other person. Why this intermediary is giving guarantee? Because this intermediary got funds from Tata Motors. I got the funds and they told me to give guarantee to somebody else. Okay, I'll give. What problem with me? Because I received 100 crore from Tata Motors. So I will give on behalf of ultimate beneficiary 90 crore worth of guarantee to some third party. I'm having 10 crore margin. Able to understand? So, or intermediary might give loan, might give advance, or might invest in another beneficiary. Now, this beneficiary is identified by whom? This beneficiary is fixed by whom? Who determines this beneficiary? Tata Motors. Able to understand? Tata Motor is there. There is a beneficiary, some beneficiary. You may ask, I can directly transfer. No, I don't want to directly transfer. Okay, because of various rules, because of various norms that are applicable, FEMA norms, whatever, FCRA norms, or, there are many anti-terrorism laws, there are money laundering laws. So, by looking at all this, it is not correct for me to transfer directly the funds to the ultimate beneficiary. So, I have employed multiple mediators in between. Okay, they may be a company or they may be a non-company. Who knows? I gave funds to them. I told them they need to transfer that funds to somebody else. Or they may have to give a guarantee. They may either can give guarantee on behalf of them to somebody else so that one transaction will settle. Later again the funds will route back to me. Able to understand? So ABG Shipping Yard, this is what case happened. You can find what happened exactly in ABG Shipping Yard in Think School channel. There is a channel called Think School. Getting it? So in that channel, you can find what happened in ABG Shipping Yard. Exactly this is what they did. 25,000 crore worth of banking fraud. People are taking loans from banks. Getting it? And they are diverting money. Like they create a dummy supplier. They create a dummy customer or dummy supplier. Getting it? And or they create a dummy company. They give the loan to them. They will give loan to some foreign entity. So they somehow transfer the funds to foreign entities. Able to understand? So this is the transaction. Now what auditor has to report? You have to get a declaration from management. What you have to do? You have to get a declaration from management that other than disclosed in notes. You have disclosed in notes to accounts. The company has disclosed in notes to accounts. These kinds of transactions, so many were there. The company, see, for a company, it's a routine practice to give loans and advances to so many people. Getting it? And they disclosed everything in the notes to accounts. Balance sheet, P&L, financial statement, they disclosed all the loans and advances. My wanted declaration. Other than that, there are no other loans, no other advances, no other investments that you made in an intermediary with an understanding that they should invest in beneficiary identified by the transferring company. Able to understand? So other than disclosed in notes, these kinds of transactions, whatever is there, you disclosed in notes, that's fine. Other than that, there are no other transactions. I also tried to verify. I also tried to figure out, is there any omission of these kind of transactions? I didn't find. I will take a declaration that every transaction is accounted. Nothing is omitted. Give me a declaration. That is what this declaration is about. You see, whether management has represented that to the best of its knowledge and belief, means management should give a declaration. What declaration? Other than disclosed in notes, no funds. What is it? No funds have been advanced loans. No funds have been advanced loans means what? These kind of transactions are not there. If at all there, they are already disclosed in financial statements and notes to accounts. Other than disclosed in notes, there are no other transactions like this. Able to understand? You need to get a declaration from the management that no transactions in the nature of loans, in the nature of advance, in the nature of investment is omitted. Everything is recorded. That is what this meaning. Are you clear? Now here we are talking about which company? Tata Motors, which is acting as a transferring company, transferor company, which is transferring funds to intermediary. That intermediary shall invest or give as a loan to some other company. And every of this transaction is disclosed in notes. Other than disclosed in notes, is there any other transaction? Directors are saying no other transactions. Everything is disclosed. Give me a declaration. That's it. Now, second point is regarding, have you received any funds from another company with an instruction that you should invest or you should give loan to another company? Means in second point, they're asking you, okay, your company did not act as transferor, I agree. Did your company acted as intermediary? That is second point. The second point is asking is what? Okay, your company has not transferred any loans to an intermediary with an understanding that they should invest in some other company. Okay, fine. I understand. You didn't transfer anything. Have you received any funds where you are acting as an intermediary? Have you received any funds where you are acting as an intermediary? You receive the funds and you send the funds to somebody else. Did you play it as an intermediary? If so, disclose all the transactions in notes to accounts. If at all you disclosed anything notes to accounts, other than that, is there any other transaction? No. Directors are saying, no. Give me declaration for that. So, declaration number 1 is what? Give me a declaration that there are no omissions in respect of loans, advances, investments made by you. Second point, give me a declaration that you did not act as an intermediary in respect of loans, advances, investments, guarantees that you are making to somebody on behalf of somebody. Able to understand? All of you. So you see, whether management has represented that to the best of its knowledge and belief, other than disclosed in notes to accounts, no funds have been received by the company from any person or entity, including foreign company, with understanding that whether recorded in writing or otherwise, that this company directly or indirectly lend, invest in other person, entity identified in manner whatsoever on behalf of a funding party. Transfer or company is nothing but funding party. Getting it? So first case, did your company acted as funding party? Yes. All the transaction disclosed in notes to accounts? Yes. Is there any omissions? No. Give me a declaration for no. Second point, did your company acted as intermediary for any loans? Yes. All the transaction disclosed in notes to accounts? Yes. Is there any omission? No. Give me a declaration that is no. Are you getting it? Now, third point is asking, you also verified all the bank statements, you verified all the ledgers, you verified funds flow analysis, everything, right? Based on your audit procedure, have you considered or did you came across, did something came to your notice? Did something came to your notice which causes them to believe the above representations given by management are wrong, materially misstatement? Okay, first you took declaration, but taking declaration alone is not sufficient. You need to do funds flow analysis. You need to check all the bank statements of the company. You need to see corresponding journal entries in the books of accounts. To whom they have transferred funds, for what purpose they transferred funds. Okay, they purchased goods and they paid this money. Okay, they purchased so and so building, they paid this money. Now another one, they purchased something or they paid money. When I ask management for what purpose they paid, there is no explanation. Those kind of unexplained payments, unexplained receipts. Able to understand, where management could not explain the receipt, where the management could not explain the payment, you discovered those kind of unexplained payments and unexplained receipts that you need to investigate. Able to understand? So you investigated, finally everything is settled. Suppose still there are unsettled, unexplained payments, unsettled, unexplained receipts. If at all there are that kind of unexplained items, tell me, will you believe the declarations given by management in 1 and 2? What will happen if you identified some new transactions? Will you believe the management declaration? No. So here they are asking, what are they asking here? What are they informing you? Based on audit procedure, did auditor considered reasonable and appropriate in the circumstances that nothing has come to their notice that caused them to believe that representations given under above clauses is materially misstated? Management said no other loans we funded, no other loans. For any loans, we didn't act as intermediary party. Like that, management gave declaration. Did you come across any incident which proves that the declaration given by management is false? So that is what they're asking. So in your audit procedure, have you identified or noticed any transaction which makes the declaration given by the management is false, misleading? Able to understand? So with this 143 subsection 3 is also done. Here also reporting responsibility is what? Whether it is positive or negative, both you must report. And all these matters you must report on other legal regulatory requirements. So with this 143 subsection 3 is completed. Next. So if you look at the contents of audit report again, so we have completed report on other legal and regulatory requirement. Signature of the auditor. Who should sign the audit report? Only the person who is a partner of the firm having certificate of practice. Only he should sign the audit report. In case of a sole proprietor, the proprietor should sign the audit report. On behalf of the auditor, can an employee sign? No. Signature of the auditor is completed. Place of the signature. Usually, it is the place where you signed the audit report. We usually keep the auditor office city and state. So that is place. Date of audit report. You see G7. What is the date of audit report? The audit report shall be dated not earlier than the date on which you got sufficient appropriate evidence on which you generally base your opinion, including evidence that all the statement, financials, notes prepared and those with recognized authority have asserted. Means what? The financial statements must be prepared and financials must be approved, and you should also get sufficient appropriate evidence. Only after all these events happened only you should sign the audit report. Able to understand? So this simply can be expressed that audit report shall be dated on or after approval of financial statements. Once the financial statements are approved, either that date you can keep or later date only you can keep. You cannot keep earlier date. What do you mean by approval of financial statements? Whatever financials prepared by the company, management is approving them, signing them. What is meant by approval? That approval means these are the financials which we are ultimately going to issue to the public. Whatever financials are ultimately issued to the public, on that only you should give opinion. Correct? Next, UDIN number. I hope every one of you have seen the concept of UDIN. Correct? I hope you have seen. UDIN is nothing but a digital signature kind. It is something equal to a digital signature. Getting it? Here, we generate 16 alphanumeric UDIN number. That it is me who originally signed the document. My signature can be forged, but UDIN number you can't generate. Without UDIN number, my sign has no validity. Without UDIN number, my sign has no validity. So many, especially in semi-urban areas and rural areas, getting it? If I know your name and your membership number, I can just go to any stamp vendor and get a new stamp in your name. And your signature, I can just copy and then put your signature. And take a letterhead. I go to any printing press shop, they'll give me your letterhead. Getting it? If I just tell your name, they will design a format and then give me. So I can print my own balance sheet, my own P&L. I can only sign with your stamp. I can only sign your signature. And giving to a banker for getting a loan, stock loan or working capital loan, banker is sanctioning me. Finally, I defaulted. And the banker is coming in, is asking you the explanation. And you told, I don't know anything. And that time the fraud was discovered. Now, what is the remedy for this? Institute said, whenever you are signing, generate a unique identification number like a barcode number and then put that number. Without that number, banker should not accept. Regulator should not accept. Outsider should not accept. Able to understand? You see, Tata Motors audit report will have number. Tata Motors audit report will have UDIN numbers here. So this is the UDIN number. Getting it will have all these details. So you see in this report, this fellow name is given. What is the proof that this fellow only signed? So his membership number is given here, and that membership number is also coming in UDIN. Who knows, this UDIN might be dummy, no? I will go to UDIN site and verify this. I will put my phone number, everything, and I'll verify. It will show all this information. Okay, then I will trust this fellow only signed. Tata Motors is using this fellow name authorizedly. Able to understand? That's UDIN concept. So with this, I hope you understood how to prepare audit report thoroughly. Clear? Everyone? Next. Any doubts? Any problem? Next. Next we have using the work of auditor's expert. Using the work of auditor's expert. See, in the course of audit, first of all, remember, the partner of the firm, the engagement partner of the firm is ultimately responsible for the opinion. Correct? Suppose you see Tata Motors, that audit report is signed by some partner from BSR & Co, KPMG. Only he is ultimately liable. If something goes wrong tomorrow, he is only accountable. We cannot go and ask his article assistants what you did. Correct? So, when I was allotted for an audit, when I accepted a company audit, especially statutory audit, whose help I will take, that is my choice. Whether will I take help of other people or not, that is also my choice. But ultimately, the company gave me the duty. Are you getting the point? Now, in the course of discharging this audit, where I need to give opinion, I am taking help of various persons. Whose help I am taking? I am taking my articles staff, yes or no? My articles and paid assistants, I'm taking their help. And I'm also taking help of management. And I'm also taking help of, sometimes a management expert. I'm also taking help of internal auditors. I am sometimes believing branch auditors report. I'm sometimes believing branch auditors report. Sometimes I'm calling my own expert. Sometimes I'm calling my own expert. Or sometimes we are doing audit in a joint audit pattern. So knowingly or unknowingly, auditor is believing or auditor is taking help of various people. Getting it? Now, here, auditor, only the partner is responsible. Ultimately, only the engagement partner is responsible. Even if article assistants intentionally did some mistake, he cannot be held responsible for outsiders. Because the report is signed by you, ultimately you are only answerable. Yes or no? Next, even you will be taking information from management. You will get explanation, data, everything from the management. So just because you have taken information from management, you cannot say, I took from the management told me this, so I trusted this. You can't argue this. Getting it? You should always get sufficient appropriate evidence to prove your conclusion, to prove your opinion. Then sometimes you might have taken the help of management expert. Sometimes you might have taken the help of your own expert, auditor expert. Regarding that, we'll discuss now. Here also, only the partner is responsible. Only the partner is responsible for the opinion. Only the engagement partner is responsible for the opinion. You cannot shift your responsibility to them. You cannot say, management gave me books of accounts, I felt it is true and fair, so I said everything is true and fair. That is not for what you are appointed. You need to apply your skepticism. You need to apply your analysis. You need to apply your verification procedures. You need to gather third-party evidences, all that. Able to understand. So, whether you take the help of articles, management expert, auditors expert, even if you take the help of internal auditor is also part of management. Even if you take their help, that and all doesn't matter. You are only ultimate liable. You cannot blame them later on. So if you are using their work, be careful. Don't trust them completely. You do your due diligence. This is what all these standards says. So SA 220 says engagement partner is ultimately responsible. SA 500 says even the auditor is getting lots of information from management or management expert, ultimate responsibility for the opinion is with the auditor. SA 610 starts with the ultimate responsibility for the opinion is with the statutory auditor only. He cannot shift his responsibility to internal auditor. Whereas joint auditor and using the work of other auditor, SA 600, SA 600 and this is 299. So these 299 and 600 only says in respect of work performed by component auditor, in respect of work performed by joint auditor, you can believe them and they are only responsible for their portion. You are not accountable. Able to understand? Only in these two cases, division of responsibility is given. Whereas in all other cases, whether you are taking help of internal auditor, you are taking help of management expert, you are taking help of management, your articles, everybody, whatever it is, you cannot divide the responsibility. When somewhere, at some point of time, the moment you become accountable to public, you have to be answerable. Able to understand? Only you have to answer. They cannot answer. Clear? Suppose, if at all entire management colluded, created a complete true and fair picture, auditor put his efforts to large extent, in spite of it he couldn't discover any fraud. Genuinely he believed everything is true and fair, genuinely he worked, he has evidence for everything, whatever he did. If at all he proved that he genuinely worked, he acted carefully, no gross negligence at all, he proved it, then he is not liable. But primarily suppose whenever something is wrong, some regulatory authority is coming and questioning you. You cannot say, go and ask management. Why are you asking me? Because management gave me data, I did audit. You cannot blame like that. Clear? Now, let's look at this using the work of auditor's expert. First of all, understand Yes. Now, first of all, what do you mean by expert? We are experts in accounting, no? Do you believe that? Whether you know it or not, first of all, but do you believe that? Public believes that we are expert in accounting. We are expert in audit, right? Other than accounts and audit, do we know anything else? Anybody else who doesn't know accounts and audit, they are expert in other fields, nothing but. Correct? Huh? In accounts and audit, we are expert. Anybody, whoever is expert in any activity other than an accounts and audit is expert from our point of view. Correct? Huh? For the public, accounts and audit expert means auditor. For auditor, who is expert? Other than accounts, that's the definition actually. You see the definition of expert? So who is an auditor's expert? What is an auditor's expert? He is an individual or organization. That doesn't matter. Possessing expertise in any field other than accounting and auditing. Here also you see, management expert means what? He may be an individual or it may be an organization. Having expertise in any field other than accounting and auditing. Now, when do an expert is called as management expert? When do an expert is called as auditor's expert? When the expert is recruited by auditor, used by auditor for getting sufficient appropriate evidence, we call him as auditor's expert. When that expert work is used by management for purpose of preparation and presentation of financial statements, then we call them as management expert. Whose work in that field used by company, nothing but entity, to help the entity in preparing the financial statements. While preparing the financial statements, if the entity is taking the help of an expert, they are called as management expert. Now, whose work in that field is used by auditor in obtaining sufficient appropriate audit evidence, for getting audit evidence, for getting confidence, conclusion. When I am calling some expert, he is called as auditor's expert. Now, auditor's expert may be internal expert or external expert. Internal expert means what? Suppose I want to take one legal opinion on a case. In my firm, I have a lawyer working with as a paid assistant. So I took my lawyer help itself, whoever is there in my firm. He is my internal expert. I don't have any lawyer inside the firm. I have a friend who is actually practicing as a lawyer. I went and took an advice from him. He is external expert. Able to understand all of you. So, internal expert may be a partner, staff, temporary staff, or audit firm, even network firm. Even suppose I belong to one network, KPMG. If I take advice from another firm, we will call them as internal expert. We will call them as internal, because any person belonging to my firm or to my network where I am a member firm. So all the member firms in that network are also treated as internal people. Are you getting it? Next. Now, the standards, what the standard does not deal with. If at all you need expertise in specialized areas of accounting and auditing, then this standard do not apply. First of all, the definition of expert do not include them. This can be tested as a true or false question or MCQ question. Getting it? Who is an auditor expert? Auditor expert is an individual or organization possessing expertise in any field, including accounting and auditing, whose work in that field is used by the auditor in obtaining sufficient and appropriate audit evidence. Getting it? So like that in examination they'll give including what they said, including accounting and auditing, they said. It's other than accounting and auditing. Management expert is already discussed. Suppose when you are using help of management expert, if you are taking help of management expert, so regarding that SA 500 is discussing that. This standard do not deal if you are taking help of management expert. First of all, what is the standard? Suppose I decided to take the work of an auditor's expert. I want to take one expert help because in audit, this industry is some telecom industry. Example, this is a telecom industry. Some spectrum allocation was, some spectrum allocation was happened. The spectrum, all that, everything was in progress, capital work in progress. Now I want to know exactly what is the stage of completion. I want to know what is the stage of completion. Can we start recognizing revenue? Can we capitalize it? This is the problem. Now, this is completely spectrum related, entire, completely technical stuff. So they need to look at softwares, they need to verify all the, towers construction, their process, execution, erection, all that. Getting it? So I don't have any idea on this. So I called some telecom expert, whoever is working in telecom industry, I took their help. Now, can I take their help when I am doing audit, when the purpose, in the process of taking a decision in the audit, in the process of getting audit evidence, can I take their help? First of all, yes, the standard says, yes, you can take the help. Getting the point? Okay, I can take that help. But already the company has an expert. Already the company employed an expert. Can I take their help? The standard says, yes, you can take their help, subject to the following, checking points, checkpoints. So they gave some checkpoints. Now, can I blame them if something went wrong? No. So the standard says all these points. So what the standard says here, you see further. Sole responsibility, auditor only. What are they saying? Auditor has sole responsibility for opinion expressed. The responsibility is not reduced by use of expert. Nonetheless, if auditor using the work of expert having followed standard concludes that work of expert is adequate for auditor purpose, auditor may accept that expert's finding and conclusions in the expert field as appropriate audit evidence. Of course, though they say you're only ultimately responsible, you can believe expert opinion. Tomorrow, if something went wrong, they only say one thing, ma. If some regulatory authority is questioning you, they only check one thing. Have you done your duty properly? If you did not render your duty properly, then only all the problems will come. Getting it? Suppose when you're recruiting expert, you studied him carefully, you interviewed him carefully, you appointed him properly, you monitored him thoroughly, continuously. After his report also, you evaluated and took third-party opinion once again. Everything after you did basic due diligence only, you accepted. Finally, it was proved that expert only did fraud. For every expert, see, for us, Institute of Chartered Accountants of India, regulatory for us. For CS, who is the regulatory? ICI. For doctors, Medical Council is there, regulatory. For lawyers, Bar Council is there. For engineers, Institute of Engineers of India is there. For every professional, there is some regulatory. Getting it? If they do fraud, I can complain to their regulatory. Like how people are complaining on me to ICI or to NFRA like that, everyone have some regulatory. So they are also governed by code of ethics. Like you have professional ethics, they have professional ethics. Able to understand? Now, what is the objective of auditor as per this standard? What the standard is talking about? First, the standard helps the auditor to determine whether use of work of an auditor expert can be used the work of auditor's expert. Suppose if you are using, how to determine whether the work of expert is adequate for audit. For your audit purpose, how far that work is adequate? Is it sufficient? So what points, what precautions you should take? So the standard, the standards deals simply this. What are the precautions you should take whenever you are taking the help of expert? Now, factors determining need of expert. First of all, do I need an expert? Okay, I will discuss about my own expert, internal expert, external expert, or management expert, on whom I will trust. First of all, I will decide later. First of all, do I need an expert? This question is different. What are the factors for determining the need of expert? Means this answer you have to write. Getting it? This entire answer. This entire answer. Okay, I decided, okay, I need an expert. Now, do you need only your own expert or can you trust on management expert? Suppose management already prepared financials using some help of expert. Are you okay with their work or do you want to recruit your own expert? What are the factors when deciding whether to use an auditor's expert? That answer is different. First of all, in a particular organization when I am doing audit, first of all, is there any need for expert for me? The factors are different. Okay, I need expert. Now management already had management expert. He only helped the management and he gave the report. Based on that management valued. You verify that report and proceed further. Is this okay? Or you want a separate report? You want a separate expert on your own? What factors will make you? What factors will assist you? So that answer is different. Able to understand? That answer is different. You see here, when management has used management expert, the auditor can consider that report provided. What is the nature, scope, objective of the management expert? What is the scope of work of the management expert? Is that management expert is an employee of the company or is he a third party? Generally, if the management expert is also a third party, he is also an outside firm. Some lawyer firm or somebody outsider, not belonging to the management. Temporarily for that purpose, they recruited and he came and gave opinion or report and he left. So check that. Generally, if it is a third party, we will have greater reliance. Getting it? Now, how far management is controlling him or management is influencing his work? how far the management expert is working objectively. Just because he is recruited by management, that doesn't mean he is to be doubted. Look at his competence, look at his independence, look at his objectivity, look at his credibility in the market. Getting it? And what is his competence and capabilities? And is that expert subject to technical performance standard? Like you are subjected to auditing standards, you are subjected to peer review, you are subjected to quality review. Likewise, the expert also liable for some review by some authority. Yes or no? See, what is this? If at all in all these cases I got a positive statement, then I can do what, why should I recruit once again audit expert and pay the fee and ask management for reimbursement? Why all that? This person is very much capable, competent, reliable in the market. He is also governed by various law and regulations. If at all he give any fake report, he is also liable like me only. I can trust his report. Moreover, he is a third party expert, not management employee. Able to understand? So if I decide management expert is fine, I will not go with audit expert. Able to understand? Suppose if I think that management has a significant influence on the expert work, if the management, whatever management says, that expert will follow, no objectivity, no independence, then I will not use management expert. I will use my own expert. I will employ my own expert. What is the significance of the matter? What is the risk of MMS involved? What are the nature of procedures to respond identified risk, including knowledge and experience with the work of expert? Suppose you are working with experts, so many experts from so many years. Suppose you are not new to telecom industry. You are doing audit of telecom companies from past 10 years. So you know many things. So in that case also, you may directly go for auditor's expert. Availability of alternative sources of evidences. Apart from expert, is there any other alternative source for this? Or is it the only way? The only way you get evidence is through expert. Check it out. So these are all the factors that help me whether to go for auditor's expert or not. First of all, do I need an expert? Do I need an expert? It depends on how far you are having understanding of the other fields. If at all you are not having very great understanding, you are new to that company. Suppose you are doing audit of insurance company for the first time. You never did earlier. You don't know how everything works, calculations, how they work, how actuaries will work, everything. You don't have any idea. So though insurance company have their own actuary, you may call for another actuary. Able to understand? But after working for 3-4 years, you felt same calculations. Whenever you call your own actuary, whatever the company actuary figures were there, same figures he is also giving more or less. After 4 years, you understand that this company's actuaries, whoever companies appoint, they are completely reliable. So 5th year, what you may think? I don't need any outside actuary. I already understood something, how actuaries function and all. So I will directly talk to company actuaries and then proceed further. Able to understand? So first of all, where do you need expert? An auditor's expert may be needed to help the auditor in one or more of the following areas while obtaining understanding of the entity and environment. Maybe if the company is completely new, a completely different business, in order to understand how the business functions, you may take the help of expert. Or in identifying risk, while designing response to the risk, how to work, how to verify in this. See, some softwares, without understanding the software, we don't know how to verify the software. There was a company called me for verifying the systems audit, IS audit example. They called me for IS audit. And if I have to do IS audit, first of all, I should understand how the system works. Getting it? So what are the things that I should check? I don't know what I should check. So I should call for an outsider, independent person. See, if you are there in my place, what points you will check and why you will check those points. And I will ask and learn and then I will go and check. Able to understand? Getting it? So these are the factors that these are the factors that help you to decide. First of all, should you require an expert help or not? Getting it? So you need to read all this. The nature, timing, extent of audit procedures influenced by auditors' experts' work. See, like when you're designing your audit procedures, if at all auditor's expert help is required, naturally, see, first know, whenever you're planning the audit, one of the criteria when you're planning the audit is, what are the areas where you may require experts' help? If at all you require at multiple occasions experts' help, experts' reports, then your nature of overall audit procedure, timing of audit procedure, to what extent you will verify, everything might affect. Getting it? Everything might affect. So your nature, timing, extent of audit procedures are influenced by auditors' experts' work. So what are they? They gave a little detailed answer. And you need to evaluate competence of the expert, capability of the expert, objectivity of the expert, and get a representation that he do not have any relationship, he do not have any interest with the company. And get an agreement with the auditor's expert. The moment you decided to recruit an auditor's expert, the moment you decided to recruit your own expert, enter into an agreement. What is the nature of work that you need to do? What is his role and responsibility? What is the timing? By what time you want the report? What is the mode of communication? And tell him that he need to maintain confidentiality requirement. And you need to check how far his work is adequate. Don't directly believe his report. After he gave the report, look at his workings. Getting it? If possible, take a second opinion as well. So that entire stuff only is given here. Inquire auditor's expert, review the working papers, look at how the expert is working, confirm from third parties if possible, do an analytical procedure, compare with management expert workings, reperform calculation. Expert has given report workings, he did so and so calculation. See how far the calculations are correct. He may put some numbers, put total some other number, who knows. So don't blindly believe, you reperform calculations. Suppose if at all, when the work of auditor expert is not adequate, suppose you decided, even though after using auditor's expert, the work is not at all adequate for the purpose of audit, try to obtain evidence from further audit procedures. Try to obtain evidence from performing additional work. If at all performing additional work is not possible, getting evidence through expert is also not possible, give a modified opinion. If there is no evidence, give a modified opinion. Reporting in auditor's report about the expert. Can I talk about expert in audit report? See, generally after using expert report, everything you felt about the financial statements is true and fair. You felt everything is true and fair in the financial statements. Based on expert work only, you felt everything is true and fair. If it is unmodified opinion, why should you refer? Suppose you are giving modified opinion. Suppose company valued some inventory, some oil reserve example. They valued inventory by taking the help of some management expert. Since the value of the inventory, oil reserves or huge value, I called my own expert and he did all that, stock estimations, stock value estimations, market estimations, all that. So many reports he prepared, so many workings he did, and finally gave me a report of valuation. There is a 30% deviation. There is a 30% deviation from the value given by the management and the value given by auditor's expert. There is approximately 30% deviation. And I concretely believe that my expert is more superior, more competent person than the management expert. And I asked management to rectify the financial statements. As per the new expert report, please rectify the financials. Management did not rectify. Now I will give modified opinion. Now tell me, I want to say inventory is materially misstated. How? You need to give reason, no, why they are materially misstated. So in the audit report, basis for qualified opinion or basis for adverse opinion para, I mentioned that, clearly mentioned, based on the work of an expert, so and so firm, based on the report, I believe that, I conclude that the inventory value is this much, whereas entity recorded the inventory at this much. To this extent, the financial statements are materially misstated. Now I referred about the expert name because I want people to understand what I did. If I straight away say, people may not believe. So I used the name of expert. Now tell me, I used the name of expert in audit report. No. Because I am using his name. Does it affect my responsibility? No. Even though I am using his name, it will not affect my responsibility. That point also you should mention in the basis for opinion para. If at all you are referring name of an expert, you should clearly mention that my responsibility will not be reduced. Getting it? My responsibility will be same. You need to clearly mention that point. Just because you mentioned his name, people may think that, okay, auditor believed expert opinion. So tomorrow if something goes wrong, expert is only answerable primarily. No, people should not think like that. Able to understand. You see here, when auditor gave modified opinion, if the auditor refer to the work of auditor's expert in audit report because such reference is relevant for understanding nature of modification to the auditor's opinion. Why I modified? To make the people understand why I modified. I want to refer to expert name. Remember, you must indicate in audit report that such reference does not reduce your responsibility. That reference will not reduce your responsibility. So here, how practical questions can come, I have given that 23, 24. Getting it? So practical questions were also there. So this is SA 620. Mainly, you have to read this. You have to read this. This is important standard. Generally, factors affecting need of expert. That is one important question. Consideration when deciding to use an auditor's expert. This point itself can be asked as a question mark. How this point can be asked as a question is, as per SA 620, while using the work of an auditor's expert, there are circumstances where more extensive audit procedures would require. Explain those circumstances. They'll ask this kind of question. Straight theory question. Getting it? So what are the circumstances where more extensive audit procedures are required when auditor is using the work of an audit expert? When generally I do work more, auditor's expert, the work where I am using expert, no, it is related to an important matter which is highly subjective, highly complex. Or I have not used previously the work of expert and no knowledge on the capability, his competence. I'm first time I'm recruiting him. I don't have any idea about him. In that case also, whenever he is giving me report, I need to work more. I need to verify more things. Getting it? Or the auditor's expert is performing procedures which are integral to the audit rather than consulted. Rather it is a consultation on individual matter. It is integral to my audit. Only after he give me his report, I can proceed further. Getting it? The expert is external expert and not subject to quality control policies of the firm. See, generally if he is my internal expert, no, how he learn, how he do work, everything is governed by my firm quality control policies. See, like, I don't know whether you formally did this or not. In every one of your firm, you will have quality policy manuals. You will have policies, quality control practices. Like simple example. The moment an individual client approaches your firm, for filing IT return, your firm has a policy on that. What policy? The first day when an individual client approaches, first take his PAN card, Aadhaar card, and prepare a file. Keep a file code to it. Like this, there is a policy for your firm. So first you must know, when a new client comes in the firm, what are the things that you need to create? You need to create a client code. You need to create a file code. Able to understand? Getting it? So all this will happen in general in above medium sized firms and big firms. This formal practices will be there. First of all, if a new client approaches, should I accept him or not? My firm will have a policy. Just example. The firm will have policy. Can we accept this client? If I have to accept a client for work, what things that I should take care? What are the things that I should verify? We will have some policy, quality control practice on this. We have some policy and procedure. So if auditor external expert generally is not subject to firm quality control practices. Another best example I'll tell. These big companies, when they're giving internal audits, sometimes you may have to work at your own office. Sometimes the company will send the data, you have to work at your own office. Now, before the company send the data, the company want to come to your office and check your IT systems. Getting it? Especially big companies like Infosys, TCS, all these IT companies, whenever they are giving their work, whenever they're giving their data to auditors, they come to auditor's location, check how far auditor IT systems are, how far they are capable of maintaining confidentiality, how far they protect the data. They do that audit and then only they'll give you. Which means there you are following the company's quality control practices. Likewise, if auditor expert is also following auditors from quality control practices, that is okay. I need to verify less. If at all he is not following my quality control practices, his own working methodology is different, then I will have to work more. Getting it? So, have you seen this in depth? Like previously, have you studied this in depth? That's about SA 620. So in the next session, what I will do is SA 610, then 710, and then 260. These three, and I will also start with company audit. I will discuss company audit as well. With that, we will close the session. I think next only we can start professional ethics. Getting it? So professional ethics, the order will be professional ethics and audit committee provisions we will discuss thereafter. After that, peer review, quality review. After that, I'll be discussing PSU audit, then bank audit, then NBFC audit, then insurance audit, then risk assessment and internal control. Then I will discuss standards, spending standards. After all these are completed, then if at all we have time, then we can at a glance discuss due diligence, internal management, operational audit, all that. Getting it? And of course, fiscal loss. That's what. Peer review, quality review, I told already. So after ethics, audit committee, then peer review, quality review. Then peer review and quality review. Thereafter, everything else. Getting it? So SA 610, using the work of internal auditor. Using the work of an internal auditor. Here also, the standard actually starts with a disclaimer that the ultimate responsibility for the opinion expressed is with the statutory auditor. He in no way can make the internal auditor responsible. Now, what is the objective of this standard? Suppose when suppose I'm doing audit of one company, any IT company or any big manufacturing company you take, they will have a very big internal audit department. They will have a very big internal audit function, internal audit team, internal audit department will be there. Generally, in all companies, wherever you go and do audit, you will find that. Infosys is having internal audit department having more than 200 persons. TCS also will have the same. Tata Motors will have more than 70-80 internal auditors. Department I'm talking. And most of them are CS. Every one of them is working on some area. Now my question is, I'm a stat auditor. We generally do audit. For listed companies, we do go quarterly visits will be there. For listed companies, we do go quarterly because we have to give quarterly review reports. At least we do visit quarterly once and we do verify for 15 to 20 days every quarter. And then we finally give the report. But the company has internal auditors who are there throughout 365 days. And they have divided the entire duty among themselves. And every one of them are working throughout the year on that area. Suppose purchases is being handled by some 7 or 8 people. And all these 7 or 8 internal audit staff, they are throughout the year, they are verifying so many transactions in purchases. And same way, GST workings, TDS workings, and other operational audit related issues workings. So many of them are working on so many areas throughout the year. They are verifying everything, they are reporting, they are preparing audit reports, internal audit reports. Remember, our external audit report is about opinion. Internal auditors, they don't give opinion. Internal auditors, they don't give opinion. In most of the companies, internal audit job will be like fact-finding job. Getting it? If any mistakes were there, if any unusual things were there, they need to find. And in companies, most of the companies, internal audit is not only a detective job, it should be preventive. Internal audit works as a preventive mechanism in most of the companies. And not only detective and preventive, internal audit also works as a saving mechanism. They need to identify where and all the funds are misutilized. They need to identify where and all expenses can be saved by the company further. Where and all they can improve the processes. Where and all they can save employee cost. Getting it? So in so many ways, internal auditors are helping the company. Now I am appointed as an auditor for one company where they're having a big internal audit department. Where they're having one big internal audit department. So the company is having a big internal audit department. Now, my question is, can I use their work? Because they did so many works. As part of my audit, I need to verify all the areas of the financial statements, purchases, sales, payments, expenses, all statutory dues, TDS, and I need to scrutinize all the accounts. I need to verify the entire environment. I need to look at operational activities. So many things I need to verify. And most of these things were done by internal auditors already. Now my question is, in fact, see, I have to verify, no doubt, but I can only verify on a sample basis, that too with a minimum sample size. But internal auditors have done extensive checking on all these areas. And they have prepared so many observatory reports. They have given so many reports, so many analysis is there, so much of data is prepared by internal auditor. Now when I am doing the audit, Can I take the help of the internal auditors is a question. So the standard says, yes, you can take the help of internal auditors. You can use the work of internal auditors, but you can only use their help. You should not talk about them in your audit report. You should not make them responsible. The primary responsibility and ultimate responsibility for the opinion that you are expressing, the ultimate responsibility for obtaining sufficient appropriate evidence is only with you. You cannot make internal auditors later on responsible. Okay, still you decided, even though you know that you're only ultimately liable, still you wanted to use internal auditors' work. What precautions you should take? So the standard talks about nothing but precautions. What are the precautions that auditors should take when the auditor is using the work of an internal auditor? Now the standard divides the work of internal auditor into two types. How a statutory auditor can take the help of internal auditor. How I can take the help of internal auditor. The standard divides two ways you can take help. Now type 1 and type 2. So how I can take the help of internal auditors? Type 1. One way I can take the help is I can use the work performed by internal audit function. The work is already performed by internal auditors and I want to use their workings, or I want to use internal auditor to provide direct assistance. I want to use internal auditors. I want internal auditors to provide direct assistance under the direction, supervision, review of external auditors. I want the internal auditors to directly assist me as per my direction, as per my supervision, within my review. So I will direct them what to do. I will supervise how they are doing. I will review whatever they did, whatever the work they did. Very simple. I will take internal auditors as part of my team. How I delegate the work to my articles. Whenever I am doing an audit, I delegate my articles some work, no, and I will supervise how they are working. Once they did the work, I will review the work, no. Same way, internal auditors of the company, I will take them into my team. I will take them into my team and I will give them additional work. Getting it? Like how I am allocating works to my articles, likewise, internal auditors also I will allocate some work. So this is called direct assistance. Now, what precautions you have to take in type 1 work? What precautions you have to take when you are using internal auditors as per type 2? So this is what the standard mainly discusses. Able to understand? Now we'll see. So first of all, what is the objective of this particular standard for the external auditor? The external auditor objectives are to determine, first of all, determine whether the work of internal audit function, whether direct assistance from internal auditor can be used or not. First you should identify, first you should decide, can I use type 1 work? Can I use type 2 work? First you decide. Suppose if you decided using type 1 work, if at all you are using the function, if you are using the work of internal audit function, then how to determine whether that work is enough for the purpose of audit? So, okay, you decided to use their workings. Now he did some workings. Okay. So how to take that workings? Can you take as it is the working, or you have to work additionally? What are all the things that you need to check in his work? Suppose if I decided using them to provide direct assistance, I want to take direct assistance also. Then how to supervise them? How to direct them? How to review their work? So the standard talks about, can you use their work? Type 1 or type 2? If decided to use type 1, how to review their work? If you decided to take type 2, how to direct, supervise and review that work? Able to understand? Now, what is an internal audit function? They gave definition. What is direct assistance? It means use of internal auditors to perform audit procedures under whose direction? External auditors direction, external auditors supervision, external auditors will review. Getting it? So, we all know, especially in most of the companies, this is common. The company internal auditors would have done GST workings, TDS workings completely for all the years, completely for all the months for the entire company, especially if the company is a pan-India company where they're having so many locations across India. Getting it? Now, the internal auditor would have done GST reconciliation statement state-wise for all the states wherever companies having operations. Now I have to talk about statutory due point in CARO, whether the company is regular or not. So I have to take each state registration, Each state 12 times in a month. Are they paying on time or not? I need to check. Like the 20 states the company is operating. See so much of work. Entire this work is already done by internal auditors. One of the internal audit department member, he already did this entire work. Can I take his workings? Yes. So he gave his report on GST reconciliation. He gave his GST reconciliation workings also. Now I just verify them and I will proceed. Able to understand. So can I use like this or not? Suppose I want to work on stock audit. I want to physically verify the inventory. But suddenly, after looking at the go downs, some 3 or 4 go downs the company is having, I felt that my staff number is not sufficient. My staff is not enough. The number of people that are working with me are not at all enough. I want additional 10 more persons. I put a request to the management. Your management, you are having big internal audit team, right? Can you rent or else can you give me for 10 days, 5 staff members or 10 staff members so that I will do stock verification, fixed assets verification, all that as part of my audit. I want to verify all this. Management agreed. Okay, sir, you can take. Now these 10 people will work with you for the next 10 days. Whatever you direct them, they will do. You can supervise them. You review how they are doing. Simple, treat them as if you are employees. So this is how I can use the work of internal auditor. So that is called direct assistance. Now, using the work performed by internal auditor. Can an external auditor use the work which is already performed by internal auditor? The standard says in the following cases it is prohibited. When the internal auditor's functions, status in the organization, their policies and procedures do not support objectivity. If I think that internal auditors are not independent in the company, they were not given enough importance in the overall organizational status, I will not use their work. Getting it? If internal auditors are not independent from the company, see, they may be employee, but if at all he was given enough independence, if at all he was given enough powers, I can use his work. But if at all he has not given enough powers, no independence at all, for name's sake he was retained, for name's sake they are doing some work, I will not use their work. Or internal auditors lack sufficient competence. If at all they are not having competence, I will not use their work. Or they do not apply a systematic and disciplined approach including quality control. They don't have any quality control policy. They don't have any systematic approach for verification of transactions or whatever. Or they don't have a disciplined approach. Then also I will not use internal audit work. So indirectly, what am I evaluating? I am evaluating whether internal auditors have internal auditors organization status, their policies, are they supporting objectivity? What is the level of competence? Do they apply systematic and disciplined approach including quality control? These are the factors I am checking. If in all these factors, if I get a positive answer, I will use their work. If at all I am getting a negative answer, I will not use their work. Now same way, suppose I want to check about direct assistance. Direct assistance is prohibited when if there is threat to objectivity. Suppose I want to take 10 members into my team for stock verification. But after discussing with them, I understand that they are not at all independent of the company. Getting it? For every small thing, they are worried a lot. No, so I can't, if at all I find something negative, I can't tell to you, sir, because management will screw me later. Some sort of fear I found. So they are having so much of independence. I mean, they don't have independence at all. There are so many threats for independence. Or, these 10 people came to my team, right? I want to give them some work, but they don't have competence. They can't work on it. If the internal auditor lacks sufficient competence, I will not take their direct assistance. Able to understand? So what points I will evaluate? The external auditor shall determine whether internal audit function can be used by the auditor. For auditor has to evaluate what is the objectivity and independence. Now, when you are evaluating objectivity and independence, what points you will check? You will check what are the internal auditors' interest in this company, what are their relationships in this company that may create a threat to their independence. Like, do they have any family relationships or personal relationships who are working within the company? Do they have any association with the department or division of the entity to which the work relates? I want to give purchase related work to one of the internal auditor, but he is having good connection with the purchases department, and they are having ownership in the company other than remuneration. Getting it? So they're not only getting salary from the company, they're also having shares in the company, significant ownership in the company. So obviously, even if they find something negative tomorrow, they will not reveal me as a stat auditor. So these are the points which auditor has to consider before he decide using internal auditor. So these are the precautions. Suppose you decided to use type 1 work. You decided to use type 1 work. So what works the external auditor can use? The workings of internal auditor. The external auditor shall consider nature and scope of work performed by internal auditor function and can use in the following cases regarding controls checking or regarding substantive procedure, which includes limited judgment, not significant judgments in that area, which means which are not significant. In those areas, I can definitely take internal auditor's help. Whatever work they did, I can take their workings. Where and all it is immaterial, where and all it is clerical processes, in all the clerical works and all, whatever works they did, I can take their workings. Remember, it should not appear like you are taking completely internal auditor's workings as part of your workings. You should also take that precaution. You should maintain that. External auditor should not appear that he is too much depending on internal auditor's work. So that precaution also you must take. Even after using internal auditor, your participation is there in audit which is significant. So outsiders or even management or audit committee should feel that you're only doing major work, minor portion only you're taking their help. In such a way, your use of work must be. Like observation of inventory count, physical counts and all, you can take their help. Testing compliance with legal authorities, you can take. Or review of financial information of subsidiaries which are not significant, insignificant, immaterial subsidiaries, to review their information. Especially this point is relevant in consolidation. And the external auditor shall make all significant judgments and shall plan to use less of the audit function and perform more work directly. Most of the work you should perform directly. And see, the auditor also, the external auditor shall also check whether using the work of internal auditor to the extent planned. So you want to use his work to some extent. You planned that. Will it still result in external auditor being sufficiently involved in audit? Even after using that work, do you feel like, or do you still portray that you are only doing the overall audit? Check it out. If at all, you are using purchases, you are taking internal auditor's work. Sales verification, you are taking internal auditor's work. Employee verification, you are taking internal auditor's work. Suppose if your audit plan we saw, what are the areas we saw? Everywhere internal auditor work only you are taking. Then what are you working for? Able to understand. So even after you take internal auditor's work, see that your participation is not affected. Your participation is not invisible. Getting it? Then the external auditor finally communicate with top management, share an overview of planned scope and timing of audit and how external auditor is planning to use the work of the internal audit function. So you can communicate with the management how you want to use their work. And finally, when you're using the work, discuss, coordinate with internal audit function and read the reports of internal auditor and perform additional procedures to determine adequacy of the work, like what is the work of the function, how they are planning, how they are performing, how that work is supervised. See, internal auditors are working, right? So how they are planning the work, how they are working, how their work is monitored, how are their findings are responded by the management. Like if they find something wrong, how management is treating the responses, and see whether are they obtaining sufficient appropriate evidence to form conclusions by them. See, internal auditors worked on purchases. Finally, their report says purchases are true and fair. Their final audit report, final purchases related internal audit report says no observations, no negative remarks on purchases. So that is a conclusion. For that conclusion, do they have proper background workings? Check it out. And what are the conclusions that they are reaching? Are they appropriate in the circumstances? So check it out. So that's enough mainly. And there are some areas where direct assistance we cannot take. We cannot take internal auditors for direct assistance in some areas. In some areas we should not take, especially where it is significant judgment is involved. In respect of areas where significant judgment is involved. Suppose in Reliance, plant and machinery, useful life has been revised 30 years to 50 years, and the plant and machinery value is 4 lakh crore. 4 lakh crore worth of plant and machinery useful life has been changed. Now, whether this useful life changed or no, is it correct or not? I want to take internal auditor help in that. It is not correct. So, areas where significant judgment is involved, don't take direct assistance there. Even in that area, don't use internal auditor's workings also. And high assessed risk involved, don't take internal auditor's help. Or it is related to work which is already performed by him. It is related to work which is already performed by him. Suppose purchases work is there. Purchases I want to verify. Internal auditors have already verified purchases. I took their workings. And I am calling another internal auditor and asking him to verify this. Whether the work of the internal auditor's purchases, is it correct or not? No, I should not. Getting it? So, if the work is already been performed by internal auditors, don't give them the same verification. Whether internal auditor's work is correct or not, you verify. You verify. Or suppose this fellow who already performed stock audit, one of the internal audit department staff, he verified physical verification of stock. You took him, once again you are sending him for physical verification. Waste of time. That's on a self-review threat. So he already performed the work and you are again giving him the same work. There will not be any improvement. Clear? Next. Whenever you are using direct assistance, from internal auditor, you should enter into a written agreement from management. You should get a written agreement from management. You should get a written agreement from internal auditor. What agreement you should get from management? That management will give you the 10 people and they will not disturb the next 10 days. Now from internal auditor, what you should enter into agreement? That the next 10 days you are going to be my staff. You have to be independent. Whenever you find something, a threat for your independence, you should first come and intimate me. So I should give them the confidence. So I should enter into a written agreement. Able to understand. And now here some students will get this doubt. Can external auditor demand or request working papers of internal auditor? Internal auditors are two types. Those who are employees of the company, those who are outsiders. Suppose if the internal auditors are employees of the company, their working papers are property of the company and you can always demand. If internal auditors are outsiders, they are a third party firm, their working papers are their own property, you cannot demand. You make a request, if they give, take it. Otherwise, you can't demand them. Able to understand? Finally, you need to document what is the basis for decision regarding nature and extent of work performed by internal auditors. So to what extent, whatever the work you are using, why you selected that work, why you selected purchases work of internal auditors as part of your usage, why you selected sales, what is the logic behind that? Every reason you have to document, every reason you have to type and that document. Who reviewed their work? And see, written agreements you have to document. Working papers prepared by internal auditors who provided direct assistance. These are also, see, if internal auditor is giving direct assistance and when he collected some working paper, it is your property straight away because he is part of your team now. When he designs any working paper, when he prepares working paper, it is your own working paper because he is part of your team now. So that's it, SA 610. So broadly, SA 610 classifies using the work of internal auditor into two types. Using the work which they performed already. Now, whether to use that work or not, when it is prohibited, how to decide this work is adequate or not, what points you should keep in mind. Now, direct assistance means taking the person help directly. Can you take this or not? When it is prohibited, okay, you decided to take his help. Which work you should not delegate him? Which works you should not delegate him? Okay, you can use his help. Personally, you can directly take his help. But which works you should not delegate him? And finally, you should enter into written agreement with the people who are directly assisting you. That's it. And all this you have to document. So that is what SA 610 says. Clear? All of you? That's it. SA 610 is over. Next. Yes, of course. Even direct assistance, external auditor cannot demand. First of all, external auditor, can he demand using the work of internal auditor? Can he demand first of all? No. If company is willing to give, they can support. Company says, suppose audit committee of the company decided, sorry sir, well, let us not involve with internal auditors. You work sir, you take your time, you take your number of resources, we will support in terms of fees, no problem. You work on your own. Our internal auditors will not support at all. If audit committee decided like this, they can. But internal audit reports they should give always. Internal audit reports they should give. Sir, you want to use internal auditor workings as part of your evidence. That is also your choice. But direct assistance, external auditors cannot demand. External auditors cannot demand direct assistance. If at all they ask, depending upon the availability of the company resources, they can give. If company do not have, sir, all our internal auditors are occupied, sir, with various other works. We have next year some reporting requirements, so internal auditors are very busy, we can't give you. Yes, you have to keep quiet. You bring your own additional staff and you work. Clear? So that's about internal audit. You have to read the entire standard. I only explained briefly here. Getting it briefly, the entire gist I explained, but you have to read in depth. So, SA 260, communication with those charged with governance. Communication to those charged with governance. Parallelly, you have another standard called SA 265. Communicating deficiencies in internal control to those charged with governance. Now, 265 you will cover in risk assessment and internal control chapter. 265 you will be getting it as part of risk assessment and internal control. Now only we are discussing 260. What 260 says? The auditor shall communicate clearly with the top management what are the responsibilities of auditor in relation to audit of financial statements, and overview of the planned scope and timing of audit also you should communicate. Further, you should communicate auditor is responsible for giving opinion. Audit duty will not relieve the management of their responsibilities. Auditor will only give opinion. Auditor will only do audit. Management is the one primarily responsible for design and implementation of controls. Management is primarily responsible for prevention and detection of fraud. Management is responsible for preparation of financial statements. You should communicate to management all this as per SA 260. And why you have to communicate? Because you have to obtain from the top management whatever information relevant for audit. And what you have to communicate? Timely observation arising from audit. Now the question is, first of all, who is those charged with governance? Who is those charged with governance? Suppose I am doing audit of a partnership firm where there are 3 partners, no staff, no employee, nothing. They are only management, they are only TCWG. Because these are the 3 people who are managing the entire company, who are participating in every FIR of the company, and they are the one who is taking decisions also. What is meant by those charged with governance? Governance means what? Those who are accountable. Those who are accountable. Those who are having ultimate authority. Accountability and authority. These people are called as those charged with governance. Charged with means what? Those responsible with governance. Governance means what? Authority. Not only authority, but also accountability. Able to understand? Accountability and authority. Whoever is having these 2 functions, they are coming under governance part. Now, in a very big company, there is something called top management, there are middle management, there are low level management. These 2 people are simply called as management, whereas these people are referred as those charged with governance. But remember, management means everybody will come. General word, management is a general word. Everybody will come as part of management. But when I say those charged with governance, only top management will come. Able to understand? Generally, who is management in the company? Everybody. Every employee, every officer, every director, everybody is part of the management of the company. Because directors are managing the company, you know. But when we specifically say those charged with governance means who? Top management. Here, the standard is talking about what? What are the communications the external auditor shall make to top management of the company? What communications he shall make? First, he should communicate what are his responsibilities. He should communicate overall planned scope and timing of the audit, that I'm going to cover all these areas in the audit, and I'm going to do audit for 45 days. Getting it? And I will only give opinion on the financials. And my audit will not relieve your responsibilities. I should tell the management that you are responsible for all this. They should acknowledge it and then give you a letter. That's why we send engagement letter to them. We send an engagement letter. In that we mention what is the purpose of audit and what are our responsibilities, what are their responsibilities, and we will sign and send them. They should sign and send back. And they should give a representation letter, MRL, management representation letter, acknowledging their responsibilities. Correct? Have you obtained MRL when you're doing audit? What is that MRL contains? MRL contains a declaration from management that we are responsible for preparation of financial statements on going concern basis. We are responsible for selecting and applying appropriate accounting policies in a consistent manner. We are responsible for preparation and presentation of the financial statements as per applicable financial reporting framework. We are responsible for designing and implementation of internal controls in the company so as to prevent and detect fraud and error on a timely basis. We are responsible for so many things like that they will mention in MRL letter. Have you seen that? You need to get that. Next. Ultimately, the standard another objective is promoting two-way communication, effective communication between the auditor and top management. So, in a big companies, those charged with governance means top management. If at all they are having audit committee is primarily coming under those charged with governance. Are you clear? More clearly, those charged with governance means what? Those who are dealing with accounts and audit related functions. Those who are dealing with accounts and audit related functions, these people are simply called as those charged with governance from auditor point of view. So because these are the people like CFO, general manager, finance head, whoever it is. Getting it? Now what auditor shall communicate? First, auditor shall communicate responsibilities of the auditor. What responsibilities? Your responsibility is only to give opinion, and your responsibility does not relieve management from their responsibilities. Management responsibilities are different. For that, management is continued to be responsible. And what is the planned scope and timing of the audit? What is the scope of audit? What are the branches that you are going to cover? What are the offices that you are going to visit? What are the factors that you are going to visit? How many days you are going to do the audit? Planned scope and timing you should communicate at the beginning itself, so that company will make arrangements. Next. Significant findings from the audit. What are, they may ask you this question, SA 260. Write about significant findings from the audit that are to be communicated with those charged with governance as per SA 260. Then you need to write any 4 points here. Getting it? Like any significant difficulties you faced in audit. Like suppose you are doing audit of this company, at some purchases or at sales or some payments, you felt so much difficulty for getting evidence. So that significant difficulty you can share with the company. Now in pronouncement, what are significant difficulties? Breakup is given. What do you mean by significant difficulties? Getting it? In fraud chapter also, significant difficulties point is it is discussed in a different way. Getting it? Management is delaying continuously to give the information. Management is putting pressure on the auditor to complete the audit within so and so time. These are all difficulties in audit. You can communicate all these difficulties to top management. Next, circumstances that affect the form and content of the audit report. The moment you decided to give modified opinion, the moment you decided to use key audit matter, the moment you decided to use emphasis of matter, other matter paragraph, those circumstances you should communicate with top management. Any other important matter relevant to the oversight of the financial reporting process, any other information which you think is important for top management, and written representation auditor is requesting. Wherever you want written representation, that you should communicate to top management at the first itself. Able to understand? So that's it. This is the main important question in SA 260 chapter, SA 260 standard. Clear? All of you? Next. Almost we have covered 11 standards. If you observe, we have covered approximately 11 standards. See what are all that we have covered? 700, 701, 705, 706, 720 we covered, 299 we covered, 600, 610, 620. Remember? 570 is over, 260 is over. Now what is pending is 710. What else is pending is 710. Next. After that, I will go to company audit. Actually, if you look at ICI audit report chapter, it is hardly covering 5 or 6 standards, not 12 standards like how I am covering here. Getting it? SA 710. Just 2 minutes. Okay. SA 710, comparative information, corresponding figures and comparative financial statements. See, in India, comparative financial statement concept is not popular. Okay, what is popular is corresponding figures. In fact, this is what in law and regulations we follow. We don't have the concept of comparative financial statements in India. Maybe in non-corporate entity audits, comparative financial statements concept might have been there. First of all, what is comparative information? What is corresponding figure? And what is comparative financial statements? You need to understand the difference. The difference is here. Comparative information means what? Very simple. If along with current year figures, if previous year figures are also given, this is called basically comparative information. Now, what is the nature of comparative information? What is the nature of comparative information? What is the nature? If you ask me, the nature is broadly 2 types. It may be corresponding figures or it may be comparative financial statements. How the comparative information is given? Is it only a corresponding figure in the last year or is it for the purpose of comparative financial statements? The difference exactly means, in case of corresponding figures, we don't give opinion on corresponding figures. We give opinion only on current year figures. Auditor opinion does not deal with corresponding figures. Suppose you see Tata Motors audit report. We have audited the financial statements of Tata Motors Limited for the year ended 31st March, comprising balance sheet P&L. In our opinion, the aforesaid financials are showing true and fair view, we said. Our opinion deals only with the current year figures. Our opinion do not deal with the corresponding figures. Yes or no? Now, what is comparative financial statements? When I say in our opinion, suppose we are talking about current year, we are also giving opinion on previous year figures. Then it is called as comparative financial statements. If auditor's report is giving opinion on all the comparative information, entire comparative information is covered as part of auditor's opinion, then it is called as what? Comparative financial statements. Understood or not? Now in India, in which scenario we give opinion on comparative information? Maybe in special purpose financial statements audits, in special purpose framework audits, you may be giving opinion on all the last year figures as well as current year figures in the same report. Able to understand? That might be, that work is there only in special purpose audits, not in general purpose audit. In all the general purpose audits, whenever we are giving audit opinion on general purpose financials, last year figures are presented only for comparative purpose. Just corresponding figure is presented just for comparison purpose, not for opinion purpose. Auditor's opinion has to give only on the current year. Whatever current year figure is there, next year it is comparative figure, corresponding figure. Next year auditor will not give opinion on current year figure. Able to understand? So look at the definitions. So what is comparative information? First of all, comparative informations are nothing but amounts, disclosures which are there in the financials related to one or more prior period which are presented as per applicable financial reporting framework. Now what is corresponding figures? These are the amounts and disclosures for the prior period which are kept as part of the current period financials. If you look at the current period financials, you will immediately see last year figures, which means integral part, and are intended to be read only in relation to amounts and disclosures related to current period. Last year figure is given just for analytical purpose. Okay, the last year figure has to be read in relation to current year figure. Current year debtors is 100 crore. Last year debtors is 100 crore. Change in, what is the change in debtors? No change. It is not literally no change. During the year completely cash sales might happen, or during the year sales happen, collected amount might be exactly same. So when you are interpreting last year figures, you should not interpret them isolatedly. You should interpret them in correspondence with the current year figures. So that is the purpose of giving corresponding figures. Able to understand? Now, in what level of detailed corresponding figures shall be presented? It is dictated by, the relevance to current year figures. So to what extent? Like example, you see schedule 3. Current year figure, if it is there, if last year column is there, last year figure also we will give. If in respect of a particular item, current year figure breakup is not given, then last year figures also we don't give breakup. If breakup is given for current years, last year figures are also will be given a proper breakup. So to what extent last year figures are presented? What is the in-depth, to what extent or to what in-depth level we will give last year figures? It is decided primarily by current year figures. Clear? Now, what is comparative financials? Comparative financial statements means it's a comparative information where amounts and other disclosures for a prior period are included in comparison with financial statements of the current period. Same definition like corresponding. But if audited are referred in auditor's opinion, which means in comparative financial statements, prior period figures are also referred by auditor's opinion. Whereas in corresponding figures, we don't refer them in our opinion. Yes or no? So opinion of the auditor. The audit reporting differs between the approaches are, for corresponding figures, auditor's opinion refers only to current period. This is what is applicable in Indian framework. Getting it? Or in general purpose framework. For comparative financial statements, auditor's opinion refers to each period for which financials are presented. Is this there anywhere in India? Like, have you seen anywhere? Like where current year figure, last year figures are given, auditor is giving opinion on last year figures as well as current year figures in the same report. Have you seen anywhere? This might be there in special purpose frameworks, not in general purpose frameworks. Able to understand? So for us, this comparative financial statements concept is not that important, not that relevant. Maybe in some country it might be there. We know, who knows? So we don't know. In some country or in some particular region, this might be there. Remember, the standards on auditing we adopted from international standards on auditing. We as it is adopted. You know that? The numbers are exactly ISA numbers. ISA 200 is here, SA 200. ISA 700 is here, SA 700. Able to understand? So international standards are drafted by keeping in mind customs and generally accepted practices across the world. Clear? That's it. So this comparative financial statement concept is not there in India and not relevant also. Very clear. Next. Now what is the audit procedure? First of all, for comparative information. First of all, what you will do for comparative information? I will verify whether corresponding figures are correct or not by cross-verifying with last year financial statements which are audited. Like current year, they gave me schedule 3. Current year figure is there, last year. Current year I am auditing. Last year I didn't audit. Somebody else have audited. So last year figures, are these figures correct or not? I will check last year financial statements which are signed. So I will cross verify. It is something like opening balance verification. Getting the point? So ensure comparative information agrees with amounts and disclosures presented in prior period. Nothing but compare current year balance sheet with last year balance sheet. Current year balance sheet, which column you will compare with last year balance sheet? Current year, previous year column, you will compare with last year, current year column. Yes or no? And see that accounting policies are applied consistently, and see that changes in accounting policies are appropriately disclosed and presented in the current year. Suppose if auditor identified any misstatement in comparative information, first obtain sufficient appropriate evidence that it is a misstatement. And if auditor has audited prior period financial statements, then follow SA 560 procedure if applicable. SA 560 is subsequent event, some procedure is given. If that procedure is applicable, follow that applicable. If that procedure is not applicable, tell the management to rectify that misstatement as a prior period item. Next. Get a written representation from management that all the prior period items which are disclosed in current year financial statements. So he should get a specific representation regarding any prior period item that is disclosed in current period financials. So management should give a declaration that whatever prior period items were there, they were disclosed separately in the current year financial statements. So get a declaration for that. Audit reporting. With respect to corresponding figures, with respect to comparative information, we don't read more. We only look for with respect to corresponding figures. When corresponding figures are presented, audit opinion shall not refer to corresponding figures at all. We generally don't refer to corresponding figure except in the following. Suppose previous auditor gave other than unqualified, means modified opinion. Suppose if the previous auditor gave modified opinion, then in the current year, in other matter paragraph, in which paragraph? Other matter paragraph, we should tell that prior period financials were audited by previous auditor. The reason why he gave modified opinion, the reason is still prevalent in current year. And current year also we are giving modified opinion. Able to understand? See, very simple. Last year, inventory valuation was not proper. Last year auditor felt it's a material misstatement. He gave a modified opinion in the last year audit report. Now, this year, what should I do? I should see, okay, last year inventory valuation was on cost basis. Current year, what is the basis? I will check. Cost or NRV, whichever is lower. Is it followed properly or not? I will check. Company not followed. Same mistake they repeated even in the current year. Means, whatever previous auditor has commented or gave a modified opinion, the reason is still existing in the current year. And if you think in the current year also that is material, relevant, then you will also give which opinion? Modified opinion. And not only that, in other matter paragraph, last year audit was performed by somebody else, and which opinion they gave, you should tell. If they gave unmodified opinion, say that unmodified opinion. If they gave modified opinion, say that they gave modified opinion. Clear? If the auditor is of the opinion that he has sufficient evidence that a material misstatement exists in prior period which was not addressed earlier in another situation. See, this question has been asked. Getting it previously. Like when auditor opinion or when auditor report shall refer to corresponding figures. Generally he will not refer. However, in the following circumstances he will refer. Circumstance 1, previous auditor gave modified opinion. He will give modified opinion, he left the company. Now, previous auditor gave modified opinion, means some material misstatement is there. See whether that misstatement continued in the current year. Indirectly, previous auditor said, last year closing balance is incorrect. Which means current year opening balance is incorrect. When opening balance is incorrect, current year closing balance is also incorrect. So, when previous year auditor gave modified opinion other than unqualified, nothing but qualified or adverse opinion, check whether that circumstances are there in the current year. So, this is one reason when I will be thinking about corresponding figure. Another reason, when I discover a prior period item, when I discover a material misstatement related to prior period financial statements, or when the prior period financials were not audited. When the prior period financials were not audited, and I need to get an evidence that opening balances do not contain material misstatement. Prior period financials, if at all they were not audited, opening balances, are they correct or incorrect? You should get sufficient appropriate evidence. Suppose if prior period financials were audited, what auditor has to report? Ultimately, what auditor has to report regarding comparative information? If prior period financials were audited, the auditor shall state in his report, where he will state in other matter paragraph, he will state that financial statements of prior period were audited by predecessor auditor, what opinion he expressed, what is the date of auditor's report. Suppose if the prior period financials were not audited, mention that prior period financials were not audited. Where you will mention? Other matter paragraph. So you will mention that corresponding figures are not audited. Getting it? Remember, by giving this disclosure, you are giving disclosure that prior period financials were not audited, right? when you give this disclosure, are you exempted from verifying opening balances? No, you still have to verify opening balances. You still have to get an evidence that opening balances are free from material misstatement. Now you may get a doubt. Sir, when last year financials were not audited, how do I say opening balance is free from material misstatement? Logically speaking, you have to do audit of last year. Able to understand? If previous year financial statements were not audited, you cannot do audit of current year financials without auditing previous year financials. Otherwise, how do I know opening balances are free from material misstatement? There is only one way you do. You verify all the current year transactions and give your opinion. Give your opinion. Mentioning, giving a qualified opinion. How you can give qualified opinion, The financial state, basis for qualified opinion, the opening balances are result of last prior period financial statements which were not audited. We also have not audited them. Subject to this, rest of the financial statements are true, showing true and fair view. Like this, you will give a qualified opinion. Able to understand? So that's it. So like here, comparative financial statements point is not important. Here, this is important. When auditor will refer to corresponding figures. One, when previous year auditor, when prior period auditor gave modified opinion, I will talk about that in the current period. Or when I discovered a material misstatement in prior period audited financials, I will talk about that. Or when prior period financials were not audited, then I will talk about that fact also in the current year regarding corresponding figures. What I should report? If prior period financials were audited, in other matter paragraph, I will mention that they were audited by so and so person. This is the date of audit report. If they were not audited, I should mention that they were not audited. Just because you are giving these disclosures, you are not exempted from opening balance verification. You are continued to liable for opening balance verification as per SA 510. That's it. Clear? So with this, the audit report topic is completely discussed. So with this, audit report topic is completely discussed. But remember, we only covered briefly entire this subject. Entire this chapter we only covered in brief. We didn't discuss any in-depth evaluation. Like you have to read from whatever the material you're following. In-depth reading is important. Getting it? MCQs, correct or incorrect questions, or any way it can come. So approximately it took for almost some 7 or 8 hours. Some 7 or 8 hours it took for us only on audit report discussion. CARO, almost 12 standards we finished. Next. Generally we take with practical questions, additional concepts all together, we take approximately this chapter 20 hours minimum. Not 20, in fact more than that. Next. So we still have company audit. I told that I will discuss company audit, right? In company audit, what I will be discussing is, these are all practical questions in company audit. See, why should I discuss again company audit? I will discuss about branch audit topic. I will discuss about audit of branch accounts. And or should I discuss every provision, or should we discuss any selective provisions? Like in company audit, disqualifications and all were there from CA Inter. Selectively we'll discuss. So where generally students will have, issues. So that we will discuss. Getting it? Rotation of auditors also, I think you can take care, right? Now, appointment procedure I will explain. Appointment procedure broadly I'll explain. Qualifications, disqualifications I'm not involving. Okay. Qualifications, disqualifications I'm not discussing. But I'll discuss appointment procedure. In disqualification, if possible, one provision I'll discuss. Disqualification J. Like any services provided directly or indirectly by auditor which are listed under section 144. What do you mean by directly or indirectly? It has an in-depth discussion. Directly or indirectly means what? So that we may have to discuss. Okay, that I will come later. First I will discuss appointment procedure. What is the appointment procedure? First understand, audit appointment procedure involves two phases. One is, selection process. Another one is appointment process. First, you need to select the auditor. For that, we have a process, then appointment. Selection process is again different for government company and different for non-government company. Appointment process is again different for government company and non-government company. The auditor selection process for government company we don't have in the syllabus. It is governed by C&AG rules. So what is the selection procedure of auditor in case of government company? We don't have in syllabus. That is completely governed by C&AG. What is the procedure for selection of auditor for a non-government company is only covered in the syllabus. Now what is the appointment procedure for government company? Covered in syllabus. Appointment procedure for non-government company is also covered in the syllabus. Now first of all, understand, public sector, private sector, public limited, private limited are different. Private limited company means where the members are limited, where the members are private people. I don't want to open my company ownership to public. Only private people of my choice will become the owner in this company. Then I will incorporate private limited company. If I don't mind, anybody from public can enter into my company ownership. An unknown person, unidentified person, whoever is buying, I don't want to bother. Then I will open which company? Public limited company. Now, whether it is a private limited or public limited, if more than 51% ownership is held by government, central or state or combination of central or state or another government company, then it is called as government company. Wherever major ownership is held by government, it's called as public sector enterprise. It's called as public sector undertaking. We will discuss in PSU audit also this point, but anyhow I'm covering here. Now what is private sector? Private sector may be public limited company or private limited company. Private sector means what? Where government participation is less than 50%. That company which is private sector may be a private limited company, may be a public limited company, may be a listed company. Getting it? Reliance Industries is a public limited listed company, but it's a private sector. ONGC, yes or no? ONGC company is a public sector. It's a public limited company, it's a public sector. Public sector, private sectors are economics terminology. It is not legal term. Public sector means government owned enterprises. Private sector means non-government owned, private people owned. Able to understand. Whereas private limited means ownership is limited to private people. A maximum 200 members. Public limited means anybody can become member. Clear? Now, what is the selection process for auditor? Now, suppose in case of non-government company may be private limited or maybe public limited, maybe listed, anything it can be. Now, in case of non-government company, if audit committee is constituted, first audit committee will select the auditor on suitable basis. Then audit committee will recommend the selected auditor to board of directors. If board of directors agree with that, they will recommend it to members. Members will make the appointment. If audit committee selection is not liked by board of directors will request audit committee to change another auditor. If audit committee decided not to change, no, this auditor, whatever we selected is ultimate, he is very good, we don't want to change. Now board of directors can ignore that and select their own auditor and recommend to members. Whenever board of directors disagreed with audit committee, they need to give reasons in board of directors report. Getting the point? So that is regarding selection process when audit committee is there. If company do not have audit committee, then directly board of directors will select the auditor and recommend to members, and members will take final call. Clear? Now, wherever audit committee is there, it may be first auditor or it may be casual vacancy, everywhere in the selection process, audit committee must participate. The board of directors must consider recommendations of the audit committee before they proceed further. Always they should consider recommendations. Whether you follow that or not, leave it aside. But you must consider, board of directors must consider audit committee recommendations. Clear? Next. So that's regarding selection process. Then appointment process. This is discussed separately for government company, discussed separately for non-government company. For government company, first auditor selection is first auditor process is different, subsequent auditor process is different. For non-government company, first auditor is different, subsequent auditor is different. Who is a first auditor? If the auditor appointed for the first year in which company got incorporated, then we call him as first auditor. Who is subsequent auditor? Other than first auditor is a subsequent auditor. Getting it? Now, year of incorporation means what? The first year of incorporation of a company can be up to 15 months. The first year of a company can be up to 15 months. Maximum duration for a company is how many? 15 months. Suppose if the company is incorporated during January, February, March. Within these 3 months, if a company is incorporated, they will not close books of accounts by 31st March immediately. They can go close by next year 31st March. So, the financial year can be more than 12 months, but up to 15 months. And remember, the financial statements must be closed only on 31st March. If at all a company want to close financial statements on some other date, they need to get approval from MCA. Getting it? All of you. Now, so government company, first auditor procedure. Now you see here, in these questions, what mistakes students will make is, suppose the first auditor of government company was appointed by C&AG or board of directors. The first auditor of government company was appointed by board of directors. This is a question they gave. Now how will you write the answer? The first auditor of government company shall be appointed by C&AG within 60 days. Only this they will write. But actually you should write continuation within 60 days from the date of registration. If C&AG fails to do so, then board of directors will appoint within next 30 days. If board of directors fails to do so, then members of the company at an extraordinary general meeting shall appoint the auditor within next 60 days. Up to here everybody will write. Next point also you should write. That point many will skip. The auditor appointed shall hold office until conclusion of first AGM. Until conclusion of first AGM. So conclusion of first AGM, what many people will miss. They may write this word. The auditor shall hold office until first AGM. That's wrong. Until conclusion of first AGM. This point many students will ignore. Now coming to subsequent auditor of government company. Subsequent auditor shall be appointed by C&AG only within 180 days from the commencement of the financial year, and this auditor shall hold office until conclusion of next AGM. What is meant by holding office? Nothing but position. I must hold that position of auditor. Office of auditor means what? Position of the auditor. Clear? Next, non-government company. The first auditor shall be appointed by board of directors within 30 days from the date of registration, incorporation. If board of directors fails to do so, members shall appoint within 90 days. Actually 90 means from the date of incorporation you should count. Getting it? Nothing but next 60 days. Getting it? But in exam you should write the word 90 days only. Even in MCQ you should select 90 days word only. Able to understand. So this auditor shall hold appointment until conclusion of first AGM. Now, subsequent auditor of a non-government company. Subsequent auditor of a non-government company shall be appointed by members at AGM. And that auditor shall hold up to conclusion of 6th AGM. Now, let's see how dates will work. How the dates work. Example, suppose the company is incorporated in 1920 financial year. Company incorporated on 1920. Let us assume 1st July 2019 the company got incorporated. The first auditor was appointed by 30th July 2019. Mr. A was appointed as the auditor. Within 30 days he was appointed by board of directors. Now 1920 year is over. First AGM of the company shall be conducted within 9 months due date. But company is conducting AGM every time June month. Company decided to conduct every time June month. Let us assume 15th June 2020 is going to be the first AGM of the company. Now on 15th June itself AGM concluded. No adjournment. Suppose if adjournment happened, suppose AGM is adjourned to 22nd June 2020, then first auditor appointment is valid up to 22nd June 2020 because adjourned AGM is continuation. AGM is not concluded on 15th June. Able to understand. So 22nd June AGM is completed. Just for the sake of convenience, let us not talk all adjournment and all. So 15th June, every time they will conduct AGM. This is first AGM of the company. Now, until this, Mr. A appointment is valid. Now, Mr. A left the company. Now, the company appointed Mr. B. The company appointed Mr. B. Now, his appointment is valid up to conclusion of 6th AGM. From this AGM, 6th AGM. Now, here there is a question. Can auditor be appointed only for 4 years? Can auditor be appointed only for 3 years? No. Not permitted. Appointment procedure only given under the Companies Act, and the validity of the appointment is explained by Companies Act itself. Companies Act have not given power to anybody to fix the validity of the appointment. Understand? Companies Act itself says the validity of the appointment is until conclusion of 6th AGM. If the auditor don't want to continue, he will resign and leave. Able to understand? So, for a non-government company, auditor appointment is valid until conclusion of 6th AGM from the AGM where he was appointed. And remember, non-government company, only if auditor is appointed in annual general meeting, then only his appointment will go up to 6th AGM. Now, this is first AGM, right? So, he is appointed. First, he will do audit of 2021. First, Mr. B will do audit of 2021. So, 31st March 2021, books will close. Again, 15th June 2021, second AGM was conducted. Compared to this, it is second AGM. Getting it? So, here, annual report, audit report, everything is submitted, everything was fine. Next, immediately, he will start audit of 21-22. 31st March 2022, books were closed and he did audit, everything is over. AGM is also conducted on 15th June 2022. This is third AGM. Then 22-23 he will do audit. That financial year closes on 31st March 2023. Then he will do audit, he will give audit report. Everything is discussed in meeting which is held on 23, which is 4th AGM. Getting it? Now 23-24, same 2024. So 15th June 2024, this is 5th. Then 24-25, 2025, 15th 6th, 2025. So which is 6th AGM. Now you see, he did audit of 2021, 21-22. So 5 financial years he did audit. Able to understand? Like we say, auditor will be appointed for 5 years. That's wrong sentence. Auditor is appointed for 5 financial years. The duration of appointment may be more than 5 years, maybe less than 5 years. Who knows? Suppose here the first AGM is 15th June. Here last 6th AGM is conducted somewhere in September. Duration is more than 5 years. Suppose the first AGM is conducted in September. 6th AGM is conducted in June itself. Then appointment is for less than 5 years. Able to understand? Actual logic is the auditor will be appointed for conducting audit of 5 consecutive financial years. Yes or no? In rotation also, they use the word 5 consecutive years. Year means what? Financial year. That's how you need to interpret. Are you clear? All of you. Now, in companies and all, if you look at notices, they don't say first, 6th, all that. They will say, if auditor is appointed in 31st AGM, his appointment is valid up to 36th AGM conclusion. If auditor is appointed in conclusion of 36th AGM, his appointment is valid up to conclusion of 41st AGM. Are you clear? Now here we have seen the non-government company, all this. Now here one more important question. This question is also asked in final exam. Now before making appointment, what are the declarations that company shall obtain from auditor? What are the procedural formalities or declarations the auditor should give to the company? First one, auditor should give a declaration that he is not disqualified, and another declaration that his audit ceiling limit is not violated. Another declaration about his pending cases against him or his firm or his partners. Getting it? These 3 he should give, and above all, his consent. Yes, I am interested to be appointed as an auditor. Only after you give all these declarations, then only company will recommend your name in the AGM. Then only they will put your name in the notice, which will be sent to the members. Members will come and they will appoint. All of you. Then, what is casual vacancy? Casual vacancy means what? If vacancy is arising in auditor's position, in auditor's office, not on account of expiry of term, but other than expiry of term. Now here, we appointed auditor on 15th June 2020. His appointment is valid up to 15th June 2025. His appointment is valid on 15th June 2025, his term will expire. Then he will leave. That is not casual vacancy. If at all vacancy is arising on account of any reason other than expiry of term, not an expiry of term, before expiry of term, if at all here vacancy comes, we call it as what? Casual vacancy. Now, what is the procedure to fill casual vacancy? See, if casual vacancy caused, company cannot wait up to AGM. If AGM has to be conducted, financials have to be approved. Financials have to be approved means audit must have been conducted. Audit conducted means auditor should be there. Now, auditor left, who will do the audit? Able to understand? So, that's why auditor must be appointed to fill casual vacancy so that he will finish the audit, so that we will approve the financial statements, so that financials will be sent to the people, they will come for AGM. Now, if auditor resigned, there is a condition. In non-government company, if auditor resigned, it must be approved by members at EGM. Yes or no? The appointment must be approved by members in EGM. Now, some questions, some doubt has been asked. Sir, if in the meantime, within 3 months EGM shall be conducted, no. Suppose within next 3 months, if AGM is coming, can we cancel the EGM and directly in the AGM we will approve? No. Auditor should be appointed, no. Audit must be conducted, no. Financials must be audited, right. They should be sent to shareholders. Only then AGM we must call. Correct? If audit must be conducted, appointment must be approved. Whereas here, resignation is the reason. This appointment shall be approved by whom? Members. Where it shall be approved? EGM. So EGM must be conducted even though AGM is nearby. Able to understand? So, for appointing auditor in a casual vacancy caused by resignation, the appointment is compulsory and it must be appointed only in extraordinary general meeting. Just because annual general meeting is coming nearby, you cannot postpone this or you cannot cancel this. First EGM conduct, appoint auditor, then he will do audit, then prepare financials, then send the financials audit report, then members will come for AGM. Until that time his appointment is valid. Now anyhow, so casual vacancy, government company, what is the procedure to fill? Whether it is resignation, other than resignation, whether it is resignation, other than resignation, who shall fill casual vacancy in case of government company? Only C&AG. If they fail to do so, board of directors can fill within next 30 days. First C&AG will fill within first 30 days. If they fail, next 30 days, BOD will fill. And auditor appointment is valid only up to conclusion of next AGM. Now, non-government company, what is the reason? If it is resignation, process is different. Other than resignation, the process is different. But what are the broad reasons why casual vacancy will come into picture? Death of the auditor, dissolution of the auditor's firm, insolvency or incompetency to contract by the auditor, subsequent disqualification. Auditor was appointed but later he was disqualified, removal by the company or removal by the tribunal, removal of auditor. And finally, sixth reason, resignation. So totally broadly, I can classify the reasons into 6 categories. Getting it? The reason why vacancy arises: 1, auditor died in case of sole proprietary concern. 2, partnership dissolved in case of partnership firm. 3, auditor was disqualified subsequently. 4, auditor was removed by the company. 5, auditor became incompetent to contract. And 6, resignation. Now, if the reason is any reason, but not resignation, board of directors will fill the vacancy within 30 days. If they fail to do so, that provision is not given. Getting it? Board of directors must fill the vacancy within 30 days and that appointment is valid up to conclusion of next AGM. No 6th AGM concept. If auditor is appointed in casual vacancy, obviously appointment is valid only up to next AGM. Suppose if it is resignation, board will recommend and conduct extraordinary general meeting within 3 months and appoint the auditor. His appointment is also valid up to conclusion of next AGM. Are you clear? Now, while you are calculating rotation of auditors 5 years, 10 years limit, first auditorship appointment, casual vacancy service period will not be counted. Are you getting the point? When I am acting as a first auditor for a company, so company incorporated, they appointed me as an auditor up to first AGM I served. Later the company want to appoint me for the next 1 term of 5 years. For this company rotation applies. I am an individual, sole proprietary practitioner. Now, if I am appointed for one term of 5 years, total it will come more than 5. Is it permitted? Yes. First auditorship is not counted. Casual vacancy auditorship is not counted in rotation. Are you clear? All of you? That's it. So next we still have to discuss about rotation, and I need to discuss about 140 subsection 4. Appointing an auditor other than retiring auditor. There is a provision. So that I will be discussing. Then I will be discussing branch audit concept, branch accounts and audit concept I will be discussing. Then I think most of it will be done. If possible, internal financial control point I'll discuss. If possible, internal financial controls point I'll discuss. I think internal financial control discussion is there in risk assessment chapter. If that is there, I'll ignore here, or else I'll discuss it here once. If at all comes the time, I'll ignore there. Getting it? So that's it. So we'll continue in the next session. Getting it? So I think we are going on a good pace. No problem. You need to tell me. So is this fine? Is the speed fine? All of you? Fine. See, that's why I made an instructions video at the first itself. Before you come to this, you need to prepare once and then come. I hope we are able to recollect when I'm saying all the things. Fine. Thank you. Go ahead. So we have started regarding, we are discussing regarding company audit, right? And in that, we have completed up to casual vacancy part, right? If you recollect, we have covered up to casual vacancy part. Now, we still have to cover in the company audit 140 subsection 4, which I told I'll cover, and branch accounts concept related thing I told I'll cover. Now, who can appoint branch auditor? First of all, understand, is it compulsory for any company to maintain books of accounts at branches separately? Is it compulsory? No, it's not at all. Only in banking industry, that too in nationalized banks, they are maintaining branch accounts separately. But rest all other organizations, whether insurance companies you take, even our normal manufacturing trading companies you take, they are not having any branch accounts separately. Suppose Avenue Supermarts, nothing but DMart. DMart is having across India 200 locations. And none of these stores will maintain separate accounts. The stores are there only for billing. Only billing will happen at stores. But accounting is completely centralized. When accounting is centralized, there is no concept of branch accounts separately. Maybe at the stores, they will have to maintain petty cash register, where every day small operating expenses they'll be incurring, and that they will be recording, that too manually, somewhere in the Excel sheet or somewhere in some software they'll be recording. Only that summary sheets they will forward to the central office periodically. So only except that expenses related registers, there will not be any other record which are maintained at branches of any organization. Now when there is no question of branch accounts, generally the question of branch audit do not arise. When generally branch statutory audit will arise if the branch is maintaining separate accounts for their own operations. Only then the question of branch audit will come into picture. So that is a primary factor for applicability of branch audit. Now, who will do branch accounts audit? If at all branch is maintaining separate accounts, who will do branch office accounts? Same, if the company has not appointed any auditor separately, whoever the auditor appointed for company as a whole, he will only do branch audit accounts as well. He will only do audit of branch accounts. We should clearly tell him at the time of appointment that we are not going to appoint branch auditors separately. The company operations are at this head office, these operations, at branches, these operations, and you have to do audit of entire this, all the accounts. We need to tell him clearly. Only after he understands his scope of work, he will give acceptance. Getting the point? Suppose if the main auditor told at the time of initial discussion itself that so and so branches I can't visit, please make an alternative arrangement for conducting audit of those branches. Then the company has to look for branch auditor. Getting it? Then the company will look for branch auditor. Then any auditor, whoever is resigning in that nearby locality, the company will appoint them as a branch auditor. So who can perform branch audit? By the main company auditor himself can perform, or another chartered accountant who is having certificate of practice, same qualifications. For branch auditor also, it's a stat audit, first of all understand. But for that branch, separately another auditor we are appointing. Same qualification, whatever qualifications that are applicable for main auditor, same qualifications will apply even for branch auditor. Suppose if the branch is situated outside India, company auditor can do, or we can send another chartered accountant appointing him as a branch auditor for that foreign branch, or we can appoint another accountant, whoever is qualified to act as an auditor in that locality, in that nation. Getting it? Audit is universally same. What he need to do, he need to just check the accounts and talk about true and fair view. And if at all he says everything is true and fair view, we will adopt to that branch. We will merge those branch accounts in our overall preparation of financial statements as per our Indian GAAP. Able to understand? That's it. So the audit of branch accounts can be performed by the main auditor of the company or another chartered accountant, or if the branch is situated in outside India, we can have third option. We can appoint another auditor as per the law of that country. That's it. Now, what is the reporting responsibility of branch auditor? Same responsibilities like main auditor. Whatever reporting responsibilities the main auditor has, same responsibilities he has. Like he should also give audit report. It should contain 143 subsection 3 checklist items. It should contain CARO reporting requirement. Whatever reporting requirements applicable for company as a whole, all these reporting requirements are applicable for branch auditors as well. That's it. Now, what should be the coordination between principal auditor and branch auditor? That alone can be asked. Getting it? So whatever SAS 600 answer is there, that answer we have to write. With this, the concept of branch audit is completed. Able to understand? Next. Now, there is another section which is one confusing section, section 140 subsection 4. What is this 140 subsection 4? What it talks about? It talks about appointment of an auditor other than retiring auditor. What is the procedure for appointment of an auditor other than retiring auditor? First of all, what do you mean by retiring auditor? In order to understand the terms rotation of auditors and all these concepts, you need to understand certain basic terms. Retiring auditor, outgoing auditor, incoming auditor, retiring auditor, outgoing auditor, incoming auditor, and you need to understand the word called what is reappointment. Getting it? Now, suppose we appointed an auditor in 31st AGM of the company. His appointment is valid up to 36th AGM. His appointment is valid up to conclusion of 36th AGM. So that is the appointment validity period. Now, on this date, if the auditor, now on this date what happens? His term will expire. On expiry of term, whoever existing auditor is there for the company, we call him as retiring auditor. We call him as what? Retiring auditor on expiry. Suppose company decided to reappoint him. Then that phrase, retiring auditor reappointed, that phrase will come. Suppose if the same auditor is once again appointed in 36th AGM, his appointment is valid up to conclusion of 41st AGM. So here we call it as retiring auditor is reappointed. Able to understand? Suppose company decided not to appoint him. Retiring auditor is there. Let him complete the service. 36th AGM or 36th AGM. Let AGM complete, he'll vacate. We will appoint somebody else. The company decided. Then we call him as retiring auditor, not reappointed. What is it called as? Retiring auditor was not reappointed. Simply he is outgoing auditor. He left the company now. Outgoing auditor. Able to understand? Now, what do you mean by casual vacancy? Before conclusion of 36th AGM, in between he want to leave. Before expiry of term, if the auditor is leaving because of any reason, then we call it as casual vacancy. On expiry of term, if auditor is vacating, that is not treated as casual vacancy. Understood or not? Now, generally, what is the procedure? Suppose we don't want to appoint. What is the concept that we are discussing? We want to appoint an auditor other than retiring auditor. Generally, what is the procedure? Suppose we appointed Mr. A, 31st AGM. Up to 36th AGM conclusion, he will be our auditor. The company board of directors originally decided, let us go from 36th AGM to 41st AGM, Mr. B. What is the procedure? They will first inform the audit committee that, sir, we want to change the auditor. Audit committee will recommend one name, Mr. B or Mr. C, whatever. Board of directors will finalize it. They will inform to members, and members will come into the 36th AGM, and he will be appointed. When another auditor is appointed, this auditor, whoever existing, was not reappointed. Able to understand? And that's how generally happens. Where is the question of special notice? Are you getting my point? 140 subsection 4, if you look at, it starts with the discussion in order to appoint an auditor other than retiring auditor. If the company want to appoint another auditor other than retiring auditor, special notice is required. Have you seen that? Any of you remember the provision? Which question in this? I think I rechanged the order. It's okay, so the the answer starts with the retiring auditor. If a company don't want to appoint retiring auditor, 26th. Yeah, it's got 12. So if a company want to appoint another auditor, it starts with this word. Special notice shall be required. Special notice shall be required for taking a resolution at AGM, appointing a person as auditor other than retiring auditor, or providing expressly that retiring auditor shall not be reappointed. So where is the question of special notice in our discussion? Board of directors originally decided they want to appoint another auditor. So naturally, shareholders, we will recommend the shareholders in the notice that some other auditor is going to be appointed. And obviously, shareholders will come and pass ordinary resolution and over. Where is special notice concept here? Nothing. Suppose, take the situation. Suppose, company, existing auditor is there. He is about to retire on 36th AGM. Company decided to reappoint. So board of directors decided the same auditor will be reappointed, and they all send a notice to shareholders. Now I'm a shareholder. I'm a key shareholder having 1% voting power in the company, or I'm a shareholder having 5 lakhs paid up capital in the company. Getting it? I'm a key shareholder. Simply speaking, I'm having 1% voting power in the company. I received the notice and I saw and I felt shocked that same auditor is going to be reappointed. So directors proposed same auditor name to be next term also. For the next term also same auditor name. But somewhere I felt this auditor was involved in some scam, or this auditor was not good. The quality was not good. Something I felt. I don't want this auditor. But I'm a key shareholder. So Companies Act gave me a power to issue special notice. Companies Act gave me a power to issue special notice. So I got an ordinary AGM notice which contains information that the auditor is going to be reappointed. If I don't have any problem, like everybody else, I will also go to AGM, I will approve, and Mr. B is appointed, or Mr. A will be reappointed. But I don't want this fellow. So what I will do? I will issue a special notice to the company. I will issue a special notice to board of directors. Dear board of directors, your decision to reappoint our existing auditor is not correct. The following are the reasons. Now board of directors, what they need to do? Whenever a company receives special notice from shareholder, they need to circulate that notice to every other shareholder. Now, every shareholder has already received at least 21 days before AGM notice, which contains same auditor will continue. Now, within 14 days, before 14 days of the AGM, every shareholder got another notice from the company. Special notice issued by one key shareholder. What that says? Don't appoint Mr. A. Don't reappoint. Are you getting it? Now, that special notice is forwarded to Mr. A also. Whoever is auditor who wanted to be reappointed. Now, this fellow also gave a reply. That's called written representation from the auditor. So, Mr. A gave written representation about the allegation made by the shareholder. Now, that allegation, that reply, that written representation, at least 7 days before AGM shall be circulated to everybody again. Now, everybody has 3 documents. First document, company proposing Mr. A will be our next auditor, same auditor will be reappointed. Another notice, special notice opposing this because of so and so reason. On this, auditor gave his representation. Now shareholders will come and they will take whatever call which they want. Suppose if they believe that special notice, shareholders, they will pass a resolution that retiring auditor will not be reappointed. In that case, company will find an alternative name by that time and they will recommend that name and they will appoint. Able to understand? That is how the process is. So here, special notice is like what? It's an objection from shareholders. Able to understand? Suppose, that's what, no, key shareholder. Only key shareholders can send. Key shareholders? Yes, special notice has to be sent to the company, board of directors, and board of directors will circulate to everybody. Able to understand? Hey, this is there in company law, man, CA Inter, meetings chapter. It's okay, tell me. Very simple. I am a shareholder, received notice that existing auditor will be reappointed. I don't want to do that. I don't like him. Me and group of another shareholders, we all joined together, formed as union. One person voting power we have. We wrote all the reasons, signed a notice. We sent that notice to the company that don't reappoint. That is called special notice. Able to understand? Now company, what they need to do? They need to circulate this notice to all the shareholders. In AGM, you have in CA Inter A meetings chapter, who can send special notice? Who should bear the expenses of special notice? Everything is given. What is the note? What is special notice period? 14 days, all that. Getting it? All of you. So that is when. Suppose if the board of directors voluntarily decided, company itself decided, let us go with Mr. B. They sent a AGM notice that Mr. B is our next auditor. In that case, should I send a special notice again? No need, because company already changed the auditor. Even in this case also I may send. If at all Mr. B proposed appointment is not valid, if the proposed auditor is not correct, I may send a special notice here also. But generally, if company itself wanted to change the auditor, company itself decided, directors itself decided to change the auditor, in that case I need not oppose. So they will directly recommend new name, I will get AGM notice, I'll go to AGM, I'll approve it. That's it. Able to understand? This entire concept do not apply for government company, because for government company, selection process, appointment process is completely driven by C and AG. That's it. Next. So with this, company audit major portion is completed. Major topics we have covered. Then apart from this, what else we have important provision? So do you have any other provision to be repeated, like any of you? Just as a revision. So we covered appointment process broadly. Yeah, disqualification I told, right? I will read some disqualification, right? Yes. So that is bit critical disqualification, that I will cover. I will cover that disqualification. So what is this disqualification? Any person who directly or indirectly renders any services as specified in 144 to the company, holding company or subsidiary company. Here only 3 companies are covered if you observe. Getting it? And if you observe business relationship point, no, there are 6 companies which are covered. Business relationship point. They cover the company, holding company, subsidiary company, associate company, subsidiary of the holding company, subsidiary of the associate company. Whereas in indebtedness, share interest in company, guarantee given to company, only 5 are covered. Associate of subsidiary will not be covered, and you need not observe that much. That will not be tested in exam. Getting the point? This is again inconsistency in lawmaking process. Why this kind of inconsistency came? Because these provisions are drafted at different points of time by different people. Getting it? If I ask you who according to you who are relatives, you will give some 3 or 4 parties name. If I ask another person who is relative according to you, you will give some 7 or 8. If I ask another person who is relative, he will define his own definition. Correct? So same way, when the person is making the law, for him, he feel whoever is significant, whoever can influence the company, for him also the number will change. Getting it? If you ask me, holding company, subsidiary company are relevant for me. I don't think associate company can influence. Really. Able to understand? So we can easily define related party in different circumstances in different ways. So there is no logic. Why for business relationship 6 companies covered? Why for this particular prohibited services 3 companies covered? Why for some other case 5 companies covered? No logic behind this. Able to understand? No. So like what is this point? If any person directly or indirectly rendering any services Any services specified in section 144. 144 talks about prohibited service by statutory auditor of the company to the company. 144 talks about prohibited services to be rendered by statutory auditor of the company to the company. So any person means who here actually they're talking about statutory auditor. If a statutory auditor or if the proposed auditor who directly or indirectly renders any services to the company or to the company's holding company or subsidiary company, then that auditor, then that proposed auditor is disqualified. He cannot be appointed as an auditor. Now, what do you mean by directly or indirectly refers to? This itself can be asked as a straight 3 marks question. Getting it? A straight 3 marks question can be tested from this, or MCQ may be tested from this. In case of an individual, suppose if the auditor is a sole proprietor, if the auditor is a sole proprietor, either himself or his relative, see if he is providing himself no prohibited service, it is direct. Through relative, through any other person connected with that individual, through any other entity, this is indirect. Able to understand? How an individual can provide indirectly accounting services to the company. See, what are all prohibited services? Bookkeeping service, internal audit service, management services, and investment advisory, investment banking, actuarial services, and design and implementation of financial information system. That's it, broadly. Now, so these are indirect, and whereas this is direct. So through his relative, relative means defined under Companies Act, that relative definition. Any person connected or associated with such individual. With such individual means, suppose I'm having a company where I am a director. Getting it? So in that company, there are another director. Or I have entered into a partnership with another firm. I'm a sole proprietary practicing firm and I am appointed as an auditor for one company and I'm also a partner in another firm. Now those partners, I'm a partner in another firm, right? Those partners are connected to me, associated with me. Able to understand? If they provide also, it is called as indirect way of providing, or through any other entity. Through any other entity whatsoever. This actually has to be read continuation. Through any other entity or through any other entity in which such individual has significant influence, such individual has control, or whose name, whose trademark is used by such individual. Able to understand? So if I provide any services through entity, some other entity, example company, in which I am a member in the company, I am having more than 20% voting power, or I am having more than 50% voting power in that company. Even if that company is providing accounting services to the company where I am acting as an auditor, that's called indirect way of rendering. Able to understand? All of you. So if I am an individual, if I provide directly to the company prohibited services, I am disqualified. If my relative provided services to the company, I am disqualified. Or if anybody else, whoever is connected to me, associated with me, provided to the company, I am disqualified. Or if some other entity in which I am having ownership, I am having influence or control. If that company or if that firm or if that LLP is providing 144 services to the company where I am acting as a stat auditor, then also I am disqualified. Able to understand? All of you. Next, same way for firms also it is defined. Same way for firm. Now what do you mean by that? If the firm itself is directly providing bookkeeping, underwriting, all these services, disqualified. Or through any of its partner. Firm is actually the auditor and the partner is providing bookkeeping service in his personal capacity. That is indirect way. Or parent, subsidiary, associate entity, or through any other entity. Parent, subsidiary, associate entity, or through any other entity in which the firm or any partner has significant influence or control, or whose name, trademark, or brand is used by either of the firm or of the partners. It's like, what is this? See, what is parent, subsidiary, associate for partnership firms? LLPs. LLPs will have holding subsidiary relationship, not normal partnership firm. LLPs will have holding subsidiary relationship. LLPs can have associate relationship. And remember, in an LLP, a company can become a member. In a normal partnership firm, in LLP, another LLP can have ownership. Able to understand? Suppose we have an LLP, ABC & Co. LLP Chartered Accountants, Mr. A, Mr. B, Mr. C are the partners. Now this ABC & Co. LLP invested in another LLP, ABC Consultancy LLP, which provides bookkeeping services, all that. Our LLP is having ownership in that. So that is an entity indirectly providing services to the company. Able to understand? More about this, we will discuss little bit detail in professional ethics. Corporate form of practice, we have a discussion. So there we will be discussing. Able to understand all of you? That's it. So here we have given immediately questions, and at the end of the chapter also we have given practical questions, and even in the question bank also we have given questions. Getting it? Like if at all you're taking my book for reference sake, getting it? In that case, if company audit is nothing but chapter number 1, audit report is chapter number 2. At the end of each chapter, we have given practical questions. And in the chapter also, we have given so many examples, discussions, getting it. Along with that, question bank we have, in that 1 and 2 together, one chapter in question bank. Like audit report and this company audit together. Approximately here we have covered, I think 25 to 30 questions plus, definitely for sure, practical questions. This will cover past 3 examinations, all that. So as a whole, you will be finding 60 plus practical questions. I'm not talking about main material. Main material is concepts, like whatever I'm showing is concepts. These concepts are also arranged as question and answer format. And between examples are also given. Getting it? These examples are drafted in the same manner how you should present in the examination. Remember, when you are presenting an exam, key points you should always underline. Able to understand? Side headings, and along with that, key points you should always underline. You should always write complete answer, not just correct answer. Complete answer fetches more marks. Able to understand? All of you. Whenever you're talking about, suppose business relationship point is there. If any person or LLP is having any business relationship with the company, holding company, subsidiary company, associate company, subsidiary of the holding company, subsidiary of the associate company, that entire list you should write. Because in suggested answer, entire provision will be given. Whereas your answer is not having entire provision. Examiner, what he will think? Because he don't know anything about the subject. So, the answer is this much and the student only wrote half of it. So, naturally, he will not give half mark. He will not give 50%. He will give 25% only. Able to understand? How papers will be valued? Once again, I'm telling you. If you write 100% complete correct answer, you will get full marks. If you write 75% of the answer correctly and completely, 75% of the complete answer you wrote, you get only 50% marks. If you write 50% of the complete answer, you will get only quarter mark. If you write only 1/4, you will not get mark at all, 0. Able to understand? So 25% margin will be there whenever you are not writing 100% accurate answer. If you write 100% accurate complete answer, 99.99% cases you will get full out of full. Getting it? All of you. See, if the answer is 100% matching, I don't have judgment. I'll directly put full marks. If at all the answer is not fully matching, then my judgment comes into role. Getting it? So as per my judgment, I'll allocate marks. That's it. Next. So with this, as a whole, mainly this company audit is completely done. Even ceiling related point, when I'm discussing ethics chapter, no, there once again I'll cover ceiling related discussion. Clear? Next. So now we will directly go with so we have completed company audit report. Now directly we'll start with professional ethics, and after that I will go with audit committee discussion. Getting it? Then we will discuss peer review and quality review. Then I will discuss PSU audit, bank audit, NBFC audit, insurance audit, then risk assessment. So after we complete all these mainly, then we will discuss about standards. Then finally I will come to fiscal laws. In fiscal laws, no, I will not talk about clauses. I will talk about 3CB, 3CA form. I will not talk about 3CD checklist. Fiscal laws, if you look at income tax audit chapter, tax audit, that one, it is divided into 2 segments. 3CA, 3CB, one segment. 3CD is another segment. Getting it? 3CD will consist of 44 clauses checklist. So what auditor has to fill the data. So on that also in examination they are testing questions which is not correct actually. Which is not correct. In fact, I've seen some MCQs which is asking what is clause number of so and so. They give the entire matter and they're asking you what is the clause number. Is it 27th clause or 26th clause? Some stupids are even, their hypocrisy even so high that they're testing is it 26 clause here, 26 clause B or 26 clause C, 26 clause D. Getting it? Like I told, right, some mentally retarded people are also there in paper setting department. Getting it? So what we can do? So these kind of people, as long as they're we have to mug up all these things. But I'm telling you, fiscal laws, though you try your level best, it will be a bit difficult to remember the clause numbers. At least if you try clause numbers, subclause numbers is extremely difficult. Because certain clauses will have subclauses of approximately 12 or 13. Which one you'll remember? Professional ethics clauses itself people are unable to remember. Which is most important? Think it. Next. So professional ethics actually, so this kind of colored smart notes we have made. See, generally, so we call it as smart notes. See, this is not something I call it as short notes. This is not a short notes. Getting it? I don't believe in short notes or flowchart material, because the problem with flowchart materials and short notes is you are able to understand or you are able to revise it, but the problem is you are not able to present it on the paper. Students, most of them are only looking at until what, like, do they understand? Do they understand? Do they understand? Only to that extent they are thinking. But what you need to question actually, after reading all this, can I be able to present in exam? Because that is what ultimate output, right? You should always work toward output oriented. So you should always work for that ultimately. After reading from this, can I able to write entire sentences in full-fledged sentences in exam? Because remember, icai suggested answers are completely based on icai material. From icai material, only suggested answer will be developed. As it is, they will copy paste in suggested answer. The content and icai material. And when that is the scale of the content, and when you are reading from a flowchart material, see, generally, if you read that content, you produce 70% of it in exam. If you are reading 30% already, how much you will produce? Able to understand? So the terminology you are unable to produce in exams because you are reading from cut short format. The moment you read from short sentences, flowchart material, you can't retain, you can't get the command on terminology. This is a problem which everyone says. In audit, I'm unable to get command on terminology. The reason is you are not reading full-fledged sentences. See, big definitions, I'll just like that, I'll speak all the definitions easily. The only reason is, whenever I read, I only read from full material. Whenever I read from full material. Because when you read from full material, every time you read the definition completely, naturally, some sort of expertise will develop in that. And moreover, I'm teaching also. So that is also one reason why I'm having more grip. So if you read from short materials, you will only produce 70 to 60% out of it. If at all the original sentence is 100 and your short material is already 50, and out of 50 you are presenting 60, means 30% you are presenting. So 30% compared to suggested answer 100, think of the marks that you are going to get. Because the person who is valuing the paper, he will not understand either suggested answer or your answer sheet. He will neither understand both of this. He will look at the suggested answer, look at your answer book and evaluate accordingly. Best example, if I was given FR valuation, or if I am given with some SCMP valuation, suppose if I applied for institute for paper valuation, I got SCMP subject. Now tell me, do I know SCMP means? Obviously no. I didn't remember. Now your paper only came to me. Now what I will do, how do I evaluate? Since I don't know subject anything at all, how I do evaluate? I look at the suggested answer and look at your answer. If it is matching, I'll put marks. Otherwise, I'll deduct the marks. Getting the point. So this is the loophole. So recognize the loophole and accordingly prepare. Next. And even like one more important thing, when you're watching any videos in YouTube or anywhere else, watch them at standard speed. If you're watching them at higher speed, what happens is you can't really understand the things properly. You just listen. You just get the satisfaction that you listened. I feel so stupid. Some people are recommending 2 times views. Watch it 2 times. What you're going to get? You listen a song at 2 times. You're listening, no, every instrument, every sound you're listening, yes or no. But the thing is, you will never get that emotional connect. You understand, see, why you people are so fascinated about face-to-face classes? Because to get some emotional connection. Getting it? Now, when you're watching the classes in video mode, what happens is, suppose whatever I'm speaking, if at all I put a layer and I just change the speakers into 2 times playback speed. What happens? Tell me. Will you understand? You listen. Same thing you're doing in YouTube. Same thing you're doing in actual classes. You're trying to finish classes as soon as possible, but you're forgetting that class is the way to learn. You're only treating it as listening, not learning. Since here you're listening at standard speed, because whatever the speed at which I'm speaking, you're also listening at the same speed. The retention level will be high. If at all you're trying to listen at a higher speed than what I speak, obviously your retention will be low. These are the mistakes which you do. Next. So ethics, directly I'm going to the CA Act. Okay. Directly I'm going to CA Act. Objectivity, independence, professional behavior, professional competence. Do you think I have to teach all this? CA inter-syllabus, no? Threats to independence, self-interest threat, self-review threat. This is completely CA inter-syllabus. We discussed this in Nature, Objective and Scope of Audit, first chapter. And by the way, for you, this nuclear concept is removed. Getting it? For November 2022 exams, nuclear concept is not applicable. Next, write about membership of the institute. This is smart notes. This can also be downloaded in the same application. Yesterday I told, right, there's an application. In that also you can download this. Full notes is not yet uploaded. I will upload by the time we complete our revision lecture. Getting it? So same there itself we will find. Next. Register of members. Write about membership of the institute. First of all, what is the membership? Once you qualify CA final examination and you completed level 2 ITT and orientation, all that, nothing but GMCS, whatever. Once you complete them, you are eligible for membership of the institute. You are eligible for membership of the institute. Now, in order to become a member, there are some disqualifications. If at all you do not come under those disqualifications, then only you can become a member of the institute. Now, membership is not an automatic process. First of all, understand. You need to manually apply for membership in self-service portal. You need to manually apply for membership in self-service portal of the ICI. Like so, once you pay membership fee, you will get certificate of membership. Right now it is 6-digit number. Right now the membership number is 6-digit number. And remember, just because you are having membership number, you cannot practice. You cannot practice. By the way, the practice means our practice spelling is CE, not SE. Getting it? So practice means COP, certificate of practice means CE. Getting it? It means practice means it's a license. It's nothing but a license. Okay, you can start your profession or a business, getting it, of rendering professional services to a clients, prospective clients. So that's a license given to you. Doctor in practice, lawyer in practice, a CA in practice means it's a license, nothing but license given by that corresponding regulatory authority. For us, ICI will give this COP. And COP will have same membership number. What is COP number? Certificate of practice number. In ICI, we are following the membership number itself as a certificate of practice number. Getting it? So the member has to apply certificate of membership separately, and for along with that, if you want to pay COP fee, you pay COP fee also. Registration fee will be there, along with that annual fee will be there. So that is COP. Now, originally, first time when you apply for COP, first when you get the membership and got the COP, you are first called as, yes, you are associated with institute. You are associated with institute, ACA. After 5 continuous years of practice, continuously 5 years of practice without a break. Without a break, if you are in continuous 5 years of practice, then only ACA will become FCA. Just because you are having 5 years membership, that doesn't mean you will become FCA directly. Able to understand? You must have COP continuously for 5 years. If at all there is a break in practice, once again 5 years will be counted freshly. Able to understand? So 5 years continuous practice, if at all you are in, then you get FCA. After getting FCA, even if you have break, no problem. Are you getting the point? Even if you have a break, no problem. But if you have a break after getting FCA, what will happen is, like insurance company audits, bank audits, you will not get. Insurance company audit, bank audit, there is a requirement. The CA must be in continuous practice of 15 years. Continuous practice of 10 years. Continuous practice of 7 years. Likewise, there are requirements in the RBI empanelment, even IRDA empanelment. So when this kind of requirement is there, if at all there is a break in your service, so naturally you will be disqualified to get that kind of audit. Are you clear? And once you get FCA, later if there is a break in service, your FCA will retain. Your FCA will remain like that as it is. You need not worry. Getting it? Now, look at this. So register of member, ICA will maintain register of membership, which will contain all this. Like you have member card, right? You'll have this something called member card, yes or no? So member card, like I'll show you the member card as well. It's okay. I mean, I'll not show, some details will be there. Okay. Fine. Next up. So register of members. So like member card is, you can download it from self-service portal. I say self-service portal is there, no? Same you can download. It's okay, I'll show, no issue. So in self-service portal you can download SSP ICI. Have you seen it? Membership card, all that. And institute, no, they'll give you like I think in office you might have seen, no, your partner's members card like that. I'm not talking about membership certificate which they frame it and then keep it in the wall. That's a certificate actually. What is it? That's actually called as certificate. So this is the self-service portal. This is about some conference going to held at Mumbai. International conference is going on. So this is the membership card. Getting it? So where you will have member card means whatever details, register of member ICI shall maintain all those details. So date on which I enrolled. Because of my articles excess leave, I enrolled late. I have excess leave in articles. I couldn't serve. Getting it? Because it was very late, so I enrolled very lately. So fellowship date I got on 2021, exactly 5 years after. Okay, without any break, fellowship. So that's called FCA. And this is the professional address and the partnership form details and who are all articles working under me. So that's it. And are you in practice or not? Holding COP? Yes. Having employment? No. Are you in partnership? Yes. Is there any personal practice apart from partnership form of practice? No. So you will get entire information here. And is there any removal from membership? COP cancellation, all that. Whenever a bank is allocating you audit, they will ask this member card. And they will look at the date here, when this is generated. See, this is generated today at this time. So membership card will have this date and time. Getting a default generated. So banks will ask this PDF, original PDF. And before they allocating any audit. And they will get directly data from institute as well. That's it. Next. So disabilities. So for the purpose of getting membership of the ICI, what are the disqualifications a member has? What are the disqualifications? Disqualifications are very simple. Not attained the age of 21 years. If you have not completed 21 years, you are disqualified for getting membership. Is of unsound mind or undischarged insolvent or discharged insolvent, not obtained from the court a certificate stating that his insolvency was caused by misfortune. What is that? Undischarged insolvent means your insolvency proceeding is still pending in the court, or you did not repay any liability. Getting it? But undischarged means you are not yet discharged by the court completely. Suppose you are discharged as insolvent by the court. You are discharged already. Now discharged insolvent is of two types again. Is this insolvent discharged because of misfortune or other than misfortune? Misfortune means what? Unintentional. Unintentionally, because of some calamity or some reason, his business was spoiled completely because of COVID or whatever. Getting it? And naturally he defaulted everybody. No specific intention behind this default. So this is called as discharged insolvent, which caused by misfortune. Able to understand? Court will give that certificate. Court will give a certificate that this fellow's insolvency was caused by misfortune. So this fellow can be permitted to do business later on. Whereas if a fellow did not get this misfortune certificate, getting it, which means what? Court declared him as intentionally defaulter and intentionally he became insolvent and he absconded or something might have done. So that fellow is not disqualified. Who is the fellow who was discharged as insolvent by court and the misfortune certificate is not obtained. Court has not given him the misfortune certificate, which means what? He is an intentional defaulter, fraud, which means he is disqualified from getting into membership of the ICI. Or he has been convicted. He has been convicted by a court for an offense involving moral turpitude and punishable with imprisonment, or an offense which is not of a technical nature committed by him in his professional capacity. Some professional capacity, some mistake has been done. Next, found on inquiry guilty of professional or other misconduct. Institute has found on inquiry that he is guilty of professional or misconduct. What is professional or other misconduct? We will discuss in Schedule 1 and Schedule 2. Getting it? So now what is this? This reason is, this is the reason where institute will remove your membership. Though suppose if at all you already got membership, if at all institute found you are guilty of professional misconduct, then also you are disqualified subsequently. Institute will remove your name. And remember, disqualifications for purpose of membership, the answer is different. Write about circumstances when the institute will remove a name of member from the membership register. Removal of member is different. The answer for removal of member is different. The answer for disqualifications for entering into the register is different. Able to understand? Suppose you see here itself, removal also we will discuss. Removal of name. One, the person who is dead, or the person directly requested the institute to remove his number, or he is affected with a disability. He is affected with a disability, nothing but disqualification. Or he has not paid the annual fee. Every year we have to pay some annual fee for COP as well as membership. For ACA, annual fee is different. For FCA, annual fee is different. The fee details are not required from exam point of view. Able to understand? Now, institute, in examination, you might get a question on removal itself. You should not read disqualifications point. Disqualification, all the points, whatever we discuss, no. That is one of the reason for removal. When a member name will be removed, means what? Removed means what? Already is a member of ICA. We already have membership number. When it will be removed? When he died. Or member himself given an application that please remove my name. Or he has not paid annual fees. Annual membership fee is not paid. Then also it will be removed. Or if the person has been affected with disabilities, after getting the membership, he became disqualified. Now what are the reasons why he will disqualify? Here it has been given. Clear? All of you? Reprimanding means giving warning. Not permanent, temporary. Removal is also temporary. Actually, Schedule 1 offense, member name will be removed for certain period of time. Whereas Schedule 2 offense, institute will decide for how long it should be removed. Depending upon the severity of the offense, Schedule 2 offense. See, I'll discuss now. I'll discuss the chat also. So I'll tell you what is exactly difference between Schedule 1 and Schedule 2 offense. Next. Transportation or importation are synonymous. Both are nothing but imprisonment. Both are imprisonment. Getting it? Next. If a member fails to disclose the fact that he suffered from any of the above disabilities, it will also be amounted to misconduct and his name will be removed permanently from register of members. Suppose if at all you applied with wrong data to the ICA for membership, though you are a CA, you qualified everything, but you are affected with some disability. You are hiding it, and you apply for membership saying that you are not, disqualified. You are eligible. Later, ICA found that you are disqualified. Then they will remove your name permanently. Getting it? But generally, institute will not exercise all these powers. Then types of memberships I told ACA and FCA. Whose name has been entered in the register shall be deemed to have become associate of the institute and shall also be entitled to use the letter ACA after his name. Fellow means what? Who has been in continuous practice in India for at least 5 years. A person who is in India for continuous practice for 5 years. Now here many are asking, can CA practice outside India? What is the use? Where you will sign? Tell me, what do you mean by practice outside India? You can do consultancy works. For that, you don't require COP. COP is required for what? Statutory functions, attestation functions. Statutory attestation functions are given for which CS? Only Indian CS by Indian government within India. Outside India, who will take your CA signature? Getting the point or not? You see, if you want to work in US or in that particular zone, there is an institute they have. So there is only recognized, those institute members only recognized. Britain region, UK, they have their own CAs. Only those CAs can authorize it. They are only authorized. Simple logic, man. If an outside India, US CPA comes in India and put a practice and want to sign balance sheet P&L, will you agree? No, right? Same way, they will also not agree. So what is the question about, can a CA practice outside India? The question should be, can a CA who is practicing in India, can he reside outside India? Yeah, he can reside. That is the right question. Able to understand. First you must know which question to ask. Getting it? Can a CA practice outside India? No meaning at all in that. Able to understand? If a CA is residing outside India, yes. Now you might get it out. Can we do articleship outside India? CA itself cannot practice outside India. How will you do articles outside India? Logically, no. But can you do industrial training outside India? Yes. If any CA is working in any company outside India, employment, see, you can do industrial training not only under practicing CA, but even under the membership of member of the institute. So if that member has got the permission from the institute to industrially train, getting it? So that member can train an article for industrial training. Able to understand? Now, which companies are eligible for industrial training? ICI database has a list. Which are the companies which are eligible for industrial training? And if those list include some foreign companies which are operating outside India, if any member of the institute is working in that company, under that member, this fellow can register as an article for industrial training. Able to understand? What happened? Okay, clear. Next. Now, suppose a member who has been an associate for continuous period, and as an associate who is not in continuous practice of less than 5 years, he is not continuously for 5 years, but he possesses all the qualifications, to ensure that he has experience equivalent to and normally acquired as a result of continuous practice like 5 years. Like how a continuous practicing chartered accountant for 5 years, what kind of experience he has? If I am also having a similar experience, even though my official COP is less than 5 years, or my official COP is zero, but I am doing exact same job like what he is doing. Getting it? Then also I am deemed to be an FCA. Example, in audit firm, CS are working, no. What is the difference between partner and him? Nothing. Correct? Partners are doing the same work. These fellows are also involved in the same work. Only thing is they are not signing in the official capacity. Correct? In audit firms, you might have done articles, no. In that firm, some CA employees there, no. Paid assistants, chartered accountants. So they are equal to partners, right? They are equal to COP, right? For them also, institute gives a COP. So they are deemed to be in practice, but are exempted from getting certificate of practice. Are you getting it? So if I work in an audit firm as an employee, full-time associate with the audit firm as an employee, and if I am working in any firm, any number of firms, doesn't matter. One firm 1 year I worked, another firm I worked 2 years, another firm I worked 3 years. Totally like that I worked for 5 years. Getting it? Continuously for 5 years I worked. So I will get FCA status later directly. I may not be having COP. I will directly get FCA COP later on directly. Able to understand? So my work in the audit firm is treated as equal to certificate of practice. So whether you work in Big Four, see actually Big Fours, no, they are network names. Suppose KPMG, the firm name is actually BSR & Co Chartered Accountants, correct? You did there, no? BSR & Co Chartered Accountants. That is the KPMG actual firm name. KPMG is a brand name. They use the word KPMG as a brand name because they use common work methodologies. So like they do, they develop common checklist. Across India, wherever KPMG you go and see, the audit methodology, audit tools, audit process, everything is same. So networks are formed to develop those kinds of tools, those kind of work methodologies. Able to understand? We have network discussion there, I'll cover. Next, are you clear until now? Next, removal we covered. Now, restoration. By the way, I told one of the reason why a membership of a member will be removed is non-payment of membership fee. Remember, for us, the question for COP is different, question for membership is different. Now we are only discussing which one? Membership discussion. We are not yet discussing COP related discussion. Now, so restoration of membership, what is meant by that? Suppose if a member name is removed, whatever reason it is, if a member name is removed, removal can be two types. If member name is removed, so by reason of non-payment of fee, by reason of non-payment of fee and other reasons, by reason of non-payment of fee and other reasons. Suppose actually for this year, right now, which year is going on? Right now, 22-23 year is going on. For 22-23 year, by what time I should pay fee? 30th September. By which time I should pay the fee? 30th September. For every financial year, every member of the institute shall pay annual membership fee plus annual certificate of practice fee separately. But of course, in the payment fees, that challan, both the columns are there enabled. If you take both at a time, challan will be developing. It's single amount. If you pay separately, it will show separate challans. Able to understand? So every member shall pay annually for the respective financial year the annual fee by 30th September of the respective year. That is a provision. Suppose by 30th September, suppose I failed to pay. I did not pay annual fee. What will happen? 1st October, non-payment of fee. 1st October up to 30th September, if the institute did not receive 1st October, I'm talking about the law. In reality, how it works is slightly different. So 1st October, institute will remove my name. Institute will remove my name from the register and they will intimate with that your name and COP is cancelled. Getting it? Suppose within 31st March of the same year, same financial year, but by 31st March, I was late. 1st October it was removed. Later I got to know about this removal somewhere in November or December. Later by 31st March, immediately after removal, 31st March will come, right? Which means same financial year. Within the same financial year, if I once again pay along with the late fee, institute will restore my name. Now from which date they will restore? From the date of removal. From which date they will restore? From the date of removal. Which means if they restore from the date of removal, is there any break in service? That's it. That's the advantage. Suppose if I paid after 31st March, if I paid after 31st March, then the restoration will be from the date of actual payment. From the date of actual payment. Means my name is removed on 1st October. I paid somewhere next year, July month. This 8-9 months, I am having break in service. So break in service will be visible in member card. Getting the point? So even if you are late in payment of membership fee, by 31st March at least pay, so that your restoration will be from the date of original removal. So break-in service will not be visible. Are you clear? All of you. If the name is removed for any other reason, then restoration date will be with effect from the order. Whatever the order mentioned. Suppose your name is removed because of a disciplinary action taken by the institute. Your name is removed. Whatever the period as per the disciplinary action, your name is removed. After that, the disciplinary order will be there. The order will be there. In that they will mention from which date it will be restored. That actual date. Clear, everyone? So you see here. No, that's what. No, removed means what? You should not sign. You should not sign. You may say, sir, after it is restored, but you should not sign. You should not sign. Nothing. It will come under your violating institute rule, schedule 2, clause 1. Yes or no? Violating institute rules. Violating institute orders. Yes or no? Where disciplinary orders and all you violated, you are liable for punishment. No, under schedule 2, schedule 1. So there I will connect all this. Next. No, they actually not. Logically means name is removed, right? When the name is removed, and see, probably what happens in reality is, I also have not seen the situation, but probably what might happen is, they will remove your name provisionally. They'll review your name like provisional registration, provisional removal might be there. They will give you an intimation that up to 31st March with late fee you can pay. They'll give an intimation. If you don't pay that, we will remove your number with effect from 1st October, they'll give an order. If you don't pay by 31st March, your name will be removed from the register with effect from 1st October. So please pay fee by 31st March at least. They will give you a permission directly. By default, they'll give you a permission so that you can sign all this. Are you getting it? So it's a provisional removal. It's not actual removal. That's it. I mean, I'm talking about reality, not in the act. In exam, don't write all this. Next, restoration. Suppose if restoration was made in the same year of removal, application for restoration is made If removal happened because of non-payment of the fee, restoration shall with effect from the date it was removed, provided the member pay required fee, including entrance fee, additional fee, okay, as may be prescribed. There will not be any break in service. Suppose if the name is removed in disciplinary action, the date of restoration shall be in accordance with the order. Suppose any other case. What is any other case? Example, suppose you did not pay membership fee within 31st March later, then it will be from the date on which application and fee is actually received. Clear? Next, penalty for falsely claiming to be a member. All CA students are liable for this penalty. Yes or no? They are using CA, no? In all their accounts everywhere. So, a person not being a member of the institute represents that he is a member of the institute, uses the designation as chartered accountant. If at all you are representing yourself as a member, or you are a member of the institute. See, generally, if you have only membership from the institute, you are not having COP, you cannot use the designation chartered accountant. Remember, CA is a qualification, chartered accountant is a designation. What is it? CA is a qualification. You always have the freedom to keep your qualification beside your name. Getting it? But you can't use full form. Full form signifies designation. Getting it? If a person is using designation called chartered accountant without COP, so it is also you're falsely claiming that you are in COP. Getting the point? You're falsely claiming that you are having COP. So for you, there is a penalty. First time offense 1,000 rupees. Subsequent offense 5,000 or imprisonment up to 6 months or both. Getting it? Or you are a member of the institute but not having practice. You are representing that you are having practice. Then also you are treated as you are treated as it is treated as violation. Accordingly, this penalty is applicable. Next. Write about chartered accountant in practice. In this note, deemed to be in practice is something critical. Now, first of all, what do you mean by a practicing CA? He is a person who is a member of the institute and is holding certificate of practice. And it includes all such members who are deemed to be in practice. What is meant by deemed to be in practice? Deemed to be in practice is a definition given to bring all chartered accountants or all CAs who are actually taking practice works, they must have COP. They must have COP. If they must have COP as per law, without COP if they continue, it's a violation. Correct? So deemed to practice, the definition is defined with an objective of bringing all chartered accountants out there, whoever is actually taking practice kind of work but not having COP. So they all come within the ambit of COP. So they have to take COP, they have to pay annual fee. Able to understand? Some CS know what they do is, see, if I take COP, I am governed by so many clauses under Schedule 1, Schedule 2 offenses. Suppose if I do not have COP, I can advertise happily my services. I can open a consultancy firm. I will not render audit services. I will not render attestation service. I will render IT filing. I can file GST returns. So the moment I remove COP from my thing, I can open YouTube channel. I can advertise like anything that I am ready to file these things. I'm having CA qualification. I can advertise all this. You know that? But if at all you're having COP, you can't solicit. You can't advertise. Having COP will bar you from advertising all. Getting it? So some members, what they're doing is, they don't have COP, they don't take COP. Naturally, if a member do not take COP, most of the provisions of CA Act, they will not be applying on that member. But what this member is doing, this member is rendering all services which practicing CAs are rendering. So now institute finds a need for the definition. What is the need? So let us first define which services if you provide, you are deemed to be in practice. Which services, if a member of the institute provides, they are treated as deemed to be in practice. If at all they are deemed to be in practice, what they need to do? Get COP from the ICI, become an actual COP. Are you getting the point? So deemed to be in practice is a definition which covers list of activities, list of services which only a member of an institute can render who is having valid COP. If at all you are rendering the services falls under DDP, you must have COP. If at all you are already having COP, no problem. If you are doing some services which a deemed to be in practicing chartered accountant can only render, you are also deemed to be in practice, and accordingly you must have COP. Without COP, if you are practicing, I've seen yes, penalty. Previous question, 1,000 rupees first time, 5,000 rupees, or imprisonment up to 6 months, or both. That's it. Able to understand? No. So what is the significance of COP? No member of the institute shall be entitled to practice unless he obtained COP. And every such member shall pay annual fee. A member of the institute have no other capacity in which he can take up practice separable from his capacity to practice as a member of the institute. The moment I am using my CA qualification and I am taking up practice works, you can only do that work only as a member of the institute. You cannot say, hey, from icai and for me, no relationship. I don't have any COP, but give me, I will do accounts audit services. You can't. You can take up accounting services, audit services, all these services only as a member. You will not have a separate capacity. Suppose I'm a partner in a partnership firm. Partnership firm is involved in some business. One of the clause in partnership firm is, I can also do my personal business related to same business. That's what they told me. In clause, they explicitly gave me the permission. In the partnership deed, they gave me explicitly the permission. Suppose our firm is engaged in construction service. So on behalf of firm, I have some clients. One of my client is introducing new client. So I told him, no, don't give to my firm contract. You give me the contract. Getting it? Here, in this contract, between it is between you and me only. No relation with the firm. Like this, you cannot practice. Able to understand? So in one company audit, you are taking as a chartered accountant having COP. In another case, you are saying between me and ICA, no relation, but I will give you attestation service. You can't. Able to understand? You can provide attestation service. You can provide statutory audit service. You can provide statutory functions only as a member of the institute. You don't have any other separable capacity. Clear? The moment you are signing as a chartered accountant, you are deemed to be member of the institute. You must have COP. Clear? That's what the sentence meaning. If COP is cancelled, you cannot undertake any assignment, which generally only member of the institute can take up. Whatever services comes under DTP definition, you cannot render if COP is cancelled. So that is the significance of COP. Able to understand? Simply, whatever services comes under DTP, if you want to render them as a member of the institute, you must have COP. You don't have COP, don't render. Simple. Next. Cancellation and restoration of COP. Cancellation. Your COP will be liable for cancellation in the following cases. First reason, first of all, your membership is removed. If your membership is removed, naturally, COP is removed. Or you got COP by giving false information. Or the member stopped from practice. He ceases, like he stopped practicing. Then he intimated to ICA voluntarily that he is not practicing. Or he has not paid annual fee till 30th September. Now, restoration will be more or less similar logics, ma. So I'm not repeating restoration. Whatever restoration of membership is there, no, same logic applicable here also. Able to understand? Next. Now, what do you mean by deemed to be in practice? So, shall we take a small break? Okay. Yes. So, we'll take a break and then we'll continue deemed to be in practice and we'll start schedules, all that. So if you observe for this chapter, I'm using this colored notes. Even for peer review, quality review, mostly I'll be using this. For few chapters, I'll be using this notes. And here, the reason why I highlight with colors is only because of not for getting attention, not for grabbing attention. But when you're reading, you must change the sound. You may be reading internally. But whenever, like suppose you see, there are two classes of members. Those who are in practice and those who are otherwise occupied. You see the sounding, getting the point. So whenever the color changes, your reading sound should change. So that's how you understand better. Your reading skill, if you properly read, you understand in much more better way. It's all about the reading skill. Anyhow, so deemed to be in practice, we need to discuss, right? So what do you mean by deemed to be in practice? Can I continue? Yes. So a member of the institute shall be deemed to be in practice when individually or in partnership with another chartered accountant who is in practice or in partnership with members of such other recognized professions. This is nothing but multidisciplinary firms. This is nothing but multidisciplinary forms. This is nothing but unidisciplinary forms. Means what? With the same people if I practice, with the same CS. So, a member of the institute, remember this definition applicable only for the member of the institute. A member of the institute shall be deemed to be in practice either individually or in partnership with another CA in practice or with some other recognized profession. Right now, though multidisciplinary form concept is permitted by ICI, the full-fledged guidelines were not yet released because until other disciplines also bring these guidelines, we can't start multidisciplinary forms as on today. Able to understand? Consulting forms can be started, but attestation forms cannot be started. It is permitted in ICI, but the guidelines were not given of this. Able to understand? Next. And consideration of remuneration is received or to be received for being. These are the services. If you are providing these services, you are deemed to be in practice. What do you mean by deemed to be in practice? If you are deemed to be in practice, you must have COP for sure. Without having COP, you cannot render these services which only a practicing CA can render. Like what services? You are engaging in practice of accountancy. You are performing services involving auditing, financial transactions verification. You are preparing, verifying, certifying financial accounting and records. And you are holding to the public as a chartered accountant. Accountant means what? You are calling yourself as a chartered accountant. When you are holding to the public, when you are exhibiting to the public as a chartered accountant, you are deemed to be in practice. If you are deemed to be in practice means what? You must have COP for that. If you have COP, you are doing all this, no problem. If you don't have COP, doing all this, then that's a problem. Able to understand? Or you are rendering professional services or assistance in or about matters of principle, detail relating to accounting procedure, recording, presentation, certification of financial facts. So in accounting, you are giving accounting related advices, or you are giving some accounting procedures in a company to be followed. You are designing and implementing information systems in the company. Example. So all that comes, or you are rendering such other services in the opinion of the council can only be rendered by who are CAs, that who are in practice. If the council gave some additional services, these services must be rendered only by chartered accountants, and you are rendering that services, then you are deemed to be in practice. Now, what do you mean by deemed to be in practice? If at all you fall within this definition, what is the consequence? You can render all this, provided you have COP. And remember, a member shall be deemed to be in practice only in the professional capacity. Deemed to be in practice is not a personal capacity. Certificate of practice is not your personal capacity. It's a professional capacity. Able to understand? So, neither in his personal capacity nor as an employee. Getting it? So, a member shall be deemed to be in practice if he is acting as liquidator, as a trustee, executor, administrator, arbitrator, receiver, advisor, representative for financial matters. Even if you are providing representation services for taxation matters, even if you are providing representation for taxation matters, representational services you are providing, but not as an employee. You are not providing as an employee, or you are not providing them in your personal capacity. What is meant by personal capacity? Representation of taxation matter, personal capacity means what? What is meant by that? Suppose income tax department sent a notice to one SSE, demand notice. Now that person doesn't know anything about income tax. He employed me as a representative. I am not a chartered accountant, or maybe I am a chartered accountant, but I am not using that qualification. I just want to represent him, go and talk with the officer, and then somehow resolve the issue. Is there any compulsion that in income tax only a chartered accountant should represent on behalf of SSE? SSE himself can represent. If SSE do not have that knowledge, anybody else as employed by SSE as his representative, power of attorney is required. That's it. If attorney is given to me, to anybody can represent. Now here, on behalf of SSE, I am going and representing in my personal capacity. I am not deemed to be in practice. But suppose I asked him to select CA option in the IT. In the e-grievances cell, no, I am asking him, appoint representative, select option as CA, which means I am using my professional capacity. The moment I am using my professional capacity to represent a taxation matter, and in professional capacity I am going, it is deemed to be in practice. Able to understand. So these matters, if at all you are rendering in personal capacity or as an employee of some organization, even though you are a member, you don't have to, you need not be having COP. Suppose if at all you are doing all these activities in professional capacity, then you are treated as deemed to be in practice. Even if you are acting as liquidator, you see these services are not covered in the above list. In the above list, the following activities are not covered. Representative for costing, representative for financial, representative for taxation matters. So if you are acting as a representative or if you are acting as a liquidator, you are appointed as a liquidator by some government for one company. For one company, a court appointed you as a liquidator. And in your official capacity, they appointed you. You are a practicing CA, they appointed you as a practicing CA. Then you are deemed to be in practice. They appointed some company as a liquidator. And that company sent you for doing all the liquidation process. You are employed in that company. You are not deemed to be in practice. Able to understand. Getting it? Or you are taking up an appointment given by central government or state government or court of law or any other legal authority or acting as a secretary. So if you are taking any of these appointment in professional capacity, if you are taking any employment made by central government, example, a company, big company is there, some scam has burst out. And in that company, you are appointed as an independent director in professional capacity. Since you are a chartered accountant, so central government issued an order that appoint some 2 chartered accountants who are having more than 5 years COP as independent directors in this company. So there is an order. Because of that order, some 2 of you were selected. Because you are practicing as a CA, 2 of you were selected and employed in professional capacity. You are deemed to be in practice. Able to understand. Unless that employment is on salary come full-time basis. Suppose government employed you as an employee in that company. On full-time basis they employed you. Then you are not deemed to be in practice. Are you getting it? Suppose if they just appointed you as an independent director in a company. Getting it? Not on a salary come full-time basis, but as an observer. Then you are deemed to be in practice. Clear? Next. And an associate or fellow of the institute who is a salaried employee of another chartered accountant or firm of chartered accountant or a multidisciplinary firm. If you are a member of the institute, or you are a fellow of the institute, but you are right now working as a salaried employee in a CA firm, you are deemed to be in practice for the limited purpose of training article assistance. We all know that, and you can register for articles only under practicing CA, correct? Suppose I went to one firm. They are having only 3 partners. 10 already filled articles. I want to register in that firm. But they have an employee who is a CA. They can register articles under his name. So a CA working in an audit firm, he is also eligible to train articles. He will also get eligibility to train articles. For the purpose of articles alone, you are deemed to be in practice. However, you are exempted from holding COP. Getting it? Next. And this is a clarification. What is this clarification says? Now what is meant by deemed to be in practice we have seen. There in deemed to be in practice definition, what are covered? Advisory services are covered. What are covered? Advisory services are covered. Practice of chartered accountancy is covered. Auditing services, financial statements verification, financial accounting preparation. So all these services only a CA can do, only a practicing person can do. Or you may give a detail about accounting procedure, or you can render such other services, all that. Now, this do not talk about administrative services. This do not talk about consulting services. These do not talk about non-attestation, non-audit services. Able to understand? Now, what about this non-attestation, non-audit, what are all? They are all popularly called as management consultancy and other services. Now the question is, can a chartered accountant who is in practice, can he provide MCOS services? I am a practicing CA. Can I provide MCOS? Yes, you are permitted. First of all, deemed to be in practice definition is given to bring people, to bring chartered accountants or members of the institute who are providing all those services, to bring them within the ambit of COP, so that all the laws and regulations of ICI will apply on them, so that ICI can monitor. That is the reason why DTP is defined. Now, another question is whether these chartered accountants who are having COP, can they provide consultancy services? Are we permitted to provide consultancy? Yes. You are permitted to provide entire range of management consultancy and other services. What are MCOS includes? They have given. Now, most importantly, what management consultancy and other services does not include, what MCOS excludes: statutory, periodical audit, tax audit, representation, advising on tax matters, acting as liquidator, trustee. These are all statutory functions. These are all not treated as consultancy services. These services can only be rendered only by CA having COP. Whereas MCOS services can be rendered by non-member or by member. May have COP, may not have COP. Just because you are a member of the institute or non-member of the institute, this MCOS can be provided by anybody. This consultancy services can be provided by anybody. Can CA having COP provide? Yes, they can also provide. But remember, management consultancy, other services do not include the following. You know why this definition is given? This exclusion list is given. Why? You know, we have council guideline regarding corporate form of practice. What is corporate form of practice? CAs can open a company. Which is exclusively engaged in management consultancy and other services. A company can render management consultancy and other services. For that purpose, instead of using your firm name, you can use your company name. That company shall get approval from Institute of Chartered Accountants of India, because that company is created by a chartered accountant. In that company, this fellow is acting as a managing director, whole-time director. Generally, as per clause number 11, CS are not permitted to act as a managing director or whole-time director or working director. They are not permitted to have any other additional occupation except practice. Yes or no? They can have shares in a company. They can have ownership in a company. But they are not permitted to include in the affairs of the company. However, only one exception is there. If a company is exclusively incorporated for management consultancy and other services, in that company, the CA can act as director, managing director, whole-time director, full-time employee. Anyway, he can work. Able to understand. Provided that company got approval from Institute of Chartered Accountants of India. Now, MCOS services it can provide, right? Now, MCOS means what? Attestation also MCOS. So, that's why the exclusion definition is given. This definition is given so that corporate form of, the companies which are incorporated by chartered accountants who are acting as directors in those companies, they should not provide these services on behalf of company. If at all you have to provide attestation service, you can only provide on behalf of your firm. Able to understand? Wherever you did articles, some of you might find in your same firm name, company is also created. Yes or no? In the same firm name, ABC & Co Chartered Accountants is a firm name. ABC Private Limited is a company name. Getting it? ABC Consultancy Private Limited is a company name. So, in ABC Consultancy Private Limited, who are all the directors? All the partners. These are the members. These are the directors in the company. In ABC & Co, who are the partners? Mr. A, BC, who are all chartered accountants. Anyhow, I'll come there. I'll once again connect with this. Are you clear? So, these services are not treated as consultancy services. Accordingly, these services are treated as deemed to be in practice. Only CS who are in practice can provide. Whereas, MCOS means what? It's a general consultancy services. Anybody can provide. Forget about CS. Anybody can provide. Can CS provide? Yes. Can CA having COP? Can they also provide? Yes. Now the question is, here the confusing point is, can we provide these services to the company where I'm acting as an auditor? This is a question. The answer is not straight away no. This MCOS is a very big list. In Companies Act, prohibited services, 144, it only talks about 9 services. Except those 9, if any other service is there, they can be provided to the company. For a company, what other additional services statutory auditors can provide? Companies Act has to decide, not you and me. So, Companies Act, instead of mentioning what services auditor can provide, they mentioned what services auditor should not provide. In that, if you see, the last service in that prohibited list is management services. What is it? Management service. What are we saying here? Management service. What are we saying here? Management consultancy and other service. Suppose, if I'm acting as an independent director in a company, that's a management service. Management service means it's a service provided by any person involving decision making for the company, which involves decision making for the company, which directs the company to do something. Able to understand? That's called management service. Whereas MCOS do not involve generally decision making activities. We just provide additional consultancy. We just provide additional works. Are you getting the point? That's a basic difference between management service and management consultancy and other service. Whatever prohibited in Companies Act, except that remaining all other service, even though you are my auditor, you can provide me. You are not disqualified. All of you. But when an auditor is providing services to the company, in addition to audit, some other services are provided. It is creating self-interest threat. It is creating what? Self-interest or familiarity threat. Now, because of this, maybe auditor independence can be compromised. That's why the council guidelines says, one of the council guidelines, the fees received for other services, the fees received for other services shall not exceed fees received for audit service. There is a restriction on the fees. Getting it? Okay, I'll come there, I'll discuss. Now, what are all covered in MCOS? Almost so many services are covered. So many services are covered. Whatever I highlighted in bold letters, no, these you can take it for purpose of examination. Remaining you can ignore because these are very popular. Whatever I highlighted in bold color is very popular. Read carefully, entire this list once later. Okay, later once you can read this carefully, just once the list. Next. Administrative service like word processing service, company published annual report. They just asked you to read annual report. Sir, just read the annual report completely. See any mistakes are there. That's called word processing service. Okay. Preparing administrative forms for client approval. Okay. Or submitting forms as instructed. ROC forms you're filing. Or you're filing GST returns and all. That and all is permitted. You're filing IT return for the company. You can do that. That's just an administrative service. They're just consultancy works. Now, even you're not actually attestating, you're not actually, doing attestation, but you are offering to attest. It is also treated as deemed to be in practice. So what do you mean by deemed to be in practice? Only when you actually render, no. The moment you offer to the public some practice related works, it is also deemed to be in practice. So invitation to offer is also deemed to be in practice. And another clarification given, if at all you are serving with armed forces, if at all you are serving with armed forces, for whatever the period you are serving with armed forces, you are treated as deemed to be in practice. Means it is counted for COP calculation. It is counted for COP calculation. Able to understand? Suppose I just qualified CA and I got membership of the institute. I want to go for COP, but because of some urgent requirements in Indian Armed Forces, let's assume they requested me. Example, I went and worked there. 5 years I worked there. 5 years I will be treated as in practice. And the moment I came out, I can directly go with the FCA. For army officials and all, the number of years, whatever they serve in army or navy or air force, that number of period is excluded from their age for determining government job calculation. Suppose government job you will get, assuming you are having maximum age of 35. Let us assume at the age of 25 you went to army. 15 years you served. You came out at 40. These 15 years will be removed from your age for the purpose of calculating your actual age for the purpose of treating government job. That's why those who came out from the army, they will get bank job. They will get some job in state government entities like that. Actually, that job they don't get if they calculate as per normal age criteria. But their age will be calculated. Adjusted age will be calculated. Actual age minus period served in armed forces. That is a revised age. That is considered for government job calculation for the people who worked in armed forces. This is a benefit given to the citizen whoever is working in armed forces. So, if a CA is working in armed forces, it is treated as a COP. Are you getting it? Next. Now here we have seen management services is something that cannot be provided to a company if at all he is appointed as statutory auditor. If a chartered accountant is in full-time employment and you are representing your employer in a tax assessment, it cannot be treated as deemed in practice because you are representing in taxation matter as an employee. That is not deemed to be in practice. Suppose I am using my qualification CA. My colleague is having some tax issue. I am going to department to argue on behalf of him. There I am not going as an employee. I'm going in my personal capacity, again fine. Personal capacity means don't use CA qualification. Just to defend him, no problem. If at all you are using CA qualification and then defending him, again you are using professional capacity, which means you are deemed to be in practice. So a chartered accountant can render representational services, or if a member of the institute is rendering representational services before income tax or GST or any other authority using the qualification, he is deemed to be in practice. Are you clear? Next. Now, suppose, what if you are deemed to be in practice? What are the implications? You must have COP. However, it is not applicable if you are an employee in an audit firm. You must pay annual fee. You must follow council regulations, guidelines, and professional standards when you are discharging the work. Clear? And remember, if at all you open a company, suppose you qualified as a CA, along with some 2 more friends were there, all 3 of you qualified as a chartered accountant, you all got membership and COP. You 3 of you together opened a private limited company. You want to provide audit services in the name of the company. Prohibited. Section 25 of the Chartered Accountants Act says no company shall practice as chartered accountant. Which means what CA Act indirectly says, you can practice either individually or as a partnership firm or as an LLP. Only 3 modes are permitted. Only 3 modes are permitted. Whether you are practicing as individual, it is called as sole proprietary firm. By the way, here, let me talk about MRN and FRN. MRN means member registration number. FRN means firm registration number. Firm registration number means what? Partnership firm or proprietorship firm? Both are covered. Firm means it may be sole proprietary firm or it may be a partnership firm. Both. Getting it? Suppose if I take COP and I will be called as Harsha Chartered Accountant. That's it. Suppose if I obtain a name for my practice, I applied for name Harsha and Co. Harsha and Associates. Getting it? Then it's a firm name. When a firm name is approved by institute, naturally they will allocate a name, membership number for it. FRN will be given. Remember, a chartered accountant can accumulate goodwill only if it is having a firm name. Suppose tomorrow if you want to practice with firm name, not in your personal name. You want to practice individually, okay. Only sole proprietary firm you create. Don't take partners. Suppose you created one firm. Example, GP Kapadia and Co. You know, that's a first chartered accountant. He is the one who created this institute. GP Kapadia and Co. Is it partnership firm? Yes. Today it's a partnership firm. Originally, what is it? Only one person is owning that entire firm. Means it's a sole proprietary firm. In that firm, if you take additional partners, then it will become a partnership firm. Understand? But GP Kapadia and Co. is a firm. That's it. It's a firm. Having firm registration number. Now GP Kapadia is no more. Able to understand? Still that firm's name is carried. Suppose if I don't create firm, what will happen? If I expire, obviously my firm will also dissolve naturally. I don't have firm first of all. Able to understand? If you create a firm, whether you continue in that firm or not, the experience of the firm will be counted continuously. Are you getting it? Now bank audit will be allocated to a firm which is having experience of 10 years, 15 years, 5 years. Firm experience they will see, not a partner experience. Able to understand? That's it. So whenever tomorrow you are practicing, when you are obtaining COP, immediately you should simultaneously apply for firm name. Because if your firm name is there, tomorrow you don't want to practice, you can sell your firm to somebody. You know that? You can sell your firm to somebody. You can withdraw from the firm as a partner and the people can continue. Remaining people can continue. And if you are having a firm, your legal representative or legal heirs will get some goodwill. Are you clear? All of you. It's like a brand name. Firm name is like a brand name. Next. The term company includes a LLP, which has a partner company. Even if I want to open an LLP, in that LLP, if company is a partner, then that is also not permitted to practice. So if I have to practice, I can practice individually with a firm name. Or I can practice as a partnership firm LLP with a firm name, where all the partners must be individuals. Able to understand? But in my firm, if at all a company is a partner, then again my firm cannot practice. Next. Now, member in practice is prohibited using any other designation other than chartered accountant. With this, we will discuss in clause number 7 of part number 1 of schedule number 1. The section 7 and this clause number 7 of part number 1 of schedule number 7. Sorry, schedule number 1. They are discussing about the same thing. Schedule 1, part 1, clause number 7. What it says? A member is not permitted to use any other designation, or a member is not permitted to advertise his professional attainments or use any other designation. So no, this section is also talking about designation. So we will be already discussing there. So it will be covered naturally. Clear? Next. What about maintenance of branch offices? What about maintenance of branch offices? Can a CA open a branch office? Can a chartered accountant, whoever is practicing, can he open branch offices? Yes, he can open a branch office, provided every branch he is opening should have a full-time CA associated with it. He may be a partner or he may be an employee, doesn't matter. Whenever you want to open a branch, it must have CA with COP. Just remember, these are professions which involves personal participation. These are the professions, yes or no? CA is a profession, doctor is a profession, lawyer is a profession. For all these professions, can they open branches? Means yes, provided same professional was also heading that branch. Able to understand? Suppose, very simple, if at all this branches related condition is not there, separate in charge condition, if it is not there, what will happen? I will have branches across India. Why? What's very simple. I'll come to Chennai. I'll go nearby tax consultant. I'll ask him to use my name. Get all the files. I will sign. Is it possible or not? So my personal participation should be there if I have to open a branch. But if I participate in that, who will participate in head office? So what ICI put, in order to prohibit this kind of scams, what ICI did, when a member of the institute want to open a branch, that branch must have been handled by a full-time associate chartered accountant. One full-time associate with that branch should be there, and he must be a chartered accountant. Are you clear? So a member of the institute is permitted to open branches. So separate in charge. There should be a separate in charge for every office, and he must actively associate with that office. When do we say he is actively associated? If at all he is residing in the same place where the office is situated for minimum 182 days. In Chennai, I have a branch, and I told Mr. B is the in charge of the Chennai. In such a case, Mr. B should reside in Chennai for minimum how many days? 182 days. Suppose he is not residing. Okay, he may be residing in nearby town, but he is attending the office minimum 182 days. Then also institute says, yes, he is associated with the branch. Or in such other circumstances, in the opinion of council, establish such active association. So when I say something is my branch, it must have a separate in charge who is member, who is actively associating with that branch. Able to understand? Separate in charge must be there. What do you mean by separate in charge? Very simple. I showed my membership number, right? I showed my professional address. Suppose my firm has 3 professional address. 3 professional address. Means one professional address in one city, another city. Definitely for these 3 professional address opposite, which CA is leading? Which CA? That's why you see, when you're joining in an audit firm, no, they will not permit you to have your own COP. If at all you're having your own COP and also joins in an audit firm, okay, they may not, see, like very simple, the forms will have to file every year written with the institute, or they will have to file some empanelment forms with C&AG, empanelment form with RBI, empanelment form with IRTA. Like that, these forms will file. In that form, they will have to intimate how many full-time CAs associated with your firm. How many full-time CAs associated with your firm? The form has to give a list. Suppose you are working in my office, you are a CA. But you are not fully associated with me. How can I say you are not fully associated with me? You are having your own COP. You will not be counted in my limit. When you are not counted in my limit, I don't need you. Getting the point? Whatever the work you are doing, my senior article will do. Because you cannot sign, article cannot sign. Whatever the work you are doing, he is also doing, senior article. Able to understand? Now, what is the advantage if I recruit you? If at all you surrender your COP and join in my firm, I will intimate to CA Institute that you are full-time associated with me. And I have some branches. For some of the branch, I will make you in charge. If at all some in charge is there, I will remove him and I will make you in charge. Able to understand? So, this is how in reality it works. Suppose bank, no, branch audit. Bank branch audit. Suppose there is a bank, there is a State Bank of India, which has a branch in Kanchipuram. Okay, I want to get State Bank of India Kanchipuram branch audit. What is the condition? I must have branch in Kanchipuram. State Bank of India will give priority to those firms whenever branch audit is allocated by a bank. They will give priority first to the local practicing firms. What do you mean by local practicing firms? They are having an office in the Kanchipuram. Now, if I have to open office in Kanchipuram means what? I must have a CA residing there. I must have a branch and I must need a CA who is residing there, who will act as a in charge of that branch. Are you getting the point? Now, you may say, sir, how do institute know that you are residing there? Member card, your residential address is there. That is the proof. Able to understand? Getting the point or not? So that's it. So you must either reside there or you must attend the office. Attend the office means you must prove the institute when they ask for any inspection. Now, can a member act as in charge for more than one office? But not permitted at all. Only for one branch you can act. However, if at all the second office is in the same building, that is not treated as branch. If the second office is located in the same city, that is not treated as branch. If the second office is situated within 50 kilometers from the municipal limits, within 50 kilometers, there is a branch. That is not treated as a separate branch. That is treated as part of the main office. Able to understand? So in such a case, no need of separate in charge. Suppose in the same building, I have 50 articles. My office space is not enough. I took another space in the same building. Well, how come you call it as branch? It's hardly 2 minutes. I'll go up and down. Getting it? Or if it is in the same city, hardly 1 hour. If it is within 50 kilometers, hardly 2 hours traveling time. This is not somewhere in the remote locality. I am only every day I'm going there. Half day I'll be staying here, half day I'll be staying there. That is actually not a branch. That's just an extension. I did not find space in the same building. I did not find rental premises within the city at my affordable rate. So I opened office within 50 kilometers. You can argue, yes or no. That is not a branch. So if at all you're opening branches within the same building, same city, within 50 kilometers from the municipality limits, it is not treated as a branch. It does not require a separate in charge. Yes or no? Have you seen all this? Your faces are pretending as if you don't know this. Fine, right? Now, suppose, sir, I want to open a branch office in Hill area. I want to open a branch office in Hill area, but that is only a temporary office. That is only a temporary office. In Hill area, which chartered accountant will reside, sir? First of all, tell me. Yes, sir, I want to open a branch in Kodaikanal, or I want to open a branch in, Woody. Because my clients are there, tea plantation, coffee plantation, some plantation clients were there. Okay, and they will come and submit records. If I ask them to come to Chennai and submit records, they will first of all find another CA there. So whenever season comes, especially IT filing season, June, July, August, September, yes or no, these 3 months especially, I want to have a branch there. But for these 3 months, how can I find a separate in charge who is residing there? First of all, in Kodaikanal, there is no registered CA. Example. Getting it? So how can I find a CA who is residing there? So considering the hill areas, considering the clients in the hill areas, ICI said you can open temporary branch office for not exceeding 3 months in the hill area without a separate in charge. And what are the conditions they give here? Are you clear? At the time of opening the branch, you should intimate to ICI. At the time of closing the branch, you should intimate to ICI. And the branch should not operate for more than 3 months. After 3 months, name board, everything should be removed. Able to understand? These 3 months you can keep name board, no problem. But after 3 months, your name board, everything should be removed. If at all your name board is continued, no. Your advertising, no. Indirectly that you are having a branch there. To understand? All of you. Name board. A member is allowed to put name board at his residence. Which name board? Member board you can put. Your firm name you should not put at residence. Wherever you put firm board, it's a branch. Understand? Main office. When more than one office is located in the same city, which is your main office, you should inform to ICI. The member in charge of the branch can be either partner or maybe paid assistant. If at all is a paid assistant, he must be full-time employment with the firm. That's what I told. Full-time paid assistant. Only he will be counted. What do you mean by chartered accountant in service? Simple. Whoever is not having COP but who are having membership but who are working in the industry. Getting it? They are called as chartered accountants in service. Next. Then write about types of misconduct. So we have 2 types of misconducts. First of all, misconduct in relation to profession, misconduct other than profession, but you are involved. Because you are involved, suppose no, a CA no, suppose if at all he drank, example, and car auditor is just driving the car. and met with an accident. They will not write Mr. Harsha met an accident. A chartered accountant drinks and drives. கரெக்டா? எப்போ ஹெட்லைன்ஸ் அட்ராக்டிவா இருக்கும்? இப்போ நீங்க பாருங்க டாக்டர். A doctor is making nuisance in the pub. Yes or no? அந்த மாதிரி தான் they'll be writing because that only cuts. If at all they put a name, your name nobody knows. Yes or no? But if a doctor name is used, entire doctor sentiments will hurt. No, that is what the newspaper wants. News channels want. So if at all you do some behavior, you know your behavior was in such a way that it is bringing disrepute to the profession. Even though it is your personal activity, it is treated as misconduct by ICI. So those misconducts are treated as what? Other misconducts. Able to understand. So எப்பாவது நீங்க அந்த மாதிரி வேலை பண்ணும்போது don't tell that you are a CA. நீங்க சொல்லல இருந்தா உங்க கார் பின்னாடி CA ஸ்டிக்கர் இருக்கும். I never keep car sticker, you know, CA sticker and all in my car. Not because I do all that, okay? just that I don't want to get that attention. Next. So professional misconduct, other misconduct. Now these are the clauses that we have. So first schedule, we have two schedules. First schedule, so what are all various offenses that are punishable? What are all various offenses or activities that are punishable from the ICI? These offenses or these misconducts are broadly divided into two schedules. Schedule 1, Schedule 2. You know what exactly difference between Schedule 1 and Schedule 2? Schedule 1 talks about your general misconducts. General misconduct related to your practice. Related to your practice or your normal profession. Getting it? Here, no client is affected. Here, your clients are not affected. You are running practice with so much of advertisement like that. It is regarding your business practices. See, you need to run your practice in certain way. How you should not run your practice? That is what first schedule is indirectly talking about. Suppose you are running practice. You are accepting some audit. You are accepting some audit. But when you are doing that audit service, you are violating so many provisions. You are violating so many norms. You are grossly negligent. You are not working properly. Because of this, some third party affected. Those effect, wherever third parties are affected, that is covered under Schedule 2. That's the primary difference between first schedule and second schedule. Suppose I am advertising and getting a new client. Because here no third party is affected. But you are violating institute norms. First schedule offense. I got a client. I accepted statutory audit. I did not verify any books of accounts and I gave an audit report. Members have lost. So many people have lost money. That is second schedule offense. Which is more severe? Second schedule is more severe. Second schedule, because in second schedule offense, because of that offense, many third parties are affecting. Getting it? In first schedule, you and institute only will affect. Third party is not affected. But when third party is affected, that's a more severe offense. That's why schedule 2 offense will have higher punishment. In schedule 2 offense, the institute will remove your name any number of years. Whereas in first schedule offense, they will reprimand and remove for certain temporary period. So schedule 2 offense will be, penalty will be higher, 5 lakhs around. In first schedule it is 1 lakh penalty. Primary penalty. So that's it. I think you are the one who asked, no? That's it. Able to understand. Next. Now, schedule 1 has totally 4 parts. The misconducts have been totally classified into 4 parts. Part 1, 2, 3 and 4. Getting it? There are 3 professional misconducts related parts and there is only 1 other misconduct. Other misconduct means practice or non-practice. That and all doesn't matter. Other means what? Not related to profession. So obviously, other misconduct by members of the institute in general. Now first one, professional misconduct by people who are in practice. Professional misconduct by people who are in service means the second schedule, second part of the first schedule do not apply for practicing chartered accountants. First part of the first schedule do not apply for non-practicing chartered accountants, whereas the third part applicable for all generally. Now there are 12 misconducts. There are 12 misconducts which are discussed for practicing CS. There are only 2 misconducts which are discussed for service people, because with service people we don't have much complications. They are not practicing. They are not associate. They are not using institute name everywhere. Able to understand. So obviously the number of offenses will reduce. Then generally, which are not covered in above 2 are covered here, and other misconduct which are not related to profession. Clear? Same way, schedule 2, members who are in practice, but because of their work culture, third parties are affected. So those kind of offenses are 10. And general misconducts. Schedule 2 talks about general misconducts by all the members of the institute. There is no service. In the second schedule, servicing chartered accountants, their misconduct is not covered specifically. They are covered here generally. Generally means what? Practice, not in practice. Both are covered. And finally, other misconduct. Here there is only one other misconduct. That is, if more than 6 months imprisonment is there per member, that is treated as other misconduct under part 3 of the second schedule. Whereas here, no, less than 6 months misconduct is there. Less than 6 months imprisonment was there, one of the item. So then also that is treated as other misconduct. If the imprisonment is less than 6 months, then it's a other misconduct in schedule 1 part 4. If it is more than 6 months imprisonment means 6 months or more than 6 months. If that is the case, then it's a second schedule offense part 3. Are you clear? Next. So what is the first schedule 1, we are discussing part 1, and in that clause number 1, so what is this clause number 1 says? A chartered accountant in practice is deemed to be guilty if he allow another person to practice in his name. Suppose I find a local tax consultant and I asked him to put my name board and asking me to practice and get the clients. Yes or no? It is treated as branch. That branch must have a separate in charge. Without separate in charge, if I open a branch office and allow somebody else, a non-chartered accountant, to practice in my name, it's treated as guilty of professional misconduct. However, if at all the other person is a practicing CA or he is associated with the firm as a partner or employee, then it is fine. This is what, right? Separate in charge. Correct? This exception is nothing but what? Separate in charge. If I open another office where separate in charge of another member is there as an employee or as a partner, then it is permitted, no. When it is not permitted, I open a branch, somebody else is heading that branch in my name. That is a misconduct. Clear? So this and separate branch in charge concept is interlinked. Next. Now, can I share profits to a non-member? Not permitted at all. Can I share profit? See, first of all, opening partnership with a non-member itself is not permitted. Letting another person to use my name itself is not permitted. Then how come my revenue, how come my profits I can share to a non-member? So, if a CA agrees to pay, allows or agrees to pay or allow or agree to allow any share, commission, brokerage and the fees or profits of his professional business to any person, it shall be treated as guilty of misconduct. Why are you paying to non-members? Out of the fee, whatever you collect, why are you paying to non-members? Are they referring your clients? Are they referring you the clients? You paying a mediator fee? What? Able to understand. So, institute says, institute put a restriction on your payments itself. Remember, whatever the payments, institute is putting a restriction on that. Sir, he can pay through cash, no. If at all you are paying through cash more than 20,000, you will not get deduction in income tax, no. So, if at all you are paying in cash, you are naturally prohibited by income tax law because you don't get deduction, you have to pay higher tax. If you want to pay in bank, if payments audit is performed by institute, they will identify to whom and all you paid. Suppose you paid it for administrative expenses like rent, salary, that and all fine. Some unexplained payments were there. For whom you paid? For what service you availed from them? Where is the bill? The institute will ask. Able to understand. So, however, you can share the fees to another member of the institute because he is a separate in charge. Or you can pay to your partner because he is a partner. Or you can pay to retired partner. You can pay to retired partner. Retired partner can continue to get some goodwill. Getting it? Or you are paying to legal representative of the deceased partner. Or you are paying to member of any professional body where you formed multidisciplinary firm. Or you are paying to a person having recognized qualification as prescribed by council. What are recognized bodies? CS Institute, CAA Institute, lawyers, architects, actuaries. And these persons are recognized qualifications. So to them, if you are paying any fees, that is permitted. Are you getting it? Now, look at the substance of the transaction, not the nomenclature of the transaction. Whether it is called as office expenditure, reference fee, what name it is used, doesn't matter. To whom it is paid, that is what important. Is it paid to a non-member of the institute? Yes. Then you are treated as guilty of professional misconduct. However, if it is for administrative expenses like office expenses and all, really office expenditure, really rental expenditure, rental agreement and all is there, getting it, then it is allowed. Next. If CAP is sharing fees in the form of deposit with state government treasury incurred in the process of assignment of audit, like sometimes no, society's audit, no, they will also have empanelment form. Now, there is a condition in the society's empanelment that CS must deposit 10,000 caution money. Caution money. If you keep a caution money deposit because of empanelment condition, that is permitted. That is not treated as guilty. Next. Now what about treatment of share of profit or goodwill on death of a partner? In case of partnership firm, as per the partnership deed, if a retired partner or legal representative of the deceased partner is getting some profit share, that is permitted. For a sole proprietary firm, the proprietor died. There is profit share. The firm will be sold to another person. There is only a lump sum amount called goodwill. Can this goodwill be received by legal heir of the deceased partner? Yes, it can be received. Now, what is the process to sell this firm? What is the process to get this goodwill? That is what given here. Sharing of fees is strictly prohibited. Once the proprietor died, this firm is being used by another person or another partnership firm is using this firm name. They can't share profits to this fellow every year, every month, they can't. But when they are getting this name, no. See, first of all, when a proprietor died in an audit firm, that's a sole proprietary firm, it has firm name, separate name from the individual name. That firm name has some goodwill. This legal heir can sell that firm name to somebody else. If at all you don't want to sell, that will lapse naturally after 1 year. Getting it? Why to lose it? It has some goodwill. A group of chartered accountants are ready to buy this firm and they want to offer me a lump sum amount. I am a legal heir. Can I sell this? Yes, you can sell this. Able to understand? You can sell this and the new firm, whoever is buying this firm name, no, they can continue using this firm name even though the concerned person is not existing. Are you clear? You see in the market, G.B. Kapadi and Co, T.N. Manoharan Chaudhary and Associate, R. Bhupati and Co, there are so many firms which are opened, R. Murali and Co. There are so many firms whose proprietor names were nothing but firm names. Even after the death of the proprietor, the firm name will still continue with the proprietor name. Correct? That's next. So, share of goodwill. Can I sell the goodwill? Yes, permitted. This case alone is important. On or after 1998. No need to remember the date. That is nothing but latest provision. That is the latest provision regarding sale of goodwill. First of all, if you want to sell the goodwill after the death, you are a legal heir. You want to sell the goodwill. First obtain permission from the council. First obtain permission from the council. First of all, what do you mean by council? Council consists of 32 elected people, 8 nominated people by Government of India, totally 40. These 32 people will be coming from South region, Western region, Northern region, Central region, Eastern region. Getting it? So these are all called as Central Council members. Central Council. Apart from this council, icai is also having few other councils. Southern Regional Council, Western Regional Council, Eastern Regional Council, Central Council, North Council. These are regional councils. These are regional councils. So icai is having first top level management, Central Council. Then middle level management, respective zone councils. Then branch level councils. That is branch, CICASA elections like that. Yes or no? Branch, Chennai branch, SIRC. Madurai branch of SIRC, Thrissur branch of SIRC, these are branch wise. So branch wise management is different, zone wise management is different, overall ICI management is different. Able to understand? I am here, council means which management? Overall ICI management. This total ICI management consists of how many? 32 elected members. 32 elected members, 8 nominated members by Government of India. Totally 40 people will be there. And these 40 people are these are nothing but board of directors in case of company. How board of directors are there in case of company? For ICA, who are the directors? These 40 people are the directors of the ICA. Now, for different, see, ICA, no, they have to release accounting standards, they have to issue auditing standards, they have to consult on various matters, they have to talk about tax audit, they have to talk about peer review, they have to talk about various other reviews, yes or no. Since the activities are so many, which ICA has to do, these 40 directors of the ICA divide these activities among various committees, accounting standard board, auditing standard board, peer review board, quality review board. Sorry, quality review board is not ICA, tax audit quality review board. I mean, there are various other boards. I will show you here itself. So ICI.org, Central Council Library. You see here, members, standing committee, non-standing committee, non-standing committees. Accounting Standard Board, Audit Committee Board, Auditing and Assurance Standard Board. Auditing and Assurance Standard Board is the authority which will issue auditing standards and accounting standards in India. Yes or no? So, this Auditing Standard Board is headed by whom? Is Sanjeev Kumar Singhal. He is actually one of the council members, Central Council member. Maybe from North region or West region or East region. Who knows? Getting it? Then, who are the members of this? These are all the members of this auditing standard board. Out of these members, some of them are central council members, some of them are outside industry representatives. Some of them are industry representatives. We have something called peer review. We have something called peer review board. This is peer review. So peer review board. So we have peer review topic, no? Peer review board shall have maximum of 12 members or 11 members. Something is there we have. Okay, maximum. So here out of them 50% must be from the council of the institute, then 50% must be others. Like that it is there. So these are the members. And about ICI, the council, you see these are the nominated members are approximately 8. 8 members are nominated. From southern region, these are the elected people. From southern region, these are the elected people to the council of the ICI. Getting it? So totally 40 central council members will be there. So this is the council from whom you have to get the permission. By default in self-service portal, whenever member files an application, by default it goes to council panel. For the council panel, there will be some administrative staff. They will look at, if they have a doubt, they will ask the concerned person and then get approve it. If they have clarity on that, they will approve it. Are you getting it? Next. So first, if a sole proprietary firm which has a firm registration number and that proprietor dies, the legal representative can sell the goodwill, provided within 1 year he should get the permission. Within 1 year from the death of the proprietor, they should get the permission from the council. And once you got the permission, within 1 year from the death of the proprietor, the goodwill of the sole proprietor can be transferred to another eligible member of the institute after death of the proprietor, and sale must be completed in all aspects within 1 year from the date of demise. Means the moment the proprietor dies, the firm has some goodwill, immediately legal heirs should take measures to get the permission, sell the firm, everything. And remember, the purchaser can use the firm name and continue. After they die, they can sell the firm name to somebody else also. Able to understand? Now, suppose until 1 year, see, one of the reason for removal of member is what? Death of the member. But name can be removed, no? For 1 year after the death, the institute shall not remove the name of the member. Getting it? At least the name of the firm. The further, the name of the firm shall not be removed for 1 year. Member name can be removed, sorry. Member name can be removed, but firm name shall not be removed for 1 year. After 1 year, firm name will also be removed by the ICA. Able to understand that FRN will be cancelled if that is not sold to anybody. Suppose if there is a dispute regarding the ownership, regarding the legal heir, there is a dispute. Suppose that member is having 2 wives. Yes or no? Okay. So, like they are having, kids. So, regarding who is the actual legal heir, there is a court dispute going on. Once a dispute is finalized, from the finalization date, 1 year shall be calculated. That's it. So, this is important process. Death of the proprietor before 29th August, at the time, transfer of goodwill and all was not there. That's it. Like 1 year limit, that and all were not there. That is not required also now. Before 1998 issues, why it is relevant for us? At that time, I think you might have not born also. Next. Okay, second clause is saying you should not share profits to a non-member. Okay, and to whom you can share, they have given exceptions. Can I get share from non-members? I will not give to a non-member. Can I receive from a non-member? No. Can I receive from non-member? No. By the way, I can share referral fee to another chartered accountant. I can pay referral fee to another CA. Suppose I'm a newly opened practicing firm. I went to one big firm nearby. I explained my situation. I want clients. That new firm, no, they referred me some clients. Getting it? And I told them I will do this work. I will pay 30% fees to you. They agreed. Getting it? That we can always, because you can pay referral fee to a member of the institute. Same way, a member of the institute can accept referral fee from another member. So this is similar to whatever we have seen there. So to whom you can pay, here to whom you can receive, like opposite exactly. So referral fee amongst the member. It is not prohibited for a member in practice to charge referral fee. It is not prohibited. It is permitted. Then, so first clause, what is it saying? Don't let somebody to use your firm name. Second point is what? Second and third point, don't share anybody your revenue. Don't accept any fees from anybody other than a member. Fourth point, don't enter into partnership with a non-member. Getting it? So, If a CA enters into partnership with any person other than chartered accountant in practice shall be treated as guilty of professional misconduct. This indirectly creates a prohibition on entering into additional business as well. This is indirectly creating a prohibition on entering into additional business as well. Suppose there is a partnership firm which is engaged in some rice or cotton, whatever business. Can I enter into partnership with them? You cannot. Any sort of partnership. Exception. With another CA, you can enter into partnership. With a member of recognized professional body, you can enter. Or with a member having recognized qualification, you can enter. Or with a member whose qualification is equal to ICA. Suppose you want to enter into partnership with CPA or CWA, ICAEW, something like England and Wales Association, some CS were there. So CS of Britain, you want to form partnership with them, that is permitted. Wherever institute has recognized them through a memorandum of understanding. With foreign accounting bodies, institute has entered into some memorandum of association. ACCA, Australia, institute is having a memorandum of association. CPA, Canada, institute is having MOU. Getting it? So you can enter into partnership with them. CPA, USA, institute don't have partnership. But soon means in the sense like within another 5 to 10 years, ICA will recognize all the accounting bodies across the world. All other accounting bodies across the world recognize all other accounting bodies across the world, including ICI. This kind of mutual participation is required. Having considering the scale of operations, the business growth, yes or no? Next. Right now, multidisciplinary firm is not permitted because till such time, regulators of other professionals also permit partnership with chartered accountants. Right now, ICA temporarily blocks multidisciplinary. Actually, this clause indirectly says what? You can enter into partnership with recognized qualifications. You can enter into partnership with a lawyer. You can enter into a partnership with a cost accountant, company secretary, architect, actuary, engineer. You can enter into partnership with all of them. Multidisciplinary firm is actually permitted by clause number 4. But what the council guideline says, one of the clarification, till other bodies also issue guidelines regarding this. Temporarily right now, forming multidisciplinary firm is prohibited. Clear? So there are some decisions. Yes, give a note about this. In exam, you need to give this as a note. But of course, if that point is tested indirectly, suppose in examination there is a straight question on this. A CA has formed into a partnership with a non-member, they said. They didn't mention specifically about who. You can straight away say that as per clause number 4 of part number 1 of schedule 1 of Chartered Accountants Act, a member is prohibited to enter into partnership with a non-member. However, he can enter into a partnership with the following people: another CA in practice, or another person having equivalent degree like CA, or a member of the recognized professional body, or a member having recognized qualification. With them, he can enter into partnership. In the given case, the member of the institute has entered into a partnership with non-member, within bracket, assuming not covered in the exception list, bracket close, and hence the member is treated as guilty of professional misconduct. Accordingly, his name will be removed from the register of members. Like that you can write. Are you clear? All of you? Next. Next, clause number 5, clause number 6, clause number 7 are interrelated. I will come to them later. First, I will finish remaining clauses. So, you are not permitted to enter into partnership with anybody. Okay, same way. Clause number 12, you see. You are prohibited to allow a non-member or non-partner to sign on your behalf. You see, clause number 1, 2, 3, 4, 12. These 5 you need to read at a time. Because these 5 more or less talks about same stuff. Getting it? First clause, don't allow somebody to use your name. Second clause, don't share your revenue with a non-member. Third clause, don't accept any remuneration from a non-member. Fourth clause, don't enter into partnership with a non-member. Fifth clause, clause number 12, don't allow another person to sign on your behalf. Yes or no? More or less same swing. Okay. So what is it here? A CA is treated as guilty if he allow to sign on his behalf or on behalf of his firm a non-member, a member but who is not in practice, or is a person who is not a partner of the firm. Means if in my firm there is an employee who is a chartered accountant, even though he is having COP, if at all, exceptionally, still he cannot sign because he is not my partner. When my firm has received some work, only the partner should sign or the proprietor should sign, not my employee, because the work is delegated to my firm, not to my employee. Able to understand? So when my firm is appointed, only my firm related partners or proprietor can only sign. Able to understand? That is a very simple logic, which means naturally whatever functions, whatever documents your firm has to sign, nobody else can sign. Your employee who is a chartered accountant, he himself is prohibited. Obviously outsiders are also prohibited. So a non-member is prohibited, non-partner is also prohibited. Clear? However, the following documents can be signed by your staff. Administrative routine documents can be signed by your staff. Suppose you all did articles. At the time working paper you arranged. At the end of the working paper arrangement you are signing, every one of your article teams signing the working papers. That yes, I arranged this working paper. So is it guaranteeing any attestation or assurance service to anybody? No. So that can be signed. Now we are going for cash verification in a client premises, physical cash verification. On cash verification, person attended, you are signing. No, is it guaranteeing or are you providing any assurance service to any third party on this? No. Internal purpose documents anybody can sign. Getting it? Those documents which are being sent to public, which your firm is exactly liable. Your firm is liable 100%. Those documents only the partner of the firm who is in practice can sign. Getting the point? Suppose if you are having a partner who is not a member of the institute, even he cannot sign. So like issuing of audit queries, this point is important. In exam also recently it was asked, what are the documents which, this will be asked as an MCQ. How they will give you is, they'll give you the following documents are signed by, non-members. Point number 1, issue of audit queries. Point number 2, issue of audit report. Point number 3, asking for information or something like questionnaire. Draft observations document, option number 4. And fifth point, 1, 2, 3, 4, 5. Fifth point, balance sheet of the company. Now, option A, which of the documents, which of the above documents, out of the above 5 points, which documents non-member can sign? 1, 3, 5. Option 2, 1, 2, 5. Option 3, 2, 3, 4, 5. Option D, 1, 2, 3, 4, 5. Like this they will ask. Able to understand? So they'll give 5 points. Out of those 5 points, which 2 points are correct or which 3 points are wrong? They may ask in any way the question, and they'll give you 4 options. So this kind of MCQ will be given for 2 marks. This kind of MCQ has been asked as a case-based MCQ. In one MTP or RTP it is there. Clear? Next. So this is the list. Please go through this list. Now, whenever you're signing a document where statutorily you have to disclose his name, the member should disclose his name while you are attaching your signature to a report or document. Where there is no such requirement that your name should be there, then member may put just a firm name. But as a standard practice, what we do, we will put firm name, we will put the partner name as well. Correct? We will put MRN, we will put FRN. Everything we will put. That's it. So with this, part 1, main clauses were completed. Clause 1, 2, 3, 4 and 12 is completed. Now let's come to clause number 11. For clause number 11, what is clause number 10? Okay, clause number 10 also we will finish. Clause number 10 and 9 will finish, then go to 11 and then go to 5, 6, 7. Getting it? Now clause number 10 you see. A member of the institute is prohibited to accept fees as a percentage of profits of the company or contingency basis. You cannot quote fee for audit services on a contingency basis or as a percentage of profit. You should not take the fee. However, if you're acting as a liquidator, if you're acting as a receiver, or if you are providing some non-audit service where you will create some value to the client, based on the value creation, you will take percentage of the value addition. That is permitted. But statutory services, whenever you are providing, don't take fees as a percentage of some profit or percentage of some other thing, or don't take fees which is contingent in nature. I think now you see. A CA is treated as guilty of professional misconduct if he charges, accepts in respect of any professional employment fees as a percentage of profit or which are contingent upon findings or result of that particular engagement. Getting it? Exception. Suppose if it is permitted by any regulation, it shall not be treated as guilty. It is to be noted that fees cannot be considered as contingent if it is fixed by court or public authority. Example, disputed fee. Suppose there is a dispute between you and client regarding the fees. Later, finally, court fixed it. You cannot say that is contingent. And there are few other exceptions. These exceptions are important. Like how in examination, they may ask you a question. Generally, a CA is prohibited to accept fees as a percentage of profit, but there are some exceptions. Give any 4 exceptions. They'll ask you, right? Any 4 exceptions. These are the exceptions. Like you see, you are acting as a receiver or a liquidator. You can accept as a percentage of funds received. You are acting as an auditor of society. In that society law, it might be permitted. So there it is permitted. Or you are doing the valuation services for the purpose of direct taxes. You may receive a percentage of valuation or value fixed by you. Or you are providing some management consultancy services. There you can get on a percentage basis on findings. Or you are doing some fundraising services, underwriter. You are acting as an underwriter. By default, you will get commission based on issue size, yes or no. Next. You are doing debt recovery services. A bank appointed you as a recovery agent. Your remuneration will be percentage of recovery. Getting it? Or you are providing services related to cost optimization. So how much ever cost you save to the company, out of that some percentage they will pay you. So these are the cases where and all you get percentage which is permitted. Following activities are decided by the council. Insolvency professional. If you are acting as an insolvency professional, there you can take percentage of some settled amount. Or you are providing some non-assurance services to non-audit clients. You are providing non-assurance services to non-audit clients. So there is a client, they appointed me only for one non-assurance service. Getting it? They appointed me for filing GST return. They appointed me for conducting so-and-so survey. They appointed me for conducting some research. There and all I can take a percentage. Attestation functions, assurance functions, audit functions. In all these cases, percentage of profit is prohibited. Because I should be independent. In all other non-assurance works, I need not be independent. Clear? Everyone. That's about clause number 10. Then clause number 11. Just 2 minutes. Yes, let's continue. So clause number 11. What is this clause number 11 says? You are prohibited to engage in any other occupation other than as a chartered accountant. If you are practicing as a CA, your full time attention, time, everything should be devoted only in practice, because you need to continuously update your knowledge. You need to continuously, you are rendering so many services, you are accepting so many types of works. So you should work, you should deliver the work with utmost competence. So in order to make sure that you are rendering the work with utmost competence, you should not focus on some other activity. If you should not focus on other activity, it should be prohibited by law. That's why clause number 11 has been added. Getting it? So what is it saying exactly? A CA is treated as guilty of professional misconduct if at all he is engaging in any other business or occupation in addition to a chartered accountant in practice. However, if at all you are given a permission by council, then it is permitted. Or if you are just a director in a company, not a managing director or whole-time director, not a managing director or whole-time director, it is not disqualified. You are permitted. Many chartered accountants who are in practice are acting as independent directors in many companies. So that is permitted. Further, you can act as a liquidator, a trustee, executor, administrator, or you may take up some appointment made by central or state government unless it is on full-time basis. Okay, normal part-time basis, you can always take these additional occupations. These are permitted. Now, what are all any other occupations? Like you are saying, here, business or occupation permitted by. Hey, what happened? So here you see here. So what are the occupations which are permitted? So these are the following occupations where no permission is required. You are automatically given permission for doing these additional occupations. What? You see bottom, agriculture is permitted. You can own an agriculture land and do cultivation activity. That is permitted for chartered accountants. By birth, you are permitted to do agriculture. Next. You can act as a recovery consultant in case of a banking sector. That is naturally permitted profession. You can act as a surveyor or loss assessor under Insurance Act. Getting it? Suppose we all take car insurance or any, for stock insurance, current assets insurance like that. Now that suddenly that particular car met with a damage. So insurance company has to give compensation. In order to fix compensation, insurance company want a surveyor to estimate the compensation. So they appointed me as a surveyor to estimate the loss. That work I can do without any additional permission from ICI. Or I can be editorship for any professional journal related to our professions. Related to our profession, these journals, whatever published is called as professional journal. Suppose taxman want to publish a journal on budget. Getting it? Budget amendments. So I can be editorship. I can act as an editor for that and receive honorarium for that. Then I can do valuation of papers. I can act as a paper setter. I can set examiner for any examination. Which examination? ICI board examinations, not other board examinations. Getting it? Or I can work as a part-time tutor under coaching organization of the institute. Chapter officers are conducting classes. No, there I can have a teachership. Like I can do some private tuition, or I can attend any class. I can appear for any examination. No problem at all. I am in practice. I am pursuing some additional courses. Permitted absolutely. No permission is required because that is not occupation. Yes or no? Or I can hold MP position, MLA position, MLC position. Getting it? Or I can have, like, see, our central ministers are himself there. Ministers himself there. Yeah, Piyush Goyal is there. Previously, railway minister is there. Yes or no? And even some, right now, another minister is there from AP, Vijay Shai Reddy. So there are so many. There are so many who are chartered accountants, but who are still acting as MLAs, MPs, MLCs. Or I can have leadership of a charitable, educational or non-commercial organization. For any education institute which has got charitable organization license. For that, I can act as a leader for that. Or I can act as a notary public, justice of peace, executive magistrate and the like. Next, I can hold a life insurance agency license for just getting renewal commission. Like you can get LIC agency and do LIC business, like insurance business you can do on your own. You can promote, get customers and take commission. New business is not permitted. Suppose before you become member of ICI, before you hold COP, earlier you are doing some LIC agency business. So you have activated so many policies. And many of the policies are even today active. They are paying renewal charges to insurance company. Now, the moment I took COP, I should surrender this license. Because I cannot engage in additional occupation. If I have to engage, what should I do? I should get special permission of council. But I don't want to get special permission. Getting it? I don't want to engage in this. Because now CA qualification is there. I will focus on practice. Let me stop this business. But what about renewal commission? If I surrender this LIC license, no, I will not get renewal commission. For the purpose of renewal commission, you can have that LIC license. You should not do new business. Whoever client is coming, sir, LIC policy, sir, will you buy? Don't ask. Getting it? So renewal commission, you can take. Next. You can become an author book. You can be an author of a book or you can publish any articles. However, retail reports are not permitted. Retail reports are not permitted. Private tutorship. I'm teaching final classes. No, I'm teaching for you. Yes or no, right now, that is permitted. However, in a week, it should not exceed 25 hours. As a whole, they will check. Not every week they will check. Getting it? Weekly 25 minutes, as a whole, they will check in a year. That's it. You may be telling, sir, this week only you are taking 35 hours, 30 hours. So, employment under CA in practice, that is also permitted. A CA who is in practice can also be an employee in another chartered accountant firm. That is automatically permitted. Now, where and all you require special and prior permission. See, this is actually a stupid provision. What you should do, what you should not do, both I need not tell. Either only one of this I should tell. Don't do this, I should tell. Correct. That is fine. Don't do this, do this. How can I give both the list? It is confusing, no? So here they gave a list of activities which require special and prior permission. Other than these activities, what about them? They also require special permission. This is just an inclusive list. This is what? Inclusive list. See, they have given where permission is not required and they have given where permission is required. They have given where permission is required. When they give a list of activities where permission is not required, that is enough. Every other activity is permission is required. Correct? So, but since they gave a separate list, we will read. But remember, this list is inclusive list, not exhaustive list. Getting it? Whereas the above list is exhaustive list. The activities which do not require permission is exhaustive. That is the only activity don't require permission. Rest all other activities require permission. So if you want to be in employment, full-time or part-time in a business concern, company, provided the member or relative do not hold a substantial interest in that concern. Suppose no, if you want to have substantial interest in a business concern, that is again a different provision. That is again a different provision. First of all, can a CA acquire substantial interest in a business concern? Can a CA buy shares of a company? 20 more than 20%? Yeah, I can have substantial interest. That is permitted. In the same concern, can I act as an employee? If institute gives special permission, you can. Logically speaking, you can. Look, this is only inclusive list. This is only inclusive list. Suppose if I want to work as an employee in a business concern, where I am having substantial interest, I went and obtained special permission of the council. Obviously, it is permitted. Able to understand. Next, I want to have an employment in non-business organization. Then also I require permission. I want to act as a managing director or whole-time director. Then also you require a permission. Suppose, can I have interest in family business concern? Like, suppose my father or my grandparents, they are having one business where my grandparents' brothers are the partners in a partnership form. So that is a some cycle manufacturing or cycle trading company, whatever, some company. Now, after they expire, it is devolved by our fathers. Now after that, we are inheriting that business. Can I inherit family business? Yes, you can inherit. But if you want to inherit, inherit means what? You are getting ownership in a partnership form. And remember, partnership form, proprietorship forms, partners and proprietors are one and same. You will have unlimited liability for outsiders. People think you are ultimate owner. Yes or no? It resembles like as if you are doing the business. It will come under additional occupation. That's why you require permission. Further, you should not actively involve in that. You should not actively involve in that. Suppose you want to actively involve in that. Get special permission for that also. Here, the point says interest in family business concerns, where the interest has been acquired because of the relationships and in management. Getting it? You are having a relationship with the previous owner. Okay, because of the relationship, you inherited that business. That is permitted, provided you do not take any active part. This is what the notification, this is what the special permission rule says. Suppose I want to take active part. Institute council permitted me. Then permitted. Able to understand? I told you this is only inclusive list. Understand, this is only inclusive list. In exam point of view, no active part will be tested. No active part will be tested. Getting the point? No active part will be tested. So, as per from examination point of view, you should not take any activity in the family inherited businesses. It may be HUF, partnership firm, proprietorship firm, whatever it is. If a member inherited from his forefathers or fathers, getting it, he should not actively participate. He can have ownership. Some other else will take care of the business. He just can be a owner. For this also, for just having ownership also, you should take special permission of the ICI. Provided you should not engage in active business. Clear? From exam point of view, keep this only. Can I have ownership in education institution? Yes, take special permission. Next. Can I teach as a part-time, can I work as a part-time lecturer other than ICI chapter offices? Yes, for which you require special permission. Getting it? There are many CA coaching centers, MTADK like that, the many coaching centers, Shankara Institute is there. If I want to take a part-time employment here, I need to get ICI special permission. Able to understand. Next. Part-time or full-time tutorship under any other education institute other than coaching organization of the institute. That is also requiring special permission. Editorship of journals other than professional journals. Professional journals don't need to have permission. Retail journals, retail reports, stock market reports, I am going to, edit them. I am going to work as an editor for them. So for that all, I need to require special permission. Any other business, any other occupation which committee considers that permission may be granted. That's what this is residuary clause. If committee considers it is necessary for the member, they will grant approval. So whatever above list we have seen, none of it. Waste of the discussion. But in exam they will test. The person who is testing this don't understand the provision first of all. So he will test because it is there. Next. And further remember, just because they have given permission, no special permission list is there, no permission list is there. In a specific case, counsel may refuse to give permission to a particular individual. So on a case to case, for somebody they may give permission, for some they may not give permission. It is counsel choice. Next. Now, there is a word no. Relative has substantial interest in a business concern. In that concern, I should not take up employment. If at all in a business concern, me or my relative do not have any substantial interest, I can take up employment in that business provided institute give me special permission. Now, what do you mean by relative? They gave here the definition. This is income tax relative definition. This is income tax relative definition. Getting it? Husband, wife, brother or sister, any lenient ascendant or lenient descendant. Next. Can I act as a director or promoter of a company? Yes. Simpliciter. You are simply a director, independent director. That is permitted. So ordinary director or simple director who do not involve in executive affairs. You can be a non-executive director in any company. No permission is, permission is required, but you can act only as a non-executive director. Suppose you want to act as an executive director, you need to get special permission. Of course, ICI will not give that special permission. Where and all ICI will give special permission, the list is predetermined. Getting it? Maybe if council gives, they may exercise last clause of the special permission list and they may give you additional permission. Getting it? Next. And there is another guideline. The auditor of a subsidiary company cannot accept appointment as a director in holding company of such a subsidiary company. Getting it? See, we have seen company disqualifications. What is the disqualification? Officer of the company is disqualified. Employee of the company is disqualified. Officer of holding company, subsidiary company, they didn't mention. But institute guidelines says about that. Suppose you are acting as an auditor of a company. It has a holding company. Can you act as a director in that holding company? No. If you are already acting as a director in that holding company, don't accept auditor of a subsidiary company. Is this a disqualification in company law? No. It's a disqualification given by CA Act under clause number 11. Clear? Next. Further, what is prohibited is you cannot be an executive director. You cannot be an employee in a company. But can I be a promoter of a company? Yes. Can I sign memorandum and articles of a company? Yes. Can I form a company? Yes. But don't take active participation. If you want to take active participation, get special permission. See here below they have given. A member can accept office of MD, whole-time director only after obtaining specific and prior approval of the council. For engaging in all special activities, you require prior approval. After engaging the activity, if you take approval, you are deemed to be guilty of professional misconduct. Clear? Next. Now, can a member in practice, can he have interest in family business concerns? That's what we have seen, like a proprietary concern, partnership firm or HUF. Can he have? Yes, you can have membership, take special permission, show that you are only a owner, but no activity is undertaken. You show that they will give you easily the permission. But if you want to actively engage in the business also, then institute may refuse. Getting it? So it is necessary for the member to prove that interest in the business is devolved him as an inheritance, succession or partition. It is not that I bought ownership in a firm. It is that something I got through inheritance. It's my family business. I cannot eliminate it. Getting it? Also, it is necessary to prove that he was not actively engaged. Only then you will get that special approval from ICI council easily. If at all you want to actively participate in the business also, you apply for my application, you ask for approval, they may not give 99% of the cases. Getting it? And remember, the family, the business is not created by you. If at all the business is created by you, you only opened that new business, then institute will not give permission. If you want to open a business, what? Surrender COP. This clause number 11 will not apply. This part number 1, schedule number 1, clause number 11 will apply for whom? Part number 1 is applicable for whom? CS who are in practice. If you surrender COP, you can open any number of companies, any number of partnership firms. Next, there are few other cases. Can a chartered accountant in practice, can he register as a registering authority for creating digital signature certificates? Yes, all our audit firms will do that. 200 rupees RT the cost, but we will bill 2000 to the client. Next. Can he be a research advisor? CA may act as a research advisor, but you cannot be a publisher. Publisher means you are doing a business, book selling business. Next. A CA cannot receive remuneration for financial advisory role to a bank, FI, mutual fund, insurance. Investment advisory services is a separate business, understand. It's a separate business. A CAP cannot take agency of general insurance, Unit Trust of India, NSDL. A CAP cannot hold custom broker's license. You cannot trade in stocks. You cannot trade in derivatives. As it is original occupation, you require special permission. Many CS know they're opening demat account and start investing in trading, start doing derivatives. Get special permission and have demat account and trade. Otherwise, it is guilty of professional misconduct. By looking at this list, you can find how many violations your firm is doing. Yes or no? Correct, huh? Most of the CEs know they will come under this particular radar. Under this radar, they will definitely come. So with this, clause number 11 is also completed. So we still have clause number 8, 9, 5, 6, 7. So 5 more clauses of part number 1 is pending. So in the next session, we will finish that. Once this part 1 of schedule 1 is completed, remaining parts are very easy. They were not that difficult. Okay, that's it. So we'll take break.
So we still have 4 more clauses to be discussed in part 1. So we'll discuss now clause 8, then 5, 6, 7. With that, part 1, schedule 1 will be completed under revision. Fine. So what is clause 8 is dealing with? Clause 8 says, with respect to all audit assignments which you are accepting as a chartered accountant in practice. All audit assignments. Very important. All audit assignments. Remember, what are all various audit assignments? Stat audit, tax audit, GST audit, internal audit, concurrent audit, any type of audit assignment. Previously, another chartered accountant has performed, another chartered accountant in practice has performed more appropriately. Getting it? And now you were replaced with that appointment. In such a case, what the clause 8 says is, first get a no objection certificate from the previous auditor. He may be stat auditor or tax auditor or GST auditor, whatever. First get NOC from him. After getting NOC, look at clause 9 requirement. What is clause 9 requirement? You need to check provisions of Companies Act. You need to check provisions of Companies Act. Before you accept the audit, check the provisions of Companies Act. Yes or no? So after checking all the provisions of Companies Act, and if your appointment is validly made and already you got NOC objection, then you accept the appointment. See, here the procedure is very simple. When a client requested you for appointment, first check your eligibility, disqualification, ceiling limit, all that. Then give your consent. Okay, I'm interested to act as an auditor. Then client will propose your name in the general meeting. Shareholders will approve, will appoint you. Now you need to give acceptance letter. Before you give acceptance letter, this clause 8 procedure you need to do. Before you give acceptance letter to the company, before you take up the position of auditor, appointment is over. Before you take up the position of the auditor, communicate once with NOC. Sir, is this requirement applicable only for appointment made in AGM? No. This is applicable for all types of audit. Government audit it is applicable. Non-government companies it is applicable. Even for first auditor this is applicable. Even if you are appointed under casual vacancy, that is also applicable. Even if you are appointed under casual vacancy, some previous auditor became insolvent, so he disqualified. Get an NOC from him once again. Yes, you need to get. In all types of appointments, whether it's a government company, non-government company, first auditor, subsequent auditor, auditor appointed under casual vacancy, whether rotation, whatever, you were appointed. That's it. Before you accept the position, who is the previous auditor? Who was there before my place? Before I came into this company, who was there previously? Communicate with them and get NOC. So that is what this section. If you do not communicate, your appointment will be invalid and you are treated as guilty of professional misconduct under clause 8. And see, sir, what should I communicate? How should I communicate? What is the mode of communication? This itself can be asked as a 4 marks question. Write about mode of communication with previous auditor with respect to obtaining NOC. What is the mode of communication with the preceding auditor? As per clause 8 or council guidelines, they may ask you like this. You need to write this matter. Not entire points required. Any 4 points you need to write. What they say is communication. How you need to communicate? See, nowadays we are communicating in mail IDs. Through mail we are communicating. Generally, we will get the previous auditor's registered mail ID address. ICI is having a database of, practicing CS registered with them. We get a registered mail ID. What is the registered mail ID as per ICI database? And we type the letter. The so-and-so company proposed me to appoint as an auditor. Previously, we observed that you are the auditor in that company. So do you mind, or is it okay for you if we accept this appointment, or do you have any objections to raise? Kindly raise within so-and-so time limit. This is a simple format. Of course, Institute have given a very good format for communicating with previous auditor, so we can follow that format as well. You can communicate it through mail now, but earlier communication must be in writing through registered post. So earlier we will have letterheads, right? On the letterhead we will take a printout and we will fold that and then keep it in the envelope and then send it to the previous auditor's address, postal address. Which postal address? Registered professional address with the ICI. And further, you must have a evidence that the outgoing auditor has received this in hands. That is why we call it as, mode of communication will be registered post acknowledgement due, RPAD. Registered post acknowledgement due. What is registered post? I will mention Mr. X, previous auditor name. Only to him the post will be delivered. Somebody came from his home or office. No, this will not be delivered. Only to him it will be delivered, and he has to sign that at the time of delivery. So that is called registered post acknowledgement due. So only under a RPAD method you must send communication. Just posting, I posted letter, that is not sufficient. There must be a proof of delivery to the addressee, and it must be through RPAD. Getting it? Or by hand against a written acknowledgement. And further, via email address, retiring auditor may send you acknowledgement. Through a mail, he may send you acknowledgement that yes, I received NOC. Getting it? So that is also enough. Suppose if, sir, I sent letter, sir, premises found locked, it is deemed to be delivered. If premises is found locked, it is deemed to be delivered, even if the firm was not found at the mentioned address, and that address is correct address as per ICI database, but that firm is not operating there, even it is treated as deemed to be delivered. That's, we did our duty. Next, sir, okay, we are sending, sir, and you are saying he has to give acknowledgement or he has to give NOC consent. Is it compulsory? Is NOC consent compulsory? Does reply must from the retiring auditor? Okay, we sent letter, as you mentioned, we sent letter, NOC letter we sent. I mean, we are asking for NOC. Getting it? Now he need to reply, right? Is it compulsory to get a reply? Until he replies, should we wait? So generally you will get a reply. Reply is obtained, and he did not raise any objection. Happy, accept the audit. Suppose he has raised some objections. Look at what points he raised. Are they reasonable? Are they justified? If the points that incoming auditor raised objections are justified, what are the justified points? He was removed. He was removed unjustified manner. He is removed in unjustified manner. The previous auditor was removed by the company in an unjustified manner. And that reason, that objection raised by that auditor is a reasonable point, because he was removed unjustifiedly. So, or his fees is not paid. His fees is not paid. Which fees? Agreed fees. Agreed fees means what? Undisputed. There is no dispute. There is no dispute. Client agreed to pay 1 lakh and he is also agreed to receive 1 lakh. But that 1 lakh client has not yet paid. And that is called undisputed fee. That undisputed fee not yet paid by our client to that previous auditor. And he raised that objection. Dear new auditor, I need to receive my old fee pending outstanding. There is no dispute on this. 1 lakh I agreed, he also agreed, but he is not paying. Kindly make sure that it is paid to me, and then you accept the audit, is it? So objection, if it is justified, I will reject the proposed appointment, or I will not accept the proposed appointment. Suppose no, incoming auditor, hey, I want to continue for another 5 years. This company removed without considering my interest. Array, that's unjustified. Accept the audit without any problem. Sir, he did not reply at all, sir. In spite we send repeated reminders, he is not replying at all. What should we do? Accept the audit. I've continued the engagement after waiting for a reasonable time. So what is reasonable time? Generally, very simple. Let me tell you. Once company appointed you as an auditor, within 15 days. What? Within 15 days, company shall file ADT1. What company shall file? ADT1 they need to file. Yes, so-and-so auditor was appointed in AGM or so-and-so auditor was appointed in board meeting. So the company has to file with the ROC a form called ADT1. Now this form has to be filed 15 days of appointment date. 15 days of appointment. Now in this form, auditor's acceptance letter must be attached. In this form, auditor's acceptance letter must be attached. I think I might have missed this point in the original class. Sometimes, when we are taking anywhere, one or 2 points, I'll miss definitely. Definitely, not just me, anybody else will miss. But in revision, it is lucky that reasonable time means I can able to give you a precise idea. Even in the recent physical class which I took at Chennai, I didn't raise this point. Now suddenly I remembered and I'm just giving you more clarity. Lucky you are. Okay, fine. So this much level examiner will not test at all. But reasonable time means company has to file ADT1 form with ROC. In that acceptance letter should be attached. You can give acceptance letter when? Only after you got NOC. Getting it? So which means reasonable time means what? 15 days you can take happily. That's it. So that is the point. Sir, auditor, the previous auditor is objecting me that he's objecting me. Why? He has not received fees, sir. What should I do? Suppose fees is not paid. Getting it? That generally be the root cause of the problem why auditors are being changed. Especially this is a very important reason in non-corporate entities. In corporate sector, no, this is very rare reason. In non-corporates, partnership firms audit, LLPs audit, sole proprietary audits, this is very. Sir, by the way, clause 8, is it applicable for non-statutory audits as well? Yes. The clause 8 have not differentiated between stat audit, non-stat. If it is stat, it may be corporate or non-corporate. It may be tax audit, income tax audit, Companies Act audit, GST audit or any other audit. Special audits will be there. Suppose under corporate society law, there is a special audit. Under old service tax law, there is a special audit. For special audits, no. Special means we don't know when the audit will apply. That government will appoint. The auditor will be appointed by government directly under special circumstances. There, previous auditor communication, that and all will not apply because previous auditor, who knows? Special audit for this company was conducted 10 years ago. Again, in the 11th year, it is being conducted. First year they conducted, 11th year we are conducting. Why you need to communicate with auditor who has done special audit 10 years ago? So special audits, this is not applicable. That's it. And in case of undisputed, okay, fine. Suppose if the fees is not paid and there is no dispute on the fees amount. Fees is fixed. No problem with respect to amount. The problem only with respect to payment. If it is undisputed, getting it, incoming auditor should not accept unless fees is paid. Incoming auditor should use his influence in favor of the previous auditor. Where previous auditor is not available for accepting payment, it is not possible to transfer to him electronically. We don't know his bank account details. You advise the client to purchase a DD in favor of him, and getting it to ensure that payment is made to the retiring auditor at the earliest possible. So you need to make this kind of arrangement. So they may ask you a question like this: if previous auditor's undisputed fee is not paid, what procedure the incoming auditor should follow before he accept the appointment? See, actually the guideline here, what it says is, the guideline very clearly says, if at all fees is not paid, based on that reason, you don't deny acceptance, you accept, but make sure fees is paid within reasonable time. You use your position, you influence the management so that they'll pay. That's it. NOC is required for all types of audits. NOC is not required for special audits. Getting it? Even NOC is not required for accepting works which are conducted by other professionals, which are not conducted by chartered accountants. Suppose last year internal audit was conducted by a cost accountant and he was removed and now I was appointed. No need. Only when my fellow, getting it, another chartered accountant performed that work, I need to communicate. So this is clause 8 as a whole. Remaining points, sir, what are the reasons for communication? So just give a single reading. Just give a single reading to it. Correct it. And here also, sometimes there are some appointments like bank appointments or bank auditor's appointment, insurance auditor appointment. There you need to give acceptance within certain time bound. In such a case, whether you get a reply from the retiring auditor or not, doesn't matter, accept it. Getting it? First, communicate with him RAPD mode. You didn't receive reply within reasonable time, accept it. Within the time prescribed, accept it. And it is deemed that you complied with this provision. And just give this AN point a single reading. So mostly we have covered entirely. So there is this point you have to observe. We don't know, generally no question will ask, sir, can a new auditor accept a reduced fee? Last year the previous auditor conducted audit for 10 lakhs, but whereas for you only 7 lakhs is given. Can you accept that audit? What's wrong? If there is a reasonable justification behind the fees amount, the workload, all that, yes, I can accept. 2019 companies were really good, so they paid 10 lakhs. 2020 COVID affected, profits affected, so company asked the auditor to pay only 7 lakhs. Generally reduced audit fee is not permitted. Previously if more than 10 lakhs is paid, this year also at least 10 lakhs you must quote fee. Otherwise institute will interpret as you influenced the client with discount and you got this audit. Such how institute may influence, or the previous auditor may file a complaint on you that so and so auditor quoted lower fee and hence client was taken away by him. Careful. If there is a genuine reason, most of the times whenever there is a reduced fee, you can easily show genuine reason. So that's about clause 8, and I hope you're confident on clause 8. 15 minutes hardly took, and I don't think you need to read again. Next. So 5, 6, 7 clauses. Once we finish this, we will be completing. Once we will be finished these 5, 6, 7 clauses, we will be completing this ethics. Sorry, part 1. Part 1 will be completing. So what this clause number 5 says: prohibiting on securing professional business. Prohibiting on securing professional business by means which are not open to a chartered accountant in practice. By means which are not open to a chartered accountant in practice. Sir, what are the means through which I can ask for work? You ask for work only under permitted manner. Sir, I'm a newly become a member. I'm a new member to the ICA and I newly entered into practice. How should I get a client? Can I advertise? No. What are the means which are prohibited? Clause 6 and clause 7. These are the two clauses which specifically contains how you should not advertise yourself. How you should not advertise. If you advertise your professional services, whatever you are performing, you are treated as guilty under these two clauses. Whatever mode of advertisement covered under clause number 6 and 7 cases, except that, remaining you can follow. Remaining advertisement techniques you can follow. Like what it says: if a chartered accountant in practice, securing means obtaining either through service of a person who is not an employee, who is not a partner, any professional business that you are acquiring shall be treated as guilty. Shall be treated as guilty. What indirectly they are saying: if your employee is bringing a client, out of his own friend circle or relatives, not advertising again your pamphlets, brochures and all. Remember, getting it? If your employee is bringing some business to you, get it, no problem, take it. Your partner is bringing some business, take it. Further, remember, if your employee is a chartered accountant and even if your partner is also a chartered accountant, they should also comply with clause 6 and clause 7 while bringing the work for you. Are you getting the point? Mine is a firm. All the partners, clause 5, 6, 7 applicable. All the employees, whoever is chartered accountant, clause 5, 6, 7 is applicable. Sir, my employee is not a CSA. He is going and advertising on behalf of me to all others. Not permitted. That is indirect way of solicitation. That is indirect way of marketing. Directly or indirectly, both are prohibited. But if your employee, whatever route permitted for you, in the same permitted route your employee is bringing, accepted. In the same permitted route your partner is bringing new client, accepted. So if you are securing professional business through the services of a person who is not an employee, who is not your partner, or by means which are not open to a chartered accountant under clause 6 and clause 7, by means which are not open, you are getting some work which is not in the right manner, you are treated as guilty of professional misconduct. This clause shall not apply if the work is obtained through permitted ways under 234. What are 234? Sharing profits with non-members. Prohibited. Exceptions, recognized qualifications, recognized professional bodies. If an actuary, my friend is an engineer, his client is there, for whom he rendered some architectural services, and he is looking for auditor, and my friend brought and asked me for work. Yes, I can ask my friend who is an engineer. I can ask my friend who is a lawyer for work. That is permitted. This council decision says give a one reading, not an issue. Now, sir, what are the means which are prohibited for a chartered accountant? By what mean a CA should not get work at all? If a chartered accountant solicits, grabs the attention of clients or professional work directly or indirectly by a circular, by an advertisement, by a personal communication, or even by an interview or by any other means. See, this any other means is so powerful. It covers so many. He shall be treated as guilty of professional misconduct. In the form of interview in a news channel, you are trying to show up your firm name, all that, and you are trying to exhibit yourself as a practicing CA. You are indirectly influencing the audience to become your clients. Or your personal communication, you are personally visiting to a new person and then explaining yourself that you are a chartered accountant, asking for work. Prohibited. Advertisement, circular, getting it, all this are prohibited. Circular means what? Pamphlet, brochure, all that, mass media, print media, getting it. Advertisement, all digital electronic media, through any medium you can't get the work. However, this will not apply if you are asking for work from another chartered accountant in practice, or you are getting the client, you are getting a new client as a consequence because of a response to a tender for various services. Sir, what is tendering? So this third point itself can be asked as a 3 marks question. Write about acceptance of work or client under tender mechanism as per CA Act. They may ask you like this, sir, like suppose there are so many companies, sir, who are opening tenders. We are looking for internal auditors, like that. Now, can I reply to the tender, sir? Can I find in classifieds and all and reply for all the tenders? You can reply only if minimum fees is quoted in the tender document. Only if the minimum fees is quoted. Or you replied to the tender because it is not exclusively reserved for CS. It is not exclusively reserved for CS. So internal audit, anybody can do, CS can do, CMA can do, company secretary can do, anybody can do. The company also said in the advertisement or in the tender document, whoever having the following qualifications, like that, they listed 10 qualifications. In that, CA is also one qualification. So it is not exclusively kept for CA. It is not exclusively kept for CA. In such a case, you can respond to the tender. Can I respond to a tender? Two cases you can respond. One, what is the fees which the client is going to give is already mentioned in the tender document. Yeah, no problem, respond happily. Fees not mentioned. Then what is the criteria? Second thing you need to check, fees not mentioned. Okay, can I respond? Check, is the tender is open for every person, like not just for CA, it is open for multiple people. If it is exclusively reserved for CA, if it is exclusively reserved for CA, our company is looking chartered accountants for internal audit, minimum fees 10 lakhs, respond. Our company is looking for chartered accountants, minimum fee not quoted, don't respond. We are looking for internal auditor, and the following are the people who are eligible, CA, CES, cost accountant, MBA, all this. Again you can respond. Again you can respond. That's it. So can you please go through this once? Sir, I'm a practicing CA and also in private tutorship, which is permitted under clause number 11 under automatic permission, private tutor. Or I'm teaching with ICI Institute branches. Can I advertise my coaching activities? You are prohibited to advertise your coaching activities except by signboard or name board. See, this is a guideline released long ago, approximately 12 to 14 years ago. I think 13-14 years ago it was announced. Later, when the digital era has come, very recently in the 2021, a new guideline has been added. What are they saying? Educational videos. As a CA, I'm involved in teaching. I'm in practice. Right now I'm in 7th year of practice. Getting it? So can I do educational videos? Like you see on my YouTube channel, so I'll be doing Harsha YouTube channel. I'm doing certain advertisement, certain educational videos, how to prepare for exams, how to put up the strategies, all that. Can I do? Yes, you can. As long as you are not giving any contact details or website address. Which contact details and website address? My firm contact details and website address. You see in my YouTube channel, you will not find a single reference to my firm. In fact, till date I never spoke about the firm name where I am the partner, and I will not speak. They're not required. Getting it? Sir, can I advertise relating to change of partnerships? So my firm is a very famous CA firm, sir. There are 5 partners. 2 partners just now left. Another 2 partners newly admitted. These 2 partners, I don't know whoever left to know. They may still use our firm name and get personally clients to them. I want to alert the public that they were not associated with our firm. Can I? Yes, change of partnership, dissolution, change in address, contact details, all this you can advertise, provided you are just stating the facts. You're only mentioning the facts, and the area of the advertisement, getting it, it is appropriate. You should not advertise in a front page of Times of India very big. No, you need to advertise it as a classified only statement of facts in a black and white only. Color also not permitted generally. If at all the entire newspaper is in color mode, okay fine, you give it in color, otherwise black and white. Sir, can I advertise about my my firm, all that in the journal or newsletter? Generally not permitted. However, if it is of the institute journal, you can advertise for sharing work or for seeking partnership or salaried employment on accountancy. Institute related journals, where you are inviting for sharing the work, getting it, or you are asking for partnership, or you're looking for employment, or you want some employees here, all that you can advertise. Only in the institute journal it is permitted, provided it only contains name, address, telephone number, fax number, email address. Sir, this empanelment and all you cannot require. Sir, entry in telephone or trade directory. Generally BSNL approached me, sir, like all telephone numbers, we are a BSNL client or Airtel client. So telephone directory, can I put my name also in telephone? You can put, but don't put it in a highlighted manner. How other names are appearing, same way your name also should appear. So can I send greeting cards and invitations? You can send happily greeting cards, invitations only to client, relative and close friend. Sir, close friend means how do institute know whether we are close friends or not? Institute generally will not know to whomever you distribute. Suppose if the other person to whom you distributed, he complained to the institute, hey, I got a greeting card from CA, he is advertising, I don't know him personally, I went and complained, you are caught. So here the mechanism, regulatory mechanism works in reverse direction. If somebody gave you a complaint, it is your onerous responsibility to prove that he is either your client or relative or close friend. If you prove, you are not guilty. So marriages and religious ceremonies, opening or inauguration of office, change in office premises, change in telephone numbers, for all this you can give greeting cards and invitation, provided this all can be given only to clients, relatives and close friends. Or if you are giving it as a classified advertisement, you only talk about change of firm, change of partners, dissolution, only that. That's it. Sponsoring events, give a single reading. Right of representation not required. Sir, can I share my firm profile with a prospective client? Like suppose when I'm looking for as an employee, I prepare resume. Now how audit firms prepare resume? They don't prepare resume, they prepare a profile. When the firm established, who are the partners, how many staff we have, how many articles are working, how many employees are working. So what are the clients that we handled in past? Getting it? So what are the various other services that we provide? So like that we will build a profile. Now can I give this profile to my future clients? Yes, you can give, provided he requested you first and you are giving him as a response. Don't distribute the profile. Don't distribute it like a pamphlet. So that's what here which is mentioned. Transfer of original work. What is this transfer of original work? Suppose I'm a CA in practice. My friend is also CA in practice. We both met in a restaurant. He introduced his client to me. Just casual introduction. and I am grabbing him. Prohibited. You can take your friends, another CA client, another CA, no, he introduced you a new client. You can take his client only with his consent. Only with his consent. Suppose some fellow, some new client coming to my office and asking for me work. Previously somebody is the, CA for him. That and all okay. If it is audit assignment, follow clause number 8. Communicate with him once before accepting. So, can a CA use website? Yes, absolutely. Okay. What points a website shall not contain? This is very important. What point website shall not contain and what it may contain. So it may contain here any 5 points you can remember, and what it shall not contain, it is very important, this entire E. So just go through it once. Next. So with this, clause number 6 is also over. With this, clause number 6 is also over. Clause number 7. This is also a prohibited mean for you to secure a client. Clause number 5 says a chartered accountant who secures work from any person other than employee, other than partner, or by any mean not open to CA, then he is treated as guilty of professional misconduct. What do you mean by any other mean? Clause number 6, advertisement, circular, personal communication, interview, or any other mean. Clause number 7, sir, I am not using circular, advertisement, or any mean, sir. I am describing about myself and my achievements. If you are advertising your professional attainments, sir, I am just advertising the services which I am offering. Sir, I am grabbing people attention by using powerful designations, not just a chartered accountant. In all these cases also you are treated as guilty. A chartered accountant is deemed to be guilty of professional misconduct if he advertises, what are your professional attainments, what are the services offered, or uses any designation other than chartered accountant. If you are a CA in practice, you must use only a chartered accountant designation, and that is what even section 7 of CA Act also says. Section 7 says a chartered accountant who is a practicing person shall use only one designation, chartered accountant. Beside your name you may put CA, CMA, CS, BCom, MCom, DSA, all that, no problem. But when you're using full form, you can use only chartered accountant. You are in practice, you must use only one designation, chartered accountant. You must use only one designation. Sir, I'm not in practice. Can I use multiple designations? Your wish. No problem. That's your choice. However, a chartered accountant can mention about a degree of a university, membership of ICI, or any other institution that is recognized. A member empaneled as insolvency professional can use this designation also. Okay, insolvency professional, registered valuer on visiting cards and letter. You can use these additional designations along with chartered accountant. Only insolvency professional registered. Remaining qualifications you can use. Just as a qualification you can mention. Sir, can I mention about date of setting up of practice in my website, or date of setting up of practice in my, this one, visiting cards, all that? Never, not permitted. In your website, you can mention about year. You can just mention about your year of incorporation, provided that year will come only on pull mode. Pull mode means what? The moment website opened, everything is flashing like this. Firm opened 1980, firm having 10 partners, flashing like this. That is push mode. Pull mode means what? The person visitor should search when the firm opened. He need to click profile, year of incorporation, like that. He should click, only then data should come. That is called pull mode. So can a CA mention about his directorship details? Okay, yeah, you may give information about where you are director, but on visiting cards and all you should not give. In website you can mention. Sir, a CA is giving his photo on magazine. Yes, passport photo is enough, provided you are not mentioning any of your professional achievements, all India first rank holder, all India 10th rank, all India 8th rank. No. QR code on visiting card, is it permitted? Yes, absolutely permitted, provided whatever content permitted on visiting card, same content must be there through QR code as well. Sir, can I give a newspaper advertisement for recruitment of staff? Yes, absolutely, provided for your own office staff recruitment allowed. Even on behalf of your client also it is allowed. Even if your client want to sell a business or a property, and member is acting in a professional capacity as a trustee liquidator, and in such case also you can announce on behalf of the client. That's it. Can you attend conferences and give speeches? Very much. Are you permitted to write articles? This is also called as write-ups. This is also called as write-ups. Actually, write-up is having a different name. Council guidelines were there separately as a write-up. Write-up means till date even I do not understand, honestly speaking. I never seen write-ups anywhere. So what I understood as a overall plain reading and understanding and discussion with others, what I understood is write-up means it's an advertisement about services offered. It would advertisement about services offered by chartered accountants. Where they advertise about this? In institute journals. Okay, that's it. Actually, in write-up, no. They say a CA can advertisement in newspaper. That is actually not permitted. That is actually not permitted. Write-up says it is permitted. But logically speaking, clause number 6 says any sort of advertisement it is not permitted. When I can mention about my form details, all that in newspaper, when there is a change in partner, dissolution, getting a change of office, at that time only I can mention. Can I advertisement in newspaper? Normally in black and white, simple column. What is my firm? How many partners we have? How many staff we have? What are the services we offer? Can I mention like that in newspaper logically? No. So then what write-up says? Then what write-up guideline says? You can say write-up guideline says you are permitted, right? It says you are permitted. After interpreting all this combinedly, what I felt is you can give write-ups advertisement in institute journals, institute professional related journals. That's it. Signboards are permitted, glow signs not permitted. Directorship in a company, we already discussed about this in clause 11 also clearly. And sir, can I have my own logo? You must have only this logo for your firm. As a practicing chartered accountant firm, you cannot use any other logo. Now immediately you might get it out. Sir, Deloitte, PwC and all using some other logo. Deloitte is not an audit firm. PwC is not an audit firm. Big Four is not an audit firm. They are networks. Networks will have their own logo. Now Deloitte is having 10 firms associated with it. That 10 firms logo must be CA. Understand? That's it. So with this, part 1 schedule 1 is fully completed. Approximately it took 1.5 hours, right? Part 1 schedule 1. Revision itself is 1.5 hours. Fine. See, I just want, because this revision is only purely to my students, mainly whoever is regular course students, I'm giving this. So that's it. So with this, part 1 schedule 1 is completed. Now let's discuss about part 2. Part 2 is about for whom? It is for members who are in service, means who are not having practice. So for them also, there is a concept of professional misconduct. So what? Suppose a chartered accountant who is in service, who is in employment, is prohibited to pay, prohibited to share his salary. Getting it? Prohibited to pay his salary. Like, see, if a member of the institute is deemed to be guilty, if he is an employee of a company, firm, whatever, and during that employment, whatever he is receiving benefit from the company, he is paying, or he is allowed to pay, or he is agreeing to pay some part of it directly or indirectly to somebody. What is this for? This is to prohibit obtaining employment opportunity using brokerage method. You know, especially in engineering colleges, no, or engineering courses or foreign engineering courses, foreign jobs in technology, there will be consultants who will recruit job for you, and you need to pay for next 6 months 50% of your salary. Like that, they will enter into a contract. You, as a chartered accountant, you should secure a job by your merit and by your skill, not through consultant. And if you're sharing any of your salary to a consultant, and if institute comes to know, they'll treat you as a guilty of professional misconduct. Exception. However, it does not restrict sharing commitments among relative dependent friends. Okay, see, so you got salary and you are sending some amount to your family. That is okay, permitted. The intention is don't pay brokerage or commission for securing the employment opportunity. And not only that, you are prohibited to accept tips from employer related service provider. I'm a CA working in a company as internal auditor. Employee. My company wants stat auditor. I immediately went and requested my friend. He came as a stat auditor and I took from him commission 20%. Prohibited. Sir, you said no. Referral works permitted in part 1. That is only for CA in practice. That is only for CA in practice referral work is permitted. I'm a stat auditor. The company asked me for internal auditor of external audit firm, not as an employee. I referred and got commission. That is permitted. A member in service treated as guilty if he accept any profits or gains from a lawyer, CA, broker engaged by such a company by way of commission or gratification. You should not get anything unauthorizedly from third parties who are clients or customers to the company where the member is. These are nothing but called as in corporate terminology kickbacks. Kickbacks. That's it. So only 2 clauses. Part 1 is having 12 clauses and here it is 2. Another thing is professional misconduct. Generally, you are not a fellow of the institute, but you are acting as fellow of the institute. I'm a CA in practice. 5 years continuous practice not completed. I can use only ACA designation. I cannot use FCA. If I say I'm FCA, it is treated as professional misconduct for every member. The moment you become a member as an employee, even though you are in employment, you can have membership number, right? You may not have COP, but you might have membership number, right? If you are claiming yourself as an FCA, you are disqualified. You are treated as guilty of professional misconduct. Or I'm in practice, still an ACA, but I'm claiming as FCA, again treated as guilty of professional misconduct. Next. So, or you are failed to supply information called by the if a chartered accountant fails to supply information called for or does not comply with requirements of these guidelines, you are not complying with the following guidelines, or you are not giving information called by these people. They are calling for some information from you for some inquiry. You are not responding at all. Remember, non-response is less severe offense. Than false information. If you are giving false information to the institute, it is treated as a part 2 schedule to misconduct, professional misconduct. False information if you're giving. You're not giving information. That's a less severe misconduct. That is coming under part 3 of schedule 1. Part 3 of schedule 1 and of course clause 2. Getting it? Once again, when I come to schedule 2 part 2, I will reconnect with this. Or you are giving false information to others, it is not to the institute. It is not to ICI or council members, not to others. You are claiming yourself as a very powerful chartered accountant, or you are saying you are having 20 employees to a company. A company is approaching you. You are having 20 employees. You don't have hardly 2 employees also, but you are saying 20 employees I have to another company. You are giving false information while inviting work from another CA, while responding to tenders, while advertising through write-up or anything. While you are advertising through write-ups, you are giving false information to others. You are misrepresenting to the others. In such a case, this will apply. That's it. This clause will apply. Suppose if you are giving false information to the institute and disciplines or committees of the institute, that comes under schedule 2. And coming to other misconduct. What is other misconduct? It is not in relation to your profession. Sir, I was held guilty, sir. I was held guilty by a civil or criminal court, sir, because I was involved in something called moral turpitude, and I was punished with imprisonment not exceeding 6 months. In such a case, it's a schedule 1 offense. Sir, it is nowhere related to CA profession, sir. Even then, this other misconduct ICA will take it. Suppose if you are in the opinion of the council, you are bringing disrepute to the profession or the institute as a result of the action, even though not related to professional work, you are bringing some disrepute to the institute. This will also be treated as other misconduct. That's it. So that is about part 1, entire schedule 1. So in the next video, I'll talk about schedule 2. So almost till now I spent approximately 2.5 to 2 hours 40 minutes. I think still another 1 hour 15 minutes, maximum 4 hours. This entire ethics revision will be completed. That's it. So again, when I'm discussing schedule 2, any related points comes in schedule 1 or anywhere else, I'll connect it. I hope you are still enjoying. I'll be happy if you send me your feedback, right now, or maybe after completing the 2 more parts, you can share me your feedback, how you felt about a revision of this ethics. I'm not giving this anywhere outside, only for my students, full course and smart course students, this encrypted revision is not for outsiders. Because outsiders, ethics, no. There are so many points which people think they understand, but actually not. There's so many points which I think in this revision, you might have felt improved clarity. You might have felt improved clarity in the revision class.